Hello, hi, namaste, sat sri akal, adhab, namaskaram, vanakkam, namaste, namaskara, Bangalore. So, welcome everyone. Welcome. In this class, we are going to discuss or we are going to do a super fast revision of our indirect tax syllabus of C Intermediate, CMA Intermediate, indirect tax syllabus. We are going to do the complete revision. This video which you are going to watch will be applicable for your upcoming examination, which is June 24 examination or December 24 examination. So this video we are going to discuss completely with respect to indirect taxation, which will include your GST as well as customs, and there will be a separate video which will be uploaded for direct taxes. Now, so what are the different topics it will cover? It will cover all the topics which you have in your syllabus: introduction, supply, etc., all the topics. Now, before I start discussion on this topic, let me just quickly give 2-3 updates which are issued by your institute. So let me just discuss about those updates. There are some updates given by your institute for June examination. Update number 1, since I am going to discuss about the taxation paper, we are going to learn about the taxation. Let us see the updates relevant from taxation point of view. One is, so this is an clarification issued by your institute on which date? It is a clarification issued by the institute on 13th of, this is a clarification which is issued on which date, sir? Just a second. Yeah. On 13th of March 2024, this clarification has been issued with respect to what are the amendments or notifications or what are the changes which are which have been made and which is applicable for your examination. Now we will directly go to taxation. Now this is with respect to your income tax for intermediate and final, and this is with respect to your GST. Now those students who are going to write their examination in June 24, for them all the amendments made 6 months before your examination will be applicable to you for your examination. Now the cutoff date for your examination is 30th November 2023. Meaning what, sir? Whatever changes are made in the law, whatever changes are made in the law till this date, till which date? 30th November 2023, both in income tax as well as GST. Whatever changes have been made till this particular date will be applicable to your for your examination. Now, before starting the discussion, I thought let me just quickly give you update on this. So all the amendments, all the circulars, all the notifications issued by the Board of Direct Taxes and Board of Indirect Taxes will be applicable to you for your examination issued till which date? 30th November 2023. Please note, I am talking about those students who are going to write their examination in which month? In the month of June 2024. Now this is equally applicable for intermediate students and final students, and the revision material which we will be using, or the revision which we are going to do is going to be completely amended, completely updated. So whatever changes have been made till that particular date, 30th November 2023, all those changes will be discussed in the classroom. So we are going to discuss about all those changes also, and we are also going to revise the entire syllabus also. I hope this point is clear to you all. And one more point is with respect to your exam timetable. When is your exam going to happen, sir? When am I going to write my examination? So they have already issued a notification with respect to that when your exams are going to start from. So if you are an intermediate student, for intermediate students, their examination will start from 11th of June. Your examination is going to start, and the paper which you are writing, which the revision which I am going to take is paper number 7, which is direct and indirect taxes. This paper is going to happen on 15th of June, which is a Saturday. 15th of June, this paper, the examination will be conducted on this paper. Okay, so I hope these 2 points are very clear to you all before I start my discussion on this revision. Now one more point I want to tell before I start the discussion, before we start a revision or before we start our marathon classes, one more point with respect to your question paper pattern. Now please note, in the year 2022, CMA Institute launched its new syllabus, correct? CMA Institute launched its new syllabus for intermediate, final and foundation students. Now those who are going to write their examination now will be writing examination as per this new syllabus only, or we can say syllabus of 2022. Syllabus of 2022. Now, why sir you are discussing this point? Because I want to tell you what is the question paper pattern which you are going to have for my subject. My subject, the subject which I am going to discuss now is your paper number 7, which is with respect to direct and indirect taxes. So this is with respect to your paper number 7, direct and indirect taxes. Now this basically, this paper is divided into two categories. Paper number 7 is divided into two categories. One is your direct tax. Another one is your indirect tax. Indirect tax will contain GST as well as customs. Your direct tax will be for 50 marks. Your GST, indirect tax, also will be for 50 marks. Direct tax will have only one law which you have to study, which is your income tax. Direct tax has only one tax which you have to study, which is income tax. Indirect tax will contain GST and customs, wherein GST is for 40 marks and customs is for your balance 10 marks. So this is how your examination, or this is what is the division of your subject. This paper which you are going to study, this paper which we are going to study, which is your paper number 7, direct and indirect tax, this is the division of that paper. Now coming to this question paper pattern. Coming to your question paper pattern. Now, what used to happen before in the sense, in the 2016 syllabus, what used to happen was, your examination, the questions which were asked, those questions had MCQs, those questions had fill in the blanks, those questions had, the question paper had true or false, the question paper had match the following, and it had also descriptive and practical questions. And before, that is the 2016 syllabus, 100 marks paper was for direct taxes and there was 100 marks paper for indirect taxes. But now both the paper combined together is for how much marks, sir? 100 marks. Now there is one single paper for your taxation which is for 100 marks, which will include your direct tax as well as indirect taxes. Direct tax is for 50 marks, indirect taxes is for 50 marks. Now, so question paper pattern. Coming to your question paper pattern, how is your question paper pattern divided, sir? Your question paper pattern says 30% will be MCQs and 70% will be descriptive or practical questions. 30% will be MCQs and 70% will be descriptive or practical question. I have just gone through the question paper of December examination. December 2023 examination. I have just gone through the December 23 examination question paper, wherein I have found that in this question paper, they have asked MCQ, which is of 30%, which is how much marks, sir? For 30 marks, they have asked MCQs. And for 70 marks, they have asked descriptive or practical questions. Now, in this 30 marks MCQs which is there are 7 MCQs from income tax, and there are 7 MCQs from GST, and there is 1 MCQ from customs. There is 1 MCQ from customs. I'll do one thing, I'll write it like this. So 30 marks is your MCQs and 70 marks is your descriptive by practical questions. In this 30 marks, 7 MCQs is of income tax, 7 MCQs is of GST, and 1 MCQ is of customs. Now each of this MCQ is going to give you 2 marks. So therefore 14 marks MCQs you are getting from whom, sir? Income tax law. 14 marks MCQ are going to get from whom, sir? GST law. And 2 marks MCQ are going to get from whom, sir? Customs law. And when we see your descriptive questions which you have, they will give you totally 7 questions. There are totally how many questions, sir? 7 questions which they are going to give you in the examination. Out of this, you have to answer only 5 questions. You are supposed to answer how many questions, sir? You are supposed to answer only 5 questions. You are supposed to answer how many questions, sir? You are supposed to answer only 5 questions. Now, out of 7, you are going to answer only 5 questions. Now, sir, what is the division? How is this 7 questions divided into? Now, the 7 questions which they have given, no, 7 questions are divided into 2 arrow marks. Questions from income tax and questions from indirect tax. Questions from direct tax and questions from indirect tax. Direct tax, totally 4 questions were asked of 14 marks each. And indirect tax, totally 3 questions were asked of 14 marks each. So this will be 14 marks per question into 5 questions, which is equal to 70 marks. Okay, 30 marks. 30 marks, how many questions they'll ask, sir? 30 marks, they are going to ask you 15 questions of 2 marks each. So that will give you 30 marks. That will give you 30 marks. And in case of descriptive questions, totally 5 questions you have to answer. They will give you 7 questions, but you have to answer only 5 questions. And each question will carry how many marks, sir? 14 marks it will carry. So how much is the weightage of that? 70 marks. In that, direct taxes, 4 questions they will ask. Indirect taxes, 3 questions they will ask. Question paper is very, very, very easy. When you see both direct taxes and indirect taxes, question paper is very, very, very easy. You can see this question paper which the recent examination, December 2023 examination question paper. So first we have MCQs. So compulsory, you should answer section A, compulsory section. So 2 marks each question, 15 questions they have given. So total is how much, sir? 30 marks. So in which 7 questions is from income tax, 7 questions is from GST, and 1 question is from customs law. 14 plus 14 plus 2, which is 30 marks. Then we have descriptive question or practical questions. So totally they will be giving you 7 questions of 14 marks each, but you have to answer only 5 questions. You have to answer any 5 questions. It is not that you have to compulsory answer 2 questions of GST, 5 questions of income tax. No. Any 5 questions you can answer, any 5 questions. So in which they have given, in this attempt they had given 4 questions of direct taxes and 3 questions of indirect taxes. So they may change also. Sometimes they may give 4 questions in indirect taxes and 3 questions in direct taxes. So that change they can do, but no problem, more or less it will remain same. When you see your question paper, totally your question paper will be for 30 plus 7 into 14, 98, which is equal to 128 marks. Array students, look here students, your question paper will be for how many marks? 128 marks. Out of this 128, you are supposed to get only 100 marks. Array, getting 100 marks out of 128 is very easy. I hope you are understanding this. So getting 100 marks is really very, very, very easy. Please note, let me tell you this point. This paper is one of the easiest paper. Paper number 7 is one of the easiest paper. Marathon classes you watch. Only by watching marathon classes, obviously it will be more beneficial to you if you have already given one study of your syllabus. Meaning already at least one time if you have studied your syllabus, it is going to help you a lot. If you have not studied at all, also obviously it will help. But if you have already done one study, no, it is going to help you a lot. Getting 100 marks is not very difficult. It is just like a cake. You will be easily able to get 100 marks in this paper because 30 marks. So anyways, you are going to get in first 15-20 minutes because it is MCQs. And then for remaining 2 hours, 40 minutes, you are required to answer 70 marks question, which is normally very easy, very easy. Okay, now without wasting, I hope this question paper discussion was relevant, and I hope you have understood how the question paper pattern will be, and I hope you have also understood what are the amendments applicable to you. Now in this video we are going to discuss, first we will do the discussion of the GST law, or that is the indirect tax syllabus. We will do the discussion of indirect tax syllabus, and then we are going to do the discussion of direct taxes. So this video will specifically be for indirect taxes. It is specifically for what, sir? It is specifically for indirect taxes. So without wasting a single second, let me straight away start. Now please note, anyone who wants this material will be available. You can take this material. It will be I mean, in the description box, the link will be shared for this material. You can definitely download this material from the link in the description box. Okay. Now, without wasting a single second, I will start my discussion with respect to introduction. Now, introduction. Nice chapter it is. Easy chapter. Sir, what is the weightage of this topic, sir? If you see your institute material, no, they have divided GST also into two categories. Indirect taxes, they have divided into three categories. Introduction to GST, they have given it for 5 marks. So 5 marks for sure you are going to get from this topic. But what I have seen in the previous question, this December question paper, almost around 9 marks was asked from this topic. Almost around 9 marks was from introduction topic. Very easy. Theoretical questions normally will come from this chapter. So let me straight away start my discussion. Chapter number 1, introduction. Now, what do you mean by tax, sir? What do you mean by tax? Please note. Now, since it is revision, it will be normally faster than what we take in our normal classes. Sir, what do you mean by tax? Tax is something. See, government needs money. Like we need money to run our family, government also needs money. This money which government needs, government is undertaking various different types of activities for us. This money which government needs, no, government is going to take this money from us in the form of taxes. Now, government needs money for construction of bridge. Government needs money for defense purpose. Government needs money for construction of different types of infrastructure project. Government needs money for our government schools and colleges. If government wants to run hospitals for free, government hospitals, etc., government will need money. Now, this money which government needs, no, this money which government needs, government is going to collect from us in the form of tax. So tax is what, sir? Tax is an amount which is paid by the people of India to the government for various different services which is given by government. Government is actually giving us different services, but we may not be getting benefited from it directly. Now, what is tax from legal perspective? Tax is an pecuniary burden laid upon individuals and property owners. What is tax, sir? It is a pecuniary burden. Pecuniary burden means it is a monetary burden laid upon individuals and property owners. It is an amount paid to government. It is imposed on goods and services, etc. This is what students normally you say. Now, then, what are the different types of taxes? There are basically two types of taxes. One is direct taxes, another one is indirect taxes. Direct taxes, indirect taxes. Direct taxes, incident impact is on same person. Indirect taxes, incident impact is on two different persons. Sir, what do you mean by this? Meaning, direct tax, the person who is paying the money to the government and the person on whom the impact of that is the same person. Meaning what, sir? Say for example, direct taxes says, Mr. Dilip, I am Dilip. So Mr. Dilip, you are earning the income. No, Mr. Dilip, you are earning the income. You have to pay the taxes to the government. Mr. Dilip, you are earning the income. You have to pay the taxes to the government. I have earned 10 lakh rupees. I have to pay 1 lakh rupees to government. So income is earned by me. The tax is also required to be paid by me. This is direct taxes. Indirect taxes says incidence and impact is on two separate persons. Incident impact is on two separate persons. Direct taxes, I should directly pay to the government. The person who is earning has to only directly pay to the government. Indirect taxes, incident impact is on two different persons. The person who is paying the tax to the government and the person from whom the tax is collected is two different persons. For example, you come to Priya Sarees. I'm having a business in the name of Priya Sarees. So you come to Priya Sarees. I sell the sarees to you. The sale value is, the saree price is 10,000 rupees and assuming GST rate is 10% on saree. So totally I will collect how much from you? I will collect 11,000 from you. 10,000 rupees is the saree price plus 10% extra GST. So totally I will collect 11,000 from you. Now out of this 11,000, no, I will keep 10,000 for myself and 1,000 rupees I am going to give it to government. 1,000 rupees which is there I am going to give it to government because it is what, sir? It is a tax which is applicable on this particular supply. So what is indirect tax? What is happening over here? See, though I have paid the taxes to the government, I have paid the taxes to the government. Have I paid it from my own pocket? No. I have collected it from you. So actually, if you see, you have paid the taxes to the government indirectly through me. You have paid the taxes to government indirectly through me. So direct tax, what will happen, sir? Incident impact is on same person. The payer and the payer and the person on whom the burden is there is same, but whereas indirect taxes, the payer and the person on whom the burden is there are two different persons. Direct taxes are directly paid to the government and indirect taxes are indirectly paid to the government. Then Direct taxes, it is a tax on income, whereas indirect taxes is a tax on goods and services. Direct tax, on what do you pay direct taxes? Direct taxes are paid on the income. Indirect taxes is paid on supply of goods and services. It does not matter. It does not matter whether a person is earning profit by selling any goods or services or not. If he is earning a profit, on that profit he will have to pay income tax. But indirect taxes you will have to compulsorily pay. Government says on mobile phone GST rate is 12%. Now, if I sell a mobile phone, compulsory 12% GST I have to pay. Government says, say the GST rate on say remote is 18%. So if I sell this remote, compulsory I will have to pay GST at 18%. Government says GST on spectacles is 28%. So if I sell spectacles, compulsorily I will have to pay GST. I will have to compulsorily pay indirect taxes, meaning indirect taxes is on goods and services. Government says milk is exempt from GST, you don't have to pay any tax on milk. Government says fresh vegetables are exempt from GST, you don't have to pay any taxes on that. That means what, sir? If a person is selling fresh vegetables, he is not going to collect taxes from you, he is not going to pay any taxes, meaning indirect taxes are on goods and services. Government has told that these are the different goods on which tax is applicable, these are the different services on which tax is applicable, these are the different goods and services on which you don't have to pay any taxes. Then direct taxes are progressive in nature, indirect taxes are regressive in nature. Oh, sir, what is this, sir? Direct tax is progressive in nature, indirect tax is regressive in nature. Sir, what do you mean by this? This means, if you know direct taxes, what is direct tax telling? As and progressive in nature means as and when you progress, or as and when your income is increasing, the amount of tax which you have to pay also will increase. Who is telling? Direct taxes. Direct taxes is progressive in nature. Sir, what do you mean by this word progressive in nature? It says as and when your income increases, the amount of tax which is required to be paid by you also will increases. Indirect taxes says I am regressive in nature. I don't care how much you are earning. Indirect tax is telling I don't care who you are, I don't care how much you are earning, I don't care whether you are a rich fellow or a poor fellow, the amount of tax which I am going to collect from all you guys is same. Array, direct taxes, what is happening? Up to 2.5 lakhs, no tax. 2.5 to 5%, 5 to 10, 20%, more than 10, 30%, meaning as and when my income is increasing, the amount of tax which I have to pay also increases. Array, up to 2.5 lakhs, I don't have to pay tax at all. Array, from 2.5 lakhs to 5 lakhs, if my income is 2.5 lakhs to 5 lakhs, I will have to pay only 5%. Array, my income is from 5 lakhs to 10 lakhs, pay 20%, more than 10 lakhs, 30%, more than 50 lakhs, surcharge, etc. Something, as and when your income is going to increase, the amount of tax which you have to pay also will increase. Whereas indirect tax says, I don't care who you are. Array, indirect tax says, now say, beggar is earning 1 lakh rupees. Mukesh Ambani is earning 500 crore rupees. Now, beggar, will he pay income tax, sir? He is earning only 1 lakh rupees. Why will he pay income tax, sir? But Mukesh Ambani earning 500 crore rupees, will he pay income tax? Yes, sir. Now, beggar may not have to pay income tax, or he may have to pay very less income tax, but Mukesh Ambani, because he is earning huge amount, he will have to pay huge amount of income tax. But same thing, if you see, beggar and Mukesh Ambani, they both go and purchase Parle-G biscuit. They both go and purchase Parle-G biscuit. This Parle-G biscuit is of rupees 10, and this includes tax of rupees 1. This includes what, sir? This includes tax of rupees 1. It includes tax of rupees 1. Now, whether Mukesh Ambani is purchasing this Parle-G biscuit or this beggar is purchasing this Parle-G biscuit, at the time of purchase of this biscuit, though, they will have to pay the same amount of tax, which is 1 rupees. Indirect tax. Indirect tax is what, sir? I am regressive in nature. I don't care who you are. I don't care how much you are earning. The amount of tax which you have to pay me will remain same. The amount of tax which you have to pay me will remain same. Example of direct tax is what, sir? Income tax. Example of indirect tax is GST or customs. And the board which is going to pass decisions or make orders, notifications, the board of direct taxes is called as CBDT, and board of indirect taxes is called as CBIC. One more point which you should be knowing: the board of indirect taxes is called as what, sir? CBIC. The board of direct taxes is called as CBDT. CBDT means what, sir? Central Board of Direct Taxes. CBDT, Central Board of Direct Taxes. This is the board which is going to pass orders on income tax. Then CBIC. CBIC means what, sir? Central Board of Indirect Taxes and Customs. One is CBDT, Central Board of Direct Taxes. Another one is CBIC, Central Board of Indirect Taxes and Customs. So that is the board which is going to take decisions with respect to indirect taxes and with respect to direct taxes. Now, one question which normally they ask for theory and which was asked in your previous attempt also was with respect to what, sir? What are the features of indirect taxes? What are the features of indirect taxes, or what are the features of GST? What are the features of customs? What is the features of GST? What are the features of indirect taxes? Now tell me, who is going to win the IPL this year? Alright, tell me, who is going to win the IPL this year? RCB will win, sir. Alright, who is going to win the IPL this year? RCB will win, sir. Alright, tell me, who is going to win the IPL this year? RCB will win, sir. Sir, RCB will not win, sir. Hey, RCB will win, sir. You should tell the same thing. You should repeat the same thing with me. Alright, tell me, who is going to win the IPL this year? RCB will win, sir. Alright, who is going to win the IPL this year? RCB will win, sir. R for important source of revenue to the government. C for taxes on commodities and services. B for shifting of burden. RCB. Who is going to win the IPL? Who is going to win the IPL this year? RCB will win, sir. Features of indirect taxes. RCB will win, sir. RCB will win, sir. R for important source of revenue to the government. C for taxes on commodities and services. B for shifting of burden. N for no perception of direct pinch. I for it is inflationary in nature. W for wider tax base. And sir, S for it promotes social welfare and it is regressive in nature. It promotes social. S for promotes social welfare and R for regressive in nature. Who is going to win the IPL this year? RCB will win, sir. Who is going to win the IPL? Alright, there was a question asked. Seriously, I'm telling. See this. Alright, just look this question paper over here. Inge par students, inge par. Idhar dekho ji. Alright, what is the question telling? Discuss the concept of indirect taxes and features of indirect taxes. The problem in examination is remembering the points. I hope you will be able to easily write features of indirect tax are what, sir? RCB will win, sir. R for important source of revenue to the government. C for taxes on commodities and services. B for shifting of burden. W for wider tax base. I for inflation nature. N for no perception of direct pinch. S for promotes social welfare. R for regressive in nature. R for what, sir? Regressive in nature. So these are the features of indirect taxes. Now, it is an important source of revenue to the government. Almost, see, one of the source of revenue to the government is taxes, and in the taxes also the important source of revenue is the major tax revenue which government gets is indirect taxes. Almost 60% of the tax revenue which government is getting is from indirect taxes. Then it is a taxes on commodities and services. Indirect tax is a tax on goods and services. It is not a tax on profit. It is not a tax on manufacture. It is not a tax on providing services, etc. It is a tax on goods and services. They have told these are the goods, these are the services. If you supply these goods, if you supply these services, then you have to pay this amount of tax. Then under GST law, we have what, sir? There is shifting of burden. No one will pay tax from his own pocket. Now there is, say, there is a supply chain. There is a supply chain. There is a manufacturer, wholesaler, retailer, and final consumer. What happens in this supply chain, sir? The manufacturer, whatever tax manufacturer has to pay, manufacturer is going to collect it from the wholesaler. Wholesaler will collect it from the retailer. Retailer will collect from the final consumer. So indirect tax is what, sir? Under indirect taxes, what will happen? Shifting of burden will happen. Then there is no perception of direct pinch. Meaning when you are paying indirect tax, no, you will not feel like paying indirect taxes. You don't feel that you are paying indirect taxes. For example, if I say you, I give you 10 lakh rupees. I give you 10 lakh rupees. Your income is how much? 10 lakh rupees. Now government says, give me 1 lakh rupees. Government says, give me 1 lakh rupees. You have earned an income, no, pay me income tax 1 lakh rupees. You will feel the pain. Your hard-earned money, 10 lakh rupees which you have, government is taking 1 lakh rupees from that. You will feel the pain. But whereas income, the indirect taxes, you will not feel that pain. There is no perception of direct pinch. You will not feel the pain of paying the taxes. Why, sir? See, I know that Parle G biscuit is of 10 rupees. When I give 10 rupees, I know that they are going to collect 1 rupees as tax. But still, I will not feel that I am paying the tax because at the end of the day, there is something which you are getting. At the end of the day, you're getting something and you're eating that Parle-G biscuit. I purchased a mobile phone. I purchased an iPhone worth rupees 1 lakh. I paid 18,000 rupees GST on that. I paid 18,000 rupees GST on that, but still I will not feel the pain of paying GST because I know at the end of the day, I can see my mobile phone. Wow, what a beautiful mobile phone I have. Arey, what a beautiful selfie I can take. What a beautiful status I can update, etc. So I will not feel the pain. There is no perception of direct pinch. But income tax, you earn the income, government says, say you earn 10 lakh rupees, government is taking 1 lakh rupees. You will feel the pain. You will feel the pain because you are not getting anything. You are not getting anything, so you will feel the pain. In case of indirect taxes, you will not feel that pain. There is no perception of direct pinch. Indirect taxes are inflationary in nature. Next feature says what, sir? Indirect taxes are inflationary in nature, sir. What do you mean by this? This means because of indirect taxes, the cost of a product is going to increase. Sir, what do you mean by this? Say, for example, there is a TV. There is a TV, the price of the TV is 1 lakh rupees. Now, if I wanted to purchase this TV, normally the price is 1 lakh rupees. Now, say the GST rate is 18%. So, how much extra will I have to pay? Because there is an indirect tax collected, there is a GST collected, there is an indirect tax collected. How much extra I have to pay? I have to pay an extra amount of 18,000 rupees. So I have to pay totally how much? 1,18,000 rupees. Are you understanding what is happening over here? Because there is an indirect taxes levied, the cost of the product is also increasing for me. The amount which I have to pay for this product is also increasing. It is also increasing. So what happens, sir? Indirect taxes are inflationary in nature. Because of indirect taxes, that the amount which you pay for purchasing or selling, for purchasing a product will also increase. Now say, instead of this, the tax rate on TV is 28%. So 1 lakh is my base value, 28,000 I will have to pay as tax. So total is 1,28,000. Are you understanding what is happening over here? Since the tax increase, my cost of product also increase. So what is indirect tax doing, sir? It is inflating the value of that product. Indirect taxes are inflationary in nature. Then they say that indirect taxes have a wider tax base. Sir, what do you mean by this? Indirect taxes have a wider tax base. Sir, what do you mean by this, sir? Meaning, in India, let us say there are totally 140 crore people. Now, 140 crore people, each one of them, in some or the other way, is contributing towards indirect taxes. Each one of them, in some or the other way, is paying indirect taxes to the government. These 140 crore people, they will at least buy a chocolate, no? They'll at least buy some or the other product. They will need some dress for their house, etc. They will need a chocolate. They will need, say, some cooking items, etc. Cooking vessels, etc. So these people, these 140 crore people, everyone in some or the other, even a newborn baby. Even a newborn baby will purchase a diaper. For that newborn baby. He is also contributing towards indirect taxes. Even a person who has died, no, he is also contributing towards indirect taxes because for doing that last rites, there may be different materials which can be procured, etc. We may take services of that last rite vehicles, etc. So indirect taxes, almost everyone is paying indirect taxes. There is a wider tax base. But whereas direct taxes, it is not like that. It has a narrow tax base. Direct taxes, what will happen, sir? There are only those people whose income is more than 2.5 lakhs have to pay direct taxes. Now, how many people will be there? Maybe out of this 100 crores, maybe for 140 crores, only 100 crore people will be there whose income is more than 2.5 lakhs. Maybe we are just taking an example. So indirect taxes has wider tax base. The number of people who are paying indirect taxes, the number of people who are contributing towards indirect taxes are more. Indirect taxes promotes social welfare. They say that there are some products called as sin goods. On these sin goods, I am going to collect huge amount of taxes. Because I am going to collect huge amount of taxes, the cost of this product is going to increase. When the cost of this product is going to increase, the consumption of this product will decrease. Therefore, indirectly, I am promoting social welfare. Government is telling. For example, cigarette is a sin goods. Pan masala is a sin goods. On the cigarette, pan masala, etc., I will collect huge amount of taxes. What is going to happen if I collect huge amount of taxes? If I collect huge amount of taxes, the cost of this product will increase. When the cost is increased, the people who is going to consume this product also will decrease. Indirect taxes are regressive in nature. Sir, what do you mean by this word, sir? Indirect taxes are regressive in nature. Meaning, just to took an example, it does not care whether you are rich or poor. The amount of indirect taxes which you have to pay will remain same. Then constitutional provisions with respect to taxation. constitutional provisions with respect to taxation. Our Constitution of India contains some points with respect to taxation. What are those points with respect to taxation? First, article, there are many different articles in our constitutions. Article 265, 246 and 245 are important from taxation point of view. Article 265 says no tax can be levied or collected unless there is an authority of law. So it is this article which is giving the permission to collect taxes. No tax, it says you cannot collect any tax or you cannot levy any tax unless until you have an authority, unless until you have taken permission from the constitution. Article 245 says the government of India, the central government, has the power to make law for whole of India. Article 245 says the legislature of the state or state government has the power to make law for whole or any part of that particular state. So if any law is required to be made for whole of India, the entire India or any part of India, who can make that law? Central government or the central government, or that is parliament. And if any law is required to be made for a particular state, for Karnataka, Tamil Nadu, West Bengal or Rajasthan, etc., who will make? That particular state will make the law. Now, there is one more article, important article, Article 246. What is this Article 246, sir? Article 246 talks about what, sir? Article 246 has a schedule in it. Article 246 has a schedule in it. What is the schedule number, sir? Schedule number 7. Article 246 has a schedule called as schedule number 7. Article 246 says there are, in schedule number 7, there is 3 lists: union list, state list and concurrent list. Our union list is also called as list number 1. State list is also called as list number 2, and concurrent list is also called as list number 3. Sir, why is this list important for us, sir? Why are we discussing about this list? Because there is an article called as Article 246. It has a schedule called as schedule number 7. This schedule has 3 lists: union list, state list, concurrent list. Union list, whatever is, see, what is this list, sir? Basically, in this list, they have given different types of activities, different types of matters in respect of which who can make the law. So union list contains various different types of items or activities or matters with respect to which only central government or the parliament can make the law. State list contains various different items or points or activities or matters in respect of which only the state government has the authority to make law. And concurrent list will contain various different activities or items in respect of which central government as well as state government can jointly come together and make the law. For example, union list contains the matter of income tax is in union list. So the income tax is collected by central government. The entire revenue will go to central government. Sales tax or tax on alcoholic liquor for human consumption, tax on alcohol, is collected by the central government. So you would have seen in different states the tax on alcohol is different. And in case of concurrent list, they normally don't talk about tax law. In concurrent list, they talk about what's the general laws. For example, education law, children education law, up to the age of 14 everyone should be sent to school, etc. Child labor abolish act, women protection act, etc. Indian penal code, they will all come under this concurrent list. They will all come under which list, sir? Concurrent list. Now, sir, why are we seeing this, sir? Why are we seeing this? Because this discussion is very important for our GST. Now, in our entire constitution, there was not even one single point which was telling, but that both central government and state government, you come together jointly and make a law with respect to taxation. There was not even a single point in entire our constitution which was giving power to both central government and state government to make law with respect of taxation. So what happened, sir? Please note. Union list gave powers only to central government. State list gave power only to state government. And it was in union list and state lists in which the taxation points were covered. Concurrent list gave the power to both central government and state government, but it did not have any point. It did not talk about any point with respect to taxation. So an amendment. See, GST is a tax which is levied by both central government and state government. Both central government and state government is jointly levying this tax. Therefore, since there was not even a single point in our entire constitution which was giving this power, therefore an amendment was required to be made in our constitution. There was an amendment required to be made in the constitution. Why, sir? Because there was no article in the entire constitution which gave the power to both central government and state government to collect taxes. Therefore, there was an amendment required to be made in the constitution, and Constitution's 101st Amendment Act 2016 was passed. An amendment act and amendment was made in the constitution, and which act was passed, sir? Constitution's 101 Amendment Act 2016 was passed. Now please note, how is an act passed, sir? To pass an act, first there will be a bill. That bill will be presented in Lok Sabha, Rajya Sabha, upper house and lower house of parliament. Once it gets approval from upper house and lower houses of parliament, it will become that bill. That bill will go to the President of India. The President of India is going to sign that bill, and that will become an act. So Constitution's 101st Amendment Act came into existence. Sir, how did this Constitution 101st Amendment Act came into existence? By passing Constitution's 122nd Amendment Bill. So it is this bill, Constitution's 122nd Amendment Bill, and this act, Constitution's 101st Amendment Act, which gave the power to central government and state government to make law with respect to GST. There were different amendments made, and due to these amendments, the provisions with respect to GST were levied. There were some articles introduced. Please note, this is very important from your MCQ point of view. Which is that act which introduced the provisions with respect to GST in the Constitution, Constitution's 101st Amendment Act, and which is that bill, Constitution's 122nd Amendment Bill. Now, by this Constitution 101st Amendment Act, they introduced various different new articles in our constitutions. Some of these articles important from us from taxation point of view or from GST point of view is Article 246A, Article 269A, and Article 279A. Article 246A, 269A, and 279A. Article 246A gave the power to both central government and state government. It was this article. Which article, sir? Article 2. Very important. Please note, all these articles are very important. Most important is Article 279A, and other articles are also important. These articles are important. Most important is Article 279A. Article 246A, it gave the power to both central government and state government. Article 246A told what, sir? Are central government, are state government, you both come together. Are central government, are state government, you please come together and make law with respect to what, sir? Goods and service tax. Please make law with respect to goods and service tax. And it also told that I will give exclusive power to central government to make law in respect of interstate supply. And it also told one point that in respect of interstate supply, I will give the power only to central government to make the law. So, because of this particular article, which article, sir? Article 246A, GST came into existence. It is this article because of which GST came into existence, because the power was given to central government and state government by this law. Are you remember Article 265 said? Article 265 said if you don't have any authority, you cannot make the law. So that authority was given to central government and state government. Which article gave this authority? Article 246A. Now, we'll ignore what was happening before GST law, because this is something which I discuss in the classroom for making you understand GST better, because it is a revisionary lecture. We will directly go into GST. Now, what happens under GST law, sir? What is this GST? What is this GST? Can you please tell me what is this GST? For explaining this concept of GST, what will I do? I will take an example of a supply chain. Let us take an example of a supply chain which contains 4 people: manufacturer, wholesaler, retailer, and final consumer. Manufacturer, wholesaler, retailer, and final consumer. So first goods are manufactured, then it is given to wholesaler, then retailer, then final consumer. So this is a supply chain. Let us call it as what, sir? Supply chain. Are in your school days you have studied about food chain? No, you would have studied about food chain. No, in your school days, just like that we have something called as supply chain. So this supply, let us take an example. Now please note, for simplicity purpose, let us take the tax rate to be equal to 10%, because it is very easy for us to calculate. Okay, say 100 into 10 is what? 10. 100 into 10% is 10 rupees. 150 into 10% is 15 rupees. 228 into 10% is 22.8 rupees. Very easy to calculate. If I say 228 into 18%, 228 into 5%, you will have to use a calculator, correct? So let us take tax rate to be equal to 10% for our easy calculation. Now see, this manufacturer has manufactured TV. He manufactures TV. Now, when he manufactures TV, this manufactured TV is not going to keep it with himself. He is going to sell this TV. So on the sale of this TV, he will have to collect tax of 10%, which is 10 rupees, and the total selling price will be what, sir? 110 rupees. So this 110 rupees will be given by whom? Wholesaler. Wholesaler is going to give this entire 110 rupees to the manufacturer, and this whole manufacturer will keep 100 rupees for himself and 10 rupees he will pay to government. 10 rupees is going to pay to government. Has the manufacturer paid this tax from his own pocket? No, sir. He shifted the burden to the next person, meaning he's collected the tax from the next person and then he paid it to government. Now similarly, if you see wholesaler total 110 rupees he has paid to the manufacturer. Out of this will be divided towards cost, which is his purchases 100 rupees, and GST on the purchases, which is 10 rupees. Now to this purchase value, to this cost, he is also going to make some profit. Now wholesaler is going to sell this product. He's not going to keep this product for himself. At the time when he's going to sell this profit, let us say that he makes a at the time when he's going to sell the product, let us say he makes a profit of 20 rupees. So this profit of 20 rupees is what, sir? This is a profit, or it is a value addition which is made by him. So his cost of goods sold will become 120 rupees. Now when he's selling this product, obviously what is required to be collected? GST will be collected. GST is how much, sir? GST is 10%. How much GST will collect? 12 rupees GST. And what is his total selling price? 132 rupees. Tell me who is going to pay this 132 rupees? Sir, it is the retailer, sir. Who is going to pay this 132 rupees? Retailer is going to pay 132 rupees to wholesaler. Now, retailer is going to pay 132 rupees to wholesaler. Therefore, wholesaler will keep 120 with himself and 12 rupees is towards tax. Now, I will make you understand two important words which are used in GST. Please note, there is something called as sale and there is something called as purchases. So sale for the manufacturer is purchase for the wholesaler. Similarly, sale for the wholesaler is purchase for the retailer. Similarly, sale for the retailer is purchase for the final consumer. Correct? Under GST law, sales is called as outward supply. Under GST law, what is happening, sir? Your sales under GST law is called as outward supply. And under GST law, purchases are called as inward supply. Under GST law, sales is called as outward supply. Purchases are called as inward supply. So when I say outward supply, in your books also, if you see this word outward supply, what they are trying to tell you, it means it is sales. When they use the word inward supply, that means they are talking about purchases. So sales means what, sir? Outward supply. Outward supply. The tax which you pay on your sales is called as output tax. The tax which you pay on your sales is called as output tax. Similarly, the tax on your purchases, because purchases is inward supply, the tax on your purchases or inward supply is input tax. It is input tax. Now please understand. Under GST law, most beautiful benefit which is there under GST law is, now see, wholesaler has sold the product. You see, wholesaler purchased the product for 110 rupees. His cost is 100 rupees and GST on purchases is 10 rupees. So can I say this GST on purchases as my input GST? Can I say for the wholesaler, I am wholesaler, so whatever tax I have paid on my purchases, can I say it is my input GST? This is my input GST. Yes, sir. Now, can I say the tax which is required to pay on his sales is his output GST or output tax? And he is selling the product for 120 rupees. On that, he has to pay a tax of 10%, which is 12 rupees. So can I call this 12 rupees as his output GST or output tax? Yes, sir. Now please understand this carefully. Please understand this carefully. There is an output tax of 12 rupees. There is an input tax of 10 rupees. I have to pay 12 rupees and I have already paid 10 rupees. I have to pay 12 rupees on my sales and on my purchases I have already paid 10 rupees. Please understand this carefully. Please understand this carefully. What is GST law telling? What is GST law telling? GST law is telling wholesaler, your output tax liability is how much? 12 rupees. Wholesaler, how much is your output tax liability? 12 rupees is your output tax liability. You have to pay me how much? 12 rupees. But wait. Government is telling wholesaler, wait. I know that you have to pay me how much? I know that you have to pay me 12 rupees. But wait. Do you remember that you purchased the product from the manufacturer? Do you remember you purchased the product from the manufacturer? When you purchase the product from the manufacturer, you have already paid. When you purchase the product from the manufacturer, you have already paid me 10 rupees. You had paid 10 rupees to the manufacturer, which manufacturer has paid me. Please understand. On the sales, how much tax the wholesaler has to pay? 12 rupees. On his purchases, wholesaler had already paid tax of 10 rupees. So what government is telling? Wait, wholesaler, don't pay me entire 12 rupees. Wholesaler, don't pay me entire 12 rupees. 12 rupees is your output tax liability. It is a tax on your sales, but you had already paid some amount of tax on your purchases, which is 10. So you subtract that out of your output tax liability, subtract the tax which is already paid by you and pay me only differential amount. This is the tax which I have to pay in cash. Pay me only the differential amount. This is the tax which I have to pay in cash. My output tax liability. Output tax liability means how much I am liable to pay, 12 rupees. Now, to pay this output tax liability, I am using my input tax. To pay this output tax liability, I am using my input tax. What is this concept called as? This concept is called as input tax credit. If I am using the taxes paid on my purchases for making the payment of the taxes on my sales, then it is said that I am taking input tax credit. What is input tax credit? Input tax credit means taking the benefit of tax paid on your purchases at the time of making the payment of tax on your sales. When you are making the payment of tax on your sales, no, you are taking the benefit of the taxes which you have paid already on your purchases. This concept of taking the benefit of taxes paid by you on your purchases for making the payment of taxes on your sales is called as input tax credit. This concept is called as input tax credit. Sir, what is called as input tax credit, sir? If you are taking the benefit of taxes paid by you on your purchases for making the payment of taxes on your sales, then it is said that you are taking input tax credit. Anyways, I hope this concept of input tax credit, basic concept, okay, we are not obviously there is a separate chapter called as input tax credit. Basic meaning of input tax credit is clear to you all, and I hope you understood what is outward supply and tax on outward supply, what is inward supply and tax on inward supply. Now this input tax under GST is available at each stage of supply chain. At each and every stage of supply chain, input tax credit is available. This was not there before. Therefore, what is the concept of GST, sir? GST is a tax on value addition. Now, what lawmakers are telling? GST is a tax on value addition. You see over here, how much wholesaler has paid to the government in cash? Wholesaler has paid how much in cash, sir? Wholesaler has paid only 2 rupees in cash. He has paid how much in cash? Only 2 rupees he has paid in cash. Now see how much is the value addition done by. What is the extra amount he is charging from the customer? 100 rupees is what manufacturer has charged. Okay, on that he is charging extra of 20 rupees. So this is the value addition done by him. This is the profit, or this is the value addition done by him. So 20 rupees into what is the GST rate which you are taking? 10%. So 20 into 10% is what, sir? 2. 20 into 10 is what? 2. How much tax is he paying in cash? 2. So what is GST basically? GST is a tax on value addition. Whatever extra you are collecting, whatever value you are adding, only on that government is going to charge GST from you. For example, in the next case of supply chain, say the retailer also added a value of 20 rupees. So his cost is 120. He added value of 20. So his cost of goods sold became 140. On that 14 is GST. How much GST is he paying in cash? 2 rupees. Why, sir? Because value addition is 20 rupees. 20 rupees into 10% is 2. So how much he has to pay? 2. Sir, what if there is no value addition? Oh, sir, tell me, what if there is no value addition? Say, for example, retailer, at what price did he purchase? 120 rupees. Now this product no one is purchasing at all. Therefore, he is not making the profit. He is selling it at cost only. He is not making any value addition. Whatever price he purchased it for, he is selling it for same price. There is no value addition done by him. So his sale price will be, cost of goods sold will be 120 rupees. On that 12 rupees will be GST and 132 rupees is his selling price. Now what is his output tax liability? 12 rupees. How much he has to pay tax on his sales, sir? 12 rupees. How much tax he has paid on his purchases? 12 rupees. So net, how much tax will he pay? 0. Because tax on my sales is 12, tax on my purchase is 12. So net to net, how much I have to pay to government? Nothing. So GST is a tax on value addition. If there is no value addition, no GST. There is no value addition, there is no GST which you have to pay. GST eliminates cascading effect. Before GST law, what used to happen was there was tax on tax collected. There was cascading effect because there were different types of taxes, plenty of taxes which were there. So they were collecting tax on tax, tax on tax, tax on tax, because of which the product price was increasing drastically. Under GST law, because there is one single type of tax which is GST, there is no concept of tax on tax. The cascading effect is eliminated under GST law. Under GST law, you have continuous tax credit or input tax credit available at each and every stage of supply chain. We saw it above. Whatever tax I have paid in my previous stage, I will get the benefit. Whatever tax wholesaler had paid to retailer, whatever tax wholesaler has paid to manufacturer, he is taking the benefit. Whatever tax retailer had paid to wholesaler, he is taking the benefit. So there is input tax credit available at each and every stage of supply chain. And under GST law, the entire GST burden is on final consumer. See, basically, if you see at first stage, how much tax did government get? 10 rupees. How much tax did government get, sir? 10 rupees. Then second stage, how much did government get in cash? 2 rupees. Third stage, how much did government get in cash? 2 rupees. Array, see how much he has paid? 2 rupees, 2 rupees. So totally how much rupees government got, sir? 14 rupees. At each and every stage, government got 10 rupees, 2 rupees, 2 rupees. So totally how much government got? 14 rupees. Now please note, no one has paid it from their own pocket. Every person, manufacturer collected it from wholesaler, wholesaler collected it from retailer, retailer collected it from the final consumer. GST, the burden of paying tax is on final consumer. No one will have to pay tax from their own pocket except the final consumer. Now see, from final consumer, how much tax did the retailer collect? 14 rupees. How much tax did the retailer collect? 14 rupees. Meaning whatever tax government got, no, that entire amount government got it from final consumer only. So GST, the burden is on final consumer. India follows what GST model, sir? We follow dual GST model because of our federal structure. Because we have central government, because we have state government, because our powers are distributed because of our federal government. The model of GST which we are following is called as dual GST model. And GST is a destination-based consumption tax. GST is what type of tax, sir? See, there are different types of taxes like origin-based tax or supply-based tax, etc. But GST is destination-based consumption tax. It is a destination-based tax, consumption-based tax. Please note one question which they normally ask in the examination: what principles does the GST follow? What principles does India follow? India follows destination-based principle. And what is GST in India? GST is a consumption-based tax. GST is a consumption-based tax. India follows destination-based principle. Very important for MCQ. Now, before we go further in this chapter, let us discuss the basic meaning of this intrastate supply and interstate supply. Sir, what is this dual GST model, or what is this destination-based consumption tax, sir? Why, sir? Why this point is there? You'll understand this with this concept of nature of supply. There is something called as intrastate supply and interstate supply. Obviously, you all will be knowing about this. What is intrastate supply, sir? When the supply of goods or services or both is within the same state or within same union territory, then it is said that it is an intrastate supply. If it is two different state, two different union territory, one state and one union territory, then it is called as interstate supply, or it is a case of import or export of goods or services. We will see the actual meaning when we discuss the concept of place of supply. Actual meaning is there in the place of supply chapter. We'll see it over there. In general, what is intrastate supply? Supply goods or services within the same state or within same union territory. Interstate supply is supply between two different states, between two different union territory, or one state and one union territory. So why are we understanding this? Because when it is an intrastate supply, the tax which you have to pay is called as CGST and SGST. And when it is an interstate supply, the tax which you have to pay is IGST. When it is intra-union territory supply, CGST and UTGST and IGST in case of interstate supply. Now please note how many union territories are there in India? There are totally 8 union territories. There are totally how many union territories, sir? There are totally 8 union territories in India. Now there are 3 union territories. There are 3 union territories which normally union territory will have the power to the union territory will be under control of President of India. President will appoint a Lieutenant General over there who will be taking care of the matters over there. But there are 3 union territories, which is Puducherry, Delhi and Jammu and Kashmir. Normally union territories cannot make their own government. States can make their own government. States like Karnataka has its own government, Tamil Nadu has its own government, Rajasthan has its own government, Maharashtra has its own government. Union territories normally cannot make their own government. The power is with central government. But there are 3 union territories: Puducherry, Jammu and Kashmir, Delhi. Puducherry, Jammu and Kashmir, Delhi. These 3 union territories can make their own government. Andaman Nicobar does not have any CM, but Puducherry has a CM. Delhi has a CM, meaning these 3 union territories, Puducherry, Delhi, Jammu and Kashmir, can make their own government. Therefore, they will be treated as state for the purpose of GST. There is a definition of state which is given under GST law. There is a definition of state which is given which says state includes union territory with separate legislation. Meaning state will include whatever you understand by state is a state. Karnataka is a state. Goa is a state. Maharashtra is a state. Whatever you understand by state is a state, but it shall also include union territory with separate legislature. It shall also include that union territory which can make their own government. So Puducherry, Delhi and Jammu and Kashmir are the union territories which can make their own government, sir. But why are we discussing this? Because whenever you make a supply in the same state, then it is intra-state supply. The tax which you have to pay is CGST and SGST. But when the supply is made in the same union territory, the tax which you have to pay is CGST and UTGST. Which are the union territories for GST purpose? Andaman Nicobar, Lakshadweep, Diu Daman, Dadar Nagar Haveli, Chandigarh and Ladakh. These are the different union territories. And when you make a supply in that union territory itself, within that union territory, the tax which you have to pay is CGST and UTGST. There are some examples over here. Now, sir, what are the deficiencies of existing? Sir, why GST came into existence, sir? Sir, before GST was there no indirect taxes? No, it was there. Yes, indirect taxes were there. Then, sir, why GST came into existence? Because there were many loopholes in the existing indirect taxes. There were many loopholes. What are these loopholes, sir? What are the deficiencies in existing indirect tax law? The deficiencies were there were certain transactions which were treated as both goods and services, and they were collecting service tax also, VAT also, sales tax also, custom duty also. Meaning there was no clear discrimination whether this I should call it as goods or I should call it as services. They were treating it as goods also and service tax also, and they were collecting taxes of services also and taxes of goods also. And multiple taxes were collected in the same state. One single state, Karnataka, that single state was collecting VAT. That single state was collecting luxury tax, entertainment tax. One single state was collecting multiple types of taxes. So that was a problem. But now we have only one type of taxes, which is GST. And SENVAT credit was not available, was not integrated with state VAT. What is this, sir? Now, central government was collecting. Whenever you sell a product, central government was collecting CST. Okay. And if you sell the product from one state to another state, central government was collecting CST. Please note, I am talking about before GST law. And when you sell the product within the state government was collecting VAT. Now CST, the tax collected by central government before GST law and the tax collected by the state government before GST law, though it was tax on sales only, they were not linked to each other at all. The tax rates were completely different, etc. Tax on services was not integrated with tax on goods. Again, there was taxes collected on services separately, taxes collected on goods separately, taxes on services were collected by the central government, taxes on goods were collected by the state government. They were not integrated. And CST which you pay was not VATable. Meaning what, sir? Input tax credit of CST was not available. What is CST? Tax which is collected when you make a supply before GST law from one state to another state. This was not VATable. You could not take the benefit. The input tax credit concept was not applicable in that case. Before GST, these were the problems which were there. Anyways, that problems is now eradicated because GST has come into force. Then what is the journey of GST, sir? Genesis of GST. Please note, GST did not start overnight only. We all know that GST day is 1st of July 2017. We all know it is the GST day, or it is also called as appointed day. But it does not mean that GST came into existence only on that day. Very long period of time. It was during the year 2000. Then Prime Minister of India, Atal Bihari Vajpayee, he came up with this concept of GST. We should have the same tax type in entire India. Then there were different types of task force appointed, and Kelkar task force concept was taken. Kelkar task force said that for entire India, we should have one single type of tax, which is called as goods and service tax. And that concept was adopted. Now, please note, before GST law, there were many different types of taxes. There were separate types of taxes collected by central government, separate types of taxes collected by state government. Now, these taxes got merged and became a one tax. Now, if I want a new tax to come into existence, old taxes should go. So, these are the different types of old taxes which were collected by state government and which were collected by central government, which got merged or subsumed with GST. Sir, which are these taxes? Central government used to collect central excise duty, central sales tax, services tax, Countervailing duty and special countervailing duty comes under customs law. Excise duty on medical and toilet preparations, and all the other types of surcharge and cess collected on supply of goods or services. These taxes got merged with GST. They all got merged with GST. These were the taxes collected by central government. Similarly, state government used to collect VAT or sales tax. It used to collect entertainment tax, luxury tax, tax on lottery betting and gambling, purchase tax, entry tax, luxury tax, advertisement tax, and other types of surcharge and cess on supply of goods and services. These taxes are also not there anymore. These taxes are now, they are merged into GST. They all came together and a new tax form, new tax law was created, which is GST. You see this? You see this? There are so many different types of taxes: CST, VAT, service tax, excise duty, entertainment tax, luxury tax, etc. They will all eaten by this big fish. And the final product is what, sir? GST. The final product of this is what, sir? GST. Sir, are there any taxes? Sir, you spoke about the different types of taxes which got merged with GST, sir. But sir, are there any taxes which did not get merged with GST, sir? Yes. Sir, are there any taxes which were collected before GST law and even now they are collecting? Yes. Sir, which are those taxes? Please tell no, sir. Oh, sir. Whoa, sir. Please tell us which are those taxes which did not get merged with GST. The taxes which are not subsumed with GST. Basic custom duty is not subsumed with GST. Basic custom duty, the custom duty which was collected on import and export of goods, the basic custom duty, it is still there. It is still there. So we'll have to learn about customs law separately. Then property tax or stamp duty. When you sell and purchase property, no stamp duty is collected, property tax is collected. That is not merged. Then electricity duty, duty on electricity, excise duty on alcoholic liquor for human consumption. On alcoholic liquor for human consumption, the state government has the power to collect taxes. It is because of that reason you see different states will have different price for alcohol. Pondicherry or say Goa, the prices are less compared to Karnataka or different parts of India, etc. Entertainment taxes collected by local bodies. Similarly, entertainment tax got merged, which was collected by state government, but local bodies also collected entertainment taxes. It did not get merged with GST. Now, some important points, very important points. There are some products about which you should be knowing. On tobacco and tobacco products, GST as well as pre-GST taxes are collected. On tobacco and tobacco products, GST as well as pre-GST taxes are collected. Meaning there are tobacco and tobacco products, cigarette, pan masala, etc., gutka, etc. On this, GST is also collected and pre-GST taxes is also collected. On opium, Indian hemp, narcotic drugs, etc., GST as well as pre-GST taxes are collected. On opium, Indian hemp, see, on tobacco products, GST as well as central excise duty, pre-GST taxes. Which is that pre-GST tax? Central excise duty is collected. On opium, Indian hemp, etc., GST as well as pre-GST taxes. What is that pre-GST tax? State excise duty is collected. Then on alcoholic liquor for human consumption, on alcoholic liquor for human consumption, GST as well as on that GST will never be collected. On alcoholic liquor for human consumption, the government, central government and state government can never collect GST because the power is only with state government to collect GST. So GST can never be collected on alcoholic liquor for human consumption. And it does not mean the tax is not there. Tax is there. The power to levy tax is only with state government, and state government is levying the taxes. There is some product called as HP man. There are some product called as HP man. What is HP man? High speed diesel, petroleum crude, motor spirit, aviation turbine fuel, and natural gas. On this HP man, presently it is outside the purview of GST. On this HP man, GST is not collected as on today. But can it be collected, sir? Yes. See, please note. On alcoholic liquor for human consumption, GST can never be collected. But on HP man, GST can be collected, but it will be collected on a future date. Government will tell from which date they want to collect GST on that. What is HP man? High speed diesel, petroleum crude, motor spirit, aviation turbine fuel, natural gas. Sir, are there any advantages of GST, sir? Yes, there are many advantages of GST. There are many advantages of GST. What are the advantages of GST, sir? It's cinema. What are the advantages of GST, sir? It's cinema. Sir, what do you mean by this? It's cinema. For this, I will have to open the institute material. It's cinema. I'll just check which material I have with me right now. Advantages of GST. Where is my GST material? GST material. GST, 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 GST. Array, 1 second, students. Advantages, intermediate. I hope you're enjoying. If you're enjoying, please do like, share and subscribe. Also share this with your friends so that they can also enjoy these lectures. And please note, once you complete this discussion, no, CMA GST, yeah. Once you watch this the marathon lectures, for sure easily you can score around 50 to 60 marks for sure, just by looking into these lectures. MCQs, so at least you will be able to answer completely without doing extra effort. Where is this advantages of GST? Yeah, advantages of GST. It's cinema. Array, where is that? Just a second. Here the material is. This is the textbook of indirect taxes. Now, what are the advantages of GST, sir? It's cinema. What is its cinema? Now, what Institute has done is they have divided the advantages based on what is the advantage or what is the benefit which economy is getting, what is the benefit with respect to tax structure, what is the benefit with respect to compliance, what is the benefits to trade and industry, etc. So they have divided the benefit. In short, the benefit is what, sir? It's cinema. What is its cinema? I for it's cinema. I for enhanced investment and employment. I for enhanced investment and employment. Because of introduction of GST, lot of people are going to come in India and they are going to increase invest in India, and lot of different people in India also are going to start investment. So once they start investing in India, what is going to happen? They start investing means they are going to start some business. Once they start some business, it is also going to increase employment opportunity. Then what is the ITT for certainty in tax administration. Before, what used to happen, there were so many different types of taxes, so administration of taxes was not at all clear. But now there is only one type of taxes, so there will be a certainty of tax administration. ITS. S for what, sir? S for it is beneficial to small traders and entrepreneurs. Now, small traders and entrepreneurs whose turnovers are less, whose turnovers are say less than 10 lakhs, 20 lakhs or 40 lakhs, etc. They don't have to take registration at all under GST law. So it is more beneficial to them. It is beneficial to small traders and entrepreneurs. ITS cinema. C for it helps in reduction of compliance cost. Before, we had so many different types of taxes, because of which the compliance cost was high. So filing 5 different types of return was there before, but now filing only one type of return. So filing one return is more simpler than filing 5 returns. So compliance cost was high before, now it has been reduced. Then it's cinema. CI. It mitigates ill effect of cascading. One of the major advantage of GST or indirect GST is that cascading effect is completely gone. Not completely gone. In some cases, it is still there. But then, yeah, it mitigates the ill effects of cascading. CIN for it's help in creation of unified national market. Now, in entire India, any person can do business anywhere. Before, there were different laws state-wise. The laws were divided state-wise, but now for the entire India, there is one single type of law, so which helps in creation of unified national market. It's CINE. E for ease of doing business. Doing business is very easy now. You have to take only one type of registration and you take one type of registration, you can start your business. You don't have to worry what are the different laws which I have to follow, etc. Cinema. And M for Make in India. This GST is also going to boost the concept of Make in India, because the tax which you are collecting entire India is same. Now the people outside India, majorly almost around 160 countries throughout the world, follows GST as their indirect taxes. So any person from outside India also, if he comes to India, he will not have to worry now, because the tax law here in India as well as in that country will be same, which is GST. Then It's cinema. Last point is A for automated procedure with greater use of IT. Under GST law, no, everything happens through use of information technology. Everything happens to use of information technology. So there is what, sir? Automated procedure with greater use of IT. Now let us continue our discussion. Next point for our discussion, advantages of GST. Then GST Common Portal, one of the important point again. GST Common Portal also it is important. GST Common Portal. Functions of GST Common Portal. Normally they ask this question in examination. Sir, what is GST Common Portal? Now see, for entire India making one type of law. If you want to make one type of law for entire India, there should be one proper system. That one proper system, or there should be one proper place where people can come and do different activities like taking registrations, filing returns, etc. So that one common place is this common portal. It is this GST Common Portal. Like we have Facebook, where any person throughout the world can open an account, they can chat with other persons, etc. Just like this, we have this common portal where any person who wants to take registration anywhere in India, any person who is doing business, who wants to know, have any update about GST, etc., who wants to file return, who wants to take registration, who wants to pay the taxes, he can go to this common portal. This common portal is managed, designed and developed by a company called as GSTN. It is developed by a company called as what, sir? GSTN. It is a Section 8 company, meaning it is not for profit organization. What is GSTN? Goods and Services Tax Network. What do you mean by GSTN, sir? Goods and Services Tax Network. So it is this company who is managing, who has designed and developed this portal, common portal. Sir, what is this common portal, sir? This common portal is gst.gov.in. gst.gov.in. Now, how do I access this? If you are a taxpayer, or if you are a GST, if you are a GST practitioner or a chartered accountant, you can access it through intranet, and in the officers, GST officers can access it through intranet. What are the functions of this GST Common Portal? It will help you filing of your GST returns. It will help you in filing your registration application. It will help you in payment of taxes and payment generation of payment challan. It will help. It also acts as and clearinghouse for settlement of IGST. Basically, IGST which is there, this IGST will be divided between two people. One is, see, CGST and SGST. When CGST and SGST is collected, CGST will go to central government, SGST will go to state government. But when IGST is collected, no, IGST is basically CGST plus SGST. So IGST, whenever it is collected, 50% will normally go to central government and balance 50% will go to state government. Sir, which state government, sir? The consumer state. The state where the goods are consumed, or the state where the goods are destined. So GST is a destination based tax or consumption based tax. So which state will take? That consumer state will take. Wherever goods are going, that state will take. So this division will be done by whom? That common portal only. You don't have to worry. Then it also generates business intelligence. So GST also will tell you, okay, this businessman is good or not. It will give you ratings, etc. So it also generates business intelligence. Let me just show you how this GST portal looks like. gst.gov.in. So this is how your common portal looks like. This is this GST common portal. So if you want to take different types of services, pay taxes, registration, whatever it is, you can do. Whatever type of services you want to take, you can take it from this common portal, this place. Okay, then Article 217. Okay, next is Article 269A. Not so important, but yeah, this article was introduced after that amendment in Constitution of India. This article talks about levy and collection of GST on interstate supply. Whenever you make an interstate supply, what type of tax should be collected? Who is going to collect this tax? How will this tax be divided? That is given in this Article 269A. Not important from exam point of view. Central government has the power to levy, collect. Who has the power to levy and collect tax on interstate supply? Central government has the power. Central government will collect what, sir? IGST, Integrated Goods and Service Tax, will be collected on interstate supply of goods or services. IGST will be apportioned between central government and the consumer state, and central government has the power to formulate the policies of place of supply and other provisions which are relevant from this for interstate supply. Next point is one of the most important point, which is what, sir? GST Council, Article 279A, which talks about GST Council. Most important from your first chapter, most important. MCQ point also it is important, and theoretical question also can be asked. Now, see, please note, the government wanted to see government or the people who are running the government, they are not so educated. They are not so educated that they can make their own, they can make the law. For example, if you see the Finance Minister of India is Nirmala Sitharaman. Now, she does not have, I mean, obviously she is a well-educated person, but she does not have that much education or so much knowledge to make a law. So law will not be made by Nirmala Sitharaman. She will have different people around them whom she is going to give instructions, and these people will make the law. Correct? So that people are called as GST Council. So for the purpose of making law with respect to GST, a council was made. That council is called as what, sir? GST Council. This GST Council has members from all the different states of India, and it has members who are also representing central government. They all come together and they decide, okay, what is the matter on which we want to decide? What should be the registration limit under GST? What is the GST rate I should apply for mobile phone? All this is decided by this GST Council. So this GST Council is a council which is going to undertake or give recommendations to the government or the finance minister or the CBICs, the Central Board of Indirect Taxes, about what are the changes which we are supposed to implement in GST law. So it is this GST Council. Article 279A. Now this Constitution's 101st Amendment Act 2017 introduced an article called as Article 279A. This Article 279A told that within 1 month of this act, which act? Article Constitution's 122nd Constitution's 101st Amendment Act, GST Council should be formed. GST Council should be formed. Therefore, a GST Council was formed by President of India within 1 month. Within 1 month. Now, the provisions with respect to GST Council came into existence on 12th of September 2016, and GST Council was finally formed or constituted on 15th of September 2016. GST Council, it consists of it contains many people in it. One person is most important person is the chairperson of GST Council. Who is that chairperson, sir? It will be Union Finance Minister. That is nothing but Finance Minister of India. Then it will also contain the members. It will also contain members. Now these members will be representing state government. They will be representing central government. So Union Minister in charge of revenue. Union Minister means central minister who is in charge of revenue and finance will be one of the member. Ministers of finance and taxation or any other members nominated by state government. So in state government, whatever state ministers are there with respect to taxation, state finance minister, etc., they will be members, or any other person who is nominated by the state government to represent that state. Now these members will appoint one among them as vice chairperson. So one among these members will be called as vice chairperson. Now, what does GST Council do, sir? GST Council normally gives recommendation. It will give recommendation on what are the different types of taxes, surcharges which is required to be subsumed with GST. What are the taxes which are not required to be subsumed with GST? What is the GST rate I should collect on various different types of goods and services? What are the products on which I should not collect GST? It should be exempted. What are the principles for determining the nature of supply? How will I tell whether it is an intrastate supply or interstate supply? How to determine place of supply, etc. Principles of place of supply. What should be the registration limit under GST? Which state, what should be the limit, etc. When should a person take registration, etc. Then what are the special provisions for 11 special category states? There are totally 11 states which are called as special category states. What should be the special provisions for this special category states? Yes, Nagaland, ma'am, through Michael Jackson. These are the 11 special category states. Please note, I personally don't hate Michael Jackson. I love him a lot, and that we know him better than you guys because you are Gen Z, and he was from I am also Gen Z only. I am not too old. So he's someone we know better than you. So what is the memory technique to remember this 11 special category states? S, Nagaland, ma'am, through Michael Jackson. S, Nagaland, ma'am, through Michael Jackson. Yes, Nagaland, ma'am, through Michael Jackson. S for Sikkim, N for Nagaland, M for Manipur, A for Assam, A for Arunachal Pradesh, M for Meghalaya. S, Nagaland, ma'am, through. T for Tripura, H for Himachal Pradesh, U for Uttarakhand, Michael Jackson, Mizoram and Jammu and Kashmir. So these are 11 special category states. And GST Council is also going to recommend the date from which GST will be levied on HPMAN, high speed diesel, petrol, crude, motor spirit, aviation, turbine fuel, and natural gas. Now, whenever GST Council, what happens in GST Council? Decision is required to be made. Decision will be made in GST Council. So meeting is going to happen. They are going to decide about a particular matter. What is the registration limit I should have? Whether I should apply GST on this product or not. So they are going to decide. How are they going to decide? By conducting a meeting. So in that meeting, the quorum of the meeting is half of total number of members. Meaning quorum means what, sir? Minimum number of members who are required to present in the meeting. So what is the quorum of GST Council meeting, sir? Half of total number of members. Now, how is a decision taken in GST Council meeting, sir? By simple majority. They will take it by majority. How is this majority calculated? By not less than 3/4 of weighted votes of members who are present and voting. Meaning, I will take the votes. I will take the weighted votes of the members who are present in the meeting and voting. Or I will not take the weights of total all the members who are there in GST Council. No. I will see in that meeting how many members are present. And in that present members also how many members are voting. So I am going to take weighted votes of those members who are present and voting. And majority, how will I calculate? At least 75%. That is not less than 3/4 of weighted votes. Sir, you said weighted votes. Therefore, will weight be assigned? Yes, there are weight assigned to central government and state government. For central government, the weight is 1/3, and for state government, the weight is 2/3 of total. So for central government is 1/3, and for state government it is 2/3. So this is all about your first topic. This is all about your first chapter, which is Introduction to GST. Fantastic topic it is from exam point of view. For CMA intermediate students, the weightage is 5 marks. Please make sure that you capture all these 5 marks. See, weightage is 5 marks, but they ask it for 7 to 9 marks. They ask it for 7 to 9 marks. CMA Inter students. Now, next chapter, fantastic chapter, most important chapter, chapter number 2, supply under GST. Please note, this is a material, handwritten material, very much sufficient for your entire revision, very much sufficient for your reading for one day before examination. It is practically impossible for you to read that institute material or that entire whatever study material which you are using. That is practically impossible for you to read those things. It is better, I mean, most, if you are my students who is watching that video, obviously you would have taken a printout of that. If others who are watching it for the first time, most of my students take printout of this material and they read this only. And I make sure them, normally in my normal classes, I make sure them they write this entire material, they write this entire thing. This is what we have discussed in the classroom. Okay, anyways. Supply under GST, fantastic topic, most important topic. This is the base for GST law. This topic is the base for GST law. Supply under GST, supply under GST, supply under GST. Now, section 7 of CGST law. Now, please note there are different types of acts. CGST Act, IGST Act, SGST Act, UTGST Act, GST Compensation Cess 2017. GST Compensation to State Cess 2017. Now, at your intermediate level, your major point of discussion will be only CGST Act. Majorly, GST means what, sir? CGST Act. Major discussion. There will be some portion of IGST law which we will be studying. A topic called as place of supply. So IGST law, we will study some portion of IGST law. SGST not at all there. UTGST not at all there. GST compensation says they have just given introduction to that. What is this GST compensation says? One just theoretical point has been given, 2-3, I think around 5-6 lines they have given that point. But apart from that, from your exam point of view, what is important, sir? CGST Act. What is important? CGST Act and IGST Act, only some portion. So why are you telling this point, sir? Because if nothing is told, meaning if I say section number 7, that means I am referring to section 7 of which act? IGST Act. When I say section number 8, I am referring to sorry, not IGST Act, I am referring to which act, sir? CGST Act. When I say section 15, I am referring to CGST Act. So if nothing is mentioned, then I am referring to which act, sir? CGST Act. Okay, for IGST Act, I will specifically tell section 8 of IGST Act, section 12 of IGST Act, etc. Okay, so we'll start our discussion. So about supply under GST. Supply is one of the most important concept of GST law. Supply under GST, we are starting the discussion now. Section 7 of CGST Act talks about supply. Sir, you are going to start our discussion right with section 7? Yes, because your material talks about section 7. Sir, what about 1, 2, 3, 4, 5, 6, sir? Sir, what about section 1, section 2, section 3, section 4, section 5? Not relevant. Section 1 talks about title commencement and title extent and commencement. What is the title of this act? The title of this act is, please note, I am talking about section number 1 of which act? CGST Act. So nothing mentioned which act we are going to discuss. CGST Act. Entire discussion will be with respect towards CGST Act. There is one single topic, separate topic for IGST law. That topic we will study separately. Meaning we'll obviously we'll discuss in this marathon class only, but that is a separate topic. Now section 7 of CGST Act talks about supply of goods or services. It talks about supply under GST. Sir, what about section 1, 2, 3, 4, 5, 6? Section 1 talks about title, extent and commencement. It talks about what's the title, extent, commencement. What is the title of the act? Title is Central Goods and Services Tax Act 2017. Where does it extend to? It extends to whole of India. And from which date has it commenced from? It has commenced from 1st of July 2017. It has commenced from which date, sir? It has commenced from 1st of July 2017. It has commenced from 1st of July 2017, and in the state of Jammu and Kashmir it started, or it was introduced from 8th of July 2017. Section 2 talks about definitions. Section 2 talks about definitions as and when it is required. We are going to discuss about all those definitions chapter wise. Section 3 to section 6 talks about different officers under GST law. What are the hierarchy of those officers? What are the powers of those officers? What are the roles and responsibilities of those officers? So that is given from section 3 to section 6. Now, sir, why supply is important? Why supply? Section 7 or supply is important because it is the taxable event under GST. Sir, why, sir, supply is important? Because it is taxable event under GST. What do you mean by taxable event? Taxable event means the reason because of which you are paying taxes. Taxable event means what, sir? That particular event because of which tax is being paid by you. For example, why do you pay income tax? Because you are earning the income. Why do you pay excise duty? Because you are manufacturing the goods. Why do you pay custom duty? Because you are importing the goods. Correct? So that is a taxable event. Similarly, what is the taxable event for GST law? The taxable event for GST law is supply of goods or services. The taxable event is what, sir? Supply of goods or services. What is the taxable event under GST law? The taxable event of GST law is supply of goods or service. Supply of goods or services. The meaning of this supply is given in section 7. So when I say section 7, we are going to discuss this. These are the different sections which we are going to discuss. This is the bird's eye view of section 7. Sir, why are we discussing section 7, sir? Because section 7 talks about supply. Sir, why is supply important, sir? Because whether you want to know whether GST is applicable or not will be told by this chapter. Only when it is a supply, you have to pay GST. If there is no supply, no GST. Or if there is no supply, there is no GST. Only when there is a supply of goods or services happening, GST will come. The meaning of supply is given in section 7. Section 7 has totally these many sections. Section 7, subsection 1, clause A, B, C, AA. 7.1 capital A, 7.2 and 7.3. We'll discuss all these sections, very easy sections. We'll discuss one by one. Section 7 subsection 1 clause A says, section 7 subsection 1 clause A says supply includes all form of supply of goods or services or both, such as sale, transfer, barter, exchange, lease, license, rental, disposal, made or agreed to be made by the person for a consideration in the course or furtherance of business. So this is the dance step for the supply. 7.1a. Alright, what is 7.1a telling? Supply includes. It is an inclusive definition. They have given an inclusive meaning. What do you mean by that, sir? Whatever you generally understand by supply is a supply. Our income tax law says person includes individual HUF ... Meaning, whatever you generally understand by this word person is a person. Apart from that, person will include individual HUF, AOP, VY, etc. Similarly, supply meaning also over here says supply includes. What do you mean by this word includes? Includes means what, sir? Whatever you generally understand by this word supply is a supply. Do you think a sale is a supply? Yes, sir, a sale is a supply. Do you think a barter is a supply? Yes, sir, a barter is a supply. So that is supply. Whatever you generally understand by this word supply is a supply. Apart from that, supply will include this. Supply will include what, sir? Supply will include supply of all form of supplies. Supply will include what, sir? All forms of supply of goods or services or both. It will include all the different forms of supply of goods or services or both, such as, for example, sale, barter, sale, transfer, barter, exchange, lease, license, rental, disposal. Made or agreed to be made. by a person for a consideration in the course or furtherance of business. Alright, what is section 7 subsection 1 clause A telling? If I want to call something as a supply as per 7(1)(a), if you want to call something as a supply as per section 7 subsection 1 clause A, then there should be 5 things in that. What are these 5 things? That supply should be of goods and services. That supply should be made or agreed to be made. It should be by a person for a consideration in the course or furtherance of business. Only if all these 5 points are satisfied, only if all these 5 elements are there in a particular item, then I will call it as supply. Then only I will levy GST. If I want to call a particular transaction as a supply, there is a, say I gave you this pen. Now giving of this pen, is it called as a supply, sir? For this, check these 5 points. You came to Priya Sarees. I am having a sari business. You came to Priya Sarees. You came to Priya Sarees. You came to Priya Sarees. I sold this sari to you. I sold this sari to you. 10,000 rupees is the sale price. Now see whether all the 5 elements are satisfied. You came to Priya Sarees. I give the sari to you. You gave me 10,000 rupees. You gave me 10,000 rupees. Now whether it is a supply or not. Whether it is a supply or not. Now see, supply includes all form of supply of goods or services or both, such as sale. Is there a sale happening? Is there a sale happening? Yes, sir. You have sold the goods to me. Yes, sir. You have sold the goods to me. Then it should be made. Have I given the goods to you? Is the supply made by me? Yes, sir. It is made by you. Then is it? Then that supply should be by a person. Am I a person? Am I a person? Yes, sir. You are a person. That supply should be for a consideration. Are you paying something for me? Is there a consideration which I am receiving? Yes, sir. There is a consideration which you are receiving, and this supply should be in the course or furtherance of business. Am I making this supply in the course or furtherance of my business? What is my business? Sari, sir. I am selling a sari, sir. So this is a supply. So whether this transaction, I gave this sari to you for 10,000 rupees, whether this will be treated as supply? Answer is yes. Why, sir? All the 5 elements, all the 5 conditions which are there, all the 5 elements which are specified in 7(1)(a) are getting satisfied. What is 7(1)(a) telling? 7(1)(a) says supply includes all the different forms of supply of goods or services or both, such as sale, transfer, barter, exchange, lease, license, rental, disposal, made or agreed to be made by a person for a consideration in the course or furtherance of business. Okay, not okay? Now, sir, what do you mean by goods, sir? Oh, sir, the provision says supply should be of goods or services. What do you mean by goods? Goods means every kind of mobile property other than money and securities. What do you mean by goods, sir? Goods means every kind of mobile property other than money and securities, but includes actionable claims, growing crops, things attached to or forming part of land. Services means what, sir? Anything other than goods, money and securities. Goods means what, sir? Every kind of mobile property. Whatever is mobile. Is a bus mobile? Yes, sir. Is a car mobile? Yes, sir. Aeroplane mobile? Yes, sir. Mobile phone mobile? Yes, sir. Fan mobile? Yes, sir. Every kind of mobile property will be treated as goods. Every kind of mobile property other than money and securities. Money and securities, share securities, etc. and money, they are movable, but still money is movable. No, you can give the money to someone. Money and securities, though they are movable, it will not be treated as goods. But goods, however, will include actionable claims. Sir, what is this actionable claim, sir? Promissory notes, bills of exchange, lottery tickets, gambling activities, etc. It will include, goods will include actionable claims. Goods will include growing crops, the crops which are grown normally, or things attached to land or forming part of land. For example, you have tree which you can cut and further supply it, or things which are forming part of land, the minerals which are there beneath the earth, etc., which can be further supplied. So goods means every kind of movable property. Whatever is movable on this earth is goods, except money and securities, but it will include actionable claim, growing crops, things attached or forming part of land. Sir, what do you mean by services, sir? What do you mean by services? Services means anything other than goods, money and securities. What is services? Anything other than goods, money and securities. Anything which is not goods is service. I am dropping you to your house. Is it goods? No, sir. It is a service. I am taking transportation services. I am taking a classroom on rent. Is it goods? No, sir. It is service. I am teaching you. Is it goods? Am I supplying you goods? No, sir. It is a services. So services means anything other than goods, money and securities, but it will include activity in relation to use of money or its conversion, for which a separate consideration is charged. But it will include what, sir? Activity in relation to use of money or its conversion, for which a separate consideration is charged. Now please note, if we are only dealing in money, I gave you 100 rupees, you gave me 10 rupees note, 10 notes. Is there, see, I gave you 100 rupees, you gave me 10 rupees, 10 notes. Now in this is a transaction in money. This is what? This is a transaction in money. I gave you 2000 rupees note, you gave me 4 notes of 500 rupees. So this is a transaction in money. This is not service. This is not service. Now for this transaction you charged 100 rupees. I gave you 2000 rupees. For converting this 2000 rupees, for giving me 500 rupees notes, you charge 100 rupees. So this is transaction in money. If I am only giving you, if there is only transaction in money, not a supply. If there is any charges for that, then there is it is treated as service. I'll repeat. Services means anything other than goods, money and securities, but includes activity in relation. It will include what, sir? Activity in relation to use of money or its conversion, for which a separate consideration is charged. For which a separate consideration is charged. I am giving you money. I gave you 1 lakh rupees for your use. After 6 months, you gave back this 1 lakh rupees to me. Is there any service involved? Answer is no. Why, sir? It is a transaction in money. But for this, I charge you an interest of 10,000 rupees. Now, is there a service involved? Yes, sir. I gave you 1 lakh. After 6 months, you gave me 1 lakh. No problem. I charge 10,000 rupees or 1,000 rupees for this. Now, there is separate consideration charge for activity in relation to use of money. It is service. Similarly, say $1,000 is there. $1 is equal to 75 rupees. $1,000 I gave you and you gave me 75,000 rupees. Is it service? Answer is no. But if you charge something for this, then it is services. So if consideration is charged, then it will be treated as services. If no consideration is charged, it is just a transaction in money, not a supply. It is just a transaction in money, not a supply. So I'll repeat, goods means every kind of movable property other than money and securities, but includes actionable claims, growing crops, things attached or forming part of land. Services means anything other than goods, money and securities, but includes activity in relation to use of money or its conversion, for which a separate consideration is charged. Now, what do you mean by consideration, sir? Are consideration? What do you mean by consideration, sir? Consideration. Yes, sir. Please tell us, sir. What do you mean by consideration? Consideration mean it is an inclusive definition, meaning whatever you generally understand by consideration is a consideration, and it includes this. Sir, we understand that consideration in our foundation. We had studied something called as Indian Contract Act. There we saw consideration means, or consideration is something in return. Consideration means what, sir? Something in return. So, sir, something in return is consideration? Yes, that is there. Consideration means something in return, but it shall include these things. It shall include what, sir? Consideration includes payment in money or otherwise. So whatever payment you are making in money or otherwise, by the recipient or in their person, whether the payment is made by the recipient or in their person also, I don't care. But it shall not include subsidy given by central government or state government. What is consideration? Consideration is payment in money or otherwise, by the recipient or in their person, but it shall not include subsidy given by central government or state government. See, now you came to Priya Sarees, you purchased a saree or worth rupees 10,000. You gave me the money by cash, by UPI, by check, by net banking. I don't care. Consideration in money or otherwise. I gave you rice, you gave me wheat. Consideration can be in other forms also. Consideration can be in money. So in first case it was in money, but in second case it is through exchange of goods by goods, correct? So consideration can be in money or otherwise also. I purchased a mobile phone worth rupees 25,000. How did I purchase this? I gave 20,000 rupees cash. I gave 20,000 rupees cash and my old phone. Consideration can be in money or otherwise also. Okay, this consideration can be paid by recipient or any other person. This consideration can be paid by recipient or any other person. For example, I supplied goods to Karina Sarees, Mumbai. Priya Sarees supplied goods to Karina Sarees, Mumbai, and Karina supplied goods to Anushka Sarees, Mysore. I supplied goods to Karina worth rupees 10 lakhs. Karina supplied goods worth rupees 8 lakhs to Anushka. So Karina has to pay me how much? 10 lakhs. Anushka has to pay Karina how much, sir? 8 lakh rupees. Now what Karina told, Dilip, I will pay you 2 lakhs, balance 8 lakhs, Anushka will pay you. Karina told, I will pay you 2 lakhs, balance 8 lakhs, Anushka will pay you. Now the recipient has paid me only 2 lakhs and there is some other person paying me 8 lakh rupees. So consideration is how much, sir? 10 lakh rupees. Amount of consideration received by the recipient is 2 lakh and from other person it is 8 lakh. So consideration can be by the recipient or by any other person. But consideration shall not include the subsidy which is given by central government or state government. Many times what happens, central government or state government will give you subsidies. That subsidy will never form part of consideration. For example, now say government would have told, Dilip, you have made a supply to Karina Sarees. Now I will give you a subsidy of 8 lakh rupees. Now in this case, my value of supply, my sale is only 2 lakh rupees. My consideration is only 2 lakh rupees. Then consideration includes what, sir? Monetary value of any act or forbearance by the recipient or in the person, but shall not include subsidy given by central government or state government. Many times what happens is we may do some monetary, we may do some act, or we may not do something. We may do something or we may not do something. Now, doing something or not doing something is also a consideration. It is also a consideration. If you don't do something, say for example, you are coming to the classroom, you are just sitting, you are not listening to me, you are just sleeping in the classroom. Okay, that particular act of yours, your act, that is also, I will see what is the monetary value of that act. What is the monetary value of you coming to the classroom? You are doing something or you are not doing something. For example, say normally in bus, if you have traveled in bus, know that if you have traveled interstate in a bus from one state to another state or one city to another city, which has normally 5-6 hours journey, that bus fellow will always stop at some hotel. That hotel fellow, that restaurant fellow will give full free food to him. Monetary value of that free food, monetary value of that act done by that hotel fellow, that will be treated as consideration. So consideration includes monetary value of any act or forbearance by the recipient or any other person, but shall not include subsidy given by central government or state government. There is a proviso. There is a proviso. This proviso says consideration shall not include refundable deposits. Or if there is any deposit which you are giving and if the deposit is refundable, it is not consideration. If the deposit is adjusted as consideration, obviously it is a consideration. For example, I took an house on rent. Now I have to pay rental deposit for this. Now this rental deposit, my monthly rent is 10,000 rupees. I paid a rental deposit of 1 lakh rupees. This rental deposit, when I vacate the house, it will be given back to me. So this is refundable deposits. So this 1 lakh rupees which I have paid is not a consideration. What is consideration in this transaction? That 10,000 rupees monthly rent which I pay, that will be consideration. Okay, so 1 lakh rupees is refundable deposits, it will not be consideration. Now sometimes what may happen is, at the time when I am vacating the house, I did not pay 2 months rent, so I am vacating the house. At that time, that owner is going to reduce 20,000 and give me only 80,000 rupees. So that 20,000 will be treated as consideration. Refundable deposits are normally not consideration unless they are adjusted as consideration. Then, sir, what do you mean by recipient? You said consideration can be by recipient or in their person. What do you mean by recipient? Recipient means what, sir? Recipient means what, sir? Oh, sir. What do you mean by recipient? For checking who is the recipient, check whether consideration is there or consideration is not there. To know who is the recipient for a particular transaction, in the transaction, check whether consideration is there or consideration is not there. If consideration is there for both supply of goods and services, if you are paying some money, if consideration is there, if consideration can be in money or other forms also, if for a transaction money is there, consideration is there, then whether it is supply of goods or a transaction of supply of services, it does not matter. The person who is paying the consideration will be called as recipient. So for a transaction, check whether consideration is there or not. If consideration is there, the person who is paying the consideration is treated as recipient. Sir, what if the consideration is not there? For the transaction which I am entering into, there is no consideration. If no consideration is there, for goods, the person to whom the goods are delivered, and for services, the person to whom the services are rendered will be treated as recipient. For example, this marathon lectures, we are not charging anything from you. We are not charging anything from you. So there is no consideration involved. So who is the recipient over here? You. You are the recipient because you are watching the video. Who is the recipient? You are the recipient. Now, similarly, I go to temple. The temple, I go to mosque, masjid, etc. I go to temple, I pray God, etc. After coming outside, normally I go to temple to have the prasadam. So they are giving me prasadam for free. I have not paid anything to them. This prasadam I am eating. Who is the recipient? The person to whom this prasadam is given or delivered. Sir, if consideration is there, for example, you are coming to the classroom, you are paying the fees. Now, if you have paid the fees yourself, by your hard-earned money you have paid, then you are the recipient. Sir, no, sir, in my case, my father has paid the money, sir. Then your father is the recipient. Though you are coming to the classroom and sitting in the classroom, your father will be treated as recipient. If consideration is there, the person who is paying the consideration will be treated as recipient. Then section 7 subsection 1 clause B. So section 7 subsection 1 clause A says what, sir? Supply includes all form of supply of goods or services or both, such as sale, transfer, barter, exchange, lease, license, transfer, transport, rental, disposal made or agreed to be made by a person for a consideration in the course or furtherance of business. Sir, let us discuss the next section. Section 7 subsection 1 clause B. Section 7 subsection 1 clause B says supply includes, section 7 subsection 1 clause B says supply includes importation of services for a consideration, whether in the course of business or not. If you are importing any services for a consideration, whether you are importing for your business purpose or for your personal purpose, it does not matter. If you are importing any services for a consideration, if you are importing any services for a consideration, whether it is imported for your business purpose or your personal purpose, it does not matter. It will be treated as supply. It will be treated as supply. Sir, what do you mean by importation of services? Importation of services means the supplier is located outside India, the recipient is located in India, and the place of supply is also in India. What is importation of services? The supplier, the person who is supplying the services outside India, the person who is receiving the services in India, and the place where the supply has been made is also in India. Then I will call the transaction as what, sir? Importation of services. So supply includes importation of services for a consideration. If you are importing any services for a consideration, now whether these services are imported for your personal purpose or your business purpose, it does not matter. It will be treated as supply. For example, Virat Kohli got married in Italy. He got married in Italy. So he's taking services from some wedding planner in Italy. So this is for his personal purpose, correct? He's taking the services for his personal purpose. He paid $1 lakh to him. This is a supply. GST is applicable. Similarly, say I want to start Priya Sarees. I want to start Priya Sarees in London. So I take services from an advocate in London. So advocate gave the services to me. I paid him $1,000. In this case, is it a supply side? Yes. Why? Consideration is there. Because consideration is there. Sir, what if there is no consideration involved? Now I took services from an advocate in London. I am not paying any money to him. Not a supply. Or this Virat Kohli took services from wedding planner and he did not pay anything. Not a supply. So if you are importing any services and that services are imported by you for a consideration, it will be treated as supply or else not a supply. Please note that services you are importing for your business purpose or personal purpose, it does not matter. Then section 7 subsection 1 clause C. Section 7 subsection 1 clause C. Section 7 subsection 1 clause what, sir? Section 7 subsection 1 clause C. What is section 7 subsection 1 clause C talking all about? Hey, come back. Section 7, fantastic section, beautiful section, important for theory question. Theory question can be asked or MCQ based questions can be asked. Theory question, normally write the items of schedule 1, they will ask you, or what are the transactions which are treated as supply even if there is no consideration. Fantastic section it is. Section 7 subsection 1 clause C. Activities which are treated as supply even if there is no consideration. There are some things. See, we saw 7.1a and 7.1b. These two sections we discussed right now. In these two sections we saw consideration is important. In these two sections, what did we see? See, consideration is important. 7.1a. What did we see in 7.1a? Consideration is important. Consideration is important. But what is 7.1c telling? I will give you few points, or I will tell you few points which will be treated as supply even if there is no consideration. Or there are few activities which are listed in schedule 1. There are few activities which are listed in schedule 1. These will be treated as supply even if there is no consideration. These are also called as schedule 1 activities, or they are also called as deemed supply. So in examination, if they ask you what is schedule 1 activities, or what are activities treated as supply even without consideration, or what is deemed supply, or what is schedule 1 activities, all of them mean the same. You should give the list. You should write these 4 points. There are how many points, sir? There are totally 4 points. There are totally 4 points in this. You will have to write all these 4 points. What are these 4 points? Point number 1. Permanent transfer or disposal of business asset, provided input tax credit has been availed on such business asset. So if you have any business asset, on which you have taken input tax credit, there is a business asset on which you have taken input tax credit. Now this business asset you are permanently transferring, or you are permanently disposing of. You are permanently transferring or disposing of this business asset, then without consideration. You are permanently transferring or permanently disposing of this business asset without consideration. It will be treated as supply, provided at the time of purchase of that business asset you should have taken input tax credit. Permanent transfer or disposal of business asset on which input tax credit has been availed. Now for example, I had old laptops, I had computers in my CA practice. I started CA practice, and in my firm, no, I had big computers, very old big computers. Now I wanted to replace them with laptops. I thought let me replace all these things with laptops. So all these 20 old computers which I have, I gave it to a government school and I did not charge anything from this. All these 20 computers were given to a government school. I did not charge anything from them. At the time of purchase of this computer, I had taken input tax credit. Now I have given to a government school for free. I am doing a good work. Government is telling, very good, pay me GST. You are doing good work, Mr. Dilip, very good, but pay me GST. So permanent transfer or disposal of business asset on which input tax credit is taken. Therefore, this transaction, it will be treated as what? It is supply. Then section 7 subsection 1 clause C, point number 2, para 2. Para 2 of schedule 1. So schedule 1, point number 2 or para 2. Point number 2 says what, sir? Supply of goods or services or both between related person or between distinct person referred to in section 25.4 or 25.5 if it is made in the course or furtherance of business. If you supply goods or services or both to your related person or to your distinct person and that supply is made by you in the course or furtherance of your business, it is a supply. If you supply goods or services to your related person without consideration or to your distinct person without consideration, but that supply is made by you in the course or furtherance of your business, then it is treated as what, sir? It will be treated as supply. It will be treated as what, sir? Supply. Say for example, I am supplying some I mean, you please ignore all these diagrams, etc. In the classroom, it looks good. Say I am supplying something. I am supplying a sari free of cost. I am supplying a sari to my wife. I am supplying a sari free of cost to my wife. My business, what? Hey, please note. I hope you know that I am doing what business, sir? I have sari business. I have Priya sarees. So normally when I say my business, that means I am talking only about sari business. So I gave sari worth rupees 10 lakh rupees to my wife. Will she give me money? Will she give me money? No, sir, she will not give me money. But government says, I want GST. Mr. Dilip, you have supplied goods to your related person free of cost. Free of cost. Goods worth rupees 10 lakhs were supplied to my wife free of cost. Is it a supply? Yes. Sir, what if you supply it to girlfriend? Not a supply, because girlfriend is not a related person. Wife is a related person. Girlfriend is not a related person. The meaning of related person is given in section 15. Value of supply topic. They have given the meaning of related person. Say employee is related person. Partners of a partnership firm are related person. Directors are related to companies. Then if I am having 5-6 different businesses, then these businesses are related to each other, etc. And my relatives are my related father, mother, etc. brother, sister. If they are dependent on me, my wife, my spouse, my children are my relative. Always they are relative, whether they are dependent on me or not. Okay, so what is this point number 2 telling? Supply of goods or services or both between related person or between distinct person if it is made in the course or furtherance of business. So related person, I understood. What is this distinct person? The meaning of distinct person is given in section 25.4 and 25.5. Section 25.4 and 25.5 gives the meaning of distinct person. What is 25.4 and 25.5 telling? 25.4 says distinct person means, as per section 25.4, distinct person means a person who has obtained more than one registration. I will call you as a distinct person if you have obtained more than one registration in a state or an union territory, or more than one state or more than one union territory. So basically what is 25.4 telling? 25.4 says if you have more than one registration, each of this registration will be distinct person. If you have more than one registration, each of this registration will be called as distinct person. They will be deemed as different person. So for example, Dilip has Priya sarees in different locations. In Bangalore, I have Priya sarees in different location. Each of these Priya sarees is registered separately. I have taken registration separately for this different saree shops. Now each of these saree shops will be called as what, sir? Distinct person. They will be called as different person. See, though the owner is same, though at the end of the day I am going to get the money, all these businesses are going to give the money to me, it does not matter, because there is a separate registration. They are separate person. Or I have different types of business, Priya sarees, Priya chudidar, Priya sweets, and for all this business I have taken separate registration. Owner is same, but registration is different. They are deemed as distinct person. They will be deemed as what, sir? Distinct person. What is 25.4 telling? Where a person has obtained more than one registration in a state or union territory, or more than one state or more than one union territory. So this registration can be in different states also, no problem. They will be deemed as distinct person. Section 25.5 says where a person has obtained where a person has an establishment registered in a state and also has another establishment in another state, then this establishment will be distinct person. Now what is 25.4 and 25.5 difference is, 25.4 says all the establishments or all the units are registered. I mean, if you have different registrations, each of these registered units are distinct person. Here they are telling one person is in one state who is registered, other person is in another state. Whether he is registered or not, I don't care. They are distinct. Here they don't, 25.4 does not make any discrimination whether you are in same state or different state. What is important for 25.4? Your registration. Are you registered? Yes, then you are different. 25.5 says one is registered and he is in one state and other person is not in the same state. He is in different state. He is in different state. So where a person has an establishment registered in a state and also has another establishment in another state or unitary, this establishment will be called as distinct person. Okay. Now, for example, Priya Sarees Bangalore is registered, Priya Sarees Chennai is not registered. They are distinct person as per section 25.5. Sir, why are we seeing this point, sir? Because if I supply anything free of cost, for example, Priya Sarees is Jayanagar, which is one place in Bangalore, is supplying 100 Mysore silk sari to Priya Sarees Indiranagar, which is again a place in Bangalore. They both are registered separately. Because I have supplied sari from one distinct person to another distinct person, it will be treated as supply as it is in the course of my business. I will apply this provision. So what is this point number 2 telling? Supply of goods or services or both between related person or between distinct person under section 25.4 or 25.5 is a supply if it is made in the course or furtherance of business. However, there is an exclusion, there is an exception, there is a proviso, fantastic proviso. There is a proviso section, there is a proviso to para 2 of 7.1c, that is para 2 of schedule 1. What is this proviso telling? Provided that any gift given by employer to employee, provided that any gift given by employer to employee, if the value of the gift is not exceeding 50,000 per employee per financial year, it is not a supply. Now, gift means what, sir? Something which you are giving for free. So basically, we are talking about different activities which are supplied if there is no consideration. So I give employer and employee treated as relative. I give anything to my employee for free is obviously covered over here. Is covered over here. But they say, no, I don't want to cover your employer. This proviso says, no, I don't want to cover your employee if the gift given by you, if the item which is given by you for free to him, the value of that is less than 50,000. I'll repeat. Any gift given by employer to the employee, if the value is not exceeding 50,000, if the value of that gift is not exceeding 50,000, it is not a supply. This 50,000 limit is per employee per financial year. So if I give gifts to my employees worth rupees 1 lakh and the value of each gift is say 10,000 rupees, no problem. But if I give one employee a gift of 1 lakh, problem is there. The value of the gift is more than 50,000. Provided that this proviso says any gift given by employer to employee, if the value is not exceeding 50,000, not a supply. If the value exceeds 50,000, yes, it is a supply and therefore it will be taxable. 50,000 per employee per financial year. Then point number 3, para 3. Supply of goods by principal to agent or vice versa, wherein the agent is undertaking to further supply those goods on behalf of principal in his own name. I'll repeat. Point number 3 says, para 3 says, supply of goods by principal to his agent, wherein the agent is undertaking to further supply those goods on behalf of principal in his own name. Now please note, there are two types of agency relation. One, let us call them as broker. One, we will call them as agent as per schedule 1. Now what happens? A broker, there are two types of agents, okay? One we will call as broker. We will call, for our simplicity purpose, for our understanding purpose, one type of agent we will call him as broker. Second type of agent we will call him as agent as per schedule number 1. Now there is first type of agent, he is only helping me. I am into sari business. First type of agent is only helping me identify different buyers. So whoever wants to buy sarees from me, he is telling, okay, please go to Priya Sarees and these people will come. I will sell the saree to them and I will give the commission to agent. Now the role of the agent is what, sir? Only sending these people to me. The sarees will be sold by me only to these customers. Invoice also is going to be given by me only. Second type of agent, so this type of agent is not covered in schedule number 1. There is second type of agent. What is the second type of agent doing? Say for example, one of my agent is Karina Sadis. Priya Sadis is in Bangalore, Karina is in Mumbai. So one of my agent is user Karina Sadis. I give the Sadis to Karina. Karina, I say Karina, you act as my agent. Now Karina is going to supply sarees to different people. Now when she is supplying sarees to different people, no, invoice is also given by Karina. I supplied 1000 sarees for free to Karina. Now Karina is supplying sarees to different customers, and she is only giving the invoice to these different customers in her name, in whose name, Karina's name only she is giving. Then whatever is supplied for free by me to Karina is a supply, and GST is applicable on that. Please note, if I give the invoice to customer, the provision is not applicable. If Karina gives the invoice to customer in her own name, then only whatever I gave Karina free of cost is a supply. Okay, so I gave 1000 sarees to Karina for free. Now who is giving invoice? Invoice is given by Priya sarees to customer, then it is not covered under schedule 1, therefore no supply. Whatever I gave for free to Karina is not a supply. But if Karina gives the invoice to customer, then yes, it is covered under schedule 1. Whatever is given for free by Priya to Karina is a supply. This is what point number 3 is telling. Point number 4. Point number 4 or para 4 of schedule. Point number 4 or para 4 of schedule 1. Importation of services by a person from his related person or from his another establishment outside India if it is made in the course or furtherance of business. Importation of services. If I import services for free, please note what are the different points we are seeing. We are seeing schedule number 1. Schedule number 1 has different points which talks about supply without consideration. So even if it is for free, I will call it as supply. So one of the point is what's that? Point number 4 is importation of services. If you import any services, if a person is importing any services from his relative outside India or from his another establishment outside India, that is from his branch office outside India, and if that services are imported by him for free without consideration, and if the services are imported by him for his business purpose, then it will be called as supply. Importation of services by a person from his relative outside India or from his another establishment outside India if it is made in the course or furtherance of business. Even if it is without consideration, it will be treated as supply. So you remember we discussed some points over there. Importation of services with consideration, always a supply. But importation of services without consideration will be supply if it is from relative and if it is for business purpose. So in short, there was a 4 marks question asked once in your examination about taxation of importation of services. This is what is the gist. If I import services for a consideration, it does not matter whether it is for business purpose or personal purpose. It does not matter from I am importing from related person or non-related person. It is always a supply. But if I import services without consideration, then it will be supply only if it is for business purpose and from my related person. Only then it will be supply. In all the other cases, it is not a supply. 71AA. This is a notwithstanding clause. What is this point telling? This point says any activity or transaction which is made by a person with his members. Person over here will not include individual, meaning an AOP or a residential resident welfare association or say body of individual. So this is also treated as a separate person. An association of person, AOP is treated as separate person and their members are treated as separate person. Now if the AOP is giving services to their members and if they are charging some consideration for that, it is a supply. What is this 71AA telling? 71AA says activities or transaction by a person other than individual to its members for a consideration shall be treated as supply. It shall be treated as supply, and it is notwithstanding clause, meaning what other provisions are telling, I don't care. Notwithstanding to any other provisions of this act or any other law for the time in force, I will not follow what is told by other provisions of GST law or other acts which is there in India. If there is any transaction or if there is any services or if there is any activity which is given by a person, service given by one person to his members, and it is for a consideration, it will always be a supply. 7.2, fantastic section, again important section, theory question can be asked. 7.2 talks about negative list of supply or no supply. Transactions which are not supply at all. Transactions which are neither treated as supply of goods nor supply of services. This is also called as Schedule 3 activities. Now, they have given few transactions, they have given few items which will not at all be treated as supply. Which are these items, sir? Now, there are section 7.2, government has notified few items which is not a supply. Please note, you may feel it is supply, but government is specifically telling, no, it is not a supply. And similarly, they have given few activities in schedule number 3. These activities are not at all a supply. You will feel, sir, supply is there, no consideration is there, person is there, everything is there, no, but I don't care. They have specifically told, lawmakers are telling, I have specifically told, I don't care what is there, I have specifically told that these items are not a supply. Section 7.2, government notified. Activities performed by panchayat or municipality under Article 243G or 243W. So, panchayat and municipality has to perform various different activities. So, which is listed in Article 243G and 243W. So, these activities which is performed by them, even if they charge some money from you for that, it is not a supply. Similarly, grant of liquor license by state government. Now, state government of India, if I want to start a liquor business, I will have to take permission. I will have to take a license from the state government. Now, the state government is giving you this liquor license. This grant of liquor license, I will have to give some money to them. It is not a supply. No GST is applicable. What is important is this Schedule 3 activities. So, there are totally 9 activities listed in Schedule 3. 9 activities listed in Schedule 3. These 9 activities are not a supply at all. What are these 9 activities? Now, point number 1, services given by employee to the employer in the course of business. Whatever service an employee is giving to the employer in the course of the employment. Now, being an employee, you will have to give the services to the employer. Or whatever services you are giving in the course of the employment is not a supply. Sir, what if I give a services outside the course of employment on individual basis? It is a supply. For example, you are working for Priya Sarees. I give you 10 lakh rupees per month as salary, and you are selling sarees on my behalf. So this is a service given by you to me in the course of employment. It is not a supply. Now, you are also a chartered accountant. You are also a cost accountant. You are filing my income tax return, for which I am giving you 1 lakh rupees. Now, this I am asking you to do because you are a chartered accountant or a cost accountant. Now, the services given by you is not in the course of employment. Therefore, it is a supply. Then, services given by court or tribunal except arbitral tribunal. Services given by court or tribunal. Now the Supreme Court is giving services to us. High Court is giving. Now, if there is a case which I have to, which I want the High Court or Supreme Court or District Court etc. to fight, then I will have to pay some money. They will collect some money called as hearing fees. So for hearing that case, so they are giving services to us. For these services which is given by them, it is not a supply. Services by court or tribunal. Then services given by MLA, MP, President of India, Prime Minister of India, Chairman of GST Council, etc., etc., etc. Services given by all these people are not government employees. MLA is not government employees. Prime Minister is not government employee. President is not government employee. Chairperson of GST Council is not a government employee. Because they are not government employee, they come to us every 5 years and they tell, please vote us, vote us, vote us. The income tax officer is a government employee. The IPS officer, police officer is a government employee. This MLA, MP, President, etc., they are not government employees. They still get money from government for the services which they are giving to people. Their services is not subject to GST. Services by way of funeral, burial, cremation, mortuary, including transportation of deceased, dead body related services. So there is funeral activity happening. So if you, when a dead body is taken for that burial ground or funeral cremation purpose, etc., they will charge some money. No GST is applicable. Services by way of funeral, burial, cremation, mortuary, including transportation of deceased. Then sale of land, and sale of building subject to para 5B of Schedule 2. If you are selling a land or you are selling a building subject to para 5B of Schedule 2. If you sell a land, always not a supply, meaning no GST is applicable, not a supply, no GST is applicable. What type of land? Any type of land. Commercial land, residential land, agricultural land, any type of land. If you sell a land, no GST is applicable. Then, and sale of building. And what's a sale of building? But for sale of building, you will have to see para 5B of Schedule 2. What is para 5B of Schedule 2 telling? Para 5B of Schedule 2 says, check when the consideration is received for sale of building. When is the consideration received for sale of building? If the consideration is received before issuance of completion certificate, Now, whenever a building construction is done, completion certificate is required to be issued. So, if the consideration is before completion certificate or before first occupancy, yes, it is a supply. If the consideration you are paying for purchase of that building, you are paying the consideration after completion certificate or after first occupancy, not a supply. So when is the consideration received? The builder is going to receive the consideration, correct? So when is the builder receiving the consideration? Before completion certificate or after completion certificate? Before first occupancy or after first occupancy? If it is before, supply. If it is after, not a supply. Then, now here is the first amendment which has come. So this is the first amendment, a small change they have made in actionable claims except lottery, betting and gambling. Actionable claims except lottery, betting and gambling was the provision which was there, but now they have changed it and they have told if you are dealing in actionable claims except specified actionable claims, then it is not a supply. Meaning normally if you are dealing in actionable claims, not a supply, but if it is specified actionable claims, then yes, it is a supply. So if you are dealing in the specified actionable claims, yes, it is a supply. See, normally if I am dealing in actionable claims, sir, it is not a supply. See, normal actionable claims are treated as goods. So if I am going to deal in goods, which are actionable claims, not a supply normally. But if those actionable claims are these specified actionable claims, sir, which are these actionable claims, sir? These are the specified actionable claims. Now they have increased the list. Basically, before there were only lottery, betting and gambling. Now they have added 3 more items. So if you are dealing in lottery, if you are doing lottery activities, betting activities, gambling activities, if you are playing any online money games, etc., or if you are involved in casino activities or horse race activities, then in this case, whatever you are earning, here it will be treated as supply, and therefore GST also will be applicable on these transactions. On these transactions, lottery, betting, gambling, online money gaming, and casino and horse racing. On this, these are all treated as specified actionable claims. If you are doing these transactions, supply, therefore GST is applicable. Sir, apart from this, what are you told 9 points, 6 points are there, sir. Apart from this, you have point number, you have high C sales, you have what, sir? EFG, you have high C sales, you have EFGH, warehouse sales, and you have EFGHI. High C sales, sir. What is this high C sales, sir? High C sales means you are selling a product without that product coming to India only. And last point is, I'll write this point, out and out sales. Now under customs law, you'll understand this. Area after 200 nautic miles is called as high C. So I am a person who has imported some product into India. Now the product has not come to India at all. They were in high C. At that time only I have sold the product to someone in India or somewhere outside India. So this is called as high C sale. On this transaction, no GST is applicable. Or warehouse sales. The product, I had imported some product into India. These imported products are kept at customs warehouse. Now once these products are available at customs warehouse, when I take these goods outside that customs warehouse, I have to pay GST. But before taking only, I sell it to someone, I don't have to pay GST. That someone else, when he takes it out, he will have to pay GST. High C sales, warehouse sales, and out and out sales. I am purchasing goods from Japan, selling it to USA. I am purchasing from Japan, selling it to England, London. I am purchasing the goods from Japan and selling it to London without getting the goods to India. I am purchasing from Japan, selling it to London without goods coming to India. This is called as out and out sales. No supply, no GST for these 3 items. Then we have schedule 2 activities. Basically schedule 2 activities. One more activity which we have is schedule 2 activity. See, there are totally 3 schedules. Schedule 1, schedule 2 and schedule 3. Schedule 2, basically whatever you have studied till now, it is just revision of that. This point says, I am going to tell you. See, you may be confused whether I should call teaching as supply of goods or supply of services. You may be confused. This schedule says, I will clear your confusion. You went to Priya Sarees, you purchased a saree, whether it is supply of goods or supply of services, you may be confused. I'll clarify it. So what is this point saying, sir? This point says, if there is a transfer of title in goods, if ownership of goods is transferred, then I will call it as supply of goods. Now I was the owner of saree, Priya Sarees was the owner. When you came and purchased the sari, I gave the sari to you. You became the owner. Ownership as well as possession is transferred. This transaction between us treated as supply of goods. When transfer of title in goods under an agreement which stipulates that the property will be transferred upon a future date, which is nothing but hire purchase system. In case of hire purchase system, these transactions are treated as supply of goods. Though you get the ownership at the end, but then this transaction will be treated as supply of goods. Then transfer of right in goods without transferring the title or ownership. I am transferring the right in goods without transferring the ownership. Now I gave the sari to you for one day and you gave it back to me. I gave the possession of the sari, but I did not. I gave the right to use the sari to you for one day, but I did not transfer the ownership of sari. This is supply of services. Then you give any land on lease, tenancy, etc. Supply of services. You lease, let out any building, it is treated as supply of services. So this point is actually basically clarifying it. Any treatment or process applied on goods belonging to another person, supply of services. You go to a tailor, he's doing a treatment process on goods belonging to you. He's giving services. You go to a bike modifier, he's modifying your bike. Bike belongs to you, he's doing modification activity, he's supplying services. Then goods which are sold at the time of closure of business is treated as supply of services. Then the business goods you are allowing your employees to use it for their personal purpose, or business goods are used by you for your personal purpose, it is treated as supply of services. Then business is getting closed, and at the time of closure of business, whatever is goods is left over with you. Whatever goods is left over with you, they will be deemed as supply of goods. When you're closing the business, no, obviously whatever stock is lying with you, this you're closing the business because business is not running well. At that time, if there is any stock lying with you, then it will be deemed as supply of goods. This point is not applicable if you are selling your business, entire business as a going concern, or your business is carried on by your representative. Renting of immobile property, supply of services. Construction of immobile property, supply of services. Then temporary transfer of intellectual property right, like patent, copyright is temporarily transferred, supply of services. Then any information technology software is designed for you, developed for you, programmed for you. Infosys is designing, customizing a software for me. They are supplying services. You are agreeing to refrain from an act, to tolerate an act, or to do an act or situation, etc. Then it is that supply of services. I am teaching, you are tolerating my teaching, you are giving me services. I am say I stay at a place where right next to my house there is a school. Every morning that school they start when I'm sleeping they start their jana gana mana etc. Middle of the sleep I should get up, I should stand up, so I'm getting disturbed by them, but still I'm tolerating it. I am supplying services, agreeing to do an act, agreeing to tolerate an act, or do a act. Or works contract service. Works contract services means what, sir? This building is there. For the building you are painting. So for this wall I'm making a white paint on this wall. So this is what, sir? This is supply of services. Works contract services. What happens in works contract services? The person who is supplying the services, no, he will only get the goods. For example, the person who is going to paint this building, he is only going to get the paint. Works contract services. Then you are going to a restaurant services. So whenever you go to a restaurant, there is food which you can eat, which you can see, but still it is treated as supply of services. It is still treated as supply of services. One last point we'll discuss and take a chota sa break. One last point we'll discuss and I'll take a small break. What is this last point, sir? With respect to section 8. Section 7 is done. Supply topic is done. Supply topic is done. Supply is important topic. Supply is the taxable event under GST law. Next is section 8. Section 8 talks about composite and mixed supply. It talks about what, sir? Taxability of composite and mixed supply. And what is section 8 telling? Section 8 says there is two types of supply called as composite supply and mixed supply. If you want to know what is the tax rate to be applied for composite supply and mixed supply, come to me. Section 8 talks about what, sir? Taxability of composite and mixed supply. Section 8 says composite supply is taxed at the rate of principal supply and mixed supply is taxed at the rate of highest rate. Composite supply is taxed at the rate of principal supply. Mixed supply is taxed at highest rate. Sir, what is this composite supply? What is this mixed supply? Now, normally what happens, many times we purchase different products and with one product we get something else. For example, I purchase a charger. I purchase a laptop, I get charger also. I purchase a toothpaste, I get a brush also. I purchase a washing powder, I get a bucket also. So what is this? Whether it is composite supply or mixed supply. For that, you should see the definition. Definition of composite supply says composite supply means supply of two or more taxable goods and services or both, which are not naturally bundled. Composite supply means which are naturally bundled. Why I have written not naturally bundled? Sorry. Okay, composite supply means what, sir? Composite supply means supply of two or more taxable goods and services which are naturally bundled in ordinary course of business, supplied in conjunction with another, and one of which is principal supply. What is composite supply telling? So if you are supplying two or more goods together, and that supply which you are making, it is naturally bundled. Normally they are supplied together only. They are naturally bundled in ordinary course of business, and normally they are supplied together only. In that two or more goods, one of them will be principal supply, one of them will be important supply. Then it will be called as composite supply. Composite supply means supply of two or more taxable goods and services which are naturally bundled in ordinary course of business, supplied in conjunction with another, and one of which is principal supply, one of which is the main supply. Then I will call it as composite supply. If it is a composite supply, the tax rate which is applicable is what, sir? The tax rate which is applicable is the rate of principal supply. For that entire product, the tax rate of principal supply will be applied. Sir, what is this mixed supply? Mixed supply means supply of two or more individual goods and services. Separate goods, like for example, mobile phone, charger, and this pen. They are all separate goods, but they are supplied to you together. No, this is not a charger, sorry, tissue paper. Mobile phone, this tissue paper, and this pen is supplied to you together. Now, mixed supply. Mixed supply means what's a supply of two or more individual goods and services which are not naturally bundled in ordinary course of business, but they are supplied in conjunction with another for a single price, and which is not a composite supply. Then I will call it as mixed supply. If it is a mixed supply, I am going to tax that mixed supply at what rate, sir? Highest rate. So you will have to see the transaction and see whether normally in this business is supplied together or not. For example, TV, with TV you get remote. Normally with TV you will get a remote. With AC you will get a remote. So you should see whether it is naturally bundled or not. For example, I purchase a laptop, I get a charger. Composite supply. Rate of laptop is 18%, rate of charger is 12%. It is a composite supply, therefore 18%. I purchase toothpaste, I get a brush free. Now this not everyone is doing this. Not everyone is giving toothpaste with brush. Only maybe Pepsodent is doing. So it is mixed supply. I will apply highest rate. I am purchasing washing powder. I am getting a bucket free. And not everyone is doing this. Therefore, it is mixed supply. I am purchasing refrigerator. I am getting bottles free. Mixed supply. Because not everyone is doing. Or I am purchasing a say a box wherein I will get water bottle, glasses, etc., wine box, etc. Mixed supply. I am purchasing a laptop. I am getting headphone. Charger is okay. Headphone not okay. Mixed supply. I am purchasing TV, getting a remote. Composite supply. I am purchasing, I don't know what it is. Whatever it is, but composite supply and mixed supply. I hope you got to know what is composite supply and what is mixed supply. If it is a composite supply, you should pay the tax at the rate of principal supply, whichever supply is the important supply, principal supply. And if it is a mixed supply, in that mixture, which product is taxable at highest rate, that rate I will apply. So let me just take a chota sa break and continue our discussion. I'll take a small break and let us continue after a small break. I hope you are enjoying, guys. Let us continue. Welcome back, students. Welcome back. So let us continue our discussions. Before break, we had discussed about the introduction of GST and supply under GST and section 8, which is taxability of composite and mixed supply. Now let us continue our discussion. Now we are going to discuss next topic, which is charge under GST. Charge under GST, charge under GST, charge under GST. Sir, what is this charge under GST, sir? Basically, this is the charging section, section 9. Next section which we are going to see is section 9 of CGST Act. Charge under GST is where, sir? Section 9 of CGST Act. Section 9 talks about what, sir? It is the charging section. Sir, what do you mean by charging section? It is because of this section you are paying GST. You are paying GST because of its section, charging section. Section 9 of CGST Act is charging section of CGST. Similarly, we have different types of taxes. CGST is there, SGST is there, IGST is there, UTGST is there. Then GST compensation cess is there. Accordingly, for each of these sections, we will have a separate charging section. Section 9 is the charging section of CGST Act. Similarly, we have a section 9 under SGST Act, which is charging section of SGST Act. Section 7 of UTGST Act is a charging section for UTGST, and section 5 of IGST Act is the charging section for IGST. The provisions are copy paste provisions for all these things. Only small changes will be there, which I'll just tell you what are the changes. But anyways, from our exam point of view, what is important? Section 9 of CGST Act and section 5 of IGST Act. Now, as we all know, before we start our discussion, charging section means what, sir? You are paying tax because of this section. Charging section will, why do we study about charging section, sir? It is because of this section you are paying the GST. Section 9 of CGST Act is the charging section of CGST. Now, we all know that sales under GST law is called as outward supply, and the tax which you pay on the sales is called as output tax, and purchases are called as inward supply, and the tax on purchase is called as input tax. Now, our IGST Act gives the meaning of, you remember during introduction topic, I told you this is the basic meaning of interstate supply and intrastate supply I had given you, and I told you that actual meaning we'll see later. It is the section 7 of IGST Act which gives the meaning of interstate supply. Section 7 of IGST Act. What is section 7 telling? Now you should see two things. If these two things are away from each other, then it is interstate supply. If these two things are near each other, then it is an intra-state supply. What are these two things? Location of supplier and place of supply. If location of supplier and place of supply is in two different states, two different union territory, or one state and one union territory. If location of the supplier and the place where the supply is made, where, please, not where the recipient is located. Location of the supplier I'll take, the person who is supplying, and where is the supply made, where is the place of supply. The location of the supplier and the place of supply is, in simple words, what is place of supply, sir? Just assume that it is place where the goods are consumed. Place, location of place of supply means what, sir? The location where the supply is consumed. We will see the actual meaning of place of supply in the place of supply topic. But as of now, because it is our beginning stage, we have to see that topic separately. What is place of supply? Place of supply means the place where the supply is consumed, the location where the supply is consumed. So, interstate supply, section 7 of IGST Act says, I will call a particular supply as an interstate supply where the location of the supplier and the place of supply is in two separate states or two separate union territories or one state and one union territory. Then that type of supply will be called as interstate supply. Or it is a case of import of goods or services. If I am importing any goods or services from outside India, then also it is an interstate supply. Or I am exporting any goods or services outside India, it is an interstate supply. Or it is a supply made to an SEZ unit or SEZ developer, then also it is an interstate supply. Then we have intrastate supply. What is this intrastate supply, sir? When the location of the supplier and the place where the supply is made, if it is in the same state or same union territory, then it is called as intrastate supply. Now, CGST and SGST is levied when it is an intra-state supply, and CGST and UTGST is levied when it is an intra-union territory supply. When it is an interstate supply, the tax which you have to pay is IGST. We will see the meaning again while discussing place of supply topic. Now, normally the tax under GST law can be paid in, is normally paid in two ways. Normally tax under GST law is paid in two ways. One is called as forward charge, one is called as reverse charge. Sir, what is this forward charge? If the supplier of goods and services is paying the taxes to the government, then it is called as forward charge. Sir, what is forward charge, sir? Where the supplier of, where the person who is supplying, where the supplier of goods and services is making the payment of taxes to government, then it is called as forward charge. Sir, what is reverse charge, sir? Where the recipient, where the receiver of the goods and services is making the payment of taxes to government, then it is called as reverse charge. For example, you come to Priya Sarees. You come to Priya Sarees, I sell the sarees to you. You come to Priya Sarees, I sell the sarees to you. Sarees worth rupees 10,000 and I collect GST of 1,000 rupees from you. Now, what will happen? I am the person who is supplying the goods or services to you. So, you are going to pay me 11,000 rupees, wherein 1,000 rupees I will pay to government. So, the supplier of goods and services is making the payment of taxes to the government. This happens in forward charge. What will happen in reverse charge? I am an advocate giving services to you. Now, legal services are taxable under reverse charge. So, I am an advocate giving the services to you. I am the supplier, you are the recipient. Now, there is a provision which says you, being the recipient, you will have to make the payment of taxes to the government. So, in case of reverse charge, what will happen, sir? The person who is receiving the goods and services, the recipient of goods and services, is liable to make the payment of taxes to government. Now, So with this basic introduction, let us straight away start the discussion on this chapter. Which is the chapter, sir? The chapter, let us straight away start with the discussion with the charging section. Section 9 of CGST Act. Section 9 of CGST Act. Section 9 subsection 1 of CGST Act says, subject to the provision of subsection 2, there shall be levied a tax called as Central Goods and Services Tax on all intrastate supply of goods or services or both, except on alcoholic liquor for human consumption on a value determined under section 15 at such rates as may be notified by the government not exceeding 20%. It shall be collected in such manner as may be prescribed and paid by taxable person. What is section 9 telling, sir? What is section 9 telling? Section 9 says, let us ignore first line for the time being. Section 9 subsection 1 says, there shall be levied a tax, meaning I am going to levy a tax. What is the tax called as? Central Goods and Services Tax. When am I going to levy this tax, sir? Whenever you are making intrastate supply of goods or services or both. Sir, all the types of intrastate supply of goods or services are both? No. Except on alcoholic liquor for human consumption. Though alcoholic liquor for human consumption is a goods, I am not going to levy CGST, meaning GST is not applicable on that. Sir, okay, sir, you are going to levy CGST whenever there is an intrastate supply, sir. On what value, sir? On a value determined under section 15. If you want to know on which value, then value you please go to section 15. And then at such rates as may be notified by the government not exceeding 20%. Sir, on what rate will you levy, sir? The rate will be notified by the government. Government is going to tell that this product is taxable at this percent, this product is taxable at this percent. This rate can be maximum how much? 20%. So maximum CGST which government can collect is how much, sir? Maximum CGST which government can collect is 20%. As of now, government is collecting only 14%. The highest CGST rate is 14%. But how much can they collect it to? For 20%, and it shall be collected in such manner as may be prescribed and paid by the taxable person. Who has to pay the taxes? A taxable person has to pay the taxes. Section 9 subsection 1, I'll repeat. There shall be levied a tax. I'm going to levy a tax called as Central Goods and Services Tax whenever there is an intrastate supply of goods or services or both, except on what, sir? Alcoholic liquor for human consumption. On what value? On a value determined under section 15. At what rates, sir? At such rates as may be notified by the government not exceeding 20%. It shall be collected in such manner as may be prescribed and paid by taxable person. Now, please note, this provision is copy-paste applicable in SGST law. It is copy-paste applicable in IGST law. Copy-paste applicable in UTGST law. Copy-paste. Only there will be a small change. What is that change? Section 9 subsection 1 of CGST Act is telling this. Section 9 subsection 1 of SGST Act will tell, subject to the provision of subsection 2, there shall be levied a tax called as, instead of CGST, what will they tell? SGST, State Goods and Services Tax on all intrastate supply of goods or services except on alcoholic liquor for human consumption on a value determined under section 15 at such rates as may be notified by the government not exceeding 20% and shall be collected in such manner as will be prescribed and paid by taxable person. Same copy-paste provision. What will be under IGST law? Under IGST law, what will happen, sir? Subject to the provision of subsection 2, there shall be levied a tax called as IGST. There shall be levied a tax called as Integrated Goods and Services Tax on all interstate supply of goods or services or both, except on alcoholic liquor for human consumption on a value determined under section 15 at such rates as may be notified by the government not exceeding 40%. So under IGST law, what will change? Instead of CGST, it will be IGST. Instead of intrastate supply, it will be interstate supply. Instead of 20%, it will be 40%. So basically, whatever other points also we are going to see, no, it is all same under those respective acts also. And I hope you know that IGST is CGST plus SGST. So if the rate of CGST is 9%, that means IGST will be 18% and SGST also will be 9%. So these are the different rates which are there under GST law, and day by day they are increasing the rates also. Now first line says subject to the provision of subsection 2, meaning section 9 subsection 1 is telling whenever there is an intrastate supply you will have to pay CGST. But however, please keep in mind what subsection 2 is telling. What is subsection 2 telling, sir? Subsection 2 says CGST on intrastate supply of HP man shall be levied from the date notified by the government on the recommendation of council. Meaning there are some products called as HP man. On this product, CGST will not be levied today. GST will not be levied today, but GST will be levied on a future date as may be notified by the government. Sir, what is that future date, sir? What is that future date? We don't know. Government will notify it. Sir, what is this HP man, sir? High speed detail, petroleum crude, motor spirit, aviation turbine fuel and natural gas. Now, before we go further, now please note, tax is required to be paid by whom? A taxable person. Who has to pay the tax, sir? A taxable person has to pay the taxes. It shall be paid by whom, sir? Taxable person. Sir, what do you mean by taxable person? Taxable person means a person who is registered or who is liable for registration under section 22 or under section 24. Sir, what do you mean by a taxable person? Taxable person means a person who is registered or liable for registration under section 22 or under section 24. Sir, now see, a person under GST law can be divided into three separate categories. One is unregistered person, a person who is not at all registered. One is registered person, a person who has taken registration under GST law. Now, there is one more person in between these. Who is this person, sir? Taxable person. Who is this taxable person? Taxable person means a person who is registered or if he is liable for registration. If any person is liable for registration, then also I will call him as what? Taxable person. Now, section 9 subsection 3. Section 9 subsection 3 talks about reverse charge. Section 9.3 and section 9 subsection 4. Section 9 subsection 3 and section 9 subsection 4 talks about reverse charge. It talks about what, sir? RCM. Section 9 subsection 3 says CGST on intrastate supply of notified goods and services. CGST on intrastate supply of notified goods and services shall be paid by the recipient of that goods and services under reverse charge. Meaning, what is section 9 subsection 3 telling? I am going to notify some goods and services. I am going to notify some goods and services. On these goods and services, the recipient, the receiver of these goods and services has to pay the taxes. Then section 9 subsection 4. 9.4 says CGST on notified goods and services received from an unregistered person by a notified registered person shall be paid by notified registered person under reverse charge. Now, there is a difference between 9.3 and 9.4. What is the difference between 9.3 and 9.4? 9.3 says, I am going to give you the list of some goods and services. On these goods and services, the receiver has to pay the tax under reverse charge. But however, 9.4 says, I am going to give you the list of goods and services. If these goods and services you purchase from an unregistered person, only then that notified registered person. I am also going to give you the list of people who have to pay the taxes under reverse charge. I will give you the list of goods and services and also the people who have to pay the taxes under reverse charge. These people will have to pay tax under reverse charge if they purchase this product from unregistered person. 9.4 is telling. See, 9.3 does not say that. 9.3 says, I will give you the list of goods and services. Any person who is purchasing these goods and services, who is procuring, who is receiving these goods and services has to pay the tax under reverse charge. But 9.4 does not say that. 9.4 says, I will give you the list of goods and services and also the person who has to pay the tax under reverse charge. These persons will have to pay a tax under reverse charge for these goods and services if they purchase it from unregistered person. Basically, from exam point of view, 9.3 is very important. At your intermediate level, 9.3 is very important. They have given list of services taxable under reverse charge. Now, before that, 9.5, most important section. Under section 9 series, no, 9.5 is important and 9.3 is important. 9.5 is most important, meaning most important in the sense you should remember the section number. Section number is also something which you have to remember for section 9, section 5. Section 9 subsection 5 says supply through e-commerce operator. What is this section telling? This section says there are some services which I am going to notify. If notified services are supplied through an e-commerce operator, if you supply these services through whom, sir? E-commerce operator, then the tax on that services is required to be paid by e-commerce operator. I am going to give the list of, I am going to notify some services. If these services are supplied through an e-commerce operator, then the tax on that supply should be paid by who? E-commerce operator. Sir, what do you mean by supply by e-commerce operator? For example, Mr. Dilip wants to go from one place to another place. Okay, from one place to another place he wants to go. So I am going to take an auto for that. If I take an auto driver is a service provider and I am the service recipient. I can also take a cab driver is a service provider, I am the service recipient. Now what I have done is I first started searching for autos, but none of the auto or cab stopped for me. So I took out my mobile phone. I opened Ola application in my mobile phone. I clicked on Ola application. I opened Ola application. Then in that Ola application, I selected my present location. As soon as I selected my present location, it started showing the available cabs over there. Then I entered my drop location. As soon as I entered my drop location, the message, then they showed me estimated fare. I said, yes, I am ready to travel. So I accepted one of the cab over there. So as soon as I accept, what will happen? From my mobile phone, a message will be sent to Ola. Ola is going to send the message to all the nearby drivers. One of the driver is going to accept my request. He is going to come to me and he is going to pick me up and drop me to my desired location. So in this case, what has happened, sir? In this case, what has happened? I have taken services of the cab driver through Ola. So in other words, this cab driver is the service provider. He is the supplier of service. He is the person who is providing the service. I am the service recipient. I am the person who is receiving this service. Now please note, this cab driver has given the services to me. He is the service provider. I am the service recipient. Cab driver has given the services to me and I have received the services from him. He has given the services to me. I have received the services. Correct? He is the service provider. I am the service recipient. But cab driver has not directly given the services to me. This cab driver has supplied services to me through an e-commerce operator. He did not come because I called him. He came because I made a request to Ola and Ola asked him to come to me. So in this case, what is happening, sir? Services are supplied through e-commerce operator. Services are supplied through e-commerce operator. See, for one more example, you directly go to a restaurant, you take food over there, you eat it over there, point number one. Or you directly go to a restaurant, you take a parcel of food, or you book through Swiggy, Zomato. So if you are booking through Swiggy, Zomato, then that restaurant is giving services to you through an e-commerce operator. So this Ola, Uber, Swiggy, Zomato, they are all called as e-commerce operator. Now what are they telling? If services are supplied through e-commerce operator, if the services are supplied through e-commerce operator, the tax is required to be paid by e-commerce operator. 9.5 says the tax is required to be paid by e-commerce operator. Whatever money you are going to pay to the driver, no, whatever service charge you are going to pay, no, on that who has to pay the taxes, sir? E-commerce operator has to pay the taxes. E-commerce operator has to pay the taxes. Sir, what do you mean by e-commerce operator? E-commerce operator means a person who is owning, operating, maintaining, managing an electronic platform for electronic commerce. Who is an e-commerce operator? A person who is owning, operating, maintaining, managing an electronic platform for what purpose? Electronic commerce purpose. He is an e-commerce operator. Now let us continue. Let us continue. What is 9.5 telling? 9.5 says if notified services are supplied through e-commerce operator, the tax on that supply is required to be paid by e-commerce operator. Sir, what if e-commerce operator does not have an office in India? What if e-commerce operator does not have physical presence in taxable territory, that is India? If e-commerce operator does not have physical presence in taxable territory, then any person representing such e-commerce operator in taxable territory will have to pay the taxes. If e-commerce operator does not have physical presence in India, if they don't have any office in India, then any person who is representing Ola in India will have to pay the taxes. Any person who is representing that e-commerce operator in taxable territory shall pay the taxes. Sir, what if e-commerce operator does not have physical presence in India and also it does not have any representative? Provided for that if the e-commerce operator does not have physical presence in India and there is no representative of such e-commerce operator in taxable territory, that is India, then he will have to compulsorily appoint a person in taxable territory to pay such taxes. He will have to appoint someone in India to pay the taxes. I'll repeat 9.5. 9.5 says what, sir? If notified services are supplied through e-commerce operator, the tax is required to be paid by e-commerce operator. If the e-commerce operator does not have physical presence in taxable territory, any person representing that e-commerce operator in taxable territory should pay the taxes. Sir, what if e-commerce operator does not have physical presence in taxable territory as well as it does not have any representative in taxable territory? In such cases, they will have to appoint a person in India in taxable territory to pay the taxes. Section 9 subsection 5, notified services. Sir, which are the services notified, sir? Sir, which are the services covered under 9.5? The services covered under 9.5 are transportation of passenger services, Ola, Uber, Rapido, etc. Accommodation in hotel, in guest house services, OYO, Make My Trip, etc. Housekeeping services, Urban Company, etc. Restaurant services, Swiggy, Zomato, etc. Now, what is the provision telling? One more important point. In case of accommodation, housekeeping and restaurant services. See, in case of passenger transport services, that is Ola, Uber, always the e-commerce operator only has to pay the taxes. But in these three cases, which three cases? In case of restaurant services, in case of restaurant services, housekeeping services, and accommodation in hotel services. If the person who is giving the services, if the supplier of the services is registered under GST, then the tax shall be paid by the supplier and not the e-commerce operator. If the person who is giving the services, supplying the services, if he is registered, then the supplier will have to pay the taxes and not e-commerce operator. But in case of Ola, it is always the e-commerce operator which has to pay the taxes. So there are different examples which I have given. Now, section 9 subsection 3, I told section 9 subsection 3 is a very important section. Section 9 subsection 3 gives, section 9 subsection 3 talks about reverse charge. Section 9 subsection 3 says notified services, I am going to notify some goods and services. On these goods and services, tax is required to be paid by recipient under reverse charge. Now, the goods are not important from exam point of view. The goods on which tax is required to be paid under reverse charge is not important. The services on which tax is required to be paid under reverse charge is very, very important. Which are the services on which tax is required to be paid under reverse charge under section 9 subsection 3? These services are notified in these services are listed by a notification called as notification number 13/2017. If you see this notification number 13/2017, you will understand what are the different services on which tax is required to be paid by the recipient under reverse charge. Which are the services, sir? Goods Transport Agency services. GTA giving services to the 7 notified persons. If a GTA is giving services to the 7 notified persons, then the 7 notified persons will have to pay the taxes under reverse charge. Sir, what do you mean by GTA? Sir, GTA means a person who is, GTA means Goods Transport Agency. What do you mean by Goods Transport Agency? A person who is involved in the business of transportation of goods by road and who issues a consignment note. Then I will call it as a GTA. Now, if a GTA is giving services to these 7 people, who are the 7 people? Factory, society, cooperative society, a registered person. Registered person means a person who is registered under GST law, a body corporate partnership firm, or a casual taxable person. And if these people are located in taxable territory, then these people will have to pay the taxes under reverse charge. Now, please note, a factory, society, cooperative society, body corporate partnership firm, these people, even if they are not registered under GST, these people will have to pay taxes under reverse charge. Now, who has to pay the taxes under reverse charge? If a GTA is giving services to these 7 notified persons, these 7 notified persons will have to pay the taxes under reverse charge. Who are the 7 notified persons? Factory, society, cooperative society, registered person, body corporate, partnership firm, and casual taxable person. All of them should be located in taxable territory. Meaning the service recipient, basically the receiver, should always be located in taxable territory in all the cases. Okay. Now, please note, a GTA also has an option to pay tax under forward charge. A GTA also has an option to pay tax under forward charge. For that, GTA will have to take a registration, and it will have to mention in the invoice that I am going to collect the tax under forward charge. You need not pay the tax under reverse charge. See, normally GTA gives services to the 7 notified persons, RCM is applicable. But if GTA wishes to pay the tax under forward charge, then it can do so. There was an amendment made. It can do so. If the supplier has taken registration under GST law and he opts to pay the tax under forward charge and issues invoice with GST, then RCM shall not apply. So this was one small amendment which was made last year, basically. So GTA also has an option to pay tax under forward charge. So normally it is reverse charge. Very important is this legal services. Legal services given by whom, sir? Advocate to a business entity. Then that business entity will have to pay the taxes under reverse charge. It does not matter whether the business entity is registered under GST or not registered under GST. Whether this business entity is registered or not, it does not matter. Who has to pay the taxes, sir? Business entity will have to pay taxes under reverse charge. Services supplied by individual advocate, including senior advocate or firm, or firms of advocate by way of legal services, directly or indirectly. So in simple words, what is this point telling? Legal services supplied by an advocate. Whether you are an individual advocate or a senior advocate or a partnership firm of advocate, I don't care. Legal services given by advocate to a business entity, the business entity will have to pay taxes under reverse charge. Then arbitral tribunal giving services to a business entity will have to pay the taxes under reverse charge. Then sponsorship services, another important service. Sponsorship services given by any person to a body corporate or a partnership firm. That body corporate or a partnership firm who is receiving the services will have to pay the taxes under reverse charge. You would have seen there are many TV shows or there are many award functions. This award is co-sponsored by Jio. This award function is sponsored by this. Like for example, nowadays IPL season is happening. This IPL is sponsored by Tata. This IPL is sponsored by Vivo, or etc., etc., etc. Correct? So this is sponsorship services. So they are giving sponsorship services. So any person can give sponsorship services. If they give sponsorship services to a body corporate or a partnership firm, body corporate means a company or a partnership firm, then this company or partnership firm will have to pay the taxes under revert charge. Then government related services. Here one small extra point they have added. So one which is a new amendment applicable for your examination. So this amendment you would have also already studied in the classroom. This you would have studied in the classroom, but this is the latest amendment. This is the latest amendment. As you all know, till 30th November, whatever amendments are made, they are all applicable to you for your examination. So this is one such amendment. Services supplied by central government, state government, union territory or local authority to a business entity. Services supplied by whom, sir? Services supplied by central government. Basically government. Government means 4 people. Central government, state government, union territory, local authority. Services supplied by central government, state government, local authority or union territory to a business entity. So if government is giving services to a business entity, then the business entity will have to pay the taxes under reverse charge. Sir, from that time you are telling business entity. What do you mean by business entity, sir? Oh, sir. From that time you are telling business entity. What do you mean by business entity? Here you use business entity. Here you use business entity. Here you use business entity. What do you mean by this business entity, sir? Business entity means business entity. And what do you mean by business entity, sir? Business entity means any person who is carrying on business. Proper definition of business entity is not given under. No definition of business entity is given under GST law. Therefore, what is the general meaning of business entity? A person who is carrying on business. So he is a business entity. Now, what is this point telling? Point number 5. Any type of services given by central government, state government, union territory or local authority to a business entity, the business entity will have to pay the taxes under revert charge. Excluding these services. Excluding what, sir? Excluding these services. Meaning in this case, in these services, no, RCM is not applicable. In these cases, no RCM. No reverse charge. Normally, government giving services to a business entity, RCM. But in these cases, RCM is not applicable, it is forward charge. Renting of immobile property services. If you take a property on rent from government, no RCM. Then services by Department of Post, meaning you go to post office, you take speed post services, no RCM, always it is taxable. Services given by Ministry of Railway, newly added. Services given by whom, sir? Ministry of Railway, that is nothing but Indian Railway. Indian Railway is giving services. Forward charge will be applicable, no RCM is applicable. Then services in relation to aircraft and vessels inside or outside the port and airport. For example, many airports are owned by government. Now this airport is giving services to airline companies. So the services given by services in relation to aircraft and vessels inside and outside the ports and airports. Services relation to transportation of goods and transportation of passenger. Now, for example, I am going in Volvo buses, government Volvo buses. So they will charge GST from me. So in these cases, GST is applicable. In these cases, GST is applicable. And who is going to charge GST? The supplier only is going to charge the GST. In these cases, GST is applicable under forward charge mechanism. Normally, government gives services to a business entity, RCM, but in these cases, what, sir? Reverse charge mechanism shall, in these 5 cases, forward charge mechanism shall apply. Now, next point, very important point. Now, just now we saw renting of immobile property services is taxable under forward charge, correct? Renting of immobile property services given by government is taxable under forward charge. Now, see, there is a contradictory entry over here. What is this entry telling? Services supplied by central government, state government, union territory or local authority by way of renting of immobile property services to a registered person. To a registered person. Please note. Last case we just spoke about business entity. I don't care whether that business entity, last case we just spoke about business entity. I don't care whether that business entity is registered or not. But this second point says what, sir? Services given by government, central government, state government, union territory, local authority, by way of which services are renting of immobile property services to a registered person. Registered person will have to pay tax under revert charge. So if government is giving services to whom, sir? Registered person. If government is giving renting of immobile property services to a registered person will have to pay tax under revert charge. Then this is a new entry, fantastic, important entry. Services by way of renting of residential dwelling to a registered person. See, normally under exemption chapter you will see renting of residential dwelling for residential use is exempt. But however, if that residential dwelling is rented to a registered person for whatever purpose it is taxable under reverse charge. It is taxable under reverse charge. Renting of residential dwelling to a registered person. Then the time pass entries, transfer of development rights or floor space index by any person to a promoter. Promoter will have to pay the taxes under reverse charge. Giving any land on long-term lease for a period of 30 or more by any person to a promoter. Promoter will have to pay the taxes under reverse charge. Next important entry, very important entry, services given by director of a company to the said company or body corporate is taxable under reverse charge. Meaning director of the company is giving services to the company. Who has to pay the taxes, sir? That company will have to pay the taxes under reverse charge. I'll give examples. Then services given by agents, insurance agent, recovery agent, then individual direct selling agent, business facilitator or agent of business facilitator to respective peoples. Who are these respective people? Insurance agent is giving services to whom? Insurance company. Insurance agent is giving services to insurance company. Recovery agent is giving services to banking company, financial institutions. Then individual direct selling agent is giving services to a banking company, NBFC, etc. These people who are receiving the services, they will have to pay the taxes under reverse charge. Then if any music composer, photographer, artist is giving services to a music company, producer located in taxable territory, these people, the music company will have to pay the taxes under reverse charge. For example, A.R. Rahman is a music composer. He has composed any music and he's transferring or permitting a music company to use the copyright of that particular music. He has composed a music and he is giving the copyright of that music to whom, sir? Any music company. Okay, so A.R. Rahman has composed the music and he is giving that copyright of that music to T-Series. T-Series is a music company. In this case, T-Series will have to pay the taxes under reverse charge. Similarly, an author has written a book and is permitting, he's giving the copyright of that book to a publisher. In such cases, the publisher will have to pay the taxes under reverse charge. However, author also has an option to pay tax under forward charge. If author wants to pay tax under forward charge, two conditions he will have to satisfy. He will have to take registration under GST law and he will have to give a tax invoice to the publisher. Then overseeing committee of RBI is giving services to RBI. Then RBI will have to pay taxes under reverse charge. Individual direct selling agent and business facilitator is done. Security services. Security services means what, sir? Supply of security guards. Manpower supply services. Manpower supply services given by any person other than a body corporate. Given by any person. Any person means individual, HUF, partnership firm, etc. except a body corporate to a registered person. Then that registered person will have to pay tax under reverse charge. So security services can be given by body corporate or others. If it is given by body corporate, always forward charge. If it is given by others to a registered person, RCM, to unregistered person, forward charge mechanism. Now please note, normally security services or manpower supply services given by any person to a registered person is taxable under reverse charge. But however, this registered person will not include two types of people. One is a person who has taken registration under composition levy, and second is government or government departments, government undertakings who have taken registration under section 51 for the purpose of deducting TDS. Then renting of motor vehicle service provider. If renting of motor vehicle services is given by any person other than a body corporate who does not pay the tax at 6%, meaning a renting of motor vehicle person, no, they have an option to pay tax at 5% and 12%. That is 2.5% CGST or 6% CGST. So if they opt to pay tax at 6%, no RCM. If they opt to pay tax at 2.5%. I am talking about service provider. I am a renting of motor vehicle service provider. I opt to pay tax at 2.5% CGST or 5% IGST. I give services to any body corporate. Body corporate will have to pay taxes under reverse charge. Then lending of securities, services given by lender to a borrower. Borrower has to pay the taxes under reverse charge. So renting of motor vehicle services, if he is opting to pay tax at 6%, always forward charge. If it is 5%, that is 2.5% CGST, and service provider is body corporate, then forward charge. Service provider is others and they are giving services to body corporate, then only RCM will come. Now GTA giving services to 7 notified persons. Now that was one summary, and here explanation is provided. Okay, so that was the entire summary of all the different points which are there taxable and reverse charge. Here the explanation is given. So GTA is giving services to the 7 notified persons. They should be located in taxable territory. That RCM will be applicable. What do you mean by GTA? I have given over here. I have already discussed this. GTA has an option to pay tax under forward charge, provided it should satisfy these conditions. Then advocate giving legal services to a business entity. It does not matter whether business entity is registered or not. Arbitral tribunal and sponsorship services given by IPL, sponsored by Tata, the Kapil Sharma show, Patanjali Dant Kanti, etc. Whatever that different items are there over there. Then any services given by government to a business entity. Government includes central government, state government, local authority, and union territory. Except which services, sir? Except these 5 services. In case of these 5 services, it is always forward charge mechanism. Renting of immovable property services given by government to a registered person, then registered person has to pay the taxes and the reverse charge. Now, this is a new entry, very important entry. Under exemption chapter, we have seen renting of, we have seen in the sense, normally you would have studied renting of residential dwelling for residential use, except where it is given to a registered person is exempt. If you are giving a residential dwelling for residential use, except to a registered person. If you are giving residential dwelling for residential use, it is exempt. But if the residential dwelling is given to a registered person, it is taxable, and it is taxable under reverse charge. Okay, it is taxable under reverse charge. The summary of this. This is very important note. Okay, this is a very important note. Renting of residential dwelling to a registered person, unregistered person. If I rent it to a registered person, then check for what purpose it is. Commercial use or residential use, any type of use, always are same. Renting of residential dwelling, it is rented to an unregistered person for commercial use, forward charge. For residential use, exempt. And other points are anyways easy. Director of company, again important. Services given by director of a company. Directors can be of 2 types. One is employee director, one is non-employee director. Employee director, any services given by employee to the employer in the course of employment, not a supply. It is not a supply, therefore no GST will be applicable. But if you are a non-employee director, then GST will be applicable. And GST is applicable under reverse charge mechanism. Reverse charge mechanism. Now, they have got a new point in this. They have got a new point in this renting of director services. Now, director may give services in his private or personal capacity also. Now, I am giving services to the company because I am a director. Point number 1. Now, I have something else, and that I have something else, and that something else. I am giving services through that something else, meaning I am giving services to the company as a director, or I am giving the services to the company as an individual outsider. If I give services to the company as an outsider, then that services given by me to the company is in my individual capacity or private capacity or personal capacity. See, I will give services to the company as a director. Okay, as a director, company would have told me, Dilip, these are the different things which you have to do. You will have to file, you will have to do the accounting, etc. This is the work which you have to do. Now, I also have a building. Now, this building I have given on rent to my company. Now, this building, giving this building on rent to the company is nowhere connected to my directorship. Even if this company would have not taken this building on rent, I would have rented it to someone else. Correct? So, this is nowhere connected to my directorship. I'm not giving this building on rent to the company because I'm the director. Because I have a building and company wanted a building, I gave the rent, building on rent to company. So this services of renting of immovable property to the company is in my personal capacity. It is in my private capacity. On that, RCM will not come. RCM will come only if services are given by me as a director to the company. Okay, not okay. So director of the company, director can be employee director or non-employee director. Employee director, example, whole-time director. Non-employee director, example, independent director. Director is giving services to the company as a director. Meaning as a director only, the director is giving services to the company. Then check under which section TDS is deducted, under section 192 or 194J. If it is 192, then not a supply, no GST covered under schedule 3. If it is TDS is deducted under section 194J, then yes, it is a supply, and therefore yes, it will attract GST. Services is given in personal capacity, GST is never applicable under reverse charge. RCM is not applicable, sir. Then non-employee director is giving services as a director, RCM shall apply. In his personal capacity, no RCM shall apply. Very important concept it is. Very important concept. All their points, anyways, we have seen the revision for that. Next, very important concept. Please note, this concept is seriously very important because there is good amendments. If not for intermediate students, final students, so definitely they will ask, they will test you in this point. Okay, very fantastic point it is. Next topic, one of the most important topic for intermediate students. One of the most important topic for intermediate students, composition scheme. 7 supply, 8 is taxability of composite and mixed supply, 9 is charging section, 10 is what, sir? composition scheme. Section 10, composition scheme. Now, section 10, who is eligible to become a composition dealer? Who can become a composition dealer? Who can pay the tax at composite rates? Section 10, subsection 1, eligibility. Who is eligible, sir? A registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crore rupees. Who can opt to pay tax at composite rates? Who can pay tax at composite rates, sir? A registered person whose aggregate turnover in the preceding financial year. Who, sir? A registered person whose aggregate turnover in the preceding financial year, last financial year. A registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crores, he may opt to pay tax at composite rates. He may opt to pay, meaning it is an option given to him. So he may opt to pay tax under section 10 in lieu of paying the tax under section 9 subsection 1. Who is eligible, sir? A registered person whose aggregate turnover in the preceding financial year, aggregate turnover in the preceding financial year did not exceed 1.5 crores may opt to pay tax under section 10, that is at composite rates, instead of paying tax under section 9, which is normal rates. You may opt to pay tax at composite rate. What are these composite rates? If you are a manufacturer, 0.5% of turnover of the state. If you are a restaurant or outdoor catering service provider, 2.5% of turnover of the state of union territory. And for all other dealers or all other types of dealers in goods, it is 0.5% of taxable turnover in the state. So please note, the tax rate is important. The tax rate, if you are a manufacturer, it is 0.5% of turnover in the state. If you are a restaurant or outdoor catering service provider, it is 2.5% of turnover in the state. If you are other kind of dealer in goods, it is 0.5% of taxable turnover in the state. 0.5% of what, sir? Taxable turnover in the state. Now please note, this limit I am going to see the limit of last financial year, preceding financial year. Okay, last financial year, preceding financial year. In the preceding financial year, if in the preceding financial year my aggregate turnover is 60 lakhs, can I become a composition dealer this year? Yes, sir. If it is 1.5 crores, can I become? Yes, sir. If it is 1 crore, can I become? Yes, sir. If it is 5 lakhs, can I become? Yes, sir. If it is 10,000 in preceding financial year, can I become? Yes, sir. If it is 0 in the preceding financial year, in the preceding financial year my turnover was 0, can I become a composition dealer this year? Answer is 100% yes, sir. See, normally the limit is how much, sir? The limit is 1.5 crores. The limit is what, sir? 1.5 crores. But there are some special category states. For these special category states, for some special category states, the limit is 75 lakhs. Normally, to check whether a person is eligible to become a composition dealer or not, I will see the limit of 1.5 crores. But for 8 special category states, how much, sir? For 8 special category states, the limit is 75 lakh. Sir, which are these 8 special category states? Num must. Which are these 8 special category states, sir? Num must. Which are these 8 special category states for which the limit is 75 lakhs? It is num must. N for Nagaland, U for Uttarakhand, M for Manipur, M for Meghalaya, M for Mizoram, A for Arunachal Pradesh, S for Sikkim, and T for Tripura. Sir, which are these 8 special category states, sir, for which the limit is 75 lakhs? Num must. Which are these 8 special category states for which the limit is 75 lakhs? Num must. N for Nagaland, U for Uttarakhand, M for Manipur, M for Meghalaya, M for Mizoram, A for Arunachal Pradesh, S for Sikkim, T for Tripura. I hope you know that there are totally 11 special category states. We had studied in our first chapter, correct? Out of that, for 8 states, what is the limit? 75 lakhs is the limit for becoming a composition dealer. Now, please note. This limit, sir, what do you mean by aggregate turnover? You are telling if aggregate turnover does not exceed 1.5 crores or 75 lakhs. What do you mean by aggregate turnover? Very important definition. Most important definition in your entire GST law is this aggregate turnover. You should remember this definition, including the section number. Aggregate turnover means what, sir? Aggregate turnover means aggregate value. Aggregate turnover means what, sir? Aggregate value. Aggregate value of what? Aggregate value of all taxable supplies, exempt supplies, export of goods or services, interstate supply to a person having same PAN. This aggregate turnover is required to be computed on all India basis, and this aggregate turnover shall not include taxes under GST and inward supply liable for revert charge. It shall not include the taxes under GST and inward supply liable for revert charge. Aggregate turnover means aggregate value of all taxable supplies, whether it is intrastate supply, interstate supply, don't here. Aggregate value of all exempt supply. What do you mean by exempt supply? Exempt supply means the supplies which are nil rated, wholly exempt, and it includes non-taxable supplies. Sir, what is non-taxable supply, sir? Alcoholic liquor for human consumption, HP man, on this GST is not applicable, so they are called as non-taxable supplies. Then, sir, export of goods or services are also called as zero rated supply. Sir, what is zero rated supply? Zero rated supplies are those supplies for which are meant for export or which are supplied to an SEZ unit or SEZ developer. Please note, many people get confused with respect to nil rated supply and zero rated supply. Nil rated supply means those supply for which the rate of tax is nil, the rate of tax is 0%, the rate of tax column is left blank, or it is written as dash. Nil rated supply means for which the rate is only nil or 0% dash, nothing is written in the rate column. But zero rated supply means export of goods or services or supply made to an SEZ unit or SEZ developer. Aggregate turnover, I'll repeat again. Aggregate turnover means aggregate value of all taxable supplies, exempt supplies, export of goods or services, and interstate supply to a person having same PAN. This aggregate turnover you should calculate on, you should compute it on all India basis, meaning you should take whatever different number of branches you have, whatever different types of business you have under a single PAN in entire India. You should take all of that. But while computing aggregate turnover, please do not include the taxes under GST law and inward supply liable for reverse charge. The purchases which you are making, inward supply means the purchases which you are making on which you have to pay tax under reverse charge. So taxes under GST means CGST, SGST, IGST, UTGST, GST compensation cess. Okay. Sir, what about outward supply tax liable for reverse charge? My outward supply taxable under reverse charge, will it be included in aggregate turnover? Answer is yes. Array, aggregate turnover. Turnover is what? Your sales basically. So outward supply, all the types of outward supply will be included. Now please note. Normally the limit is 1.5 crores. The limit will be 75 lakhs in case of 8 special category states. Now this limit can be increased by government up to 2 crores. Now, if you are a person who is paying tax under section, if you are a person who is opting for a composition scheme under section 10 subsection 1, then you can also supply services. See, normally a composition dealer cannot supply services, but if you are opting for a composition scheme under section 10 subsection 1, you can also supply services. How much, sir? Provided further that a registered person who is otherwise eligible to pay tax under section 10 subsection 1 can supply services up to 10% of turnover in the state or union territory or rupees 5 lakhs, whichever is higher. How much services you can supply, sir? 10% of turnover in the state or union territory or 5 lakhs, whichever is higher. That much amount of services can be supplied by you. Now, please note, very, very important points over here. Please note very, very important points. Note number 1. If you have, this you will not find anywhere. If you have a place of supply in special category states, meaning I have business in normal states as well as special category states, in Karnataka as well as in Nagaland. Nagaland is a special category states. Then if you have a place of business, if you have a place of business, if you are having a unit, if you are having an office over there in normal state as well as special category states, then the limit of special category states will apply for entire India. What is the limit of special category states? 75 lakhs. For entire India, for you, the limit of 75 lakhs will be applicable if you have business in normal as well as special category states. And one more important, very, very important note. Interest income. Interest income shall not be added or shall not be included while computing value of services under 10(1), while computing aggregate turnover for checking whether a person is eligible or not, and while computing the turnover in the state or union territory for calculating the tax amount. You should not take into consideration interest income, meaning interest income should not be considered for anything under composition scheme. Okay, say for the special category note, say for example, I am having Priya Sadis in Bangalore having a turnover of 50 lakhs. I have Priya Sadis in Nagaland having a turnover of 30 lakhs. What is my aggregate turnover? Aggregate turnover means what, sir? Total turnover. Total turnover is 80 lakhs. Now, can I become composition dealer, sir? Answer is no. Why? When I have a place of business in special category states, for me, for entire India, limit of special category states, which is 75 lakh, will apply. Now, my aggregate turnover is 80 lakhs. Therefore, I cannot become a composition dealer anywhere in India. Nice examples are there. You can just go through it. Please, guys, you can download this material. This will be attached through a Google Drive link. You can download this material. Then, sir, whoa, sir, I want to become a composition dealer, sir. Okay, become. Sir, I want to become a composition dealer, sir. Yes, please become. Sir, is there any condition, sir?
Oh sir, is there any restrictions available to me, sir? Yes, there are a lot of restrictions which are available to you. Which are the conditions, sir? What are these conditions? Section 10 subsection 2 conditions. Section 10 subsection 2 conditions. Section 10 subsection 2 talks about conditions. A registered person shall be eligible to opt for composition scheme. A registered person will be eligible to opt for composition scheme under section 10 subsection 1 if ... if he satisfies all this condition. Meaning, if you want to become a composition dealer as per section 10 subsection 1, you'll have to satisfy all this condition. What is this condition? Condition number 1, he is not engaged in supply of services other than those services mentioned in section 10 subsection 1. Meaning, he should not be a service provider. For example, a chartered accountant cannot become a composition dealer under section 10 subsection 1. A beauty parlor lady cannot become a composition dealer under section 10 subsection 1. Then a lawyer or a company secretary or a cost accountant or a doctor cannot become a composition dealer under section 10 subsection 1 because they are all service provider. Then he should not be engaged in making non-taxable supplies. So if you are a person who is making non-taxable supplies, if you are a person who is supplying alcoholic liquor for human consumption, if you are a person who is supplying HP-man, high-speed diesel, petroleum crude, motor spirit, aviation, turbine fuel and natural gas, then also you cannot become a composition dealer. And he should not be making interstate outward supply. You should not make supply to another states. If you want to become a composition dealer, no, you should not supply to another states, but you can purchase from other states. He can make interstate inward supply. You can purchase from other states, but you cannot sell to other states. He should not be making supply through an e-commerce operator who is required to collect tax under section 52. So there is a section called as section 52. So if you are supplying through an e-commerce operator who is required to collect tax under section 52, then also you cannot become a composition dealer. Basically, Flipkart is covered over there. So Priya Sadis, if I want to become a composition dealer, I cannot supply through Flipkart because Flipkart is an e-commerce operator to whom section 52 is applicable. Then he should not manufacture notified goods. Please note, manufacturer can become a composition dealer, but he should not manufacture notified goods. What is notified goods, sir? Par masala, aerated waters, tobacco and tobacco products, ice cream and bricks, roofing tiles, etc. And he should not be a casual taxable person and non-resident taxable person. If you are a casual taxable person and non-resident taxable person, you will not be allowed to become a composition dealer. Please understand how many conditions are there? 6 conditions are there. If you want to become a composition dealer as per section 10 subsection 1, first you should not supply services. Then you should not make non-taxable supplies. You should not make supplies to another states. Interstate outward supply you cannot make. You cannot make supplies through an e-commerce operator is required to collect the taxes under section 52. Then you cannot manufacture notified goods, which is nothing but pati, bricks, P for pan masala, A for aerated waters, T for tobacco and tobacco products, I for ice cream, and bricks is bricks and roofing tiles. And he cannot be a casual taxable person and non-resident taxable person. Next, provided that, one more very important proviso. This is the proviso for section 10 subsection 2. What is this provision telling, sir? This proviso says, provided that where there are more than one registered person under same PAN. If there are more than one registered person under same PAN, if one is opting for composition scheme, others also should opt for composition scheme. Provided that where there are more than one registered person under same PAN, if one opts for composition scheme, then others also should opt for composition scheme. Sir, what do you mean by this, sir? What do you mean by this? Priya Sadis is there in Jaipur as well as Udaipur. So these both places are in Rajasthan only, Jaipur and Udaipur. For one unit it wants to opt for composition scheme, another unit it wants to opt for regular scheme. Can it do, sir? No. For both it wants to become a composition. Can it do, sir? Yes. Both it wants to become a regular dealer. Can it do, sir? Yes. So if you have more than one units, if you have more than one registered person, if you have taken more than one registration under same PAN, if one is opting for composition scheme, others also should compulsorily opt for composition scheme. It does not matter whether it is different types of business or same business, etc., etc. Like I have chudidar business, sari business, anything it is, if they are all registered, and they should all be registered either under composition scheme or under regular scheme. Then a new section was introduced in the year 2019. A notification was introduced. Later a section was introduced in the year 2020. Composition scheme for service provider. We as a service provider, tomorrow we are going to become a cost accountant. After becoming a cost accountant, if you start your practice, can you become a composition dealer? Answer is yes. This section says yes, you can become a composition dealer. Section 10 subsection 2A, composition scheme for service provider. A registered person is not if a registered person, where a registered person is not eligible to become a composition dealer as per section 10 subsection 1, and whose aggregate turnover in the preceding financial year did not exceed 50 lakh rupees, and who is exclusively not supplying restaurant services, and who is exclusively supplying services and other than restaurant services, can opt to become a composition dealer under section 10(2)(a), wherein what will happen, sir? The tax rate which will be applicable to him will be 3% of turnover in the state, 3% CGST, 3% SGST. And what are the conditions, sir? All the conditions which are applicable to normal composition dealer will apply to him also, except that supply of service condition, meaning he cannot make interstate outward supply, he cannot make supply through an e-commerce operator section who is required to collect taxes, etc. Whatever conditions are applicable to a normal composition dealer, whatever we just now saw, they are all applicable to composition dealer under section 9 subsection 5 also. Then your composition scheme shall lapse in the current financial year. Say, for example, I opted for composition scheme and I am doing my business. In the current year, my turnover crossed that specified limit of 1 crore, 1.5 crores, or 75 lakhs or 50 lakhs. Then I'll have to opt out of composition scheme. Composition scheme shall lapse in the current financial year if aggregate turnover crosses specified limit. If your aggregate turnover crosses that limit of 75 lakhs, 1.5 crores, or 50 lakhs, then your composition scheme shall lapse. Meaning from that date onwards, you will have to become a regular dealer. You will have to pay tax at regular rates. For example, Priya Sadi started the business on 1st April 2023 and I applied for composition scheme. Now during the year, I was doing the business as a composition dealer only. Okay. Then on 10th of December 2023, my turnover crossed 1.5 crores. On 10th of December 2023, my turnover crossed 1.5 crores. Now my composition scheme has what, sir? Lapsed. My composition scheme has lapsed. Since my composition scheme has lapsed, from this date onwards, whatever sales I am going to make, I will have to pay the tax at normal rates. I am a regular dealer now. Whatever sales I am going to make, I will have to pay tax at what rates? At regular rates. So, sir, what about the supplies made before this period? I will have to pay tax at composite rates only. For all the supplies made before this period, I will have to pay tax at composite rates only. Then section 10 subsection 4. Section 10 subsection 4 talks about what, sir? Composition dealer cannot collect taxes on his supplies and he cannot take input tax credit. One more very important condition. A composition dealer cannot collect tax on his supply. He cannot collect taxes from you. Whatever supply is making, he cannot collect taxes on the supply and he cannot take input tax credit. And he cannot take what, sir? Input tax credit. On purchases, whatever tax is paid by him, he cannot take input tax credit of that composition dealer. Section 10 subsection 5, notice by proper officer. A notice will be given to proper officer if he has a reason to believe that a person has opted for composition scheme even if he is not eligible. Even though you are not eligible to become a composition dealer, if you opt for composition scheme, a notice will be sent to you. Now you will have to reply to your notice. Notice is your reply is satisfactory, very good, no problem. If reply is not satisfactory, then the composition dealer will have to pay the taxes at normal rates along with interest, and provisions of 73 and 74 shall also apply. Then there are different rules for composition dealer. One of the important rule is rule number 5. Rule number 5 says a composition dealer will have to mention the word composition taxable person. Composition taxable person on the notice board and sign boards. He will have to mention the word composition taxable person on the name board, notice board, sign board, etc. Then he will have to mention the words composition taxable person not eligible to collect taxes on supply on the bill of supply issued by him. He will have to give a document called as what, sir? Bill of supply. On that bill of supply issued by him, he'll have to mention the word called as composition taxable person not eligible to collect taxes on supplies. And he will have to pay the tax at normal rates or regular rates for purchases or inward supply liable for reverse charge under section 9(3) and section 9 subsection 4. So whatever purchases he's making, if that purchases is taxable in the reverse charge, he'll have to pay tax at regular rates only. See, composite rates of 1% and 5% is applicable for your outward supply, not for your inward supply. Then a composition dealer has to file his returns annually, once in a year. Why, sir? Why is composition scheme beneficial, sir? Because return is required to be filed once in a year. That return is called as GSTR4. It is required to be filed annually by 30th April of next financial year. Similarly, he shall pay the taxes quarterly. He has to pay the taxes to the government quarterly by filing a form called as Form GST CMP 08. And due date of payment of taxes is what, sir? 18th of next month. Sir, what do you mean by quarter? Quarter means a period of 3 months starting from first day of the calendar year. So Jan to March is a quarter under GST law. July to September is a quarter. So for Jan to March quarter, when will he have to pay the taxes? By 18th of April. 18th of next month following the quarter. 18th April, he'll have to pay the taxes. Yeah, so this is all about your composition scheme. Fantastic topic it is. Fantastic topic, very easy topic. Exam point of view also it is important. Next chapter is fantastic chapter, one more chapter called as time of supply. I hope you are enjoying, guys. I hope you are enjoying. Please do comment how you are liking this. Please do share with your other friends so that they can also watch it. Time of supply, section 12 and 13, section 12, 13 and 14, section 12, section 13 and section 14, time of supply in case of change in rate of tax, section 12, 13 and 14. Section 12, section 13 and section 14, time of supply in case of change in rate of tax. Now, for understanding time of supply means what, sir? What do you mean by time of supply? Time of supply means when did the supply happen? See, normally, I will have to pay tax whenever there is a supply. Who told? Supply is the taxable event is told by section 7. Section 7 told whenever there is a supply, you will have to pay the taxes. What type of tax I have to pay? That charging section told us. Now this chapter says, this topic says time of supply. This topic says what, sir? Time of supply. When did the supply happen? Sir, why should I know when did the supply happen? Because if you know when the supply happened, no, you will know when to pay the taxes. If you know when the supply happened, you will know when to pay the taxes. So time of supply, section 12 talks about time of supply of goods. Section 13 talks about time of supply of services. So if you want to know what is the time of supply, when should I pay the taxes when I supply the goods, then follow section 12. When should I pay the taxes for services, then I should follow section 13, time of supply of goods and time of supply of services. To understand this topic, what is important to understand, sir? It is important to understand section 31. What is section 31? Section 31 talks about due date to issue invoice. In case of goods, when is the invoice required to be issued? If supply involves movement in goods, invoice is required to be issued on or before removal. If supply does not involve movement in goods, invoice is required to be issued on or before delivery of such goods. If the supply which you are making is a continuous supply of services, invoice is required to be issued on successive payment dates or successive statement dates, whichever is earlier. And if it is a case of sale on approval basis, then invoice is required to be issued on the date of approval or 6 months from the date of removal, whichever is earlier. And sir, for services, when is the invoice required to be issued? Please note, this is a topic from your accounts and records, tax invoice, debit note, credit note, but it is relevant for our discussion of time of supply. In case of services, normal cases, very important. Normally they ask this question in the examination. In case of services, when is the invoice required to be issued, sir? On or before completion or within 30 days from the date of completion. So on the date when the services are provided by you or any time before that date. See, please note, I have given examples for all these things over here. Okay, now because it is a marathon classes, we are just revising, and wherever an explanation is needed, which I feel that you may get confused, I'm giving the explanation. But for all the other things, no, you can see that examples are given over here. You can take reference of this example for understanding, for better understanding. For example, in case of services, when is the invoice required to be issued, sir? On the date when services are provided, anytime before the date when services are provided, or you can issue it later also within 30 days from the date when services are provided. Now this 30 days is required to be replaced by 45 days in case of banking company, financial institutions and NBFCs. So a banking company, NBFC, financial institution can give services either on or before completion or within 45 days from the date of completion. For banks, it is 45 days. And sir, what about continuous supply of services? If it is a continuous supply of services, very important, then invoice is required to be issued based on check whether the due date. See, in case of continuous supply of services, what will happen? The services will be provided on continuous basis or on recurrent basis. Continuously, you will be providing services. So when should the invoice be issued in that case, sir? Now, if the due date of payment is ascertainable, on or before the due date of payment, invoice is required to be issued. If the due date of payment is not ascertainable, then on or before the date of receipt of payment. If the payment is linked to completion, on or before completion, the invoice is required to be issued. Okay, this is the time limit to issue invoice. Now this time limit to issue invoice is important for understanding the time of supply concept. Section 12 subsection 1 says time of supply of goods. Section 12 subsection 1 says the liability to pay tax in case of supply of goods shall be the time of supply as determined under section 12. If you want to know when you are liable to pay tax in case of supply of goods, then please go refer the provisions of section 12. Section 12 subsection 2 says Time of supply of goods in case of forward charge. See, we know that we have forward charge, we have reverse charge. In case of forward charge, when should you when should you pay the taxes to the government? In case of forward charge, time of supply of goods in case of forward charge. Invoice is issued within the due date under section 31, or invoice is issued after the due date is not issued within the due date. Invoice is issued after the due date of under section 31. So why did we study that invoice point? Because here it is important. If I want to know what is the time of supply, what is important for us, sir? For us, the important point is when the invoice is issued. If the invoice is issued within the due date, the time of supply will be date of issue of invoice or date of payment, whichever is earlier. Date on which the invoice has been issued or the date on which the payment is made, compare both of them, whichever is earlier is the due date, or it is the time of supply. It is the due date on which you have to pay the taxes. It is the date by which you have to pay the taxes. Then invoice is not issued within the due date. Sir, what if invoice is not issued within the due date? Then the time of supply will be the last date within which invoice is recorded to be issued. The last date within which invoice is recorded to be issued, or the date of payment, whichever is earlier, or the date on which the payment is made, whichever is earlier. Sir, what do you mean by date of payment? Date of payment means book entry date or bank credit date, whichever is earlier. Sir, what is date of payment? I'll write it completely over here. Sir, what is date of payment? Sir, date of payment is book entry date or bank credit date, whichever is earlier. Book entry date or bank credit date, whichever is earlier. So date of payment is book entry date or bank credit date, whichever is earlier. Now I have given some examples over here. One very beautiful point for goods is notification number 66/2017. Note, normally what is the time of supply in case of goods, sir? If invoice is issued within the due date, date of invoice or date of payment, whichever is earlier. If invoice is not issued within the due date, last date to issue invoice or date of payment, whichever last date to issue invoice or date of payment, whichever is earlier. But in case of goods, there is one notification called as notification number 66/2017, which is applicable. This notification number 66/2017 is applicable, which says in case of supply of goods. Notification number 66/2017 says in case of supply of goods, if any money is received before making the supply, if you receive any money, if any money is received before making the supply, then the date of receipt of such amount shall be taken as time of supply. If you receive any money before making the supply, then the date on which you have received the money, that date will be taken as time of supply. Now please note, this is applicable only for goods. This is applicable only for goods. This notification is applicable only for goods except specified actionable claims. In case of specified actionable claims, the time of supply will be as per the above provision. Date of issue of invoice or date of payment, whichever is earlier. If invoice is not issued within the due date, last date to issue invoice or date of payment, whichever is earlier. I hope you know what is specified actionable claims. Then, sir, what if it is a case of supply of goods taxable under reverse charge? In case of reverse charge of goods, the time of supply will be the date of receipt of the goods, the date when you have received the goods, or the date of making the payment, the date when you make the payment, or 31 days from the date of supplier invoice, whichever is earlier. 31st date from the date of supplier invoice, whichever is earlier. In case of voucher, see, sometimes what will happen, the supply will be made to you based on voucher. You have a Puma voucher of 5,000 rupees. Now there may be two possibilities. The supply, the voucher tells you what you can purchase, or the voucher is a general voucher, you can purchase anything. So time of supply in case of voucher, the supply is identifiable at the time of issue of voucher. At the time when the voucher is given to you, the person who is giving the voucher knows what you are going to purchase. The supply is identifiable at the time of issue of voucher. Then the time of supply will be date of issue of voucher. On the date when the voucher is given to you, that date it will be taken as time of supply. If the supply is not identifiable at the time of issue of voucher, then the date of redemption of voucher will be taken as time of supply. Then in residual cases, if you are not able to determine time of supply as per any of the above provisions, that is 12.2, 12.3, 12.4, then please come to this section. This section is asking you whether you are a registered person or not. Are you a person who is liable to file the returns? Yes. Then the due date of filing return will be taken as time of supply. In all the other cases, if you are not liable to file the returns, etc., if you are not registered under GST law, etc., then the date of making the payment of taxes is called as time of supply. Then section 12 subsection 6 is applicable for interest, penalty, late fee for delayed payment of consideration. For interest, penalty, late fee for delayed payment of consideration, the time of supply will be date of receipt of such amount. Whenever you receive this interest, penalty, late fee for delayed payment of consideration, on the date of receipt of such amount, that date will be taken as time of supply. Section 13 talks about what, sir? Section 13 talks about time of supply of services. Section 13 subsection 1. The liability to pay tax in case of supply of services shall be the time of supply as per section 13. Time pass section. Section 13 subsection 2, very important. Section 13 subsection 2, very, very important. In case of services, time of supply will be what, sir? Same. Concept is basically goods and service, it is same. In case of services, check whether invoice has been issued within the due date. Invoice is not issued within the due date. If invoice is issued within the due date, date of invoice or date of payment, whichever is earlier, is the time of supply. If invoice is not issued within the due date, then date of completion or date of payment, whichever is earlier, will be taken as time of supply. Provided that, please note, notification number 66/2017 is not applicable for services. Notification number 66/2017 is not applicable for services. However, there is a proviso for services. What is this proviso telling? Provided that where the supplier receives any amount up to ₹1,000 in excess of the invoice value. If the person who is supplying the services, he receives any amount up to ₹1,000 in excess of invoice value, then for that excess amount, the time of supply at the option of supplier will be the date of issue of invoice. The date of issue of invoice for that extra amount which he has received. Then in case of time of supply of services taxable under reverse charge, what is the time of supply? Sir, date of making the payment or 61 days from the date of supplier invoice or any other document issued by him, whichever is earlier. Now, see, IGST law says importation of services is tax is required to be paid by the recipient under reverse charge. IGST law says in case of importation of services, who has to pay the taxes? The receiver. The recipient has to pay the taxes under reverse charge. Now, so normally this provision is applicable. Normally, what, sir? This provision is applicable. But however, sometimes it may happen that you are receiving services from your own branch outside India. So in case the services are received from associated enterprises, the time of supply will be date of making the payment or the date of passing an entry in the books of accounts, whichever is earlier. Then all the other three sections are same. Section 13 subsection 4, time of supply in case of services for vouchers. Check whether supply is identifiable at the time of issue of voucher or supply is not identifiable at the time of issue of voucher. If supply is identifiable at the time of issue of voucher, date of issue of voucher will be taken as time of supply. If it is not identifiable, date of redemption of voucher. And in residual cases, what, sir? In residual cases also, are you a person liable to file return? Yes, sir. Then the due date of filing return will be time of supply. And in all other cases, it will be, in all other cases, what will be the time of supply, sir? In all other cases, the date when you are filing your return. The date of making the payment of taxes will be taken as time of supply. Section 13 subsection 6, interest, penalty, late fee for delayed payment of consideration. The time of supply will be the date of receipt of such amount. We have one more section called as what, sir? Section number 14. We have one more section called as section number 14. What is this section number 14 telling, sir? Section 14 talks about time of supply in case of change in rate of tax. Whenever there is a change in rate of tax, just a second. Whenever there is a change in time of supply, whenever there is a change in rate of tax. Time of supply whenever there is a change in rate of tax. Sir, what is this time of supply whenever there is a change in rate of tax? Now, sometimes what may happen is tax rate will be changed. For some products, government does not have any work to do, so government will do some work. What type of work, sir? Change the rate of tax. So in case of change in rate of tax, section 14 will be applicable. Whenever there is a change in rate of tax, what will be applied, sir? Section 14 will be applied. Section 14 says what, sir? Time of supply in case of change in rate of tax. Now what you are supposed to check? You should check whether the supply was made before the change in rate of tax or the supply was made after the change in rate of tax. When did you supply the goods or services? Whether you supplied the goods before the change in rate of tax or you supplied the goods or services after the change in rate of tax. Now please note over here, I am using different words. SIP. What is this S, sir? S means date when the supply was made. P means the date when the payment was received. And I means date of invoice. Okay. Now this point over here, if you see, this is the date when the rate of tax got changed. Okay, this is the date when rate of tax got changed. I'll explain you in a very simple format and you will be able to answer also and frame the provision by yourself. Now what you are supposed to check? Whenever there is a question on change in rate of tax, okay, whenever there is a question, always draw a timeline and see what is the date when the rate of tax got changed. You identified that date. Then see when is the supply made, whether the supply is made before change or the supply is made after change. Now if you see, first example we are taking supply made before change. So if you see over here, everywhere S, that is the date of supply, is before change only. Everywhere S is what, sir? Before the change in rate of tax, the supply has been made. correct? So if the supply is made before the change in rate of tax, then the time of supply will be, if the supply is made before the change in rate of tax, then the time of supply will be that date of, if the supply is made before the change in rate of tax. Case number one. What is case number one? The supply is made before the change in rate of tax. Invoice is also issued before the change in rate of tax. Supply is made before the change in rate of tax. Invoice also issued before the change in rate of tax. Payment is received after change. Time of supply will be date of issue of invoice. Alright, supply is before change. Invoice is also before change. Payment is after change. Time of supply is date of invoice. Sir, what if supply is before change? Payment is also before change, but invoice is after change. Then the date of payment will be taken as time of supply. Sir, what if all the three are before change only? Supply is also before change, payment is also before change, invoice is also before change. Then the time of supply will be date of invoice or date of payment, whichever is earlier. Sir, what if supply is before change, but invoice and payment is after change? Time of supply will be date of invoice or date of payment, whichever is earlier. Similarly, if the supply is made after change, now see over here, everywhere supply is after the change in rate of tax, correct? Everywhere the supply is after the change in rate of tax. If supply is made after change, then see invoice and payment. If the supply is made after change, payment is also after change, invoice is before change. Supply after change, invoice, payment is also after change, invoice is before change. Time of supply will be date of payment. Similarly, supply is after change, invoice is also after change, payment is before change. Time of supply will be date of invoice. Sir, what if all of them are after change? Date of time of supply will be date of invoice or date of payment, whichever is earlier. Sir, what if supply and payment and invoice is before change, but supply is after change? Time of supply will be date of invoice or date of payment, whichever is earlier. In simple words, please understand this carefully now. Whatever I am going to tell now, please understand that carefully. In simple words, the time of supply is what, sir? Whenever there is a change in rate of tax, in simple words I am telling this, whenever there is a change in rate of tax, in simple words, whenever there is a change in rate of tax, in simple words, whenever there is a change in rate of tax, the date on which supply was made will never become time of supply. The date on which supply was made will never become time of supply. See, in all the cases, is supply the time of supply, sir? See, date of supply has not become time of supply. Date of supply, we are not making it as time of supply. In all the cases, that S is never a time of supply. So whenever there is a change in rate of tax, date of supply will never become time of supply. Who will become, sir? Either invoice will become time of supply or payment will become time of supply. Who will become? See, here it is invoice, here it is payment, here it is invoice or payment, whichever is earlier, here it is invoice or payment, whichever is earlier, here it is payment, here it is invoice, here invoice or payment, whichever is earlier, invoice or payment, whichever is earlier, etc. Now, so whenever there is a change in rate of tax, point number one, the date of supply will never become time of supply. Then who will become? Either the date of invoice or the date of payment, whichever is earlier. Either the date of invoice or the date of payment, whichever is earlier, will become time of supply. Sir, but who is going to become, sir? Whoever is with supply. Whoever is with supply will become time of supply. See, in first case, who is with supply? Invoice is with supply. So time of supply is date of invoice. Second case, who is with supply? Payment, sir. Time of supply is date of payment. Here, who is with supply? Invoice, payment, sir. So time of supply is date of payment. Here, who is with supply? Invoice, sir. Then therefore time of supply is date of invoice. Now, sir, what if they both are together, or the invoice and payment are with supply, or if invoice and payment are not with supply? If all of them are together, if invoice, supply and payment is together, then date of invoice or date of payment, whichever is earlier. Sir, what if both of them are not with supply, sir? Then invoice or payment, whichever is earlier. Crux, date of supply will never become time of supply. Whoever is with supply will become time of supply. If all of them are together, or if invoice and payment are not with supply, then the time of supply will be date of invoice or date of payment, whichever is earlier. So this is the crux of section 14. This is the crux of section 14. Now, next section is section 15, which is value of supply. Let us take a short break, shorta sa break. After the break, we'll continue our discussion with other topics of GST law. Okay, let us take a chota sa break. You guys also just take a break and come back. Hello friends, welcome back. So let us continue our discussion. So we have discussed beautiful topics till now. We have discussed
supply under GST, the introduction part, then supply under GST, then we have discussed the charging section, then composition scheme, then time of supply section 12, 13 and 14. So the next section for our discussion is, the next topic for our discussion is section 15, which is value of supply. Section 15 talks about what's the value of supply, what is the value of supply which is made by you. Now I am making a supply to you. Now for the supply which is made by me to you, what is the value of that particular supply? We know that we have to pay the taxes. We know that we have to pay the taxes whenever we make a supply. Now the tax should be CGST, SGST or IGST. Charging section is telling about that. And on which date I should pay the taxes, just now we learned. Section 12 says we should pay the taxes. Section 12, 13 and 14 talks about time of supply. Section 12 says time of supply for goods. Section 13 says time of supply for services. Now, on what amount should I pay the taxes, sir? Sir, on what amount should I pay the taxes? If you want to know what an amount you are supposed to pay the taxes, you please come to the provisions of section 15. Section 15 is going to tell you what is the value of supply. What is section 15 telling? Section 15 says value of supply is transaction value. What is value of supply? Value of supply is transaction value. Sir, what do you mean by this transaction value? Sir, transaction value means the price which is actually paid or which is payable. The price which you have paid or which is payable. If you have made a credit sale, then the price will be payable on a future date. So what is value of supply? Value of supply is transaction value. Value of supply is transaction value. What is transaction value? Transaction value means the price which is actually paid or which is payable for supply of goods or services or both. So whatever price you are paying or which is payable for supply of goods or services or both is called as transaction value. Is called as transaction value. Where condition is there? Where the supplier and the recipient should not be related. The supplier and the recipient should not be related, and the price which you are paying should be the only consideration. The price which you are paying should be the only consideration, or it should be sole consideration. Sir, what is value of supply, sir? Value of supply is transaction value. Sir, what is transaction value, sir? Price actually paid or payable where supplier and recipient are not related, and the price which is paid is the only consideration. It is the sole consideration, meaning I am not receiving anything else from you. For example, Priya Sarees sold the goods to Karina Sarees worth rupees 1 lakh. I sold saree worth rupees 1 lakh to Karina Sarees. What is the transaction value over here, sir? How much Karina is going to pay me, sir? 1 lakh rupees. Is Karina related to me? Answer is no. Therefore, value of supply is what, sir? 1 lakh rupees. Then Priya Sarees sold the goods to Katrina Sarees for 90,000 rupees. What is the value of the transaction? There is a transaction between Priya Sarees and Katrina. What is the value of the transaction? 90,000 rupees. Therefore, value of supply is transaction value. Priya Sarees sold the same saree to Anushka. Priya Sarees sold the same sarees to Anushka, and I charge only 40,000 rupees. Anushka told me that, Dilip, I'll give you 40,000 rupees plus a bat which is signed by Virat Kohli. Now in this case, the price which she is paying, no, the price which she is paying, which is 40,000, it is not the only consideration. I am receiving consideration in some other format also. Which is that, sir? Which is that BAT. That consideration which I am receiving in other forms is BAT. So what is the condition telling? The price should be sole consideration. I will take transaction value as value of supply. In this case, there is a transaction between Dilip and Anushka. The value of the transaction is 40,000 rupees. I will take this transaction value as value of supply if the price is sole consideration, price is only consideration. Then Priya Sarees made the supply to Priya. Say Priya is my related person. Priya is my related person. I made the supply of saree to Priya. In this case, can I take that there is a transaction value of 11 lakh rupees? Can I take this transaction value as value of supply? Answer is no. Why, sir? Because we both are related person. Because we are related person, therefore you cannot take transaction value as value of supply. Section 15 subsection 1, value of supply is transaction value. Transaction value means the price which is actually paid or payable where supplier and recipient are not related, and the price which you are paying is the only consideration. Sir. Oh, sir. There is a supply made by Priya Sarees Jaipur to Karina Sarees Mumbai, sir. The value of that supply is 1 lakh rupees, sir. Okay. Sir, this 1 lakh rupees is called as transaction value. No, sir. Yes. This 1 lakh rupees is called as transaction value. Sir, many times what will happen, sir? Because the supply is made from Rajasthan to Maharashtra, because it is made from Jaipur to Mumbai, sir, there may be transportation cost also which may be incurred. There may be packing cost also which may be incurred. There may be insurance cost also which may be incurred. Sir, totally for this sarees which is purchased by Karina may have to pay how much, sir? 1,20,000 rupees. So the transaction value, the value of sarees is only 1 lakh, but she may have to pay 1,20,000. Why she may have to pay 1,20,000? She may have to pay 1,20,000 because of this reason. Because of which reason, sir? Because there are extra additional cost also which have been incurred for making the supply.
Sir, my question to you is whether this additional extra cost which is made for incurring, which is incurred for making this supply, will it be added to value of supply? Answer is yes. Sir, who says this, sir? This is told by section 15 subsection 2. Who says this? Section 15 subsection 2. What is section 15 subsection 2? Section 15 subsection 2 talks about inclusions in value of supply. Section 15 subsection 2 talks about what, sir? Inclusions in value of supply. What are the different things which are required to be included in value of supply? What are the different things which are required to be included in value of supply? Inclusions in value of supply. All taxes except the taxes under GST law if charged separately. You'll have to include all the different types of taxes except the taxes under GST law, except CGST, SGST, IGST, UTGST, and GST compensations. As if there is any other type of tax which is charged or collected for supplying these goods or services, then you'll have to add that. For example, for tobacco and tobacco products, you also charge excise duty. For example, sometimes the product which you are selling, the municipal authority may take some municipal taxes on that particular product, or they may take some pollution control tax from you. Now, all these different types of taxes which you are paying should be added while computing value of supply. So, to the transaction value, add the taxes. Add the taxes also. Then add what, sir? Any payment made by the recipient which the supplier had to incur. Any payment made by the recipient which the supplier had to incur. Sir, what do you mean by this? Any payment made by the recipient which supplier had to incur. Any payment, I'll check, made by the recipient. Any payment made by the recipient which the supplier had to incur. Meaning what, sir? There was an expenses. I am the supplier, you are the recipient. There was an expenses which was supposed to be incurred by me, but you have incurred on this behalf. For example, I supplied you, I am Reliance Digital. For example, I am Reliance Digital. I am supplying you AC. Now, AC is supplied. AC is useful only when it is installed at some location. Correct? AC will be useful only when it is installed. Now, I have given you the AC. I have supplied you the AC. I have given you the AC. I have sold you the AC installation charges. I am telling you only bear. I am supposed to bear that installation charges, but you are bearing that installation charges. So there is an expenses which was supposed to be incurred by the supplier, which recipient is incurring. Please add this in value of supply. Please add this in value of supply. Then we have our incidental expenses. Then we have what, sir? All the kind of incidental expenses. Incidental expenses for anything done by the supplier for making the supply. Whatever different types of incidental expenses are there for making this supply, whatever additional expenses I am incurring for making this supply will be added to value of supply. For example, what's this transportation charge, or this is an incidental expenses, or this packing cost, this is an incidental expenses, this insurance cost, these are all what, sir? Expenses incidental for making this particular supply of sarees worth rupees 1 lakh. So this incidental expenses also will be added to value of supply. Then what else should I add in value of supply, sir? Any interest, penalty, late fee for delayed payment of consideration. Sir, what are you telling? Repeat, sir. Any interest, penalty, late fee for delayed payment of consideration, sir? What do you mean by this? Any type of interest you are paying, any type of penalty or late fee you have to pay for delayed payment of consideration. You are not paying the consideration. You are not paying the money on time. The consideration is not paid on time. The consideration is not paid on time. There is a delay in payment of consideration. Because there is a delay in payment of consideration, you may have to pay some interest. You may have to pay some penalty, etc. This interest, penalty also should be added in value of supply. For example, Priya Sarees sold the goods to Karina Sarees. The value of the sale value was 1 lakh rupees. I told Karina, please make the payment to me within 30 days. Karina, please make the payment to me within 30 days. If you don't make me the payment within 30 days, Karina, I am going to charge rupees 10,000 rupees as penalty. I am going to charge 10,000 rupees as penalty. Now, this 10,000 rupees will be added in value of supply if she does not make the payment to me within 30 days. So, Karina Sarees paid within 30 days. So value of supply will be 1 lakh. She pays after 30 days. Value of supply will be 1 lakh 10,000 rupees. Now, sir, now what if she pays only say 8,000 rupees? How much will I add? Obviously, whatever you have received, that amount only will be added. Interest, penalty, late fee for delayed payment of consideration will be added in value of supply. How much ever you have received, that amount will be added. Then any subsidy directly linked to the price, excluding the subsidy given by central government or state government. Now, many times what may happen is that you may get subsidy for making the supply. So whatever type of subsidy you are getting shall be added in value of supply. Whatever type of subsidy you are getting shall be added in value of supply if that subsidy is directly linked to the price. What do you mean by this word? If that subsidy is directly linked to the price. This means that if I am receiving any subsidy, because of that subsidy, my price is increasing or decreasing. there is a difference, or there is a chances that I collect lesser price from you. For example, I'm selling khadi sarees. Because I'm selling khadi sarees, each sarees is costing rupees 1000 rupees. Now, because I'm selling khadi sarees, Government of India likes it. It is like liking my work. So, Government of India says, Mr. Dilip, you are doing a good work, Mr. Dilip. You are doing a very good work, Mr. Dilip. I want to give some benefit to you. This khadi sarees which you are selling, no, I will give a subsidy to you. I will give a subsidy to you of 300 rupees. Now, so effectively, what became the cost of this sari? 700 rupees. What became the cost, sir? It became 700 rupees. Now, so this is directly linked to the price. Because I am receiving 300 rupees per sari, my price which I am charging per sari is reducing by 300 rupees. So this is called as subsidy directly linked to the price. This subsidy directly linked to the price should be added in value of supply. Please note, it should be directly linked to the price. It should be added in value of supply. However, if the subsidy is received from central government or state government, then it should not be added in value of supply. In the present case, I gave an example that I received 300 subsidy rupees from central government. This will not be added in value of supply. Sir, what if this subsidy of 300 rupees is received from some, say, NGO, say Mahatma Gandhi NGO? So if it is received from there, what will happen, sir? Then obviously, yes, it will be added in value of supply. Sir, oh sir, oh sir, oh sir, oh sir, I have a question, sir. What is your question? Sir, I have a question, sir. Yes, tell me what is your question. Sir, oh sir, I have a question. Please tell me what is your question. Sir, my question to you is there anything which are required to be excluded from value of supply? Sir, from the transaction value, I know what I should add. What are the inclusions? I know, sir. Is there anything which I should exclude from value of supply? Are there any points which I have to exclude from value of supply? Answer is yes. What am I supposed to exclude? The discount you are supposed to exclude. Discount given either before or at the time of making the supply or after making the supply. See, discounts can be of two types basically. Discount which is given before or at the time of making the supply. For example, you go to a mall, you see everywhere 40% off, flat 30% off, flat 25% off. So this is a discount which is known to you before the supply is made to you. Or at the cash counter when you go, no, he says that, sir, because you have purchased goods for value more than 5,000 rupees, you will get a flat 10% discount, sir. So this is a discount which is known at the time when the supply is made to you. At the time when the supply is made to you, the discount is given. At the time before making the supply, before purchasing the product, only before selling the goods to you, I tell you, sir, this is the discount which you are going to get. So this is discount which is known before making the supply or at the time of making the supply. If there is any discount which is before making the supply or at the time of making the supply, please exclude the discount from value of supply. Please exclude that discount from value of supply if it is shown separately on the invoice. Now, meaning what, sir? Say you have purchased goods worth rupees 30,000. I tell you flat 30%, 10,000 rupees you have purchased. I tell you flat 30% discount. Now, should this discount be excluded from value of supply? Answer is yes, sir. Why, sir? Why, sir? If this is a discount which is at the time or before supply, excluded from value of supply if it is shown separately. Now this discount is shown separately, so therefore you will exclude it from value of supply. The next type of discount which may be there is discount which is given after the supply has been made. Next type of discount which we may have is the discount which is given after the supply has been made. Sir, what if discount is given after the supply has been made? If the discount is given after making the supply, meaning I have sold the goods to you, and after selling the goods, I tell you, okay, you will get a discount. So if I sell you, if any discount is given after the supply has been made, then that can be excluded from value of supply if three conditions are satisfied. Condition number one, it should be agreed between the supplier and recipient. Meaning we should have an agreement. I should have told you that if you make the payment within 30 days, I will give you a discount. So it should be agreed. That kind of discount which is given after supply should be agreed between the supplier and recipient. That discount should be linked to specific invoice. It cannot be general discount. It should be linked to a specific invoice. Each and every invoice, assuming there are 10 invoices, it should be linked to one specific invoice. It cannot be for all the 10 invoices together I am giving a discount. And such discount, on the discount amount, whatever input tax credit is there, that should be reversed by the recipient. ITC on the discount amount should be reversed by the recipient. Sir, what do you mean by this? What do you mean by this, sir? ITC on the discount amount should be reversed by the recipient. Let us see that point question example. ITC should be reversed. Discount given after supply. Now, please note over here, discount given after supply. Priya Sarees sold the goods to Karina Sarees. Value is 1 lakh rupees. I told you will get a discount of 10% if you pay me within 30 days. Now, when I gave the invoice, assuming the GST rate for this supply is 18%, when I gave the invoice to Karina, I would have charged GST of 18,000 rupees. So total invoice value is 1,18,000 rupees. Now, based on invoice, you can take input tax credit. Based on invoice, how much input tax credit is getting showed in the invoice, sir? 18,000 rupees. But she made the payment to me in 20 days only. She made the payment to me in 20 days. Therefore, she paid me the payment of 90,000 rupees. That means what, sir? She is paying me 10,000 rupees less. When she is paying me 10,000 rupees less, lawmaker says 18% of this 90,000. 90,000 is what she has paid, meaning this is what is the amount on which she can take input tax rate. 18% is the GST rate, so it amount comes to 16,200. She can take input tax rate only of 16,200. Karina in this case can take input tax rate of how much, sir? 16,200 rupees only. Meaning the balance input tax credit which is there, how much, sir? 18,000 minus 16,200. 1,800. This ITC should be reversed by her. So on this 10,000 rupees discount which you have got, 18% of this, which is 1,800, should be reversed by Karina. So this discount should be reversed by Karina. It should be reversed by Karina. So I'll repeat: discounts, exclusions from value of supply, section 15, subsection 3. Sir, are there any exclusions from value of supply? Yes. What is required to be excluded from value of supply? Only one thing, which is called as discount. Discount can be given before or the time of making the supply, or discounts can be given after the supply has been made. If any discount is given before making the supply or the time of making the supply, please exclude it if it's shown separately on the invoice. If there is any discount given after the supply has been made, please exclude it if three conditions are satisfied. What are these three conditions? It should be agreed between supply and recipient, it should be linked to specific invoice, and that discount amount should be reversed. The ITC of the discount amount should be reversed by the recipient. It should be reversed by the recipient. Next, what do we have, sir? Next is section 15 subsection 4. Sir, what is this section 15 subsection 4 telling? Section 15 subsection 4 says, if you cannot determine the value of supply as per section 15, by applying the provisions of section 15, if you cannot determine the value of supply, please go to rules. Please go to rules for applying for determining value of supply. If value of supply cannot be determined as per section 15 subsection 1, then value of supply shall be determined as per rules, CGST of rules of valuation. Then section 15 subsection 5 says, government will specify you what is value of supply in some cases. In some cases, no, government only will tell you. Government only is going to tell you what is the value of supply. What is that case? You will see. Now there is one question I have solved over here. You can just go through it from the material. Now if you see, rules of valuation, rules for determining value of supply, section 27 to section 35 of CGST rules. Section 27 says what, sir? Now, rules of valuation. When will I apply rules? When I am not able to find value of supply as per section 15 subsection 1. Rule number 1 is what, sir? Rule number 1 is 27. Rule number 27. When is rule number 27 applicable? When consideration is not wholly in money. What is this rule telling? This rule is going to be applicable when the consideration, the amount which you are paying, when the consideration is not wholly, not completely in money. When the consideration is not wholly or not completely in money. When the consideration is not wholly in money, then value of supply shall be open market value. Sir, what if open market value is not there? Meaning, when the consideration which you are receiving it, if it is not wholly in money. You remember I sold a I sold a sari to Anushka. I sold a sari to Anushka worth rupees 1 lakh. Anushka paid me 40,000 rupees and she gave a bat which is signed by Virat Kohli. Now in this case, what is happening, sir? In this case, what is happening? In this case, the consideration which is there, the consideration is not wholly in money. I sold a sari worth rupees 1 lakh to Anushka. Anushka paid me 40,000 rupees. Anushka paid me, not visible. Anushka paid me 40,000 rupees. Anushka paid me 40,000 rupees and a bat which is signed by Virat Kohli. So in this case, what is happening, sir? The consideration which is there, it is not wholly in money. When the consideration is not wholly in money, what is the value of supply, sir? When the consideration is not wholly in money, value of supply will be open market value. What is that open market? What is the open market value of that sari which you are selling, Mr. Dilip? It is 1 lakh. Therefore, value of supply is 1 lakh rupees. Then, sir, what if open market value is not available, sir? What if open market value is not available? No issues. Take the money, because you have received money, take that 40,000 rupees money plus fair value of other consideration, and take the fair value of other consideration which you have received. What is the value of this
bat signed by Virat Kohli. What is the fair value of this bat signed by Virat Kohli? You take that. You take money 40,000 rupees plus fair value of that other consideration received by you. Then, sir, what if open market value is not there? Money plus fair value of other consideration is not there. In such case, what will I do, sir? If both A and B are not available, the value of supply will be value of like kind and quality. Check whether is there any other sari like this having the same quality. Check if there is any other sari like this having the same quality. Take the value of that like kind and quality. That value of like kind and quality will be taken as value of supply. Value of like kind and quality. Sir, what if all the above are not there, sir? What if open market value is not there, money plus fair value of other consideration is not there, value of like kind and quality is not there? What will I do, sir? Then apply rule number 30, take money and apply rule number 30 or 31 in that order. In that order means first apply rule number 30 and then apply rule number 31 for finding the value for other consideration. Sir, what is rule number 30 telling? Rule number 30 talks about cost based valuation. You guys are cost accountants. Correct, you guys are cost accountant. You already know how to determine cost of a product. You have something called as cost accounting standard 4. You have cost accounting standard 4. Now this cost accounting standard 4 tells you how to determine the value, how to determine the cost of any product. They say you just apply that particular cost accounting standard 4 and determine the value. Cost based valuation, rule number 30 says what, sir? Rule number 30 says cost based valuation. If the value cannot be determined as per the above rule, then the value of supply shall be 110% of, you take whatever cost is there plus 10% of that. So nothing but 110% of cost of production or 110% of cost of acquisition or 110% of cost of provision of services will be taken as value of supply. Sir, what if I am not able to determine the value of supply as per section rule number 30 also, sir? Then go for rule number 31. Then go to rule number 31, which is the residual rule. What is rule number 31 telling? Where the value of goods, or services cannot be determined as per rule 27 to rule number 30, then determine the value of supply by applying the provisions of section 15 reasonably and consistently. What is this provision telling, sir? Rule number 31 says no problem. If you are not able to determine the value of supply as per this particular rules, then go to section 15, apply the provisions of section 15 reasonably and consistently. Try selling this product to someone, see how much money they are paying. Apply the provisions of section 15 reasonably and consistently to find the value of supply. So I'll repeat, rule number 27, on consideration is not wholly in money, value of supply is open market value. If open market value is not there, money plus fair value of other consideration, if that is also not there, value of like kind and quality. If value of like kind and quality is also not there, money plus rule 30, 31 in that order. Then rule number 28 talks about what, sir? Whenever you make a supply to your distinct person or whenever you make a supply to your related person. You remember I sold a sari to my wife. I sold a sari to my wife worth rupees 1 lakh. Worth rupees 1 lakh. In this case, what is the value of supply, sir? In this case, value of supply will be open market value. Open market value, value of supply will be what, sir? Open market value. If open market value is not there, value of like kind and quality. If value of like kind and quality is also not there, apply rule number 30 and 31 in that order. Apply rule number 30 and 31 in that order. Take open market value, take value of like kind and quality, and take and lastly take what, sir? Apply rule number 30 and 31 in that order to find value of supply. Now please note, there is a proviso for rule number 28. Fantastic. There is a proviso for rule number 28. What is rule number 28 telling? Rule number 28 says, if you are selling goods, so proviso number 1 is applicable for goods, where goods are provided that where goods are intended for further supply as such. Where the goods are intended for further supply as such, then the value shall at the option of supplier be an amount equivalent to 90% of the price charged by the recipient from his customer. If you are supplying the goods as such without making any changes, then the value of supply shall be equal to 90% of the amount charged by the recipient from his customer. Say for example, I gave the goods to you, meaning assuming you are my related person, I gave the goods to you. Now I would have charged 100 rupees, 500 rupees, irrespective of what I have charged. Ignore all the prices. So I have given the goods to you. Now these goods are sold by you, further supplied by you to someone else who is not a related person. These goods are further sold by you to a person who is not a related person. Now how much are you charging from him? You are charging 10,000 rupees. Then for me, I should take value of supply as 90% of, I have an option to take value of supply as what, sir? 90% of amount charged by the recipient. You are the recipient from your customer. So where the goods are supplied as such, so whatever I gave you the sari, same sari ditto without making any changes, you have given it to the next person. Where the goods are supplied as such by a recipient, then the value of supply shall be, for me, the value of supply shall be the amount charged by the recipient from his customer into 90%. There is one more proviso. Which says that open market value shall be taken as invoice value. Whatever value I have given in the invoice, assuming the value of the sari was 10,000 rupees, I have shown in the invoice only 1,000 rupees. I have given an invoice to you only for 500 rupees or 1,000 rupees. In that case, they say this amount, invoice value, will only be taken as open market value. When? In which situation will I take invoice value as open market value? In this situation, provided that where the recipient is eligible for full input tax credit. If you being a recipient, you are eligible for full input tax credit, then the value declared on the invoice shall deem to be the open market value for goods and services. Whatever value I have declared in the invoice, that value will be taken as open market value. Rule number 39. Rule number 39 is applicable when I make a supply through an agent. You remember in our first supply topic, there was a schedule called as schedule number 1. There was a para called as para number 3. That is point number 3. Supply of goods by principal to his agent or vice versa, wherein the agent is undertaking to further supply that goods on behalf of principal in his own name. So for those transactions, what will be the value of supply? Sir, value of supply will be open market value, or 90% of the amount charged by you from your recipient. It will be open market value, or at the option of supplier, 90% of the price charged by the recipient from his customer who is not a related person. If you are not able to determine value as per this rule, then apply rule number 30 and 31 in that order. Rule number 30 is cost-based valuation and rule number 31 is residual rule. Then rule number 31A. Rule number 31A is applicable for finding the value of supply for what, sir? For finding the value of supply for lottery, betting and gambling. It is applicable to determine the value of supply in case of lottery, betting and gambling. In case of lottery, betting and gambling, what is the value of supply, sir? In case of lottery, betting and gambling, what is the value of supply? For lottery, it does not matter whether it is a lottery, run by state government. So there is an amendment over here. It does not matter whether there is a lottery run by state government or there is a lottery issued by state government. Value of supply will be equal to the issue price of that lottery. That is nothing but the face value, the lottery ticket value, the issue price or face value into 100 divided by 128 into 100 divided by 128. Now please note, for lotteries, the GST rate is 128. Now whatever price at which you have purchased that lottery ticket, assuming you have purchased the lottery ticket at 100 rupees. So take 100 rupees, multiply it by 100 divided by 128 divided by 128. In simple words, this amount which you have paid is inclusive of GST. Remove the GST part, whatever amount you get will be the value of lottery ticket. Also, you take face value of lottery tickets into 100 divided by 100 at 128. Multiply this by number of lottery tickets issued by you, number of lottery tickets, or you can take prize money into 100 divided by 128. Whatever prize money is there into 100 divided by 128 can be taken as value of supply. In case of betting and gambling, sir, betting, gambling, online gaming, etc., whatever amount you have paid to the totalister, whatever bet you have put, no, basically that is your value of supply. Entire value will be taken as value of supply. Then next rule is rule number 32. Rule number 32 is for all the other items. Rule number 32 talks about what, sir? It is an optional rule. Rule number 32 by itself is an optional rule. Please note, rule number 32 says determination of value of supply in certain cases at the option of supplier, meaning whatever you are going to see over here is not compulsory, it is just option. Rule number 32 sub rule 2. Sir, what is this rule number 32 sub rule 2? Rule number 32 sub rule 2 is applicable to a foreign exchange dealer or money changer. A foreign exchange dealer or money changer has two options. Option number 1 is currency, it is currency based, and option number 2 is slab based.
Currency based. Option number 1. Currency exchange involves Indian rupees. The amount which you are exchanging, does it involve Indian rupees? Yes, sir. RBI rate is available or RBI rate is not available. Meaning the currency which I am exchanging involves Indian rupees means what, sir? Say I give you dollars, you give me rupees. Or I give you rupees, you give me euros. So currency which I am exchanging one leg involves Indian rupees. So I give you dollar, you give me rupees. So I am receiving rupees, or I give you rupees, you give me euros. So I am giving you rupees. So one transaction, one side Indian rupees is involved. Now check whether for that currency RBI rate has been specified or not. If RBI rate is specified, then take RBI rate and your exchange rate. Whatever difference is there, basically you should take mod value, meaning you should take positive difference between the exchange rate as well as RBI rate and multiply it by number of units exchanged by you. For example, $1 is equal to 75 rupees, and for exchanging this they have charged me 74.5 rupees. RBI has given rate of 75, they have charged from me 74.5. I have exchanged $1,000. So what will be value, sir? 75 minus 74.5 into $1,000, which is equal to 500 rupees. It is equal to what, sir? 500 rupees. Next, sir, what if RBI rate is not available? What if RBI rate is not there, sir? If RBI rate is not available, value of supply will be 1% of rupee value of currency exchange. Take the rupee value of currency exchange, meaning I gave you dollars, I gave you $1,000. How much did you give me? You gave me 75,000 rupees. So this is rupee value of currency exchange. Take 1% of this, which is nothing but 750 rupees will be taken as value of supply. Sir, what if the currency which I am exchanging does not involve Indian rupees at all? What do you mean by this? Say I gave you dollar, you give me euros. In that case, take rupee value of currency bought, rupee value of currency sold. Take rupee value of currency bought and take rupee value of currency sold. Compare both of them. Compare both of them. Take whichever is less. Take whichever is less. That whichever is less into 1% will be value of supply. So if the currency exchange does not involve Indian rupees, sir, if the currency which you are exchanging does not involve Indian rupees, then the value of supply will be rupee value of currency bought or rupee value of currency sold in whichever is less into 1%. Option number 2. Option number 2 is slab based, meaning they have given this slab. Say if you exchange this much, this is the rate. If you exchange this much, this is the rate. So if you exchange currency, gross currency exchanged by you is up to 1 lakh rupees, then the value of supply will be 1% of gross currency exchange or rupees 250, whichever is higher. 1% of the gross currency exchange by you or rupees 250, whichever is higher. If you are exchanging from 1 lakhs to 10 lakhs, then it is 1000 rupees. 1000 rupees because 1% of 1 lakh is 1000. 1000 rupees plus 0.5% of gross currency exchange for balance amount above 1 lakh. If you are exchanging more than 10 lakh rupees, then 5500, because for 10 lakhs it will come as 5500. So for 10 lakhs you would have found in first slab. So 5500 plus 0.1% of gross currency exchange or rupees 60,000, whichever is less, or rupees 60,000, whichever is less. In short, minimum you are supposed to pay 250 rupees, maximum it can be 60,000 rupees. Now, sir, what if I am an air travel agent? If you are an air travel agent, then it depends on your booking, whether it is a domestic booking or international booking. Now, you should, if it is a domestic booking, the value of supply will be 5% of base fare, and if it is an international booking, the value of supply will be 10% of base fare. Please note, if the air ticket price is 5,000 rupees, there will be breakup of this air ticket price. What is this breakup, sir? It may have base fare, it may have, fuel charges, aviation turbine fuel charges, or airport development fees, etc., or taxes and surcharge, etc. You should take only base fare. Base fare into 5% or base fare into 10% will be taken as value of supply. Then, if you are into life insurance business, now life insurance business policies are basically divided into 3 policies: investment policy, single premium policy, and risk policy. For risk policy, whatever amount of premium you have paid, that entire amount is value of supply. Value of supply is gross premium charged by that person or the gross premium which is paid by you. If it is single premium policy, what will happen, sir? The premium will be paid only once. So since the premium is paid only once, that single premium which is charged into 10% will be taken as value of supply. Value of supply will be what, sir? The premium which you are paying, whatever single premium you are paying, into 10%. If it is an investment policy, sir, what is this investment policy, sir? In case of risk policy, what happens? If that the policy holder dies, only then the nominee will get the money. If the policy holder is alive during the tenure, then no one will get the money. Investment policy, the money which you are giving to the
insurance company, they are going to invest this money. So you are going to get some returns for this. So if the amount allocated towards investment is intimated, then the value of supply is gross premium charge minus amount invested. Whatever premium you are giving minus how much of that premium is invested, that you subtract. Whatever difference is there, that only will be taxable. Sir, what if the amount allocated towards investment is not intimated? The insurance company is not telling me out of the total premium which is paid by me, how much they are going to invest. In such case, value of supply for first year it will be 20%, 25% of gross premium charge, and for subsequent years it will be 12.5% of gross premium charge. Then, so first year 25%, and from next year onwards it is 12.5%. Then rule number 32 sub rule. Rule number what, sir? Rule number 32 sub rule 2. Rule number 32 sub rule 2 is applicable for second hand goods. Now you can either be a dealer of second hand goods, or you can be in the business of repossession of second hand goods. Dealer of second hand goods means I am buying and selling second hand goods. Value of supply is very simple, selling price minus purchase price. Whether you are a dealer or repossession, value of supply is same, selling price minus purchase price, meaning the price at which you have sold that second hand goods. Say for example this phone, I am a dealer of second hand mobile phones. I got this mobile for 5,000 rupees, I am selling it for 7,000 rupees. So difference 7,000 minus 5,000 is my value of supply. I am into repossession of second hand goods. I have taken this mobile phone on loan. Okay, so bank has given loan to me. I don't repay the EMI. I don't pay the EMI, bank is going to take this mobile phone from me. Now bank is repossessing the second hand goods. In that case also, value of supply is selling price minus purchase price. Only thing is the purchase price is required to be calculated by you. What is purchase price over here? The purchase price is the actual purchase price of the goods reduced by 5% per quarter or part thereof from the date of purchase till the date of sale. Meaning the purchase price will be the actual purchase price. Take the actual purchase price of mobile phone. The actual purchase price of this mobile phone is say 15,000 rupees. Reduce 5% every quarter or part thereof. Meaning give depreciation basically. What is the depreciation rate? 5%. 5% per quarter. Even if it is a part of quarter, treat it as full quarter and give 5% depreciation. And whatever amount you are getting, that amount will be taken as purchase price. So from that selling price, reduce that purchase price. Now please note, to follow this rule, there are two conditions which you have to follow: that you should not take input tax credit, and you should supply the goods as such without making any changes. So I should not take input tax credit when I purchase this mobile from someone. I should not take input tax credit. Then I am a dealer. Okay, I should not take input tax credit. Then I should supply this mobile phone as it is without making any changes. Now, in case of vouchers, what is the value of supply, sir? Rule number 32 sub rule 6 talks about value of supply in case of token, vouchers, coupon, etc. So what is the value of that voucher, sir? 200 rupee voucher is there, meaning I can purchase goods for rupees 200. So nothing but, so value of supply is money value of goods or services which can be purchased by you or procured by you by use of that voucher. Rule number 32 sub rule 7 says, you remember, in case of value of taxable services, in case of notified service providers between distinct person will where ITC is taken shall be taken as nil. Sir, what is this point telling, sir? This point is normally applicable for your final level, but still I'll tell you this point. Where it's rule number 32 sub rule 7. If I make a supply to my distinct person, what is the value selling? Value of taxable services only. This is applicable only for services provided by notified service providers between distinct persons where ITC is taken shall be nil. So if I give you some services and you are related to me, then for these services, I can take the value of supply as 0 if you are eligible for full input tax rate. If you are eligible to take input tax rate, I can take the value as 0 only. This Kerala flood cess is not applicable anymore. Then rule number 33 talks about pure agent services. Sir, what is this pure agent, sir? Rule number 33 talks about what, sir? Pure agent. Supply of value of supply for services in case of pure agent. Sir, what is this pure agent, sir? Say for example, my bike tire got punctured. So I went to the puncture repair fellow. That repair fellow, his main job is to repair that puncture. His main job is to repair that puncture. Now this fellow while repairing that puncture, he saw that the tube inside is also damaged. So he told me, sir, you do one thing. No, sir, because the tube is completely damaged, why don't you take a new tube? I said, sir, I am at the office now. I will not be able to get you the new tube. You do one thing. You only purchase the tube. And you put. I will give you the money. Now please note, this tire puncher fellow, while giving his services to me, what is that services? Repairing that punctured tire. While giving his services to me, he has purchased some goods on my behalf. He has purchased some goods for me. This is called as services given by that puncher fellow as a pure agent. He is acting as a pure agent, wherein he is purchasing some goods while providing his services. He is purchasing some goods while providing his services. This goods which is purchased by him is not going to use it for his own purpose. He is going to use it for my purpose, and he has taken permission from me. Now in this case, value of supply. Normally value of supply will include all the incidental expenses. Now should this tube value be included in the repair charges, sir? Answer is no. Answer is no, because this is the services given by that puncher fellow as a pure agent. Expenditure incurred by the supplier as a pure agent of the recipient shall be excluded from value of supply if following conditions are satisfied. Supplier acts as pure agent while making the payment to third party. Payment made by pure agents are separately indicated in the invoice, and the supplies procured by the pure agents are in addition to the services which are provided by him on his own account. So if these three conditions are satisfied, then that will not be added in value of supply. Then rule number 34. Rule number 34, sir, what is the exchange rate which I have to take? Basically, this is applicable for final level, and in some cases it is applicable for goods which is under customs law. Exchange rate, what is the exchange rate I should take, sir, if I am selling goods outside India, purchasing goods from outside India, selling services outside India, purchasing services from outside India? For goods, you should take exchange rate as per CBIC, whatever the board, Central Board of Indirect Taxes and Customs is going to notify, that exchange rate you should take. And for services, whatever accepted rate is there, generally accepted accounting principle, which is nothing but whatever agreed rate is there between supplier and recipient, that will be taken as exchange rate for converting that value into Indian rupees. Then if the amount is inclusive of GST, what is the formula they have given over here to find the tax rate? Now say for example, I say 1,18,000 rupees is including GST at 18%. So how will I find the tax amount? Take the amount given into, take the tax rate, divide it by 100 plus tax rate. It will give you 18,000 rupees. So this is your value. This is the tax amount. Okay. I think there is some misconnection. Just a second, students. So this is all about this chapter also. This is all about this chapter, which is this chapter which we completed just now. This is all about this topic called as value of supply. So the next topic for our discussion will be what, sir? Place of supply. Fantastic chapter. So our value of supply is done. Just a second, students. Okay. Next topic for our discussion, fantastic topic, very easy topic. What is the name of the topic, sir? Place of supply. Nice topic, fantastic topic, easy topic. Now, what is this place of supply topic all about, sir? Place of supply, if you see this from your material, if you see your institute material, no, they have given very general discussion on place of supply, very general discussion, and it is a very easy topic also. Basically, this topic main discussion will happen in your final level. So as of now, they have done just general discussion. I mean, whatever I'm going to discuss now, they have done discussion in your material even below that
level, but the discussion which I'm going to do is very important, because if you see your institute material, no, you will not understand what they are trying to say, because they have not written the complete provisions. So I'll explain the provisions to you. We'll revise the provisions beautifully. You just understand this, and whatever we are going to discuss now, if you understand so much, that is also more than sufficient for this topic. Place of supply. What is the name of this topic, sir? The name of this topic is place of supply. Fantastic topic it is. Now, please note, there is something called as intrastate supply and there is something called as interstate supply. There is something called as what, sir? Intrastate supply, and there is something called as interstate supply. For intrastate supply, I should pay CGST, SGST, and for interstate supply, I should pay IGST. Now, how will I determine whether a transaction is an intrastate supply or interstate supply? How will I determine whether a transaction is an intrastate supply or interstate supply? Now, to check whether a transaction is an interstate supply or intrastate supply, I should see the location of supplier and place of supply. If the location of supplier and place of supply is in two different states, if the location of supplier and place of supply is in two different union territory, or if the location of supplier and place of supply is in one state and one union territory, then the transaction will be called as interstate supply. If it is a case of import of goods or services, or export of goods or services, or a supply made to an SEZ unit or SEZ developer, then it will be called as what, sir? Interstate supply. Now, what do you mean by this word place of supply? See, basically, if you want to know whether a transaction is interstate supply or intrastate supply, you should be knowing location of supplier and place of supply. Location of supplier, very simple. Location of supplier means wherever the supplier is located. Normally, if he is a registered person, the location where he has taken registration. If he is not a registered person, the place where he is doing business from. So that will be location of supplier. Sir, what is this location of place of supply? The place where the supply has been made. Place of supply means what, sir? The place where the supply is consumed. The place where the supply is consumed. Now, which place the supply is consumed, if you want to know, you will have to see this chapter called as place of supply. So the importance of this chapter, I hope you know. To determine whether a transaction is an interstate supply or intrastate supply, you should compulsorily be knowing what is the place of supply. So if you want to know what is the place of supply, you should compulsorily learn this chapter. Intrastate supply, section 8. Intrastate supply, location of supplier and place of supply is in same state or same union territory, then I will call that supply as an intrastate supply. Intrastate supply means supply within same state or same union territory. So now, to determine whether a transaction, say Priya Sarees Bangalore is supplying goods to Anushka Sarees Mysore. Now both are in Karnataka, it is intra. If it is from Bangalore to Mumbai, then it is inter. We know that. But how do I determine this place of supply, sir? We will understand over here. If I ask you a question, please understand this carefully. If I ask you a question, Priya Sarees Bangalore received an order from Karina Sarees Mumbai. I received an order from Karina Sarees Mumbai to supply 100 Mysore silk saree to Anushka. So what did I do? I supplied 100 Mysore silk saree to Anushka. Now please note, Anushka is not my customer. My customer is Karina Sarees, so I gave the invoice to Karina. I gave an invoice of 1 lakh rupees to Karina, and the amount was transferred, and the amount was given to whom, sir? The goods were given to Anushka. The goods were sent to Mysore, and the invoice was given to Karina. Karina is going to pay me the money, and obviously Karina is going to raise an invoice for Anushka. Now, if you see from my angle, what is the nature of this supply? Whether it is an intrastate supply or interstate supply. Because I am giving a bill to Karina. I am giving a bill to Karina and I am shipping the goods to Anushka. I am giving a bill to Karina, shipping the goods to Anushka. So what is the nature of this supply, sir? Whether this supply is an intrastate supply or interstate supply, what is the nature of this supply? Whether it is an intrastate supply or an interstate supply. Priya Sarees Bangalore is giving an invoice to Karina Sarees Mumbai, but supplying the goods to Anushka Sarees Mysore. What is it? Intrastate supply or interstate supply? Sir, for that you should see location of supplier and place of supply, sir. Sir, the supplier is located in Bangalore, sir. The supplier is located in Bangalore. What is the place of supply? We don't know this. Sir, it is Mysore, no, sir. Why Mysore? Sir, because goods are consumed in Mysore, no, sir. We cannot say that. See, the person who is paying the amount to me is in Mumbai, but the goods are supplied in Mysore. So will I take Mysore or Mumbai, sir? Will I take Mysore or Mumbai? To understand this only, this chapter is important. Say for example, you are in an aeroplane. You are in an aeroplane, you are traveling in an aeroplane, you are traveling in an aeroplane. Now, when the flight is somewhere in the air, no, when the flight is somewhere in the air, you are ordering some food over there. You are taking some services from there, you are taking some goods from them. What will be the value of supply in this case? Are you are somewhere in the air, will you take out your head and see, okay, which state I am? No, 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 you cannot do that. I hope you are understanding. So what is the place of supply in this case? For determining that, this chapter is important. This chapter is important to determine the place of supply. Now we saw the meaning of intrastate supply and interstate supply, and there is one more section called as section number 9. Section 9 talks about what, sir? When the supply is made in territorial waters. Now please note, when the supply is made in territorial waters means, for example, this is India, okay? So this is India, up to 12 nautic miles from India, that area which is there, no, up to 12 nautic miles from here, that is called as territorial waters. This is also considered as India, meaning what? If there is a ship over here and you are taking some services in the ship, if you are purchasing any goods in the ship, then also GST will be levied. Now, sir, okay, GST will be levied, but what will be the nature of supply? What will be the location of supply, or what will be the place of supply? Section 9 says, where there is a supply in territorial water, where the location of supplier is in territorial water, or where the place of supply is in territorial water, then in such cases the location of supplier and the place of supply shall be taken as the nearest coastal area. Now see which is the nearest coastal area to this ship, whether it is Goa, whether it is Mumbai, whether it is Karnataka, etc. See the nearest coastal area, that nearest coastal area will be taken as value of supply. Now please note, before we start our discussion on place of supply, that will be taken as place of supply, not value of supply. Now, before we start our discussion on value of supply, you should know that there are two types of transaction. One is called as B2B transaction, another one is called as B2C transaction. So what is this B2B and B2C transaction? B2B means business to business, B2C means business to customer. Meaning what, sir? B2B transaction means a registered person is selling the goods to another registered person, and B2C transaction means one registered person is selling the goods to an unregistered person. One registered person is selling the goods to whom, sir? An unregistered person. Now, location of supplier means if the supplier is registered, the place where he has taken registration. If he is not registered, if he is doing business from a fixed establishment, then that fixed establishment, that shop from where he is doing business, where the supplier has more than one fixed establishment, if you have more than one branches, then that branches where the supply is most directly concerned with. Meaning if I have 5 branches, then the branch from which I have made the supply to you. And in absence of all the above places, then your usual place of residence, your house. Location of recipient will be, if you are registered, the place where you have taken registration. If you have a fixed establishment, your fixed establishment. If you have more than one fixed establishment, then the location where the supply is more directly concerned with, and in the absence of above places, usual place of residences. Then we have section 10. Section 10. Now it's our discussion on place of supply starts. Section 10, 11, 12 and 13 are the different topics for place of supply. 10, 11 is to determine place of supply of goods. 12, 13 is to determine the place of supply for services. Section 10, place of supply of goods. Place of supply of goods, where location of supplier and location of recipient are in India. When will I apply provisions of section 10? I will apply the provisions of section 10 when the supplier as well as the recipient, they both are in India. I don't care where is the place of supply. If the supplier and recipient, they both are in India, then I will apply section 10. The supplier and recipient should be located in India. Section 10, where the supplier and recipient both are in India. Now there are different scenarios in this. There are different scenarios. We will see each of these scenarios one by one. Section 10 subsection 1 clause A. Section 10 subsection 1 clause A says what, sir? Section 10 subsection 1 clause A, supply involves movement in goods. The supply which I am making, it involves movement in goods. The supply which I am making, it involves movement in goods. In such cases, place of supply will be the location where the movement is terminating, the location where the movement is going to end. For example, Priya Sarees is making goods, supplying sarees to Karina Sarees. So now when I am supplying a saree, the saree is going to move from Bangalore to Mysore.
the sari is going to move from Bangalore to Mysore. Priya Sarees is supplying the goods to Anushka Sarees. Bangalore, the sarees is going to move from Bangalore to Mysore. The supplies which I'm making involves movement in goods. So in that case, what will be the place of supply? Location where the movement is terminating. Where is the movement ending? Movement is going to end at Mysore. Place of supply is Mysore. So location of supplier Bangalore. Place of supply is Mysore. Therefore, it is an intrastate supply. Therefore, it is what, sir? Intrastate supply. Sir, what if you are supplying it to Karina? If I am supplying it to Karina, tell me where is the movement going to terminate? Priya Sarees Bangalore is supplying to Karina Sarees Mumbai. The movement is going to terminate in Mumbai. Place of supply is Mumbai, Maharashtra. Okay. So, movement is going to end in Mumbai. Place of supply is Mumbai, Maharashtra. Then what, sir? Then. Section 10, subsection 1, clause B. Movement caused by third party. What if the movement is caused by third party? Now there is a movement happening. The goods are moving from one place to another place, but this movement is because of someone else. In this case, what will be the value of supply, sir? What will be the place of supply? Meaning what? You remember my example? Just some time back I gave an example. Karina told Priya to supply 100 Mysore silk sari to Anushka. Now the movement is going to end in Mysore, but who told me to move the goods to Mysore? A person sitting in Mumbai. So a person sitting in Mumbai is telling me to supply the goods to Mysore. The movement is going to terminate in Mysore. I will not apply section 10, subsection 1, clause A. Now, since the movement is caused by some third person, since the movement of the goods over here is caused by Karina Sarees, the location of this third person will be taken as value of supply. The location of Karina Sarees will be taken as value of supply. Section 10, subsection 1, clause B. Movement caused by third party. The principal place of business of such third party will be taken as place of supply. I'm sorry, again and again I'm using the word value of supply. Please ignore it is place of supply. Okay, just because we have discussed this topic now together. Now, so if the movement is caused by some third person, the place of supply will be the principal place of business of that third person. Section 10, subsection 1, clause C. Supply does not involve movement in goods. Sir, what if the supply which I am making, it does not involve movement in goods? Meaning what, sir? For example, I am giving you an entire classroom. You are sitting in a classroom. This entire classroom is sold by me without moving the chairs and desk. All this chair is there, desk is there, everything is here only. I have sold this entire classroom to someone else. So these chairs and desk are not, desk etc. These are not moving. Or case number 2. You physically come to Priya Sarees, you purchase the sari from me. Now from my angle, if you see, I have given the sari to you now. These sarees are not going to move anywhere from my side. You may take it to any place you want. I don't care. But from my side, if you see, these sarees are, there is no movement of these sarees. In this case, when the supply which you are making does not involve movement in goods, location of the goods at the time of delivery will be taken as place of supply. Where were this bench and desk located, etc.? Where were these chairs, benches, etc. located? It was located in Bangalore at the time when I delivered the chairs and bench to you. Location of goods at the time of delivery will be taken as value of supply. Classroom purchased with bench and chairs, etc. Machinery taken on rent, later purchased that machinery, etc. Now, section 10, subsection 1, clause D. Installation and assembly. Some goods will require installation and assembly. Say for example, windmill. This windmill which is there, this will be sent in parts. Part 1, part 2, part 3, etc. These parts will be assembled at one location. They will all be assembled or merged at one location. So what will be the value of supply in this case? In case of installation and assembly, the value of supply will be the place of installation or assembly. What will be the place of, not the value of supply is not there, it is place of supply. I'm using the word again, value of supply. I'm really very sorry. Alright, in case of installation and assembly, what is the place of supply, sir? The place of supply will be the location where installation is happening or the location where the assembly is happening. The location of installation or assembly. For example, this windmill which we just now saw. Wherever the installation or assembly is happening. Then, supply of goods on board a conveyance. When you are on board a conveyance, the goods are supplied to you. When I am in an aeroplane, when I am in a train, when I am traveling in a bus, at that time goods are supplied to me. Location where the goods were taken on board, that location will be taken as value of supply. That location will be taken as place of supply. Location of goods at the time when they are taken on board. Meaning what, sir? See, though I am eating, say the flight is going from
The flight is going from Bangalore to Hyderabad to Mumbai to Delhi. Okay, I am a person who boarded the flight in Bangalore and my destination is Delhi. So when the flight landed in Hyderabad, no, some goods were loaded in this flight. Some goods were loaded in the flight. When the flight was somewhere in between Mumbai and Delhi, I purchased some goods. For these goods, what will be the value of supply, sir? The value of supply, what will be the place of supply, sir? The place of supply will be the location where the goods are taken on board. Though I have boarded the flight in Mumbai, though I have boarded the flight in Bangalore, that will not be taken as place of supply for the goods which is purchased by me. For the goods which is purchased by me in this flight, the place of supply will be the location where goods were taken on board. Where did the goods get loaded in the flight? It got loaded in the flight in Hyderabad, where place of supply will be Hyderabad. The place of supply will be Hyderabad, irrespective of where I am consuming the goods or where I am purchasing the goods, where I have boarded the flight, etc. All those points will not be considered. They will all not be considered. Now, very important point. So these are 5 subsections. Section 10, subsection 1 clause A, B, C, D and E. Now there is a new section which is added over here. There is a new section which is added in this particular entry. There is a new section which has been added. What is this new section which has been added, sir? I'll just discuss. There is an amendment. There is a new section which is added over here. Now, place of supply, they have added a section called as what, sir? Section 10, subsection 1, clause CA. Section 10, subsection 1, clause CA. Now, the new section has been added. What is this new section telling? What will be the place of supply when the goods are supplied to an unregistered person? When the goods are supplied to an unregistered person. See, normally, what is the place of supply when there is a supply of goods to an unregistered person, made to a person other than registered person? What will be the place of supply? Okay. Now, for example, Priya Sarees may sell the goods. Priya Sarees may sell the goods to registered person or to unregistered person. Now, registered person, if I am selling because he is already registered, the place of supply will be the location where is registered. If the movement is happening, the location where movement is getting terminated. If movement is not happening, then whichever location is normally registered, that location will take as place of supply. But when a person is an unregistered person, for example, you come to Priya Sarees, you purchase a sari and you tell me that, sir, I am going to take this sari to Hyderabad. You tell me that, sir, I am going to take this sari to Chennai. You come and tell me that I am going to take this sari to Coimbatore. Now, in this case, I give the invoice to you in your name. Say, dear Mr. Gube, to Chennai. The address is to Chennai. Now, in this case, I should charge IGST. Though, as per section 10, subsection 1, clause C, the place of supply will be the location of the goods at the time of delivery. See, there is no movement happening. In this case, if you see from my angle, I have given the goods to you here only. There is no movement happening. But lawmakers are telling, no. If you are telling me that you are going to take this goods somewhere, if you are telling me that you are going to take this goods somewhere, and if I have given you the bill in the name of that particular address, then the place of supply will be that location where you are taking the goods. So what is this provision telling? Where supply of goods is made to a person other than registered person, the place of supply shall, notwithstanding to anything contained in section 10, subsection 1, clause A and clause C, be equal to the location as per the address said of the said person recorded in the invoice. What will be the place of supply, sir? Whatever address you have recorded in the invoice, that location will be taken as place of supply. And where the location of supplier is not available, sir, where the supplier has not told the address, sir, then the location of supplier will be taken if the address of the recipient is not recorded. In simple words, I'll write the provisions over here. I'll write the provision over here. Section 10, subsection 1, clause CA. Supply of goods to
unregistered person. Now what is this provision telling? This provision says unregistered person address is recorded in invoice, meaning his address is available and you have mentioned that address in the invoice, or unregistered person address is not recorded on the invoice. Unregistered person address is recorded on the invoice and it is not recorded on the invoice. Sir, if the unregistered person address is recorded on the invoice, place of supply is address as per invoice. Sir, what if it is not recorded? Then the place of supply will be, because I don't know his address, my location only will be taken as place of supply. Location of supplier will be taken as place of supply. So this is what the provision is telling. Now next section is section number 11. Section 11 talks about place of supply of goods where supplier or the recipient, any one among them, is outside India. See, 10 is applicable when both of them are in India, but 11 is applicable when any one among them, either the supplier or the recipient, any one among them is outside India. So there are only two possibilities. It can either be importation of goods or export of goods. If it is importation of goods, location of importer is place of supply, and if it is exportation of goods, place outside India is stated as place of supply. Any place outside India will be taken as place of supply. Then we have section 12, talks about place of supply of services where supplier as well as recipient both are in India. Next, let us see this. Section 12, subsection 1. The provision of section 12 will be applicable for determination of place of supply for services where supplier and recipient both are in India. Supplier and recipient, they both are in India. Section 12, subsection 2. Section 12, subsection 2 is the general rule. It is the normal rule. See, section 12 basically has totally 14 subsections. It has totally 14 subsections. Wherein section 12, subsection 3 to section 12, subsection 14, they all talk about some specific points. Section 12, subsection 2 is the general point, meaning normally for determining place of supply for services, you should see section 12, subsection 3 to 12, 14. Meaning, if something is covered under 12.3 to 12.14, please determine it as per that. If nothing is covered, if the services which you are going to discuss is not covered under this category 12.3 to 12.14, then for that determine the place of supply by using the provision of general rule, which is 12.2. Now what is the general rule telling? Very simple, very easy. What is the general rule telling? The general rule says check to whom the supply is made. Place of supply for services. The general rule says check to whom the supply is made. Is the supply made to a registered person or is the supply made to an unregistered person? If the supply is made to a registered person, the place of supply will be principal place of business of that registered person. Check to whom the supply is made. Is it made to a registered person or is it made to an unregistered person? If it is made to a registered person, principal place of business of that registered person. The location where he has taken registration, that location will be taken as place of supply. If the supply is made to an unregistered person, if I am making a supply to an unregistered person, check whether that unregistered person's address is available with you or unregistered person's address is not available with the supplier. If you have his address, place of supply will be that address which you have. Meaning, I will take examples. If you have his address, that address will be taken as place of supply. If you don't have the address, then the place of supply will be my location of supplier. For example, Dilip is a registered person. He's a chartered accountant. He's giving services to
one more registered person, which is Infosys, and that Infosys is registered in Bangalore. Place of supply will be Bangalore because I'm making a supply to a registered person. Location of that registered person will be taken as place of supply. Dilip is giving services to, say, Pavani, who is at some location. She is not registered in GST, but she is in some location called as Jigni. She is from some location called as Jigni. In this case, because I have the address, the place of supply will be that address which I have. Now you go, say some cases I may not have the address. Say I'm or say for example, you go to any mall, so they are giving you parking services. They are giving you parking services. In that mall, they are giving you parking services. That person, no, he'll give a parking ticket to you. At every person who comes, he's not going to ask, sir, are you from Chennai? Are you from Bangalore? Are you from Hyderabad? Are you from Jaipur? Are you from Mumbai? He's not going to ask you anything. He's directly going to give a challan to you. So because address, he's not going to ask each and every person from where you are. Accordingly, I'll charge IGST, CGST, no. In that cases, he is always going to assume that address is not available. Therefore, value, a place of supply will be what, sir? The location of the supplier. Wherever that supplier is located, that mall only will be taken as place of supply, and he'll always charge CGST and SGST. Then section 12 subsection 3. Section 12 subsection 3 to section 12 subsection 14 are specific rules. They are applicable only for them. They are not applicable for everyone. Section 12 subsection 3 is applicable to whom, sir? Services related to immovable property. Section 12 subsection 3 is applicable for immovable property. Now, if you are involved in renting of immovable property, or if you are involved in what, sir? Leasing of immovable property, construction of immovable property, or you are an interior decorator or interior designer, architect service you are giving services of renting of hotel rooms, boat houses, etc. Then in all such cases, they are all treated as services in relation to immovable property. Construction, renting, leasing, letting out, etc. They are all connected with, they are all treated as services in relation to immovable property. For all these services, the place of supply will be the place where immovable property is located or intended to be located. Whichever location that immovable property is located or intended to be located. I went to Taj Hotel Mumbai. Now this Taj Hotel Mumbai is located at Mumbai. It does not matter where I have taken registration. This is located at Mumbai. So place of supply for the services given by this Taj Hotel to me will always be what's Mumbai. So services where the then see, for immovable property, services directly in relation to immovable property, place of supply will be the place where immovable property is located or intended to be located. Provided that where supplier and recipient are located in India and the place of supply by applying the above provision is outside India. Now, what is the second point telling? There is a proviso. Normally, what will be the place of supply for immovable property? Location where the place where the immovable property is located or intended to be located. Now, if the supplier and recipient are located in India and the place of supply is coming as outside India, by applying the above provisions, if the place of supply is coming as outside India, in such cases, place of supply will be location of recipient. Sir, what do you mean by this? Sir, what do you mean by this? Say, for example, Dilip is from Bangalore and there is a builder called as Prestige Builder who is in Delhi. So, this supplier and recipient, they both are from India only. Now, there is Burj Khalifa in Dubai. Right next to Burj Khalifa, I have a small plot over there. So I have asked Prestige Builder to construct a mini Burj Khalifa for me. Okay. So in this case, by applying the above provision, what is place of supply coming as, sir? By applying the above provision, what is place of supply coming? What is place of supply normally for immovable property? Wherever the immovable property is located. Immovable property is located outside India, but supplier and recipient are in India. In such cases, they say place of supply should be location of recipient. Who is the receiver of services? His location will be taken as place of supply. Where the supply and recipient are located in India and place of supply by applying the above provisions is outside India, the place of supply will be location of recipient. Next, provided further that one more proviso is there, where immovable property is located in more than one state or union territory. What if the immovable property is located in more than one state or union territory? In such cases, value of supply shall the place of supply shall be taken proportionately. Place of supply shall be taken what's proportionately. For example, I go to Kerala. I stay in the boat house. This boat house, for 20 hours it is in Kerala and for 4 hours it is in Karnataka. In that case, what will be the value of supply, sir? In that case, value of supply will be whatever amount I have paid, no, that will be divided. Assuming I have paid 10,000 into 20 divided by 24 will be for Kerala. 10,000 into 24 divided by 24 will be for Karnataka. Meaning it should be apportioned. Then next service is section 12 subsection 4, performance based services. There are some services which are required to be performed. Rob PF house. Sir, there are some services which are required to be performed. Which are the services? Restaurant services, outdoor catering services, then personal grooming services, fitness services, beauty treatment services, and healthcare services. Restaurant, outdoor catering, personal grooming, fitness, beauty treatment, healthcare services. These are all personal in nature. So when I go to a restaurant, there will be some person who is preparing food for me. Then personal grooming, my haircut, I will have to go for a haircut. Now in such cases, what will be the place of supply, sir? The location where services are performed. What will be the place of supply? Location where services are performed. So I go to a salon for my haircut, place of supply salon. I call urban company to come I book a salon at home, so he comes at home. What is the place of supply, sir? My home will be taken as place of supply. Then section 12 subsection 5, training and performance appraisal service. Training and performance appraisal services. For example, my services, I am giving training in place of supply topic. I am giving training in this subject of GST. In this case, check to whom is the training given. The training is given to a registered person or unregistered person. If I am giving a training to a registered person, then the location of registered person will be taken as place of supply. Location of registered person will be taken as place of supply. Then what if the training is given to unregistered person? If the training is given to unregistered person, the place where it is performed will be taken as place of supply. What will be the place of supply? The place where I am performing this. Now you may be watching in your bathroom. You may be sitting in your bathroom watching it. You may be sitting on your bed, aram, you are sleeping and watching this particular video. What will be the place of supply? Is your place of supply your location? Answer is no. The place of supply will be the location where the services are performed. Then section 12 subsection 6. Section 12 subsection 6 is applicable for admission to an event or amusement park. Place of supply in case of admission to an event or amusement park. The place of supply will be location where the event is held or location where the park is situated. For example, I go to Wonderla. There is an amusement park over here. They will give a ticket to me, or there is a circus which is happening. I go over there. Admission to means what's up? Entry ticket. Whatever I pay for entry fees, no, for that what will be the place of supply wherever that Wonderla is located, wherever that amusement park is located, wherever that circus is happening. Admission to an event or amusement park. I am going to watch cricket. IPL season is happening, no? IPL is going on, therefore I go to watch IPL. Whichever place I am going and watching that IPL, that stadium, that location will be taken as place of supply. Section 12 subsection 7, organization of an event. Now this is with respect to conducting the event, organization of that event. Last case was entering that event, admission to that event. Organization means say someone, event management companies, etc. Organization of an event. Now the services are given to a registered person or unregistered person. If services are given to a registered person, location of registered person will be taken as place of supply. If services are given to unregistered person, the place of supply will be the location where event is held. Meaning what, sir? Say your marriage is happening and I am having an event management company. So in that case, I am organizing that event. I am organizing that particular event. What is the event, sir? Your marriage is the event. What will be the place of supply for this? The place of supply will be location of registered person if you are a registered person. Sir, I am not a registered person, sir. Okay, you are not a registered person. Location where the event is held. Where is your marriage happening? That location will be taken as place of supply. Now, there are two provisions which are exactly same as what we studied under immovable property, where supplier and recipient are located in India and the place of supply by applying the above provision is outside India, then the place of supply will be location of recipient. Meaning, if we both, supplier and recipient, we both are in India, but by applying the above provisions, the place of supply is coming as outside India. Your marriage is happening outside India, but we both are in India only, then in such cases, place of supply will be location of recipient, wherever you are located. Provided further that where the event is held at more than one location, your marriage is happening at 5-6 places. In such cases, it will be taken as each of that state proportionately. Proportionately, I will be taking each of the state. Then, section 12, subsection 8, transportation of goods services. In case of which, transportation of goods services. Now, Section 12 subsection 8, transportation of goods services, what will be the place of supply? Check whether the services are given to a registered person or the services are given to an unregistered person. If the services are given to a registered person, location of registered person will be taken as place of supply. If the services are given to an unregistered person, location where the goods are handed over for transportation. Meaning, Priya Sarees wants to send the goods to Mumbai to Karina Sarees. So I take services from VRL Transports, SRS Transports, etc. Some travel company, some bus travel agent. I'm taking the services. So he's giving the services to me. I am a registered person. Place of supply will be what, sir? Location of registered person. I am an unregistered person. For example, you go to Indian Post. If you go to India Post, you take speed post services from them. You book a speed post. In such cases, you are all unregistered person. So the location of the goods are location where the goods are handed over for transportation. Where did I hand over these goods for transportation purpose? At India Post. So that location will be taken as place of supply. Sir, what about passenger transportation service, sir? Now again, here also, if it is services are given to a registered person, location of registered person. However, if the services are given to an unregistered person, location where the passenger is embarking the conveyance for continuous journey. Location where the passenger is embarking the conveyance. Location where the passenger is getting into that bus for continuous journey. Now, for example, Priya Sarees, we take services from a company for transportation of our employees. We are going to a picnic. I take services from some SRS Travels. In that case, what will be the place of supply, sir? The place of supply will be location of registered person because I am a registered person. Or case number 2, you are all boarding buses every day. You are all boarding different types of conveyance every day. Say train, you are boarding, etc. In that cases, you are all unregistered person. So they are giving services to you. What will be the place of supply? The location where you are embarking the conveyance for continuous journey. Where have you boarded the train? Where have you boarded the bus? That location will be taken as place of supply. Now, please note, the provisions of section 12 subsection 9 shall not be applicable in case of right to passage. Meaning you have bus pass, you have metro pass, etc. In such cases, you have a right to passage. You can get on the bus anywhere, anytime. Correct? In that case, this provision is not applicable because for that bus pass, you would have paid only once. You would have paid money only once and that pass will be valid for entire year. So these provisions will not apply in such cases. In such cases, this provision will not be applicable. Meaning, if specific rule is not applicable, what will apply, sir? I'll apply general rule section 12 subsection 2 for that cases. Then services provided on board a conveyance. I am in an aeroplane. I am taking massage in the aeroplane. I am taking services when I am in the aeroplane. Services supplied on board a conveyance. Or when I am in the aeroplane, I am taking an iPad for watching movies, etc. In such cases, services provided on board a conveyance. What is the place of supply, sir? The place of supply will be first scheduled point of departure of that conveyance. It will be what, sir? First scheduled point of departure of that conveyance. Where did the flight starts its journey? For example, there is a flight from Chennai to Bangalore, Bangalore to Hyderabad, Hyderabad to Mumbai, Mumbai to Delhi. I am a person who boarded the flight in Bangalore. Okay, and my destination is Delhi. Now, in this case, and the goods were loaded in the flight when the flight was somewhere in between in Mumbai. Now, tell me, for passenger transport service, I am an unregistered person. For passenger transport service, what will be the place of supply? Sir, for passenger transport service, location where you are embarking the conveyance. Where did I embark the conveyance? In Bangalore. For passenger transport service, the place of supply will be Bangalore because I am embarking a conveyance over there. Then what if I purchase some goods? For that goods, the location where goods were taken on board, which is Hyderabad, will be taken as place of supply. Now, what if I take some services? I am taking an iPad for watching movies. For services, place of supply will be Chennai, which is first scheduled point of departure of that conveyance. I don't care where I have boarded the flight. It does not matter. Where did the flight start its journey from? That will be taken as place of supply. So for passenger transport service, Bangalore, because I am embarking the conveyance. For wallet which is purchased by me when I was in the aeroplane, it is Hyderabad because that is the place where the goods were boarded on board. And for movie services, it is Chennai because first scheduled point of departure of the conveyance is Chennai. We are almost on a verge of completing this topic. Section 12 subsection 11. What is this section 12 subsection 11 talking all about, sir? It talks about telecommunication service. Sir, what do you mean by telecommunication service? Your mobile phone, internet services, telephone, etc., whatever it is. Now check whether the telecommunication service is an
Fixed line. If it is a fixed line, location wherever it is fixed is taken as place of supply. Wherever that telecommunication line is fixed, that will be taken as place of supply. If it is a postpaid, then your billing address, because you are going to get billed every month. Then in case of prepaid, then whichever place you are taking the voucher, wherever you are going and doing the recharge. And if you are doing the recharge online, then your billing address, you will have to select your state. So that location will be taken as place of supply. Sir, what about the services given by banks? Sir? Bank, NBFC, stockbrokers, etc. They are also giving services. In such cases, the place of supply will be location of the recipient is available. Yes, sir, it is available. Location of recipient will be taken as place of supply. Sir, what if location of recipient is not available? Location of supplier will be taken as place of supply. For example, I am having an account in HDFC Bank. I am having an account in HDFC Bank, one of the area in Bangalore. Now, in that case, that because I am having an account, that bank will have my address. So whatever services that bank is giving to me, place of supply will be my address. Now, there is a person who is not having an account in the bank. I don't have account in ICICI Bank. So I go to ICICI Bank, I exchange the foreign currency. In such cases, they are giving services to me. For that services, what will be the place of supply? Location of supplier. It will be location of supplier. And for insurance, section 12 subsection 13 or section 12 subsection 13, for insurance services, what will be the place of supply? Same. Check whether services are given to a registered person or unregistered person. If it is given to a registered person, location of registered person. If it is given to an unregistered person, location, the address of the recipient as available with the supplier, because insurance company will always have your address if they want to give that services to you. Okay, section 12 subsection 14 is advertisement related services, which you learn in your final level, because this is with respect to rules, and rules are applicable at your final level. Okay, so this is all about your place of supply topic. So presently we have revised two topics as of now. We have revised, one is your value of supply, and then we have revised your place of supply. We will take a short break now. We will take a break and continue our discussion. I hope you are enjoying. I hope you guys are enjoying these lectures. Do like, share, subscribe, share with your friends so that maximum people can take advantage of these lectures. Hello friends, welcome back. So let us continue our discussion. Let us start the next topic. Next topic is exemption. Again, a very simple topic, very easy topic. It is mostly theoretical but easy to remember. If you just give one reading before examination also, this is something which is easy to remember. Exemption. Exemption talks about what, sir? Exemptions means the goods or services on which you don't have to pay the taxes. So in this topic, there is only one section, which is section 11. Section 11 of which Act? Section 11 of CGST Act. So previously we discussed a topic called as place of supply. The place of supply, whatever sections we saw, they were all from IGST Act. But here what we are seeing is from CGST Act again. Now this has three sections: section 11 subsection 1, 11.2 and 11.3. 11.1 talks about general exemption, 11.2 talks about special exemption, and 11.3 talks about explanation to exemption. Basically all these three sections are not at all important for us, because what is important for us is the notification which gives the list of goods which are exempt under GST and list of services which are exempt under GST. Now the notification number is notification number 12/2017. It gives a list of services which are exempt under GST. Very important notification. And for goods it is 2/2017. But with respect to goods, they will not ask any question in the examination. Now, before we start the discussion on this topic, let me tell you, mostly in examination, if they ask a question on exemption, it will be only for the services which are exempt under GST law. It will be only in respect of what, sir? The services which are exempt under GST law. So whenever there is a question asked on exemption, you should write about this notification. Say some service is asked that say renting of residential dwelling to residential for residential use is exempt as per notification number 12/2017. So this notification is something which you should remember, and compulsory you should write this notification. Now with respect to the questions which are asked in the examinations, the questions are the exemptions are basically divided into four categories. Sorry, one is activity based exemption. If you do this work, then exemption will be given. Then supplier based exemption, these points will be exempt only for these peoples. Then recipient based exemption, only if these people are going to take it, then exemption will be given. And some exemptions are specified suppliers and specified recipient. Mostly in examination, though we have these categories, mostly in examination, when we are going through all these different exemption, you will see mostly in examination they are going to ask limit based exemption. Mostly it will be limit based. Mostly it will be limit based. You'll understand, we'll see. Mostly it will be limit based. And there are some exemption of specific sector. Okay, so either it will be limit based or it will be sector wise exemption. Apart from that, normally in exemption they will not ask you anything else. So either it will be limit based exemption or it will be sector based exemption. Sir, what it is, we will understand one by one as and when we discuss. Now, what do you mean by exempt supply? Before we start our discussion, what do you mean by exempt supply? Exempt supply means supply which are wholly exempt, supply which are nil rated, and supply which is not taxable. And it includes what, sir? Non-taxable supply. Sir, what do you mean by non-taxable supply? Non-taxable supply means alcoholic liquor for human consumption, HP man, high-speed diesel, petroleum crude, motor spirit, aviation turbine fuel, and natural gas. These are called as non-taxable supply. Power to grant exemption under section 11 of CGST Act or under section 6 of IGST Act. So section 11 subsection 1 gives the power to grant exemption by way of a notification. They say that government has the power to give exemptions on the recommendation of council. If they feel that it is necessary in public interest to exempt something, they may give an exemption by way of a notification. If any exemption is given by way of a notification, that means it is a general exemption and it will be applicable to everyone who is dealing in that particular goods or services. Then we have special exemption. Section 11 subsection 2 talks about this special exemption. Sir, what is this 11 subsection 2 telling? 11 subsection 2 talks about special exemption. It says, if any person is going and specifically making a request to the government, then the government will give an exemption to that person. So specific exemption says exemption issued by way of a special order under exceptional circumstances. Only government will give this. 11.3 talks about explanation to an exemption. Now, assuming government has already given an exemption either by way of notification or by way of special order. So already an exemption has been given by the government and now they are inserting an explanation to exemption. So what do you mean by this, sir? Now there is some clarification which they have to give. There is some changes which they have to make to that exemption notification or exemption order which government has already passed. Now they may make the changes by adding an explanation. Now they say that if this explanation is added within 1 year from the date of exemption notification or exemption order, then it will be deemed that this explanation was always there, always forming part of the main exemption notification. Now, as I told you, section 11, though they have given that section, it is not important for us. What is important? The different goods and services which are exempt. Now, goods, in that also goods categories is not important. Services are something which are important. Now, mostly what are the goods? Just for an idea, what are the goods which are exempt? Unbranded atta, maida, besan, unpacked food grains, milk, eggs, curd, lassi, fresh vegetables, and fruits, etc. They are some of the items which are exempt. Some more examples is a fish is exempt, potato or fruits and vegetables are exempt, milk is exempt, tender coconut, live stocks, animals are there, no live animals, plastic bangles, then newspaper. We have puja samagri, we have vegetables and Indian national flags. Now please note, unbranded atta, unbranded maida are all exempt. If it is a branded atta, say you are purchasing Ashirwad atta, Good Life atta, then it will be taxable. But if you purchase atta, say there are many people who sell atta in open, correct? These are all unbranded atta. Similarly, unbranded food grains will be exempt. Now, let us start our discussion of exemption on services. Services which are exempt under GST law, notification number 12/2017. It will be best if you watch this in say 1.5x because it is mostly, so if you watch this in 1.5x speed, it will be better because it is mostly completely theoretical. And please note my speed, I'm not asking you to watch, I'm not asking you to watch it in 2x because my speed will also be fast in this discussion, and if you watch in 2x, then there may be a problem that you will not understand what I am telling. It will be very fast for you. Okay, so it may be very fast. Now, First exemption which we have is what, sir? Charitable exemption, services related to charitable and religious activity. So services by an entity registered under section 12W of Income Tax Act by way of charitable activity. So you are an entity registered under 12W of Income Tax Act and your activities are charitable activities. What is charitable activity, sir? Charitable activity means PAPA. What is PAPA, sir? PAPA means charitable activity. Now if you are an entity registered under section 12W of Income Tax Act and you are doing PAPA. What is PAPA? You are doing any activity. Charitable activity means any activity relating to public health, any activity relating to advancement of religion, spirituality, yoga, any activity relating to advancement of educational program, skill development program, and any NP for any activity in relation of preservation of environment like wildlife sanctuary, forest, etc. So if you are an entity registered under section 12W of Income Tax Act and you are doing PAPA, you are doing charitable activity, then your services will be exempt. Then if you are providing any training or coaching in recreational activities, you are a person who is teaching, you are giving training and coaching in recreational activities of art and culture. If it is with respect to art and culture, then exemption will be given only if the training is provided by an individual. For example, I am a good dancer, I am teaching you how to do Kathakali dance, etc. I am teaching you how to play tabla. So if it is an individual who is teaching you, then my services will be exempt. But if the same thing is done by a company or a partnership firm, etc., their services will be taxable. And services in relation to training and coaching in sports by charitable entities. Please note, this should be done by individual. Art and culture, sports should be done by charitable entities, only then exemption will be given. Then now I told you limit based exemption will be asked in the question. See the limit based exemption. Services by an old age home run by central government, state government, or an entity registered under section 12W of Income Tax Act to its residents. So services given by a home, sir, an old age home which is run by central government, state government, or an entity registered under section 12W of Income Tax Act against a consideration up to rupees 25,000 per month per member will be exempt. Meaning, so if there is an old age home either run by central government or run by state government or an entity registered under section 12W of Income Tax Act, and that old age home is giving services to its residents. Who are the residents of old age home? The old people whose age is 60 years or more. And for that services which is given by the old age home, no, they are charging 25,000 rupees per member per month. Then their services will be exempt. Sir, what if I charge more than 25,000 rupees? It will be taxable. Please note, this 25,000 is all inclusive, meaning it is for boarding, lodging, and maintenance. Everything is included in 25,000. Then services given by a pujari, services given by a person by way of conduct of religious ceremony. So if any person is giving services for conducting a religious ceremony, someone is conducting your marriage, someone is conducting your housewarming, someone is some puja is coming and conducting your namkarana or a naming ceremony, these services will be exempt. Then services given by a person by way of renting of portions of religious premises meant for general public. So if any person is renting portions of religious premises, meaning the area of religious premises for which is meant for use by general public, then it will be exempt if that entity is registered under section 12W of Income Tax Act or 1023C of Income Tax or Act or 1023 BBA of Income Tax Act. Now please note, this exemption shall not apply. This exemption shall not apply. Normally renting of persons of religious premises is exempt, but this exemption shall not apply if the rooms are rented for a rupees 1,000 or more. If the premises given on rent is a community hall or Kalyana Mantapa and the rent which is charged is 10,000 rupees or more, and if they give shops on rent, then the rent should be, if it is 10,000 or more, it will be taxable. Meaning, services by a person by way of renting of persons of religious premises will be exempt only if it is less than these amounts. Only if it is less than 1,000 rupees, less than 10,000 rupees. For room renting, if it is up to 999, no problem. For renting Kalyana Mantapa, community halls, etc., up to 9,999 rupees, no problem. And renting of shops, etc., up to 9,999, no problem. If it is 10,000 or more, it will become taxable. It will become taxable. Then services given by a specified organization. Services given by whom, sir? Specified organization for conduct of religious pilgrimage programs. Which are the specified organization? The Kumbh Mela, which is conducted by Kuman Mandal Vikas Nigam Limited, or Hajj Committee of India or State Hajj Committee is conducting any religious pilgrimage program. Then The next services is agriculture related services. Agriculture related services, yes sir, agriculture related services. Services in relation to cultivation of plants and rearing of all life form of animals except rearing of horses for food, fiber, fuel, raw material or any other similar product is exempt. What are they telling? Services relating to cultivation of plants and rearing of all life form of animals. Why are you cultivating plant and rearing all life form of animals? For food, fiber, fuel, raw materials or any other similar product. Rearing of horses are not covered over here. Or case number two, agricultural produce, services relating to agricultural produce, services relating to, see, case number one is what I told. Case number two is services relating to agricultural produce by way of agricultural operation directly related to production of agricultural produce. Supply services relating to agricultural produce by way of supply of farm labor. If you are supplying farm labor, if you are doing any agricultural operation, if you are carrying out any process at agriculture farm which is required for doing that agricultural activity such as tending, curing, cutting, drying, sun drying, pigmenting, trimming, curing, sorting, grading, etc., including bulk packaging of products which will not alter the essential characteristics of agriculture produce. It should not alter the essential characteristics of agriculture produce. Then services relating to renting and leasing of agro machinery or vacate land with or without structure incidental to it. Loading, unloading, packaging, warehousing of agriculture produce. Agricultural extension services and services by an agriculture produce marketing committee for selling or a commission agent for sale and purchase of agriculture produce. Then these services will be exempt. These services will be exempt. Sir, what do you mean by an agriculture produce? Agriculture produce means cultivation of plants and rearing of all life form of animals except rearing of horses. This you are doing for food, fiber, fuel, raw material on which no further processing is done or such processing is done which usually is required to be done so that it can be sold in the primary market. Meaning agriculture produce, whatever produce you are getting on which no processing is done or some kind of processing is done which will not change the essential characteristics of that agriculture produce. Agriculture extension services means what, sir? Applying scientific research and technology knowledge for producing agriculture produce. Then now please note some important points with respect to these services is that activities like breeding of fish, pisciculture, sericulture, cultivation of ornamental flowers, that is floriculture, horticulture, they are all exempt. Forestry, they are all included in the definition of agriculture produce, therefore they are exempt. Plantation crops like tea, coffee, rubber are also covered under exemption. Plucking of flowers from plants is also exempt. If you are plucking the flowers from the plant, then your services are also exempt. Then services given, services by way of loading, unloading, packaging and storaging of rice. Rice is not an agriculture produce. So if you are loading, unloading, packaging and storaging rice, warehousing rice, then that services also will be exempt. Please note, rice is not an agriculture produce. Paddy is an agriculture produce. So services by way of warehousing of minor forest produce is exempt. Services by way of storaging and warehousing of cereals, pulses, fruits and vegetables, that is also exempt. Intermediate production process carried out as a job worker relating to cultivation of plant and training of all life form of animals for food, fiber, fuel, raw material. Intermediate production process means what, sir? Say for example, I am into rearing of sheep. Now I don't know how to cut this wool of the sheep. So I am asking someone to help me cut that wool of the sheep. So he's taking care of intermediate production process relating to agriculture produce. Then services by way of artificial insemination of livestock. Artificial insemination of livestock is exempt. Services by way of preconditioning, pre-cooling, ripening, waxing, retail packing and labeling of fruits and vegetables are exempt. Now please note, these processes are there. No, they are all treated as agriculture processes. They are all exempt. Now potato is agriculture produce. Potato chips is not agriculture produce. Wheat is agriculture produce. Atta is not agriculture produce. Then sugar cane is agriculture produce. Jaggery is not an agriculture produce. Similarly, tomato is agriculture produce. Tomato ketchup is not agriculture produce. Paddy is agriculture produce. Rice is not an agriculture produce. Then grapes, are fruits, vegetables, agriculture produce. Wine, etc., which you make are not agriculture produce. Now milk is an agriculture produce. From this milk we are making paneer, we are making curd, we are making cheese, we are making ice cream, we are making different types of products. These are all not agriculture produce. Now tea leaves are agriculture produce. Tea leaves are agriculture produce. This tea patti and this tea is not agriculture produce. You are renting or leasing vacate land or agricultural machineries
For agriculture purpose, then it is exempt. I am renting my vacant land for doing, I am renting my agricultural land for doing a movie shooting. I am renting a vacant land for doing a movie shooting. Is it exempt, sir? Answer is no. No. Answer is no. Then next services is healthcare related services. Healthcare related services by way of healthcare services by clinical establishment, authorized medical practitioner and paramedics. Healthcare services given by whom, sir? Clinical establishment, authorized medical practitioner or paramedics will be exempt. It will be what, sir? It will be exempt. It will be exempt. Sir, what do you mean by healthcare services? Healthcare services means DTC of double iPad through Vayanusha. DTC of double iPad through Vayanusha. Sir, what is this DTC of double iPad through Vayanusha? Healthcare services means diagnosis, treatment and care of illness, injury, pregnancy, abnormality and deformity through any recognized system of medicine in India. What is this recognized system of medicine in India? Vayanusha. What is this recognized system of medicine in India, sir? Yoga, Y for yoga, A for Ayurveda, N for naturopathy, U for Unani, S for Siddha, H for homeopathy and A for allopathy. So if you are doing diagnosis, treatment and care of illness, injury, pregnancy, abnormality and deformity through any recognized system of medicine in India, then your services are called as healthcare services and your services will be exempt if it is given by whom? Healthcare services given by clinical establishment, authorized medical practitioner and paramedics. Only these three people are giving these healthcare services. Their services will be exempt. Healthcare services will include services of transportation of patient to and from clinical establishments, but it shall not include hair transplantation, cosmetic surgery and plastic surgery. That shall not be included over here. Then please note, recently an amendment has come which says, however, nothing contained in this entry shall apply to the services provided by clinical establishment by way of providing room having charges more than 5,000 rupees per day to a person receiving healthcare services. So if the hospital is renting you a room, and the room charges are 5,000 or more, 5,000 rupees exceeds 5,000 rupees, it is more than 5,000 rupees per day, then that room rent will be taxable. Though they will give it as a bundle to you, it will be taxable. However, this room rent will not cover the ICU rooms, CCU rooms, ICCU rooms and INCU. Mostly critical care unit rooms will not be covered over here. Then services of veterinary clinic will also be exempt. Now please note what were not what have been removed from the exemptions. I have given that also and put a scratch because you should be knowing that these were exempt before. Now it will be taxable. Then services given by rehabilitation professions. Rehabilitation professions means, sir, those people who are in the business of getting you out of rehabilitation centers will be there. No, so if any person is addicted to drugs, there will be some person coming and giving speech about it, please don't consume drugs, etc. So these are called as these are people who are rehabilitation professions. Services provided by rehabilitation profession recognized under Rehabilitation Council of India by way of rehabilitation, therapy, counseling and such other activities covered under medical establishment, educational institution. This is given by whom, sir? Central government or state government or union territory or an entity registered under section 12W of Income Tax Act. All services will be exempt. Now normally I have not discussed circulars for above cases, but here the circulars also are very important for healthcare services. For healthcare services, sir, if I am giving rooms on rent to patient, is this exempt? Yes, it will be exempt. Then, sir, what about services given by senior doctors? Now what happens is, some kind of hospital, what will they do? Now they say, for example, I am Mr. Dilip is an doctor. I am Dr. Dilip, not Mr. Dilip. I am a Dr. Dilip. I am heart specialist. Okay, I am heart specialist. So whoever falls in love, whoever whoever heartbreak is happening, so they come to me for treatment. So I am a heart specialist. Please understand this carefully now. Now what happens is, I am, see, doctors can be of two categories. These doctors can either be employee of the hospital or they can be consultant to the hospital. If they are employees of the hospital, then no problem at all. Services given by employee to the employer in the course of employment is exempt. And if the doctor is a consultant, meaning the doctor is working for 5-6 hospitals, he goes as a consultant to 2-3 hospitals. In such cases, he will be getting something called as consultancy charges. Whether this consultancy charges is exempt, sir, because the patient is coming to the hospital, correct? And hospital, so patient is taking services from the hospital and hospital is taking services from the doctor. Now, whatever services patient is taking, definitely exempt, because services given by clinical establishment to patient. Now, services given by doctor to hospital will also be exempt, because services given by doctor is of what kind of services? Healthcare services. Therefore, it will be exempt. And many times what will happen is, the hospital will charge 10,000 rupees from the patient, and they will keep 3,000 rupees and pay 7,000 rupees to the doctor. In this case, this retention money, will it be taxable, sir, to the hospital? Answer is no, it will not be taxable. So that is what is clarification they have given. Now, food also, further, food supplied. If food is supplied to an admitted patient who is also called as inpatient, then it is exempt. If it is to an outpatient, then it is not exempt. Non-admitted patient, it is not exempt. Doctors and staff members, then also it is not exempt, meaning it will be taxable in this case. And the ambulance services given by any person will be exempt. Any person can give ambulance services, it will be exempt. Then what do we have, sir? Services given by educational institutes. Now, with respect to educational institutes, see over here. With respect to educational institutes, there are two categories over here. One, services given by educational institute, one, services given to educational institute. Meaning, I am an educational institute, I am giving services. So, services given by educational institute. What services given by educational institute will be exempt, sir? Any type of services given by educational institute will be exempt if that services is given by educational institution to its student, faculty, staff. So, educational institute is giving services to its student, faculty, staff. Any type of services is given by them, it will be exempt. Then, services provided by an educational institute by way of what's a conduct of examination against an consideration called as entrance fees. So if any educational institute is conducting an examination for which they are charging from the applicant's entrance fee, then that services also will be exempt. Now, sir, are there any services which if I give to education institute, it is exempt? Answer is yes. There are some services which if you give to education institute, that is exempt. Which are these services, sir? Transportation of student, faculty, staff services, meaning I am an SRS Travels, I am giving transportation services to education institutes, or catering services including midday meal program, security, cleaning and housekeeping services I am giving to education institutes. Then services by for conduct of examination, or services by way of supply of online education journal. So basically, if I give any services to education institute, it will be exempt. Which services, sir? Chote services. Which services? Chote services. C for catering services, H for housekeeping, security guard services, O for online education journals, T for transportation services, and E for conduct of examination services. These chote services given to education institute is given exempt, meaning any person is giving chote services to education institute. For example, your CMA institute is taking services from different people at different states for conduct of their examination, correct? So there is some college in Bangalore where your examination will be held. Similarly, some college in Hyderabad, some college in Mumbai, some college in Jaipur, etc. Different locations exams are held. So your education institute is taking services from that college. Their services are exempt. Now, sir, what do you mean by education institute, sir? Educational institute means an institute providing services by way of preschool education. Education institute means an institute giving services by way of preschool education up to higher secondary school. Education as a part of curriculum for obtaining a qualification recognized by law in India, meaning degree colleges, etc., or MBA colleges, or education as a part of approved vocational training courses. So from nursery to 12th standard is covered in first point. Then degree colleges are all covered in second point, and then from nursery to 12th standard, okay, meaning PUC in Bangalore it is called as in Karnataka. And for degree colleges, degree, MBA, graduation, post-graduation are covered in point number 2. And education as a part of approved vocational training courses are also covered. Now, please note one important point which you should note is that services of transportation, catering and housekeeping security services are exempt only if it is provided to preschool up to higher secondary school. Okay, only if they are provided to preschool up to higher secondary school, meaning if these three services are taken by vocational institutes or by degree colleges, not exempt. Similarly, this online education general services is not exempt for preschool up to higher educational school. This is not exempt for preschool up to higher secondary school. Next what, sir? Next is what, sir? Next is what? Now, please note some important points. Private coaching centers, it is taxable. Now, IIM gives short duration course and long duration course. Long duration course, they will give some proper degree for that. It is exempt. Short duration course is not a qualification. They will also they also conduct short duration programs or short duration course which is not a qualification recognized by law, therefore that will be taxable. That will be taxable. Then we have private coaching centers taxable. Boarding school, boarding school is giving you education, food as well as accommodation. Their services will be treated, it will be treated as composite supply, wherein the principal supply or main supply is education, therefore fully exempt. Then supply of food in education institutes, if it is run by the education institute itself, then exempt. By third party, then it is taxable. Then campus placement services are given. If it now for campus placement, say for example your institute is giving you campus placement services, so they will take money from you, they will take money from companies. So whatever money they have taken from company is for services given by your institute to that company. Whatever money they are taking from you is the services given by education institute to student, faculty, staff. Now whatever amount they have collected from you, that is exempt. Whatever amount money they are collecting from the companies, that will be taxable for campus placement. Then we have what's our passenger transport services. Passenger transport services, I think I have drawn here. Passenger transport services, fantastic, easy peasy. Passenger transport services, if passenger transportation is happening by rail and if it is by first class or AC class, it is always taxable. Any other modes it is exempt. So if any other class of trains such as general class, sleeper class, it is exempt. If you are traveling by metro, monorail, tramway, then also it will be exempt. If you are going by road and if it is by contract carriage or stage carriage, if it is AC contract carriage or stage carriage, it will be taxable. If it is non-AC contract carriage or stage carriage, it will be exempt. So AC will be taxable, non-AC will be exempt. If that contract carriage or stage carriage is used for tourism purpose or conduct tour purpose, it will be taxable. In any other mode you are traveling by road, meaning Ola, Uber, it will be taxable. Auto rickshaws, e-rickshaws, metered cab, it is all exempt. If you're traveling by air, normally it is taxable. However, exemption will be given if you're embarking from or terminating to northeastern states and in case of regional connectivity scheme airports. And if you're traveling by water, if it is through inland waterways, it is exempt. If you're traveling in a vessel, in a ship, which is meant for public transport, exempt. In all other cases, it will be taxable. Then we have goods transportation. So next service which we have is transportation of goods. Now goods transportation. What is this goods transportation, sir? Goods transportation, if you are traveling by railway, if you're transporting goods by rail, then normally it will be taxable. However, Dr. Namo is exempt. Then if you're transporting the goods by road, normally it is exempt. Ulta. See, if you're transporting the goods by train, normally it is taxable. If you're transporting the goods by road, normally it is exempt. However, it will be taxable for GT and courier agencies. However, in case of GTA also, Dr. Namo is exempt. If you're transporting any goods by air, it is always taxable irrespective of what type of goods it is. If you're transporting any goods by vessel, then normally it is taxable except Dr. Namo. And in all other cases, if it is inland waterways, exempt. If it is pipeline conductor, it is taxable. Please note, normally you have seen, normally only when you are transporting goods by road, it is exempt. In all other cases, normally it is taxable. In all other cases, it is normally taxable. However, Dr. Namo is not taxable for railway and vessel. Air, everything is taxable. Okay, road it is normally exempt except in case of GTA and courier agencies. If you transfer anything by GTA or through courier agencies, it will be taxable. Sir, what is Dr. Namo, sir? Because Dr. Namo, everywhere you are telling it is exempt. Dr. Namo is what, sir? Dr. Namo is if you are transporting D for defense material. If you are transporting what, sir? If you are transporting D for defense material, R for defense material, R for relief material, N for what, sir? N for newspapers, N for newspapers, and A for agriculture produce, M for milk, salt, and O for organic manure. So these are the different products which are called as Dr. Namo. So defense material, relief material, N for newspaper, A for agriculture produce, milk, and organic manure. They are exempt. Then one more point is there in this, which is services by way of giving on hire. I am giving on hire, I am giving on rent, I am giving on hire to a straight transport undertaking, a motor vehicle which is meant to carry 12 or more passengers. I am giving on hire to a local authority and electronically operated vehicles which is meant for carrying 12 passengers. I am giving on hire to a goods transport agency, a means for transportation of goods. I am giving on hire a motor vehicle to that company who is transporting student, faculty, staff. Then next services is with respect to legal services. So it covers services given by arbitral tribunal. It covers services given by arbitral tribunal, and it covers services given by advocates. So it covers services given by arbitral tribunal as well as advocates. In short, I will explain you all these things. Legal services can be given by arbitral tribunal or by advocate. Legal services given by arbitral tribunal to whom, sir? Government exempt. Non-business entity, like people like you and me, we are not business entities, it is exempt. Legal services given by arbitral tribunal to a business entity will be taxable. It will be taxable, but however, we will have a check. Legal services given by arbitral tribunal to a business entity whose turnover is more than basic exemption limit for taking registration. The basic exemption limit for taking registration under GST law is 10 lakhs, 20 lakhs or 40 lakhs. We will see in our registration chapters. So if your aggregate turnover in the preceding financial year is more than 10 lakhs, 20 lakhs, 30 lakhs, and you are a business entity, then whatever services you are taking from arbitral tribunal, it will be taxable. And if your turnover is less than that limit, then the services given by arbitral tribunal, even though you are a business entity, will be exempt. Then services given by an advocate. Legal services given by advocate. It can be an individual advocate, partnership firm of advocate, or LLP of advocate, except senior advocate. If it is given to a government exempt, non-business entity exempt, services given by one advocate to another advocate is also exempt. But services given by advocate to a business entity will be taxable if the aggregate turnover of the business entity is more than that 10 lakhs, 20 lakhs or 40 lakhs, basic exemption limit for taking registration. Sir, it is taxable. Therefore, who has to pay the taxes? That the business entity will have to pay the taxes under your charge. If the turnover is less than that limit, then it is exempt. Now, in case of senior advocate, basic exemption limit for taking registration is 10 lakhs, 20 lakhs, 40 lakhs. Okay. In case of senior advocate giving services to government exempt, non-business entity also exempt. Another advocate, it will be taxable, and it is taxable under reverse charge mechanism. And if it is given to a business entity having turnover more than the limit, taxable. Turnover less than the limit, it will be exempt. Next is what's entertainment related services. Yeah, important again. Now, till here, including this point which we are going to see, whatever services we saw, they were all sector-wise services. They are the services related to one particular sector. Okay. So these services are something which are important. After this, whatever we are going to discuss, there not all the points are important in that. Only one or two entries will be there which is important. Now, please note, should I remember this entry number, sir? In exemption, answer is no. I told you should remember only notification number 12/2017. Okay, you don't have to remember all these entry numbers. Then entertainment related services. Sir, what do you mean by this entertainment related services? Services provided to a recognized sports body by an individual as a player, referee, umpire, coach, team manager or participant in a recognized sporting event organized by recognized sports body. For example, Mahendra Singh Dhoni, Thala. He is giving services as a player. He is giving services as a referee, as a coach, as an umpire, as a team manager to a recognized sports body. His services will be exempt. Or services given to a recognized sports body by another recognized sports body, that services also are exempt. Then services, this is very important. Services, normally they ask this question. Services given by an artist by way of performing folk or classical form of art. So you are performing folk form of art or classical form of art. Which type of arts are either in music, dance or theatre, for which you are charging a consideration not exceeding 1,50,000 rupees. Services by an artist by way of performance of folk or classical forms of art, of music or dance or theatre, if the consideration charge is not more than 1,50,000. If it is more than 1,50,000, it will be taxable. So services given, services by way of admission to, whenever I use the word admission to, that means I am talking about entry fees. So services given by way of admission to museum, national park, wildlife sanctuary, tiger reserve or zoo, etc., how much ever you charge, it is exempt. Then services by way of admission to monuments, protected monuments declared under ancient monuments and archaeological site, etc., that is exempt. Services by way of right to admission to, that means again they are talking about in all these 3 points they are talking about what's your entry ticket. Services by way of right to admission to circus, dance, theatrical performance including drama and ballet,
award function, concert, pageant, etc., or any sporting event organized by non-recognized sports body, or sporting a non-recognized sporting event, or it is a recognized sporting event, or you are going to a planetarium. Now in these cases exemption will be given if the consideration is not more than 500 rupees per person. If the consideration is not more than 500 rupees per person. For going to monuments and zoo, etc., there is no amount limit. Any amount charged exempt. But for this circus, ballet, planetarium, etc., maximum 5,000 rupees they can charge. If it is not more than 5,000 rupees, it will be exempt. Then what, sir? Next, services. Now construction related services, there are too many things, but only now going for now whatever other services are there, now I'll read only the important services. Now in construction services, what is exempt, sir? Fantastic service. First service is very important service, exempt. What is the service? What is the service, sir? Services by way of renting of residential dwelling for residential use, except where that residential dwelling is rented to a registered person. So if residential dwelling is rented to whom, sir? If residential dwelling is rented to a if residential dwelling is rented for residential use, then it is exempt. However, if it is rented to a registered person, then it will become taxable. Then services by way of pure, I will do one thing, I'll cover everything. Services by way of pure labor contract for construction erection of housing projects under all urban mission or Pradhan Mantri Awas Yojana. So under Pradhan Mantri Awas Yojana, if you're taking services, only labor related services for construction, then services are exempt. Services given by electricity distribution utility for construction of electricity poles up to the tube well of farmers for agriculture purpose is exempt. Services, so I am telling these are not important. Services of pure labor contract for construction of single residential unit. If you want your house to be constructed by someone, then whatever labor related services you are taking, only if labor related services you take, your services will be exempt. Then this is applicable in final level. You can ignore these 2 points. 41A, 41B, 41, etc. final level. Then services given by unincorporated body or non-profit organization. Only this one point is very important. This services given by unincorporated body or non-profit organization registered under any law for the time being in force to its own members by way of reimbursement of charges or share of contribution as a trade union, or for carrying out any work which is exempt under GST law, or services given by an unincorporated body to its own members by way of reimbursement up to an amount of 7,500 per month per member for sourcing goods and services from third party for common use of members of housing society or residential complex. Basically apartment, it is talking about apartment. So whatever maintenance charges apartment is collecting from you for various different services which apartment is giving you, whatever maintenance charges they are collecting from you, if the maintenance charges is up to 7,500 per month per member, it is exempt. If it is more than this amount, fully taxable. Then again, time pass, not required. Services given by unincorporated body or non-profit organizations for activities relating to welfare of industrial and agricultural laborers, or for promotion of trade, commerce, industry, agriculture, art, science, literature, etc. Then banking related services. First services is most important services in your entire GST law. Services by way of extending deposits, loans or advances insofar as the consideration is represented by way of interest or discount. Basically they are talking about interest income. Basically this is how they will give you an examination. They will not directly tell interest income. They'll tell services by way of extending deposits, loans or advances insofar as the consideration is represented by way of interest or discount is exempt. Meaning interest income which you get now for giving any loan to anyone, whether you are giving, bank is giving, any person is giving this loan, whatever interest income they are receiving is completely exempt. Inter-se means among themselves. Inter-se sale and purchase of foreign currency among bank or among authorized dealers of foreign exchange, or services given by a bank with respect to basic saving bank deposit account holders. Services given by acquiring bank for settlement of a payment up to 2,000 rupees in single transaction by way of credit card, debit card. Services given by business facilitator for opening bank accounts in rural areas. Intermediate of business facilitator for opening bank accounts in rural areas, or services given by business facilitator to an insurance company in rural areas for taking insurance, etc. in rural areas. Then services given by government. Services given by Government. What is services given? Which services given by government are exempt, sir? Services given by governmental authority by way of activity entrusted to municipality under 243W. Services given by governmental authority by way of activity entrusted to panchayat under 243G. Then services given by central government, state government, local authority, unitary. Any type of services given by them except services given by Department of Post, services in relation to aircraft and vessel, transportation of goods, transportation of passengers, and services given by them to a business entity. Okay, any other type of services given by them to any person will be exempt. So basically these are exempt, these are taxable. These are all taxable under forward charge, and services given to a business entity is taxable under reverse charge. Services provided by central government, state government to a business entity whose turnover is up to basic exemption limit for registration, meaning up to 10 lakhs, 20 lakhs and 40 lakhs. If that business entity is taking services from government, then their services will be exempt. Services provided by central government, state government, union territory, local authority to another central government, state government. Services provided by central government, state government, union territory, local authority where the consideration is not more than 5,000 rupees. Services given by governmental authority to central government, state government, local authority for which the consideration is received from central government, state government, local authority, etc. All time pass services. Services given by an old age home, already discussed. Services supplied by central government, state government under to their undertakings or public sector undertakings by way of guaranteeing loans. Services given by central government, state government by way of registration required under any law for the time being in force, or testing, calibration, safety check services given by them. Or services provided by central government, state government, union territory or local authority by way of issuing passport, visa, driving license, birth certificate and death certificate. Services given by government by way of tolerating non-performance of a contract. Services by way of assigning right to use natural resources. Services provided by government by way of deputing officers after office hours. Services given by state government to an excess royalty collection contractor by assigning them the right to collect royalty. All these services are exempt. Now services provided to government. What are the services provided to government will be exempt, sir? Pure services given to government. Pure services means only services should be there, not even single percent of goods should be there. Pure services given to the government by way of for doing any activity interest to panchayat or municipality under 243G or 243W. Composite, meaning goods can also be there. Maximum goods which can be there is 25%. Composite supply of goods as well as services where the value of goods is not more than, 25% of the total value given to central government, state government for an activity interested under Article 243G or 243W. Services given by ration shops, fair price shops to central government, state government, union territory. Services given by central government, state government, union territory under insurance scheme where the total premium paid to the central government, state government, union territory, where the premium is also paid by central government, state government, union territory. Or services given to central government, state government, union territory for conducting any training programs for which expenditure is incurred by them. Then services given by rehabilitation professions, already covered before. Then some different departments of government will be there. So these departments are giving the services. Services given by Employee State Insurance Corporation of India or Employee Provident Fund Organization, Coal Mine Provident Fund Organization, National Pension Trust Organization, etc. Or services given by ISRO, Antrix Corporation Limited or New Space India. Now here there is a small amendment. What is the amendment, sir? Now satellite launch services, before it was given by only these three people were exempt. Now satellite launch services given by any person is exempt. Satellite launch services given by any person is exempt. Before it was only ISRO, etc., etc., but now it is given by any person, it will be exempt. And services by way of providing information under Right to Information Act is exempt. Services pension scheme, Atal Pension Yojana and pension scheme of state government, these services are exempt. Related to them are exempt. Then life insurance, no, in case of life insurance, anything with respect to army, navy, etc., they are all exempt. Or Janashri Bima Yojana, Aam Aadmi Bima Yojana, Varishta Pension Yojana, Pradhan Mantri, wherever you see the word Pradhan Mantri, please exempt it. Similar is the case of general insurance. Skill development program conducted by National Skill Development Corporation or Sector Skill Development Corporation. Anywhere you see this word National Skill Development Corporation or Sector Skill Development Corporations or any institutions approved by them will be exempt. Then other services which are exempt, services of transfer of business as a going concern as a whole or independent part thereof is exempt. Services by way of transit cargo to Nepal and Bhutan landlocked countries are exempt. Services by way of access to roads and bridge on payment of toll charges is exempt. Whatever toll roads you take no, so they collect toll charges. On that they will not collect GST from you. Transmission and distribution of electricity by electricity transmission and utility. Then services, these two services are not relevant. Services by way of collecting and providing news by independent journalist to Press Trust of India or Unit Trust of India, or public libraries, services given by them are exempt. Services given by an organizer for organizing business exhibition outside India, and all other services are time pass services. Services by way of public convenience such as facilities of bathroom, washrooms, laboratories, urinal toilets are exempt. Foreign diplomatic services given by foreign diplomatic missions are also exempt. Services given by National Cold Chain Development Authority by way of dissemination of cold chain knowledge. You are spreading cold chain knowledge. All these services are exempt. So this completes our discussion on exemptions. This completes our discussion on exemptions. IGST law exemptions are applicable for final level, not relevant for intermediate level. Okay, so that is all about our exemptions topic. Fantastic topic we are going to discuss. One of the most important topic. You can take a break for 1 minute, meaning the class will be live. You can just take a break. You can pause the video, because the next topic which I am going to discuss is one of the most important topic in your GST law. The next topic which we are going to discuss now is one of the most important topic in your GST law. Sir, which is the topic which is one of the most important topic under GST law, sir? It is input tax credit. See over here. Section 16 to section 21 talks about input tax credit. If you are a CA Inter student, almost around 16 marks questions. Okay, for section number I have written over here, not marks. For CA Inter students, it is section 16 to section 18. For CMA Inter, it is section 16 to section 21. All the sections are applicable to you. From exam point of view, if you ask me the weightage of this topic, this is one of the most important topic, because your practical question, computation of total income, finding the taxes, etc., will come from this topic only. Mostly payment of tax question will come from this topic only, meaning this that question will have huge respect to this topic. Weightage will be almost around 5 to 8 marks. This chapter has a weightage of 5 to 8 marks. One of the most important chapter. So are you guys ready? Input tax credit. Input tax credit. Sir, what do you mean by input tax credit? Stories I will ignore directly. I will start my revision. Input tax credit means what, sir? The definition says input tax credit means credit of input tax. If you remember basics, I have told you what is the general meaning of input tax credit. If I take the benefit of taxes paid by me on my purchases for making the payment of taxes on my sales, then it is said that I am taking input tax credit. Now, what is the definition telling? As per definition, what do you mean by input tax credit? So definition says input tax credit means credit of input tax. I am not telling this seriously. Definition is telling input tax credit means credit of input tax. Oh. Input tax credit means what, sir? If you are taking credit of input tax, then it is input tax credit. Now, what do you mean by input tax credit? Sir, input tax means tax paid on inward supplies. What is input tax, sir? It is the tax paid on purchases, tax paid on inward supply, and it includes taxes paid under reverse charge and taxes paid on import of goods under customs law. But it shall not include the taxes paid under section 10, which is at composite rates. Now, this point is not there anyways. No, I mean, let me not waste your time by discussing what I generally discuss in the classroom. Now, anyways, now let us start the discussions of section 16. So that was base. What do you mean by input tax credit? We have understood. What is input tax? We have understood. Now let us straight away go to the section. Section number what, sir? Section number 16. Section 16 is what, sir? Eligibility and conditions. Eligibility and conditions. Eligibility and conditions. Who is eligible to take input tax credit, and what are the conditions which you have to satisfy for taking input tax credit? Who is eligible, sir? Every registered person. Who is eligible to take input tax credit? Every registered person. So if you want to take input tax credit, you should be a registered person. Compulsorily, you should be a registered person. Only if you are a registered person, you will be able to take input tax credit. Who is eligible to take input tax credit? Every registered person is eligible to take input tax credit on goods or services or both used by him or intended to be used by him in the course or furtherance of business. So if you are a registered person, you can take input tax rate. On what you can take input tax rate? All the different types of goods and services which are used by you or intended to be used by you in the course or furtherance of business, you can take input tax rate. Sir, what are the conditions for taking input tax rate? The conditions for taking input tax credit are what, sir? Oh, sir, he in the sense the registered person. Okay, he in this over here, he means what's a registered person. Sir, what are the conditions for taking input tax rates? Conditions are that he should be, registered person should be in possession of tax invoice, debit note or any other tax paying document. So you should be in possession of tax invoice, debit note, credit note or any other tax paying document for taking input tax rate. Then he should have actually received the goods or services. If you want to take input tax rate, then you should have actually received the goods or services. You should have received those goods or services. However, there is an exception. What is that exception, sir? In case of bill to ship to concept. What is this bill to ship to concept? You remember my example, Priya Sadis, Karina Sadis and Anushka Sadis. Karina told me to supply goods to Anushka. So I shipped the goods to Anushka, gave the bill to Karina. My customer is Karina. In this case, Karina can take input tax rate. Now, what is this bill to ship to concept telling? Where normally Karina should actually receive. Second condition says that you should actually receive the goods or services. If you want to take input tax rate, you should actually receive the goods or services. But however, there is an exception. What is that exception? That sir, that Karina's example. Sir, what happens in that exception? In case of bill to ship to concept, there is an exception. Now, what is that bill to ship to concept? I'll discuss that one point. That one single point I'll discuss. Please note, Priya Sadis is the supplier. Karina told Priya Sadis to supply 1,000 silk sari to Anushka. Okay, to supply 1,000 silk sari to Anushka. Now, Priya is delivering the goods to whom, sir? Anushka. But however, I have received the order from Karina. Therefore, my bill will be to whom, sir? Karina. My bill will be to whom, sir? It will be to Karina. And who is going to make the payment to me? It will be Karina. So basically, for me, who is my customer? Karina. She is the registered person. Okay. So what is this point telling? What is that point telling? Now, in this case, she has actually not received the goods or services. So can she take input tax rate? Lawmaker says, yes, you can take input tax rate because you will fall under exception. What is that exception telling, son? Exception says, if on the direction of registered person, supplier delivers the goods to a recipient. If on the direction of registered person, supplier is delivering goods to a recipient, it will be deemed that the registered person has received the goods or services once it is received by the recipient. Meaning, if on the direction of Karina, Priya supplies the goods to Anushka, then it will be deemed that Karina has received the goods once it is received by Anushka. So because it is deemed that Karina has received the goods, she can take input tax credit. Okay, so registered person who wants to take input tax rate should be in possession. He should be having the tax invoice, debit note or any the tax paying document. He should have actually received the goods or services. However, exception is that bill to ship to concept. Then the supplier should have paid the taxes to the government. And he, in the sense, registered person should have filed the returns. He should have filed the returns for taking the input tax rate. The registered person can take input tax rate if, now please note, this is a fantastic point. Newly added conditions. These two are AA and BA is newly added. Registered person can take input tax credit if the details of the supplies are furnished by the supplier in his GSTR1 and the same has been communicated to registered person. Meaning, say for example, Priya Sadis, Karina Sadis. I am the supplier, Karina is the recipient, registered person. Now, I have supplied goods worth rupees 10 lakhs to Karina. Now, for these goods, Karina can take input tax rate if I have filed my GSTR1. Now, please note, I will have to, for my sales, I will have to file a return called as GSTR1. Now, once I file my GSTR1, that information will go in GSTR2A and 2B of Karina Sadis. It will go to GSTR2A and 2B of Karina Sadis. So, when it goes in this, meaning when it is reflecting in GSTR2B, that means I have communicated the information to Karina. Only when it is reflecting in GSTR2B, Karina can take input tax credit. Now, meaning if I have not filed my GSTR1, Karina, the details will not be communicated. Karina will not be able to take input tax credit on that invoice. So, new condition. Registered person can take input tax credit if the details of supplies are furnished by the supplier in his GSTR1 and the same is communicated to the registered person in his GSTR2B. Details of input tax communicated to the registered person should not be restricted. Next condition, one more new condition is whatever details are communicated to, that communicated details should not be restricted. Now further, sir, what if I receive the goods
or services in installment. Provided that where the goods or services are both are received in lots or installment, ITC can be taken upon receipt of last lot or last installment. Provided further that if the recipient does not make the payment to the supplier within 180 days, if the recipient is not making the payment to the supplier within 180 days from the date of invoice, then ITC taken earlier will be reversed, is required to be reversed. Whatever input tax credit you have taken, that is required to be reversed along with 18% interest. Interest at 18% will be charged. Now, with respect to that interest, there is one more small amendment. If you see over here, say I purchased the goods on this date, I was supposed to make the payment in 180 days. 180 days gets completed on 27th of September, but I made the payment on 20th December. Now interest is required to be paid by me. I have reversed the input tax credit on 20th of October. Interest will be paid from the date of taking the credit till the date of reversal of credit. Interest will be paid on what amount, sir? Interest will be paid on the tax amount, which is 12,000 rupees. At what rate, sir? 12,000 rupees tax amount at 18%. And for how many days, sir? Interest will be paid for the period from taking the credit till your reversal of credit, till the date of, from the date of taking credit till the date of reversal of credit. So it is 158 divided by 365. Now, sir, what if I have made part payment? Now, new amendment is with respect to, not an amendment, clarification. If you have made part payment, then you should reverse only the ITC on the other part which you have not paid. Assuming 1 lakh rupees was the invoice value, I have paid 60,000 rupees. So 40,000 you have not paid, no. 40,000 you have not paid, no. In this case, for 40,000 rupees only, for 40,000 rupees only, you will have to on this 40,000, whatever is the tax amount. How much the tax amount comes? 4,800 rupees. Only this 4,800 you will have to reverse along with interest. Then section 16 subsection 3. Section 16 subsection 3 talks about what, sir? Input tax credit on capital goods. Sir, can I take input tax credit on capital goods? Answer is 100% yes. You can take input tax credit on capital goods if you have not claimed depreciation on the tax component of capital goods. Where a registered person, so what is the section telling? Section 16.3, where a registered person has claimed depreciation on tax component of capital goods, then he will not be able to take input tax rate on such capital goods. So if you are taking depreciation on the tax amount of capital goods, you will not be allowed to take input tax credit. Now, what is the last date for taking input tax credit, sir? The last date for you to take input tax credit is 30th November. Again, this is important for your MCQs. Very important question. The last date for taking input tax credit is 30th November of next financial year, or date of filing annual return for that financial year, whichever is earlier. 30th November of next financial year, or date of filing annual return for that financial year, whichever is earlier. Okay, this is the last date for taking input tax credit. Next, section 17. Section 17 talks about what, sir? Section 17 talks about apportionment of input tax credit and block credit. Section 17 talks about what, sir? Apportionment of input tax credit and block credit. Section 17 talks about apportionment of input tax credit and block credit. Apportion means what, sir? You are dividing your input tax credit, and what are the different items on which you cannot take input tax credit at all. What is block credit? Section 17 subsection 1. Where the goods or services are both are partly used for business purpose and partly used for any purpose other than business, then ITC shall be restricted to so much of input tax as attributable to business purpose. Meaning, what is this point telling? Where you are using any goods or services partly for business purpose and partly for personal purpose, any purpose other than business, then ITC will be given only for business purpose. Meaning, for example, I have an iPad on which I have paid a GST of 18,000 rupees. 80% of the time I am using for business purpose. So 18,000 into 80% is the ITC which will be given to me. Whatever amount is coming as, that amount ITC will be given, and 20% ITC will be reversed. Then section 17 subsection 2, ITC on goods or services used are both used partly for taxable purpose and partly for exempt supplies. Now please note, apportionment will happen only when the goods or services are used partly. So where the goods or services are used partly for making taxable supplies and partly for making exempt supplies, ITC will be given to only so much part as used for taxable supplies. Meaning ITC will be restricted to so much of input tax as attributable to taxable supply. Say for example, my taxable supplies is 100, my exempt supply is 20. So my total supplies became 120. I have input tax credit of 60,000 rupees. Total input tax amount is 60,000. Now I will not get entire 60,000. I will get only for taxable amount. How will I get that? Take total input tax credit into taxable supply divided by
exempt supply. Whatever amount is coming, that will be given to me as credit. Now please note, in short I'll tell you, if I'm using goods only for business purpose, I can take full input tax credit. If I'm using only for personal purpose, no input tax credit at all, because section 16 subsection 1 basic condition is that you should use it for business purpose. Then if you're using partly for business purpose, partly for personal purpose, then proportionately you can take input tax credit. That is what apportionment is telling you. If you are using only for taxable supplies, take ITC. Using only for exempt supplies, don't take ITC. If you're using partly only for zero rate supply, take ITC. If you are using partly for taxable and partly for exempt, you cannot take input tax credit. Then section 17 subsection 3 talks about exempt supplies. Exempt supplies under section 17(2) shall also include supply liable for revert charge. Now please note, here we have studied about exempt supply. What is exempt supply? Normally exempt supply which are wholly exempt supplies, which are nil rated and includes non-taxable supplies. But they are telling, for the purpose of 17(2), exempt supply shall also include these 4 things. What 4 things are? Supply liable for reverse charge, sale of land, sale of building subject to para 5B of schedule 2, and transaction in securities. And transaction in what, sir? Securities. Section 17 subsection 4. Apportionment of input tax credit for banking company financial institution. Normally they will not ask you this question because it is very easy. For a banking company financial institution NBFCs, they may, instead of following section 17 subsection 2, they can directly follow 17(4). See, for banks, no, majorly their income will be interest income, which is an exempt income. So if you have exempt income and taxable income, you will have to follow 17(2). But for banking company financial institution NBFC, they have given one more option to follow 17(4). What happens in 17(4)? So 17(4) says, instead of following 17(2), you can directly follow 17(4), wherein you take 50% of eligible input tax credit. Whatever your total eligible input tax credit is there, take 50% of that, and balance 50% shall lapse, provided that option 1 exercised. Once you follow this option, you should follow the same thing for full financial year. Option 1's exercise should be followed for the entire financial year, and this restriction of 50% shall not be applied for supply made to same registered person having same PAN. Meaning one bank is giving services to another bank and they both are same bank. Next is one of the most important part. Section 17 subsection 5. Most important section. Block credit. What are the different cases, or what are the different goods or services on which I cannot take input tax credit? What are the different goods and services on which input tax credit cannot be taken by me? This is what's a blocked credit. What are the different goods and services on which input tax credit cannot be taken by me? Block credit, section 17 subsection 5. What are the different input tax credit, what are the different inward supply which I make on which I cannot take input tax credit? Section 17 subsection 5 talks about block credit. Section 17 subsection 5 talks about what's a block credit. Section 17 subsection 5 says the credit cannot be taken on motor vehicle which is used for transportation of persons. If you are having any motor vehicle which is used for transportation of persons, you will not be able to take input tax credit. You will not be able to take input tax credit. Sir, which motor vehicle? Sir, motor vehicle which is used for transportation of persons having seating capacity not more than 13, meaning if it is a less than 13 seater, including driver seat, if it is less than 13 seater motor vehicle, you will not be able to take input tax credit. Now please note, motor vehicle which is used for transportation of person, you cannot take input tax credit. Motor vehicle can be divided into 2 categories. Motor vehicle is used for transportation of goods or transportation of persons. If motor vehicle is used for transportation of goods, definitely you can take input tax credit. If motor vehicle is used for transportation of person, then see the seating capacity. If it is transportation of goods, always take input tax credit. If it is transportation of persons, then see the seating capacity. Seating capacity is less than or equal to 13, then ITC is normally not allowed. Normally you cannot take input tax credit. However, if the seating capacity of that motor vehicle is more than 13, then you can take input tax credit. ITC will be given to you. You can take input tax credit. Now, sir, seating capacity means what, sir? Including the driver seats, you should take. If it is more than 13, ITC is allowed. Less than 13 or equal to 13, ITC is not allowed normally. However, if it is less than 13, then also I will give you input tax credit if that motor vehicle you are using for further supply, meaning I am a dealer of motor vehicle or I am in the business of renting of motor vehicle. So I am using that motor vehicle for further supply. Or if I am giving you training in motor vehicle, I am driving school, etc. Or I am in the business of transportation of persons. I am Ola, any bus, SRS travels, BMTCs, etc. Then in such cases I can take input tax credit. Sir, are there any other things on which ITC cannot be taken? Yes, on vessels and aircrafts. On aeroplanes, ships, yacht, etc. You can yacht, etc. You cannot take input tax credit. Vessels and aircraft, ITC cannot be availed on vessels and aircraft. However, ITC shall be allowed on vessels and aircraft
if it is used for further supply of vessels and aircraft, training in vessels and aircraft, transportation of persons and transportation of goods. Now, sir, I understood that motor vehicle, vessels and aircraft I cannot take input tax rate. Sir, what about service cost, repairs cost, insurance cost on this motor vehicle, vessels and aircraft? Can I take input tax credit on that? Normally ITC cannot be taken on these items also. So on motor vehicle, vessels and aircraft, whether you purchase or you incur service cost, repairs cost, insurance cost, you cannot take input tax credit. However, input tax credit will be allowed to you for the service cost, repairs cost, insurance cost if that motor vehicle, if on the purchase of that motor vehicle input tax credit is given. Meaning at the time of purchase of motor vehicle, if say for example, if I purchase the motor vehicle and use it for transportation of goods, is ITC allowed for that motor vehicle? Yes. Then for this motor vehicle, service cost, insurance cost and repair cost also will be allowed as deduction. It will be allowed as deduction. Similarly, if you are a manufacturer of motor vehicle, vessels and aircraft, or you are a general insurance company, then also service cost, repairs cost and insurance cost deduction, the ITC on that will be allowed to you. Sir, are there any other items on which input tax credit is not allowed? 100% yes. Which are those different items, sir? These different items are foods and beverages. You cannot take input tax credits on food and beverages, outdoor catering. Women's Day celebration is happening at my office. I am taking outdoor catering services. I am taking beauty treatment services, health services, or cosmetic surgery or plastic surgery, or leasing, renting, hiring of motor vehicle, vessels and aircraft, life insurance, health insurance, etc. On all these things, I cannot take input tax credit except when it is used for same line of business. Except when it is used for same line of business. Meaning what, sir? Say for example, I am a restaurant taking services from another restaurant. So I am taking services from same line of business. We are in same line of business. I can take input tax rate. Normally for restaurant services, foods and beverages, outdoor catering, ITC cannot be taken. But if you are in same line of business, ITC will be allowed. For beauty treatment, ITC will not be allowed to be taken by you. For healthcare services, for me being very fit, physically healthy, it is very important for me. So I take healthcare services. I cannot take input tax credit. Plastic surgery, cosmetic surgery. For me, looking good is very important. Say for example, Priya Sarees is there. No, Priya Sarees. Priya Sarees has brand ambassador. Priya is the brand ambassador of Priya Sarees. So for her, looking good is very important. So I incur 1 lakh rupees per day as her beauty treatment services. Can I take input tax rate? Answer is no. Leasing, renting, hiring of motor vehicle, vessels and aircraft, ITC cannot be taken. Life insurance, health insurance, ITC cannot be taken. If you are taking membership of any club, health center, fitness center, ITC cannot be taken by you. Similarly, if you are giving any travel benefits to your employees, ITC cannot be taken by you. Now, in all these cases, in all these three cases, ITC will be allowed. In all these three different cases, ITC will be allowed if it is a statutory obligation on the employer to provide the same to employee. If there is a statutory obligation on the employer to provide the same to employee. Sir, what do you mean by this, sir? Oh, sir, what do you mean by this? If there is a statutory obligation on the employer to provide the same to the employer. Meaning, say for example, normally I have a factory. In my factory, I supply food to my employees. So I take services from some restaurant, local restaurant, for supply of food in my factory. Now, in this case, whatever GST that local restaurant is charging me, I cannot take input tax credit. But however, let us say that I am supplying food at the factory. I am supplying the food in that factory, in my factory, because Factories Act is telling me to supply food. Now there is a statutory obligation on me to supply food. Therefore, now I can take input tax credit. Similarly, I am taking life insurance of my employees. Normally, ITC will not be given. But there is a law telling, Mr. Dilip, you should take life insurance for your employees. Now, to follow that law, I am taking life insurance services or health insurance services. Now I can take input tax credit. Similarly, what are the different things on which ITC is not allowed, sir? Works contract service or any goods or services used for construction of immovable property, ITC cannot be taken other than plant and machinery. If that immovable property is a plant and machinery, then any goods or services or works contract services taken for that will be allowed. Goods or services are both which is received by non-resident taxable person except the goods imported by him. Any person from outside India, if he is coming to India and doing business in India, occasionally he will be called as non-resident taxable person. When he comes to India, he will purchase different types of goods and services. Whatever type of goods and services he is procuring, on that he will not be allowed to take input tax rate. Goods or services are both on which tax is paid under section 10. If you are if you are a composition dealer, you cannot take input tax credit, obviously. And if you purchase from a composition dealer, then also ITC cannot be taken. If you are using any goods or services or both for personal consumption, ITC cannot be taken. Goods lost, destroyed, stolen, written off or disposed as by way of gift or free samples, ITC cannot be taken. And goods or services are both on which tax is paid under section 74, 129, 130, which is fraud cases, etc. ITC cannot be taken by you. So these are the different things on which ITC cannot be taken by you. Next is what, sir? Input tax credit in special circumstances. Array, wait. Section 18 talks about what, sir? Input tax credit on special circumstances. Section 18, ITC on special circumstances. Section 18 subsection 1 clause A, B, C, D. So section 18 has totally 6 subsections. Section 18 1, 2, 3, 4, 5, 6. Most important is 18.1 and 18.6. These two are very, very important, and sometimes it is 18.3, but mostly it will be for final levels. But 18.1 and 18.6 is important for intermediate level. Now, ITC in special circumstances. What will happen to your input tax credit in special circumstances? So they have given some special circumstances. In these special circumstances, what will be happening to your input tax credit? Section 18 subsection 1 clause A, B, C, D. Subsection 1 has totally 4 clauses. Okay. So what is the first circumstances? If a person who is liable for registration has applied for registration, now I am a person who is liable for registration and I apply for registration within 30 days of becoming liable, then in such cases, lawmaker says I can take input tax credit on whatever inputs I have, whatever stock is there, whatever inputs I have 1 day prior to the date of liable for registration. So if I am a person who is liable for registration and I have applied for registration within 30 days and that registration is granted to me, then I can take input tax credit on whatever inputs I have, whatever stock I have 1 day before date of liable for registration, 1 day before the date of liable for registration. Then if I take voluntary registration, sir, if a person has applied for voluntary registration and that registration has been granted to him, he will be allowed to take input tax credit on all the inputs held in stock by him 1 day prior to the date of grant of registration. So please note, if I take registration on voluntary basis, whatever inputs is there 1 day before the date of grant of registration, I can take input tax credit. But if I take input tax credit, if I take registration because I am liable for registration, I will be allowed to take input tax credit on all the goods or services or both which is held by me, which is there with me, on all the goods or services or both which are available with me as 1 day prior to the date of liable for registration. There is a difference between liable for registration and grant of registration. Liable for registration means I am taking registration because I am supposed to take. Voluntary registration means I am taking registration because of my own willingness. Section 18 subsection 1 clause C, composition dealer. Composition dealer, section 18 subsection 1 clause C says composition dealer. Composition dealer becomes regular dealer. Now a composition dealer is converting himself to a regular dealer. When he was a composition dealer, he cannot take input tax credit. Now because he is becoming a regular dealer, he will pay tax at normal rates. Now because he is paying tax at normal rates, can he take input tax credit? Lawmaker says yes, you can take input tax credit. Where a registered person under composition scheme converts himself to a regular scheme. So if you are a person who is registered under GST law and you are registered as a composition dealer, converting yourself to a regular dealer, you will be entitled to take input tax credit. You will be entitled to take input tax credit on stocks, that is inputs, as well as on capital goods. On inputs held 1 day prior to the date of change, on inputs held 1 day prior to the date of change, as well as on capital goods. For capital goods, you can take input tax credit by reducing the ITC amount on that capital goods by 5% per quarter or part thereof. Reduce the ITC amount by 5% per quarter or part thereof. Sir, this reduction should be done from the date of purchase of that capital goods till the date of change. So, for example, the ITC on capital goods is 18,000 rupees. Assuming I purchased it on, in this question, which I have drawn over here, I purchased it on 1st of April and the change happened on 10th of December. So, how many quarters are over, sir? 3 quarters are over. Say 18,000 minus 5% into 3 quarters will give me 15,300 rupees ITC can be taken by me. Then section 18 subsection 1 clause D, registered person's exempt supply is becoming taxable supply. So if a registered person exempt supply is becoming taxable supplies, in such case also ITC can be taken. Now where a registered person's exempt supply becomes a taxable supply, he shall be entitled to input tax credit on inputs held in stocks as well as on capital goods held 1 day prior to that change. Same method as what we have done in previous case. On inputs, whatever inputs you have into tax rate, you can take input tax rate. On capital goods, reduce it by 5% per quarter or part thereof from the date of purchase till the date of change. Now section 18 subsection 2. What? See, section 18 subsection 1 we studied. Section 18 subsection 4. Section 18 subsection 1 we studied 2 things. One is composition dealer is becoming a regular dealer or exempt supply is becoming taxable supply. Sir, what if ulta is happening? When composition dealer is becoming regular dealer, I am giving you input. I am giving you the input tax rate. When exempt supplies becoming taxable supplies, I am giving you input tax rate. What will happen if it is ulta, sir? So if registered person, if a regular dealer becomes a composition dealer, or if taxable supplies becomes exempt supply, do ulta of what you have done above, meaning reverse the input tax rate. In the above case, I gave you input tax rate. Now you reverse the input tax rate. Section 18 subsection 2 says, under section 18 subsection 1, section 18 subsection 2 is applicable only for 18.1. Section 18.2 says, no input tax credit will be given to you under section 18.1 if the invoice is older than 1 year. If the invoice is more than 1 year old, then I will not give you any input tax rate under section 18 subsection 1. 18.3, whenever there is a change in constitution of business, partnership firm is becoming a proprietary firm, or a proprietary is becoming LLP, and partnership is becoming a public limited company, amalgamation, merger, demerger is happening. So whenever there is a change in constitution of business, meaning old company will go and new company is formed. So whenever there is a change in constitution of business by way of sale, merger, demerger, amalgamation, or death of a sole proprietor, with a specific provision of transfer of liability, and that change is happening with a specific provision that liabilities of old company also will be transferred to new company, then the unutilized input tax credit of that old company can be transferred to the new company. Then whatever unutilized input tax credit the old company had, it can be transferred to new company. Section 18 subsection 4 we discussed, that is ulta point. 18.5 talks about rules for 18.1 and 18.4. Now the rules over here if you see the computation mechanism, I have already shown over here. So this is given in rules only. This is given in rules. Now, most important in section 18 series is 18.6. This is where examination questions will be asked. 18.6. Now, my Priya Sarees. What is my business, sir? Priya Sarees business is selling sarees. For me, sarees will be what, sir? Sarees will be called as inputs. Therefore, for me, AC or computer or laptop, etc., they are all my capital goods. What are they? They are all my capital goods. Now, this capital goods, can I take input tax rate on this capital goods? Answer is yes. Now, sir, what if I sell this capital goods? See, sir, when I sell my sarees, because it is my inputs, I will have to pay the taxes. But, sir, my question to you is, what if I sell this capital goods? What if I sell this capital goods? Will I have to pay the taxes to the government? What if I sell capital goods? What if I sell the capital goods? If you sell the capital goods, because you have taken input tax rate, you will have to pay the taxes to the government. Now, who is telling? 18.6 is telling. 18.6 says, supply of capital goods or plant and machinery. In case of sale of capital goods or plant and machinery, the tax to be paid shall be this much, or the ITC which you are supposed to reverse shall be this much. Now, in case you are selling a capital goods or plant and machinery, you will either have to pay the tax or reverse. If you have input tax rate available with you, you please reverse the input tax rate. How much tax you will have to pay, sir? The tax calculated on transaction value as per section 15, or take the ITC on that capital goods or plant and machinery, reduce it by 5% per quarter or part thereof from the date of purchase till the date of sale. I'll repeat. Section 16 subsection 1 says, section 18 subsection 6 says, if you are transferring a capital goods or plant and machinery, you will have to pay the taxes to the government, or if you have tax amount with you, please reverse the tax. How much tax I will have to pay? Tax calculated on transaction value, meaning whatever selling price of that capital goods or plant and machinery is there, into the tax rate applicable for that product, or whatever input tax rate or ITC availed on that capital goods or plant and machinery. Whatever input tax rate you have taken, that input tax rate please reverse. Please reduce that input tax rate by what percentage? Please reduce that input tax rate by 5% per quarter or part thereof. So I should reduce this input tax rate on that capital goods or plant and machinery by 5% or part thereof. From which date to which date? From the date of taking the input tax rate, that is from the date of purchase till the date of sale. Now compare both of them, tax on transaction value or this reversal amount, ITC amount which you have got, whichever is higher, this is the amount which you have to reverse. Compare both of them, whatever is higher you will have to reverse. For example, let me give an example for this because it is important. Say for example, I purchased a Tata Ace. This is a capital goods for transportation of goods of Priya Sarees. For 10 lakh rupees, 18% GST, 1,80,000 is the GST which I paid. I purchased this on 1st of April 2022. I sold this tempo for 8 lakh rupees on 30th June 2023. Now, what is the tax I should pay to the government as per section 18 subsection 6, or what is the ITC which is required to be reversed by me. Now, what is the sale price? So tax on transaction value. What is the sale price? 8 lakh rupees into 18% of that comes to 1,44,000. So this is the tax on transaction value. Tax on transaction value, or ITC reduce it by 5% per quarter or part thereof from the date of purchase till the date of sale. Now, when did I purchase this? On 1st April 2022. When did I sell this? On 30th June 2023. For this period, what is? During this period, what is? For this period, what is? How many quarters are there during this period? So I'll calculate it from 1st of April. Please note, quarter is a period of 3 months starting from first day of a calendar year. 1st of April, April, May, June, June, July, August, September, October, November, December, January, February, April, May, June, July, August, September, October, November, December, January, February, March, then again April, May, June. So there are totally how many quarters, sir? 5 quarters. So you should reduce 5% per quarter. So for 5 quarters, how much will you reduce, sir? You will reduce 25%. So 1,80,000 minus 25% is 13,000, 1,35,500. Compare both of them. Who is higher? That you should reverse. Whichever is higher should be reversed by you. Whichever is higher should be reversed by you. Whichever is higher should be reversed by you. Now, apart from this, we have section 19, we have section 20, and we have section 21. Section 19, 20, and 21, very simple section. Section 19, 20, and 21, mostly it will be asked for final level, but still we will discuss once. Just a second. Section 19, section 20, and section 21. I hope you guys are enjoying this. I know the video will be very long, but you should watch this in parts. Only then you can take maximum advantage of this. Where is my... Ding, 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 ding. Okay. Where is my material? CMA GST material. Time of supply, input tax credit. Yeah. CMA. Now, section 19 talks about what, sir? Section 19 talks about input tax credit in case of capital goods. Input tax credit in case of job work, sorry. Input tax credit in case of job work. What will happen for input tax credit in case of job work? Job work means what, sir? I am sending my goods to someone so that he can do some work on those goods. For example, I am a person who is manufacturing cars. Okay, so the cars which are manufactured, normally the cars will be manufactured in white color only. Then these cars will be sent for painting purpose. Okay, so the person who is doing that painting is called as job worker. He is doing the job on my particular cars. And I will be called as what, sir? I will be called as principal. So I will be called as principal. He will be called as job worker. Now, this car are my stock. So let me call it as inputs. These cars are my stock. So sending of goods to job worker, it is not a supply, therefore no GST is required to be paid by you, because I am just sending for a job work, for doing a particular work on these goods. Now this job work is going to do the work and he will send it back to me. After doing that work, after doing the painting, see, he's painting these cars into different colors. After doing that painting, he's going to send back this car to me. Now job worker sends back to principal after completion of job work. That is also not a supply, therefore no tax is required to be paid. Okay, not okay. Now, what is this provision telling? What is this provision? Section 19 subsection 1 telling, whatever input I send to the job worker
on that input, I can take input tax credit. Whatever cars I am sending to the job worker, whatever paint I am sending to the job worker for painting these cars, on that I can take input tax credit. I can take input tax credit on them whether I directly send it to the job worker or I ask my painter. I ask my, say, I purchase this paint from someone. Okay. So I ask that fellow to give the paints directly to this job worker. Even in such cases, I will be eligible to take input tax credit. So the principal will be allowed to take input tax credit on inputs sent for job worker directly by him, or inputs are sent directly to the job worker from the supplier. Who can take input tax credit? Principal can take input tax credit. Now, principal will be able to take input tax credit. Principal will be able to take input tax credit on this input sent. However, there is a condition. This input should come back to the principal. After completion of job work process, they should come back to me. They should come back to me within 1 year. I will be allowed to take input tax credit, but they should come back to me within 1 year. If they don't come back to me within 1 year, then whatever ITC is taken by me should be reversed by me along with interest. So I can either get it back to me or I can sell it from his location only. I will sell it from job worker location. Some customer is there near job worker. I will sell it from his location. If I do that, then I can take input tax credit. Inputs within 1 year, they should either come back to me or I should sell it from his location. Sir, what if they don't come back to me within 1 year? If the goods are not returned or supplied from job worker location within a period of 1 year, then it will be deemed as supply. It will be deemed that I have sold the goods to him and I will have to pay the taxes. It will be deemed as supply on the date. The date of supply will be the date on which the goods were sent to the job worker. Principal will have to pay the tax on this along with interest. Now, this is for whom, sir? This point which I told was for inputs. What is this point telling? The principal is allowed to take input tax rate on input sent for job worker. Then principal is entitled to take input tax rate even on the inputs directly sent to the job worker for the purpose of job work. The input sent for job worker should come back within 1 year from the date of sending them, or else it will be deemed as supply. Same to same copy paste provisions are applicable for capital goods also. Now, first case, what did I send? I sent paints. Now, say for example, I am sending a machine for painting those cars. So in that case, capital goods I am sending. The principal can take input tax credit on inputs on capital goods sent to the job worker. Similarly, the principal can also take input tax credit on capital goods which are directly sent to the job worker without first bringing it to the job worker's location. However, this capital goods should come back within 3 years. For this capital goods, what is the time limit, sir? The capital goods should come back to the job worker within a time limit of how many years? Within 3 years. The capital goods sent to the job worker are not received within the time period of 3 years, then it shall be deemed as supply. So this capital goods should come back within 3 years, and inputs, normal inputs should come back within a period of 1 year. And this provision is not applicable to tools, jigs, molds, dies, jigs and fixtures, etc. Meaning all nut and bolt which are required for this. For that, it is not applicable. Next is what, sir? Section 20 and 21 together I will discuss. Section 20 talks about what, sir? Distribution of input tax credit. Distribution of input tax credit by input service distributor. Now, under GST law, we don't have a concept called a centralized registration. Under GST law, registration is required to be taken on each and every state where you are doing business. So each and every state where you are doing business, you will have to take registration under GST law. Therefore, there may be some branches you may have. There may be some type of registration in some states wherein you do not make any sales, but you have only purchases. So there you will have a input tax credit available with you, but no output tax. So this input tax will never be used by you. So what lawmakers are telling, do one thing. Take registration at that place as an input service distributor. So if you take registration as an input service distributor, what will happen, sir? You will be able to distribute that input tax credit amount to your different registrations throughout India. Now, distribution. How will this distribution happen, sir? For distribution, you will have to give a document called as input service distributor invoice. For distribution of input tax credit, you will have to give a document called as what's input service distributor invoice. Now, this distribution will happen only to that unit to which that input tax relates to. Meaning, I have taken services only for Bangalore unit, give the credit only to Bangalore unit. I have taken services for Bangalore and Chennai unit, give the credits to both Bangalore and Chennai unit. I have taken services for all the units which are there entire India, then give the credit to entire India. Now how do I distribute, sir? If ITC is attributable, if the input tax credit is attributable to a specific recipient, distribute it to only that specific recipient. If it is attributable to more than one recipient, then distribute it to them on pro rata basis. If it is attributable to all the recipients, then distribute it to them on pro rata basis. Sir, how is this pro rata basis calculated, sir? Now this ITC, take the ITC amount, multiplied by turnover of that recipient divided by total turnover of all those recipient. Now turnover should be as per of relevant period. Relevant period is preceding financial year. If turnover of preceding financial is not there, then turnover of last quarter. Turnover of last quarter should be taken by you. Sir, what if I this section 21 says if you do any excess distribution of credit under section 20, then that excess distribution should be reversed along with interest. If any excess credit is distributed, that excess credit should be reversed along with interest. So this is all about section 21. This is all about your input tax credit topic also. Now in your input tax credit topic, no, there is one more point, which is basically this point is from your topic called as payment of tax. There is a section called as section 49 subsection 5, which talks about manner of distribution of input tax credit. Very important, this is distribution of input tax credit. How do I distribute the input tax credit which is available with me? Section 49 subsection 5 says, if you have the credit of input tax credit and you have, see, for example, this side is my credits and this side is my payments. So if you have the credit of input tax credit, if you have the credit of input tax, you can first use it for payment of IGST. If you have IGST credit, you can first use it for making the payment of IGST. Then whatever is left over, use it for making the payment of CGST or SGST. Use it for making payment of CGST amount and SGST tax amount. There is no proper mechanism how should I use, sir. Say for example, 100 rupees I have to pay IGST, 100 rupees I have to pay CGST, and 100 rupees I have to pay SGST, and I have a credit of 250 rupees. So what will I do? First I will pay IGST. What is left over? 150 rupees is left over. Now this 150 rupees I should give it to CGST and SGST. How should I give, sir? However you want. Give entire 100 to CGST, give only 50 to SGST, or give entire 100 to SGST, give only 50 to CGST, or give 75 in whatever proportion you want, you can distribute. So IGST credit should first be utilized for paying IGST, then it can be utilized for making the payment of CGST and SGST in any proportion. What is the basic funda? First, IGST amount which is there, that should be completely gone. It should be completely exhausted. After that you can go to CGST. Now CGST credit should first be utilized for making the payment of CGST, and if anything is left over, you can use it for making the payment of what, sir? IGST. But CGST can never be used for making the payment of SGST. Similarly, SGST can be used for making the payment of SGST. First you should use it for making the payment of SGST, then you can use it for making the payment of IGST. It can never be used for making the payment of CGST. So this is the manner of distribution of credit. CGST and SGST credit will be utilized only if there is no credit available in IGST. CGST will never be used for making the payment of SGST, and SGST will never be used for making the payment of CGST. CGST will pay IGST only if, SGST amount can be used for making the payment of IGST only if CGST is not able to pay IGST. Meaning, you can use SGST amount for paying IGST only if CGST amount is completely exhausted. There is one question which I have solved for better understanding of this above concept, and then starts our procedural aspects. Let us continue our discussion. So procedural aspects are starting now. So nice topics these are. Scoring topic, but theoretical topic. Okay, so the first chapter, again, this is one of the most important chapter in theoretical topics. No, most important topic is your registration. Other topics are, say, weightage will be around 2 marks for other topics, but this chapter can come for almost 4 marks. Okay, so let us start our discussion. Registration, section 22 to section 30 talks about registration. Section 22 talks about what, sir? A person who is liable for registration. Who is the person who is liable for taking registration under GST law? Section 22 subsection 1 says the supplier of goods or services is liable to shall obtain registration in that state or union territory from where he makes taxable supply of goods or services if his aggregate turnover crosses 20 lakh rupees. Now, who has to take registration, sir? Point number 1. Who has to take registration? Supplier of goods or services has to take registration. Where should he take registration? In that state or union territory where he is making taxable supplies. In that state or union territory from where he is making taxable supplies. When he has to take registration, if his aggregate turnover exceeds 20 lakh rupees. This limit will be 10 lakhs in case of 4 special category states. Which are these 4 special category states where the limit is 10 lakhs? Manipur, Mizoram, Tripura, Nagaland. Meaning, make my trip to Nagaland. Manipur, Mizoram, Tripura, Nagaland. For these 4 special category states, the limit is how much? The limit is 10 lakhs. The limit is 10 lakhs. And I hope you know that if you are doing business in special category states, for entire India, the limit of special category states will apply. Now, there is a notification called as notification number 10/2019, which gives you exemption from taking registration. Meaning, they say you don't have to take registration up to some limit. What is this point telling? Any person who is engaged in exclusive supply of goods, if you are a person who is exclusively supplying goods and your aggregate turnover does not exceed 40 lakh rupees. If you are exclusively supplying goods and if your aggregate turnover does not exceed 40 lakh rupees, if you are supplying only goods, exclusively supplying goods means if you are supplying only goods and your aggregate turnover does not exceed 40 lakh rupees, you will be exempted from taking registration. In simple words, if a person is supplying only goods, in simple words, what, sir? If a person is supplying only goods, if a person is supplying only goods and his aggregate turnover is up to 40 lakh rupees, he need not take any registration under GST law. However, there are some conditions which you have to follow. When you get some benefit, extra benefit, 20 lakhs is the normal limits, but this notification says you don't have to take registration up to 40 lakh rupees. So if you are getting some benefits, there are some conditions attached to it. So what are the conditions? Above notification shall not apply to these people. Whom shall it not apply? A person who is required to take compulsory registration under section 24. So if you are liable to take compulsory registration under section 24, for you this provision is not applicable. A person who is supplying notified goods, that is pati bricks, pan masala, aerated waters, tobacco and tobacco products, then ice cream and bricks, roofing tiles, etc. If person who is supplying in notified states, so if you are making a supply in num must time pass notified state, what is this num must time pass, sir? If you are doing business in these places, then for you the normal limit of 20 lakhs, 10 lakhs will be applicable. Num must time pass means Nagaland, Uttarakhand, Manipur, Meghalaya, Mizoram, Arunachal Pradesh, Sikkim, Tripura, and 2 states newly added is Telangana and Puducherry. So if you're doing business over here, you cannot take, you will not get the limit of 40 lakh rupees. And a person who has opted for voluntary registration. So if you have taken voluntary registration to GST law, for you also this provision shall not apply. Section 22 says, if you are a person who were registered under pre-GST law, under GST law also you will have to take a registration, not relevant. Then section 22 subsection 3 says where the business of a taxable person who is registered under GST law. So if you are a taxable person who is registered under GST law and your business is transferred due to succession or otherwise, if your business is transferred due to succession or otherwise as a going concern, then the transferee or the successor can obtain registration with effect from the date of transfer or date of succession. So if your business is transferred, amalgamation, merger, demerger is happening, if your business is transferred, then the new person to whom the business is transferred, he will have to compulsory take registration under GST law. Now section 22 subsection 4 says, notwithstanding to anything contained in 22.1 or 22.3. So not following what is there in 22.1 or 22.3, if there is a change in constitution of business, if there is a transfer of a business because of high court order, if there is a transfer of business due to amalgamation, merger, demerger, etc. by an order of high court, then in such cases the transferee shall obtain registration. Transferee shall obtain registration from the date of certificate of incorporation of new entity, from the date of incorporation. That is a person who is liable for registration. Now, sir, who are the persons who are not liable for registration? The persons who are not liable for registration are those people who are making only exempt supplies. If you are making only exempt supply, what will you do with the registration? Because your supplies are not taxable, what will you do with the registration? A person who is making non-taxable supplies. So if you are supplying alcoholic liquor for human consumption, if you are supplying HP man, you don't have to take registration. An agriculturist who supplies produce out of cultivation of land.
Who is an agriculturist? An individual or HUF who is having an agricultural land, who is doing agricultural activity over there and is supplying whatever is produced by him out of cultivation of land. Now, there are few other people whom, when we read section 24, you will understand that these are the other people who are not liable to take registration. Who are the other people, sir? A person who is making interstate taxable supply of services up to 20 lakh rupees. A person who is making interstate supply, taxable supply of services up to 10 lakhs or 20 lakh rupees. Or a person who is making taxable services, supplying taxable a person who is making supplies which are taxable under reverse charge. So if I am making a supply on which you as a recipient have to pay the taxes, then what will I do with the registration? Because it is you who have to pay the taxes. Then a person who is making interstate supply of notified handicrafted goods, and a person who is supplying through an e-commerce operator, and a person who is making supply of services through an e-commerce operator up to 10 lakh, 20 lakh, he does not have to take registration. Section 24, again a nice section. Section 24 talks about compulsory registration. So who compulsory registration? Who are the different people who are required to take compulsory, who should compulsory take registration under GST law? Who are these persons, sir? Person making interstate taxable supply of goods or services. Who are the people who are required to take compulsory registration, sir? Those who are making interstate taxable supply of goods, not services. Those who are making interstate supply of goods. Please note, if I am supplying within my state, no problem, I can take a limit of 40 lakh rupees. If I am supplying within the state, I can take limit of 10 lakh rupees or 20 lakh rupees. But if I am making interstate supply, compulsorily, even 1 rupee sale I make, I will have to take registration. Interstate supply of goods only. Services, limit of 10 lakh, 20 lakhs is applicable. If you are a casual taxable person making taxable supplies, if you are a casual taxable person making taxable supply of goods, for services you can take limit, but for goods there is no such limit applicable. For persons who are liable to pay tax under reverse charge, I told you I am the person who is supplying services which are taxable under reverse charge, or I am supplying goods which are taxable under reverse charge. You being the recipient, you will have to pay the taxes under reverse charge. So you can pay the taxes only if you are registered. Non-resident taxable person who is making taxable supplies. E-commerce operator is required to collect the tax under section 52. You will have to take registration. A person, e-commerce operator is required to pay the taxes under section 9 subsection 5. A person who is required to deduct TDS under section 51. These are different people who are required to take registration under GST law compulsorily. And if you are an input service distributor, you should also take registration under GST law compulsorily. If you are an OIDAR service provider, online information database access and retrieval service provider, then you also will have to take registration under GST law compulsorily. If you are an agent supplying goods on behalf of another person, supplying services on behalf of another person, and that supply is a taxable supply, then you being an agent should take registration under GST law compulsorily. And such other people has may be notified by the government. They will all have to take registration. Then section 25. Section 25 talks about what's the procedure for taking registration under GST law. What is the procedure for taking registration under GST law? Section 25 says if you are a person who is liable for registration, you should apply for registration within 30 days. If you are a casual taxable person and non-resident, you should apply for registration within how many days? 30 days. If you are a casual taxable person or non-resident taxable person, you should apply for registration 5 days before commencement of business. When should a casual taxable person or non-resident taxable person apply for registration? 5 days before commencement of business. Normally, single registration will be given for entire state or union territory. But however, if you have multiple types of business, then you can multiple types of business, or if you have business as multiple locations, then you can apply for more than one registration. However, if a person has concerns or units in SEZ, then he should compulsorily obtain separate registration for that SEZ unit. So for DTA means domestic tariff area, and SEZ units, SEZ location. So if you have business in domestic tariff area, for all of them you can take one registration, and if you want separate registration, then also you can take. But for SEZ compulsory, you will have to take a separate registration. If you have a business, say Priya Sarees is there in domestic tariff area and in SEZ area. For SEZ compulsory, I should take a registration separately. For this domestic tariff area, I can combine and take one single registration for all the units. Then person can apply for registration on voluntary basis even though he is not liable. Section 22 subsection 3 says a person who is not liable for registration can also apply for registration on voluntary basis. 25.4 and 25.5 we have discussed under supply topic, which talks about what's a deemed distinct person. Then for taking registration under GST law, what is required, sir? PAN card is required. PAN is required. If you're taking registration as a TDS person or TCS person instead of PAN, you will have to submit a document called as you will have to give your TAN, tax identification number, tax collection and deduction identification number. PAN is permanent account number. A non-resident taxable person will not be having PAN, so for him other documents have been specified for taking registration. Sir, which are these other documents? He will have to give his passport, self-attested passport copy. Then he will have to give tax identification of number of that country from where he's coming, and he will have to appoint a person in India who has a valid valid PAN as his authorized representative. Then see, proper officer will give you registration only after verifying your application. If he feels that all the documents are correct, everything is correct, then only registration will be given. Normally registration you will get, once you are a registered person, you will get something called as GSTN, but for unique identity holder they will get something called as unique identity number. For example, UNO, foreign embassies, etc., they will get something called as UIN, unique identity number. Normal businessmen will get something called as GSTIN, goods and service tax identity number. Registration will be given only after proper verification of your document. Section 26 talks about deemed registration. Meaning what, sir? Section 26 says if you are registered under CGST Act, it is deemed that you are registered under SGST Act. If you are registered under SGST Act or under IGST Act, it will be deemed that you are registered under CGST Act also. Now let me just tell you what is the procedure for taking registration. The application for registration is form GST REG01 is the application for registration. It basically has two parts, part A and part B. Part A, you give your basic details. Part B, you give your business related details. Now once you file this application and you go for other authentication, you do another authentication, you will receive an acknowledgement number called as ARN, acknowledgement reference number. ARN number is called as what, sir? Acknowledgement reference number. Now once you have got this acknowledgement reference number, that means that the application has been forwarded to proper officer, that is GST officer. Now GST officer will within 7 working days, if he feels that everything is correct, he will grant you the registration. If he feels that everything is not correct, if he needs some extra clarification from you, he will give you a notice for clarification in GST REG02. Now once you receive this notice, within 7 days you will have to reply to that notice. Your reply should be in GST REG03, and once that reply is done within 7 working days, if he is satisfied, once your reply is done, if he is satisfied, he will give you registration certificate, or else he will reject your application by giving the reasons in writing why has he rejected your application. Now this is all about your registration process. Once you are registered, you will get a number called as GSTIN, goods and service tax identification number. This is a 15-digit identification number, wherein first 2 digit will be your state code, then next 10 digit will be your PAN number, then you have check, the last 3 digit is your checksum digit. So this is the procedure for registration. Now section 27 talks about what? Section 26 is done. Section 27 talks about special provision applicable to a casual taxable person or non-resident taxable person. A casual taxable person or a casual taxable person, non-resident taxable person means what, sir? Casual taxable person means a person who is doing business occasionally, casually at a place which is not his usual place of business. So for example, I normally teach at Bangalore. So I am teaching in Bangalore now. If I go to Chennai for 10-15 days and teach over there, if I go to Mumbai for 10-15 days and teach over there, I will be called as casual taxable person in Mumbai. I normally do my I normally do my business. What business, sir? I normally do my sari business in Chennai. Now if I go to where? If I go to say Mumbai for an exhibition and do business over there, then I will be called as casual taxable person over there. Casual taxable person means a person who is doing business occasionally at a place which is not his usual place of business. Non-resident taxable person means a person from outside India is coming to India and is doing business activity in India occasionally. Then he will be called as non-resident taxable person. Now both casual taxable person and non-resident taxable person will have to take registration 5 days prior to commencement of business. Now this registration will be valid for how many days, sir? The registration which is taken by them will be valid for number of days they have taken the registration, they have applied it for, or 90 days, whichever is less. Their registration will be valid for number of days they have applied, or 90 days, whichever is less. Sir, can they extend the validity? Yes, they can extend the validity for a further period of 90 days. And this extension will be valid for number of days they have applied for extension, or 90 days, whichever is less. Extension is possible only once. Now, this casual taxable person and non-resident taxable person is also required to pay taxes in advance at the time of taking registration. So they will have to estimate their total turnover. What is the turnover they are going to do by going at that location, and they will have to pay tax in advance before taking registration. Now, sir, if I take extension, for that extension period also you should pay taxes in advance. Section 28 talks about amendment in registration. Amendments are basically of two types: amendment in core fields and non-core fields. Amendment in core fields is like main important fields: your principal base of business, your name you're changing, owner details you're changing. Then that will be that amendment will happen only if it is approved by proper officer, and this approval should come within 15 days. Amendment in non-core fields, say for example you are adding additional place of business, there is authorized signatory change, etc. This approval will happen on immediate basis. Then section 29 talks about what's the cancellation of registration. Have I not written section 29? No. Okay, section 29 talks about what's the cancellation of registration. Section 29 talks about cancellation of registration. Now the registration can be cancelled by the proper officer, either by himself, or the registration can be cancelled by the registered person or the legal heirs of registered person in these situations. Which are the situations? When the business is discontinued, you are closing your business, when there is a change in constitution of business, or you are no more liable to become you're no more liable for registration, meaning you were doing business, you are having a turnover of 25 lakhs. Now the limit was increased by government to 40 lakhs. So you are no more liable to become a registration, or the supply which you are making were taxable. Now it became exempt. So in these three cases, registration can be cancelled by the officer or the registered person, or by whom, sir? Legal heirs of the registered person in case of his death. Now, section 29 subsection 2 gives the list of cases where registration can be cancelled only by the GST officer. Which are these cases? When the registered person has contravened the provisions of GST law, when the registered person is registered under section 10 as a composition dealer and has not filed returns for beyond 3 months, where the registered person is a normal registered person and he has not filed the return continuously for 6 months, where any person has taken voluntary business and he has not started the business for continuously for 6 months, and where the registration has been obtained by means of fraud, willful misstatement, or suppression of facts, registration will be cancelled by the officer. Next, section 29 subsection 3. Just because your registration is cancelled, that does not mean that your liability is discharged. If you are liable to pay some tax, etc., interest, penalty, late fee, then you will still have to pay those things. Then cancellation of registration under SGST Act is deemed that your registration is also cancelled under this act, which is CGST Act. Section 29 subsection 5. Once your registration is cancelled, many times it will happen that at the time when you are closing your business, you are cancelling your registration because you are closing your business. So whatever goods you have, that will be deemed as supplied by you. It will be deemed that you have sold those goods, and you will have to pay tax on these goods which are lying with you. So in case of inputs, whatever input tax credit was taken by you on purchases, you should reverse that credit. And on capital goods, you will have to reverse the credit as per section 18 subsection 6, meaning by 5% per quarter or part thereof, or sale value into tax rate. This is all about your cancellation of registration. Last is revocation of cancellation, section 30. Now here there is an amendment. Revocation of cancellation. They have increased that revocation period. Revocation of cancellation. They have increased that revocation period. Now the time limit for revocation of cancellation has been increased to 90 days. And it can be further extended to 90 days. See, normally, if the registration is cancelled by the GST officer, if the registration is cancelled by whom, sir? Proper officer, then I can apply for revocation. I can apply for what? Revocation. Now, this revocation time limit was only 30 days. Now they have increased from 30 days to 90 days. If the GST officer is cancelling your registration, then you can apply for revocation, and this revocation should happen within 90 days. And this can be further extended to a period up to 180 days. This revocation of cancellation, meaning officer has done the cancellation from his side. Now you are telling, please take back your cancellation order. You are telling officer to please take back cancellation order. Next topic is what, sir? Next topic is with respect to different documents under tax invoice, debit note and credit note. Very simple topic, very easy topic. Now, this chapter is divided into two categories. One is what is the due date and what are the different types of document. Due date for issuing tax invoice, the due date for goods and for services. For goods, if movement is there on or before removal, no movement is there on or before delivery. If it is a case of continuous supply of goods, successive payment date or successive statement date, whichever is earlier. In case of sale on approval basis, date of approval or 6 months from the date of removal, whichever is earlier issue an invoice. In case of services, normal cases on or before completion of services or within 30 days from the date of completion. This 30 days will be replaced by 45 days in case of banking company, financial institutions, NBFCs, etc. So this 30 days will be 45 days in case of banking company, financial institutions and NBFC, etc. Then what, sir? What are the different types of documents under GST law? The first type of document which we have is tax invoice. Tax invoice is required to be issued by a person who is making taxable supplies. How many copies of tax invoice is required to be issued by himself? In case of goods, issue 3 copies. One is for the supplier, one is for the recipient, and one is for the transporter who is going to transport the goods. And in case of services, only 2 copies. One is for the supplier and one is for the recipient. What are the contents of tax invoice? Name, address, GST number of the supplier should be there. Document number should be there. Date of issue of that document. Name, address, and GST number of the recipient. HSN code. Description of goods and services, quantity of goods and services, unique quantity code, whether meter, kgs, etc., rate or price per unit, value of supply, tax amount, then total invoice value including tax amount, whether GST is liable to be paid under revert charge or not, signature of the supplier and QR code. These are the different things which are required to be present in the tax invoice. These are the contents of tax invoice. Now, with respect to invoice number should be unique for every financial year. That invoice number should be consecutively serially numbered and it should not have more than 16 characteristics. Invoice number can be alphanumeric or it can be numerics. Invoice number should not have any special characteristics except / and hyphen or dash. HSN code, again, very important part. In the invoice, whatever invoice you are issuing, you should also mention HSN. You should also give HSN code details. HSN means what's our harmonized system of nomenclature. It is an 8-digit code which is used for classification of goods and services. Now, how many digits should I mention, sir? You said HSN is an 8-digit code. So, how many digits should I mention, sir? If your aggregate turnover is up to 5 crore rupees, for B2B supply you mention 4 digit. For B2C supply you mention 4 digit, but it is optional. But if your aggregate turnover is more than 5 crores, you should maintain 6-digit HSN code, whether it is B2B supply or B2C supply. Now, please note, no invoice is required to be given. No tax invoice is required to be given if you are making a supply to an unregistered person, value of supply is less than 200, and the unregistered person does not require any invoice. Instead of issuing the individual tax invoice, what you can do, issue a consolidated tax invoice. Instead of that, what you can do, sir, you can issue a consolidated tax invoice for all the supplies made to all these types of registered person. Meaning, if you are making a supply to an unregistered person and the value is less than 200 rupees and that unregistered person is not requiring any invoice, don't issue invoice to him. Because how many invoices will you issue? Instead of that, do the total of all these types of transactions and give one consolidated tax invoice. You issue one consolidated tax invoice. No signature will be required on tax invoice if it is a computer generated tax invoice. Next is with respect to e-invoicing. E-invoicing. What is e-invoicing, sir? E-invoicing is a system by which all the B2B transaction, registered person to another registered person, all the B2B transactions are authenticated electronically on the GST portal, GST Goods and Service Tax Network. You authenticate over there. What will happen, sir? Once you give the information about all the B2B supplies, they will give an identification number, which is called as invoice reference number, will be issued for every invoices by invoice registration portal to be managed by GSTN, which is run by whom, sir? GSTN. Who is required to generate invoices? Who is required to, very important, who is required to generate invoices? Sir, invoice is required to be generated by all those registered person, whose aggregate turnover in any of the preceding financial year. If any of the preceding financial year starting from financial year 17-18 exceeds 5 crore rupees. So if you are a registered person whose turnover in any of the years starting from 17-18 till date exceeds 5 crore rupees, then you will have to do invoicing provision. Who are the people who are not required to do invoicing, sir? Government departments will not have to do invoicing, or local authorities, cinema halls and multiplexes, passenger transport service provider, insurance company, banking company, goods transport agency, and SEZ unit. Basically, it is government. C picks government, then C for cinema halls, P for passenger transport, I for insurance company, G for goods transport agency, and S for SEZ units. These are the different people who are not required to issue any invoice. There is one format of tax invoice. Now, revised tax invoice. Next document is what, sir? Revised tax invoice. Revised tax invoice means what, sir? Revised tax invoice. Revised tax invoice is required to be issued for all the supply made from the date you are liable for registration till the date of grant of registration. Whatever supply is made by you during this period, for that supply you should issue a document called as revised tax invoice. This revised tax invoice is required to be issued within 1 month from the date of grant of registration. Next we have bill of supply. Bill of supply means what, sir? Bill of supply is required to be issued by those people who are making exempt supplies, or if you are a person who is liable to pay tax under section 10. So meaning basically they cannot collect any taxes, therefore they will issue a document called as bill of supply. Now if a person is making taxable as well as exempt supply, then he will have to give a document called as invoice cum bill of supply. Then we have receipt voucher. Receipt voucher, a registered person who receives any advance shall issue for supplying goods or services, he shall issue a document called as receipt voucher. Sir, when should he issue receipt voucher, sir? At the time of receipt of that advance. Now at the time of receipt of advance, he will also have to pay GST. If the tax rate is not known, take the tax rate to be 18%, and if the nature of supply is not known, treat the nature of supply as interstate supply. Then we have something called as a refund voucher. When you refund these advances which you have received, then at that time you will have to issue a document called as refund voucher. Refund voucher is required to be issued where any advance received for supply of goods or services is subsequently subsequently given back, meaning no supply has been made and no tax invoice has been issued for that supply. Then issue a refund voucher. Payment voucher. Payment voucher. Whenever I make a payment to those people from whom I have taken services liable to be taxed under reverse charge 9394. Now I am taking services from an advocate. His services are taxable under reverse charge under section 93. So when I make the payment to him, I will have to give something called as payment voucher. Then I have a document called as delivery challan, also called as Rule 55 challan. Delivery challan is required to be issued for when is it required to be issued, sir? For transferring liquid gas where the quantity at the time of removal is not known, for sending the goods to a job worker for any reasons other than supply. And delivery challan is the delivery challan which you are issuing. No, it should have it should be serial number not exceeding 16 characteristics. It can be in one or multiple series. It should be in 3 copies, etc. Now what is important is this: the delivery challan which is there. This delivery challan is required to be goods transported on semi knockdown condition or completely knockdown condition. In such cases, how many delivery challan you will issue? The supplier shall issue complete invoice before dispatch of first consignment. Meaning when you are transporting the goods in installment, what is the procedure I have to follow? First, issue a complete invoice before dispatch of first document. As and when each and every consignment is going, issue delivery challan for those consignment. Now this delivery challan should be attached or linked to the original invoice, and the original invoice will go with the last consignment. Apart from that, if you are a goods transport agency, you will have to issue a document called as consignment note. That consignment note which you are issuing, it should have the following content. What are the contents of this consignment note? It should have gross weight, name of the consignor, name of the consignee, registration number of the goods carriage in which the goods are going, details of goods which are transported by you, place of origin and place of destination of goods, GST number of the person who is liable to pay the taxes, and such other information as may be prescribed. Then with respect to these other people, a banking company can issue statement instead of giving invoice. A cinema halls can issue an electronic tickets instead of the actual tax invoice. And a passenger transport services provider can issue a normal ticket that only will be regarded as tax invoice. Then with respect to credit note and debit note, when is this credit note required to be issued, sir? Credit note is required to be issued if the very important credit note and debit note, when is it required to be issued? What are the situations? Where the taxable value declared on the invoice is more than the actual value of goods and services. When the tax rate declared in the invoice is more than the actual tax rate. When the quantity of the goods supplied by you is less than the actual quantity received, meaning that quantity received is less but declared in the invoice is more. When the quality of the goods or services are deficient, or when the goods are returned. In this situation, credit note will be issued. Time limit to issue is the credit note should be issued
whatever credit note is issued by you, that credit note should be declared by you in the GST return. You should declare in the same month in which it is issued, but not later than. Maximum time limit which is allowed to use 30th November of next financial year, or date of filing annual return for that financial year, whichever is earlier. Sir, what are the situations in which debit note can be issued? Please note only in 3 situations. Your accounting debit note which we have, which is for purchase return, that concept is not there under GST law. Only in 3 cases you can issue a debit note. One is where taxable value declared on the invoice is less than actual value. The tax rate declared in the invoice is less than the actual tax rates, and the quantity supplied is more than actual quantity. Now this debit note is required to be declared by you in the returns in the month in which this debit note has been issued by you. Here there is no, that extended time period is not there. Okay, let us do one thing. Let me stop my recording over here only. Let me stop my recording. I will continue the discussion in my next class, because there is some other teacher who has to take the class. Okay, so let us we'll continue the discussion. Let us take a short break. Hello friends, welcome back. So this is our last section for marathon. So let us continue our discussion and complete the discussion on marathon. I hope you have enjoyed all the videos which I have in all the different topics which we have discussed in this video. Now this just procedure aspect, some more topics are there, we'll discuss that. Before discussing this, let me just go through your institute material once. See, in your institute material, now please note, you should all be referring the latest edition. Now I have seen this material. Now if you see, there is a revised edition which they have given as on March 2024. So this is the material which you should be referring for your examination purpose, because this will have all the different types of amendments. Before that, it was only reprint, meaning whatever changes have been made in the law, they have not taken into consideration. Revision is very important. It is a revised edition as on 2024, meaning it contains all the amendments which are applicable for your examination. It will contain all the amendments which are applicable for your examination, both DT and IDT. It is very important. DT compulsory important, because the answering of the questions only will completely change because of the amendments. Whereas in case of GST, it will not have such huge impact in case of indirect taxes. Now, first we discussed about concepts of indirect taxes. Then we saw the goods and service tax law, wherein we saw introduction, levy and collection, basic concept of time of supply, place of supply, value of supply, input tax credit. Then computation of GST liabilities linked to input tax credit only. Then we have registration, tax invoice, debit note, credit note we have discussed. Today we'll be seeing e-way bill, returns and payment of taxes, and then we will see our customs law. So hardly maybe around 1 hour discussion will complete. Not even 1 hour will be required. We will complete our discussion over here of the entire indirect taxes marathon. Okay, so the next topic for our discussion is e-way bill. Let us straight away start our discussion. The next topic for our discussion is what, sir? E-way bill. Again, theoretical topic. It is theoretical topic. From exam point of view, the weightage will be say around 2 marks, or if there is a practical question, 4 marks. But normally it will be only MCQ based questions or some questions like that. Now, what is this e-way bill, sir? What is this e-way bill? E-way bill means electronic way bill. Electronic way bill. It is used for movement of goods from one place to another place. If movement of goods is happening, if there is any goods, you are dealing any goods and that goods are movable, if movement of goods is happening, then you should compulsory generate a document called as e-way bill. What is e-way bill? Electronic way bill. Way bill is a compliance mechanism by which a digital interface, by way of digital interface, the person causing the movement of goods will have to upload the relevant information before the commencement of movement of goods. So whoever is causing the movement of goods, before the commencement of movement, before the movement has been started, he will have to upload a document. He will have to give all the information to the GST portal by generation of this document called as e-way bill. Now, what are the benefits of e-way bill, sir? E-way bill benefits, major benefit is, before the vehicles were stocked physically, but now it will not be stocked physically. Now it is stocked digitally, meaning only if officer feels like stopping a vehicle, he will stock a vehicle, or else he will just ignore that vehicle. Then it will facilitate in faster movement of goods. Goods will move in a very faster manner of time, and it will also improve the turnaround time of trucks, which will help the logistic industry. It is going to increase the turnaround time of truck, meaning before a truck used to take say 10-15 days for one side travel, but now it will be able to do it in 3 days, 4 days, 5 days only. So the turnaround time will be increased. Now, when is this e-way bill required to be generated? This is very important point. When is this e-way bill required to be generated? E-way bill is required to be generated whenever there is a movement of goods happening. Sir, when is e-way bill required to be generated? Whenever there is a movement of goods happening, e-way bill is required to be generated. When, sir? If the consignment value, whenever there is a movement of goods whose consignment value is exceeding 50,000 rupees. If there is a movement of goods happening whose consignment value is more than 50,000 rupees, then e-way bill will be generated. Now, this movement can be because you have made the supply to someone, or for any reasons other than supply. Say I am making the supply means I am selling the goods to you. For any reasons other than supply means I am sending the goods for job work, it is not a supply. I am sending the goods to a place for exhibition, it is not a supply. So in such case, e-way bill will be generated. When is e-way bill required to be generated, sir? Whenever there is a movement of goods whose consignment value, please understand this carefully, whose consignment value is more than 50,000 rupees, exceeds 50,000 rupees. It may be in relation to supply for reasons other than supplies, or due to inward supply from unregistered person, or due to what, sir? Purchases made by you from unregistered person. The registered person who causes such movement of goods should furnish the information relating to such goods in part A of GST EWB 01, meaning this is the form. Sir, in what form should I generate e-way bill, sir? GST EWB 01 is the form in which e-way bill is required to be generated. So any person who is causing the movement of goods, because of who the movement is happening, he should generate e-way bill. Now e-way bill basically, GST EWB 01 has two parts, part A and part B. Part A is your invoice level information, and part B is your transportation related information. We'll see what it is. Now, who causes the movement of goods? Sir, you said that e-way bill is required to be generated by a registered person who is causing the movement of goods. Who causes the movement of goods? If the supplier arranges for transportation of goods, then the movement will be caused by supplier. If the recipient arranges for movement of goods, then the movement will be caused by recipient. And if the goods are supplied by unregistered supplier to a registered known recipient, then the movement shall be caused by such registered known recipient. Next, sir, what do you mean by consignment value? You said e-way bill is required to be generated if consignment value is more than 50,000 rupees. Sir, what do you mean by this word consignment value? Consignment value means what, sir? What do you mean by consignment value? Consignment value means the value of supply as determined under section 15. What is consignment value? Value of supply, value of goods as determined under section 15. To that, whatever you have declared on the invoice, bill of supply, etc. So whatever is the value of supply as per section 15, to that add CGST, SGST, IGST, UTGST, then any other types of taxes which are there under GST law. Basically, whatever value of supply is there. See, normally value of supply, you don't add taxes under GST law. But here, you do one thing. Take value of supply as per section 15, add all the taxes under GST law, but do not include value of exempt supply. Meaning, if the supply which you are making is a taxable as well as exempt supply, if the supply which is made by you includes taxable as well as exempt supply, exclude that exempt part. Take only taxable supplies made by you plus taxes on those taxable supplies. This will give you consignment value. Sir, so can I say, sir, if you are excluding value of exempt supply, so can I say that, sir, that if I am making only exempt supply of goods, no e-way bill will be required to be generated? Answer is 100% yes. Next, what is consignment value? I'll repeat. Consignment value is value of supply as per section 15. Add taxes under GST law, but do not include the value of exempt supply. Now, sir, there are some situations. See, normally e-way bill is required to be generated when the consignment value is more than 30,000 rupees, more than 50,000 rupees, sorry, more than 50,000 rupees. But there are some situations where e-way bill is required to be generated by you compulsorily, irrespective of what is the consignment value. Compulsory generation of e-way bill, even if the value of the consignment is less than 50,000 rupees. If it is less than 50,000, then also you should generate. When, sir, interstate supply of goods, interstate transfer of goods by principal to job worker. So if a principal is sending the goods for the purpose of job work to a job worker, and if the job worker is located in different states, so in case of interstate supply of goods by principal to job worker, or interstate transfer of handicrafted goods by the persons who are exempted from taking registration. So under the registration chapter, we have seen that if a person is making supplying notified handicrafted goods, then he will be exempted from taking registration up to 20 lakh rupees. Up to 20 lakh rupees. Normally, if you are making interstate supply of goods, compulsory you should take registration. But if you are supplying interstate handicraft goods, if you are making interstate transfer of handicrafted goods, then registration is not required. Those people will have to generate e-way bill irrespective of what is the value of the supply. Now, sir, in case of bill to ship to model, who has to generate e-way bill, sir? Meaning what, sir? Say for example, you remember my example, the famous example which you normally take, Priya Sarees, Karina Sarees and Anushka Sarees. So Karina told Priya to supply goods to Anushka. Now here there will be two invoices. See, goods are going to move only once. Goods are going to move only once, but there will be two invoices. One invoice will be by Priya to Karina. Second invoice will be by Karina to Anushka. No, sir. In this case, because movement is there only once, but there are two invoices, who should issue e-way bill and how many e-way bill is required to be generated in this case. So this is a case of bill to ship to. So in case of bill to ship to concept, e-way bill is required to be issued only once. E-way bill is required to be issued only once, and that e-way bill can be issued either by Priya or by Karina. They may decide among themselves. So e-way bill to be issued in case of bill to ship to model. A registered person who has ordered B. A is a registered person who has ordered B to send the goods directly to C. It is clarified that only one e-way bill is required to be generated. It can be generated either by A or by B. Next, sir, what are the information which I give in e-way bill, sir? As I told you, e-way bill is generated in a form called as form GST EWB01. This has two parts, part A and part B. Part A, you will give your invoice details, and part B, you will give your transport related details. Sir, part A, invoice details. What invoice details, sir? It will comprise the details of GST number of the supplier, GST number of the recipient, the place from where the goods are dispatched, the place of delivery of the goods, what is the document number, meaning the invoice number, bill of supply number, etc. What is the date of the document, what is the value of the goods, what is the HSN codes, and what are the reasons for making this transportation. This is required to be furnished by a registered person who is causing the movement of goods. Now part B, what will I do, sir? I will give transport related details. Transport related details in part B I will give, meaning you give transporter's document number, that consignment note number, GRN number, ABN number, etc. And you submit the vehicle number in which the goods are going to be transported. So the truck number in which goods are going to be transported, that you are required to give in your part B. Now part A information is normally required to be furnished by a person, is normally required to be furnished by the registered person who is causing the movement of goods. But in these two cases, part B, part A can be submitted by some other persons also. However, information in part A may be furnished by transporter on authorization received from registered person, or e-commerce operator or courier agencies where the goods are transported and supplied through e-commerce operator or courier agencies. See, this is like, say for example, Priya Sarees is supplying goods through Flipkart. Now in such case, what will happen is, sometimes what will happen, Flipkart will have a warehouse wherein they will keep my goods in that warehouse only. They will keep my goods in their own warehouse. So in that cases, they are telling that in such cases, if the goods are kept by Flipkart at their warehouse and they are directly supplying on behalf of Priya Sarees, then they can take authorization from Priya Sarees, and they, who, sir, e-commerce operator Flipkart, can themselves issue the e-way bill. When is it not mandatory to furnish the details of conveyance in part B? Now normally e-way bill will be complete only if you fill both part A and part B. But part B is not required if this condition is satisfied. E-way bill is valid for movement of goods when the information in part B is furnished. However, the details of conveyance may not be furnished in part B of e-way bill where the goods are transported up to a distance of 50 km within the state of Union Territory, from the place of business of the consignor till the place of business of the transporter, or from the place of business of the transporter to finally the place of business of the consignee. Then this is important. This is a place where theory question can be asked. Transfer of goods from one conveyance to another conveyance. Many times what may happen is, my goods are going in one vehicle. This vehicle, accident took place of this vehicle. Now since accident took place, now what transporter will do? He will unload and load it to some other vehicle. Now when the goods are getting transferred from one vehicle to another vehicle, what is the procedure which I have to follow? When the goods are transferred from one conveyance to another conveyance, the consignor or the recipient who has provided the information in part A or the transporter shall, before the transfer and further movement of goods, before the transfer is goods are transported and movement is happening, update the details of conveyance in part B. You will have to update the vehicle number details in part B of the e-way bill. Then they may assign the e-way bill number to another registered transporter. So if you want, say if the same transporter is not able to deliver, then you can assign it to some other transporter in whose vehicle the goods are going. So they may assign the e-way bill to another registered transporter for updating the information in part B for further movement of this consignment. However, once the details are of the conveyance has been updated by the transporter. Now, say for example, these 2 points they are telling you are giving the information, but what third part what they are telling, see, information can be given by the supplier, recipient, or the transporter himself. If the transporter has given the information in part B, then registered person, that is a supplier as well as recipient, cannot give the information. However, once the details of the conveyance has been updated by the transporter in the part B, the consignor or the recipient who has furnished the information in part A shall not be allowed to assign the e-way bill number to some other transporter. Then cancellation of e-way bill. See, this e-way bill which is generated by you, it cannot be edited by you. You cannot edit it. The only option which is available with you is cancellation, and that should be cancelled within 24 hours of its generation. Then we have a concept called as consolidated e-way bill. Now, in one vehicle, if more than one people's goods are going, say there is Priya Sarees goods going, Karina Sarees goods going, there is B Limited goods going, C Limited goods going, there is Anushka Sarees goods going, etc. So many people are transporting the goods, and that goods are all going in the same vehicle. It is going in the same conveyance. In such cases, they say that in this vehicle, the driver who is there, normally this driver who is there, this driver has to carry a document with him. One is the invoice of the goods which are going plus e-way bill of these goods which are going in that conveyance. Now they say, instead of carrying this individual e-way bill of all these people, do one thing. You go to the portal and create one consolidated e-way bill. This is like your ticket sheet. If you would have seen, a TT will not have the individual tickets. Individual tickets will be available with you guys. Whenever you are traveling in a bus or a train, you will have your individual tickets, but TT will have the list. So he will just check that list. So that list is called as consolidated e-way bill. Where multiple consignments are transported in one conveyance, the transporter may indicate the serial numbers of e-way bill generated by him in respect of each of such consignment electronically on the common portal, and a consolidated e-way bill in form GST EW02 may be generated prior to movement of goods. Then, sir, what is the validity of e-way bill? Validity of e-way bill is what, sir? The validity of e-way bill is for every 200 kilometer or part thereof. For every 200 kilometer or part thereof, the validity is 1 day. In case the vehicle is over dimension, in case the vehicle is other than over dimension cargo, and if it is over dimension cargo, then it is 20 kilometer or part thereof. For 20 kilometer or part thereof, the validity will be 1 day. See, over dimension cargo, I have written this point ulta over here. Over dimension cargo means very big trucks which will be there, and normal trucks. So for normal trucks, the limit is how much, sir? For every 200 kilometer or part of 200 kilometer, the validity will be 1 day. And for this big trucks, sir, 20 kilometer or part of 20 kilometer, the validity will be 1 day. So over dimension cargo, very big trucks, chota trucks, the normal trucks which you see is other than over dimension cargo. Now, e-way bill cannot be edited. I told you, e-way bill cannot be edited. Now, e-way bill, because there is a it can only be cancelled, because there is a validity for an e-way bill. Many times it may happen that due to strike or due to damage in the vehicle, etc., the goods may not reach the destination within the validity period. So, sir, can I extend the validity? Answer is yes. Extension of validity, extension by commissioner in certain categories. In some cases, only officer can extend. You cannot extend. However, when can we extend the validity, sir? Extension by the transporter. Transporter can extend the validity in exceptional circumstances. Which are the circumstances? Transporter can extend the validity of e-way bill if the consignment is not been reaching the destination within the validity period due to exceptional circumstances like natural calamities, law and order issues, or transshipment delay or accident of vehicle, etc. This extension should be done 8 hours before expiry of validity or 8 hours after expiry of validity. So once your validity is expired, 8 hours before that or after that, you please extend. Now please note, once an e-way bill is generated, the information will go to the supplier, recipient, and the transporter. Now this recipient who has purchased the goods will have to accept this e-way bill. If he is not, and the time limit for acceptance is 72 hours. If he does not accept this e-way bill, it will be deemed as that it is accepted by the recipient. So acceptance of e-way bill, this e-way bill generated should be accepted within 72 hours by the transporter, by the recipient. Then, before going to other points, let us see what are the situations when e-way bill is not required to be generated. So there are some cases, or if you transfer these types of goods, e-way bill will not be required. For example, if you are transporting LPG cylinders or kerosene this PDS or fair price shops, which is nothing but ration shops, or postage and telegrams are being taken by the post office, etc. You're transferring jewelry, currency, etc. E-way bill is not required because these are special kind of goods. Okay, then e-way bill is not required if the goods are being transported in a non-motorized vehicle, meaning you are transferring the goods in bullock cart. E-way bill is not required. What will you give bullock cart number? What number will you give? So e-way bill is not required if the goods are transported from customs port or airport to inland container depots. Then e-way bill is not required if you are transporting HP man, alcoholic liquor for human consumption, petroleum, crude, high-speed diesel, motor spirit, natural gas and aviation turbine fuel. Where the goods been transported are not a supply as per Schedule 3, or where the goods been transported are of transit cargo for Nepal and Bhutan. Any movement of defense ministry goods are moving, etc. Goods are moving for the central government purpose, state government purpose by Indian Railway, etc. Or empty containers are getting moved, etc. These are the different situations. If you remember only around say 4 situations, that will be more than sufficient for this. Then now next point is what, sir? The person in charge of the conveyance, that is nothing but the truck driver, etc. He will have to carry a document with him along with the goods which he is carrying. What is the document he should carry? The person in charge of the conveyance shall carry the invoice or bill of supply and a copy of e-way bill in physical form or in electronic form. In electronic form, either he can he can take it through mapping it to an radio frequency identification devices. Now last few more points with respect to other points, general points with respect to e-way bill. What are these other points, sir? Where the goods are transported by railway, no requirement to carry e-way bill by the that rail driver need not carry the e-way bill. But however, at the time when you are taking the delivery of the goods, you will have to show the e-way bill. Then e-way bill generated. Sir, can I generate e-way bill even if my consignment value is less than 50,000 rupees? Answer is 100% yes. Then e-way bill, see, and anywhere you can generate the e-way bill. Whatever e-way bill you are generating in one state will be valid for other states also. E-way bill is not valid. E-way bill is not valid for movement of goods without vehicle number on it. Once e-way bill is generated, it cannot be edited for any mistake. If there is any mistake, you cannot edit it. You cannot delete. You can only do one thing is which is cancel within 24 hours. E-way bill may be in e-way bill, no, the vehicle number details can be updated any number of times you want. Now this is one more important area where questions can be asked. Blocking of e-way bill facility, meaning you will not be allowed to generate an e-way bill if you do any type if you fall under these categories. E-way bill cannot be generated in the following cases. If you cannot generate e-way bill in the following cases: when, sir, if you are a composition dealer and you have not made the payment of taxes for continuously 2 quarters. If you are a regular registered person and not filed the return for continuously 2 tax periods. If you are a regular registered person and not filed your GSTR1 for continuously 2 months or 2 quarters, and being a person whose registration is suspended. If you are a person whose registration has been suspended. Now that is all about your e-way bill. Next topic is what, sir? Next topic is returns under GST law. Under returns under GST law, there can be 2 types of questions which can be asked. One, what is the type? See, basically here there are 2 categories. What is the type of return? Who has to file it? What is the due date of filing it? This is one category of question. What is the return name? Who has to file that return? And what is the due date of filing? Or what is the late fees of filing the return? If I don't file the return within the time limit, what is the late fees? Or some cases, what are the contents of return? The contents will normally be asked for GSTR 1, 3B and 4. So these are the types of returns which are, these are the types of questions asked in the returns. We will see the types. Now, regular dealer or normal registered person, including casual taxable person. Now, a regular dealer or a normal registered person, including casual taxable person. Now, there are different types of registered person: casual, regular registered person, or a composition dealer, input service distributor, casual taxable person, non-resident taxable person, or OIDR service provider. Now, first type of return which we are discussing is for regular dealer or normal dealers. See, normally if I am registered under GST, then I am called as regular dealer or normal dealer, including casual taxable person. What is the return which is required to be filed by them? They have to file 2 types of return called as GSTR 1 and GSTR 3B. GSTR 1 is the return for their outward supply, and GSTR 3B is a summary return wherein they will make the payment of taxes. So GSTR 1 is required to be filed normally by 11th of next month. 11th of next month for the month of, say, this is March month. So for the month of March 24, I should file it by 11th of April. Okay, and GSTR 3B is required to be filed by 20th of next month. So for the month of March, it will be 20th of April. So normally GSTR 1 is required to be filed by 11th of next month, and GSTR 3B is required to be filed by 20th of next month normally. Okay, we'll see some other categories. Who is required to file GSTR 1? GSTR 1 and GSTR 3B is required to be filed by all the different types of registered person, excluding non-resident taxable person, input service distributor, person who is required to collect taxes under 52, person who is required to deduct tax under section 51, and OIDR service provider. Now GSTR 1. GSTR 1, what is GSTR 1 basically? Sir, GSTR 1 is a return of outward supply. Whatever sales is made by a registered person, to record those sales, he will have to file a return called as GSTR 1. Now, what sales details, sir? All the sales are outward supply related details. Whether that sale is a taxable supplies, exempt supplies, interstate supply, intrastate supply, B2B supply, B2C supply, export of goods or services, etc. Whatever sales related details are there, you should give. Similarly, advance which you have received, HSL summary, document issued, etc. These are basically the contents also. These are basically the contents also of GSTR 1. Now, the supply of a registered person can be B2B or B2C. B2B means registered person to registered person. B2C means registered to unregistered. If it is a registered to registered, compulsory you should give invoice level details, meaning whatever details are there in an invoice, same thing you should upload in the GSTR portal. But if it is a B2C supply, then if it is an intrastate supply made by you within the same state, then consolidate everything. To total all the invoices which you have made in the same state to unregistered person, rate wise upload the details. Give state wise and rate wise detail, consolidated details. If it is to different state, if you are making a supply to an unregistered person of a different state, then check the value. If the value is more than 2.5 lakhs, give invoice wise details. If the value is less than 2.5 lakhs per invoice value, single invoice value is less than 2.5 lakhs, then consolidated all those invoices, give state wise, rate wise, consolidated details. Then what is the due date of filing? GSTR 1. Now this due date of filing GSTR 1, no, basically we saw the normal due date, but actual due date, if you see, are divided into two categories. Now it may be depending upon whether a person is filing the GSTR 1 on monthly basis or on quarterly basis. Now filing quarterly basis is an option. Okay, so GSTR 1 monthly basis. Normally GSTR 1 is recorded filed on monthly basis. Normally, when should you file GSTR 1, sir? Monthly basis you should file GSTR 1. Now, and who has to file this, sir? Normally it is monthly. A person whose turnover is more than 5 crore rupees should compulsorily file it monthly. Okay, a registered person with aggregate turnover more than 5 crores should compulsorily file GSTR 1 in monthly basis. And for other people, sir, what if my turnover is less than 5 crores? Then for you also normal it is monthly only, but you have an option to file it on quarterly basis. Quarterly basis, who can file, sir? It is an option given to those people whose turnover is less than equal to 5 crores. They can opt for a scheme called as QRMP scheme. So normally GSTR 1 is recorded filed on monthly basis, but if your aggregate turnover is less than 5 crore rupees or less than equal to 5 crore rupees in the preceding financial year, you have an option to file it on monthly basis, quarterly basis also. Now aggregate turnover, it is more than 5 crores, less than equal to 5 crores. More than 5 crores compulsory monthly. What is the due date of return, sir? 11th of next month. Sir, if my aggregate turnover is less than 5 crores, then I can opt for QRMP scheme, wherein my due date will be, QRMP means quarterly return monthly payment. Quarterly return monthly payment. So I'll have to file my return on quarterly basis, make the payment of taxes on monthly basis. So what will be the due date? 13th of next month following the quarter. Sir, what do you mean by this 13th of next month following the quarter? Meaning once a quarter is ended, next month 13th. For example, April to June quarter, it will be 13th of July. For April, May, June, this is a quarter, it will be 13th of July. And for monthly basis, it is 11th of next month. Now, next is what, sir? Next is what? Next, there is a return called as GSTR 3B. And one more time before we go to GSTR 3B, whatever information you give in GSTR 1, GSTR 1 is basically a return for outward supply. That information will go to the opposite person, you have a recipient. If he is a registered person, that information will be transferred to the recipient in his GSTR 2A as well as GSTR 2B. So GSTR 1 is the supplier will file GSTR 1, which is a return for outward supply. That information will be reflected in GSTR 2A or 2B of the recipient. Next we have GSTR 3B. What is this GSTR 3B? It is a summary return. What this GSTR 3B does, it will take the information from GSTR 1, it will take information from GSTR 2B, meaning it will take sales related information from GSTR 1 and it will take purchase related information from GSTR 2B, and they are going to tell you what is the net amount of tax which you have to pay. Now it is a return for making the payment of taxes. The contents are, it will have the basic details such as GST number, legal name, trade name, month, year, due date, consolidated details of all these outward supplies, tax record to be paid under section 9 subsection 5, interstate supply to unregistered person, etc. Now what is the due date, sir? Again, it depends on whether you have opted for monthly or quarterly. If it is monthly, then 20th of next month is the due date. If it is on quarterly basis, then for some states it is 22nd of next month, and for some state it is 24th of next month following the quarter. Now which states is it is 22nd, which state it is 24th, not relevant from examination. So what is normally relevant for GSTR 1, 11th of next month, and GSTR 3B it is 20th of next month. If you remember this, that is sufficient. But sometimes they may ask you, if it is quarterly, then what is the due date, sir? 13th of next month for GSTR 1. Okay, for GSTR 3B they will normally not ask, but even if they ask, it is 22nd or 24th of next month following the quarter. Now there is a scheme called as QRMP scheme. Fantastic scheme it is. I mean, normally the MCQ based question or theory based question can also be asked. What is this QRMP scheme? QRMP scheme means quarterly return monthly payment. You should file your GST returns on quarterly basis, but make the payment of taxes to the government on monthly basis. Now what is the scheme telling? File GSTR 1 on quarterly basis and GSTR 3B file returns on quarterly basis. What returns are GSTR 1 as well as GSTR 3B? You can file it on quarterly basis. So these are the returns which you have to make, file on quarterly basis. What is the due date? For GSTR 1 it is 13th of next month following the quarter, and for GSTR 3B it is 22nd or 24th of next month following the quarter. For example, if it is April to June quarter, for GSTR 1 it will be 13th of July, and for GSTR 3B it will be 22nd or 24th of July. Sir, we understood that it is quarterly return monthly payment. What do you mean by monthly payment? Meaning the tax is required to be paid by you on monthly payment. Though you file your return on quarterly basis, just pay the tax on monthly basis. Sir, how will I pay the taxes? You know how much tax liability you have. Every month you are making the sales. Just determine your tax liability and pay the taxes. You pay the taxes. Sir, how will I pay the taxes without filing the return? You just have to deposit the money in the government account. You generate a payment and deposit the money. That adjustment of that money you can do later. So monthly payment means pay tax on monthly basis. The due date of paying tax is 25th of next month. 25th of next month. For every month you will have to pay the taxes by next month 25th. For the first 2 quarters, because third quarters anyways you are filing the return itself. So the for quarter April to June, return is required to be filed on quarterly basis, but tax is required to be paid on monthly basis. For first month, that is April month, by 25th of May, and for second month which is May month, 25th of June, and for third month which is June month, anyways because the quarter has ended now, you will have to directly file your GSTR 3B. Now here you just deposit the money, but in actual filing you adjust that money. How much to pay, sir? Now how much tax should I pay, sir? Because I will not be knowing, no sir, only at the time when I file the return I will be knowing how much tax it is. Or you will be knowing what is sales made by you, what is the purchases made by you during a month. Difference of that you pay, or pay under fixed sum method. So how to pay the taxes? How much tax to be paid, sir? There are 2 methods, either self-assessment basis, meaning you only determine the tax liability and pay it, or fixed sum method. Self-assessment method means pay tax liability in cash that month. The tax liability in cash means what, sir? Whatever tax liability is there in cash for a particular month, pay that. Tax liability in cash means what, sir? Whatever your outward supply is there, whatever input tax you have, difference is the tax which you have to pay. So this, if you are liable to pay, only then you pay. Meaning if your input tax credit is more than your tax on outward supply, you don't have to pay any taxes. Only when this amount is positive, only when your sales is more than your purchases, you will have to pay the taxes. Now fixed sum method says, fixed sum method, fantastic method it is. Fantastic method. What is fixed sum method telling, sir? You pay a fixed amount of money to me. Quarterly basis, you pay fixed sum of money to me. For first 2 quarters, pay fixed amount of money to me. How will you determine that? Whatever you have paid in last quarter, 35% of that you pay for first 2 months of the quarter. 35% of the taxes paid in cash for the previous quarter is required to be paid. 35% should be paid in first 2 months of the quarter. Please note tax paid in cash. I'm using the word tax paid in cash. Say for example, in the previous quarter, the tax paid in cash is 100 rupees. So now pay 35 rupees and 35 rupees for first 2 month. Now, if you are opting for this 150, if you are opting for QRMP scheme, if you are opting for QRMP scheme, then for you there is a invoice furnishing facility also option will be given to you. Meaning, what is this invoice furnishing facility? This option is given because normally if you file your GSTR1 on quarterly basis, the person who is going to purchase the goods from you is going to get the input tax credit on quarterly basis. To avoid such thing, what they have given, you can give the invoice details. You can give the B2B invoice details on monthly basis. You can give the B2B invoice details on monthly basis by 13th of next month. By 13th of next month, every month you can upload only B2B related. If you don't have any B2B related, you don't have to follow this IFF. IFF invoice furnishing facility is not a return. Invoice furnishing facility is not a return. It is just a facility to upload or file the detail, fill the details in of B2B supply in monthly on monthly basis for those registered person who has opted for QRMP scheme. What is the due date? 13th of next month is the due date. What will happen? All the invoices, debit note, credit note, the details of which is uploaded in invoice furnishing facility will be imported to the portal in GSTR1. So at the time when you are filing your GSTR1, you don't have to fill those details again because already you have filled invoice furnishing facility is already given by you. Now I'll directly import the information from there. Now can I now next point, amendment in GSTR1 and GSTR3B. Now amendment in GSTR1 and GSTR3B cannot, the return which is filed by you cannot be changed at all. You cannot change that return which is filed by you. So any changes which you have to make, you will have to make the changes in the next month return. Nil return or nil GSTR1, it can be filed by SMS or GSTR1 and GSTR3B. If you don't have any sales made and if you don't have any liability, etc., you can file this GSTR1 and GSTR3B by just sending a message to the government. Next, what is the late fee for filing GSTR1? Now check what is the return. Is the return a nil return? Yes sir, my return is a nil return. Then late fee is ₹20 per day, subject to a maximum of 500 rupees. Meaning 20 per day means 10 rupees for CGST and 10 rupees for SGST. So that is 20 rupees per day, subject to a maximum of 500 rupees. Meaning 250 rupees under CGST and 250 rupees SGST you will have to pay. If it is a nil return, meaning there is no sales made by you, there is no purchases made by you. All other cases, meaning I have some amount of input which I am taking, or I have some amount of output which I have made. So if that depends on your aggregate turnover. If your aggregate turnover is up to 1.5 crores. Yeah, one more point, please note this QRMP scheme. I don't know whether I told you this or not. QRMP scheme is applicable to whom, sir? QRMP scheme is applicable only to those people. This QRMP scheme is applicable, I think I have told it over here, no? Monthly basis, quarterly basis. So those who have this option of filing on quarterly basis, they will only if your turnover is less than 5 crores, only then you can select this QRMP scheme. Now, yeah, late fee, if you have some data in the return, then that will depend on your aggregate turnover. If your aggregate turnover is up to 1.5 crores, then ₹50 per day, subject to a maximum of 2000 rupees, meaning 50 rupees means 25 rupees CGST, 25 rupees SGST, 2000 means 1000 rupees CGST, 1000 rupees SGST. Then if your aggregate turnover is from 1.5 crores to 5 crores, it is 50 per day, maximum 5000 rupees. And if it is more than 5 crores, 50 per day, maximum 10,000 rupees. This is the late fee which you have to pay. Now the other types of return which are there. What are the other types of return? GSTR4. GSTR4 is a return which is recorded filed by a composition dealer, and the due date is 30th April of next financial year. For example, the financial year 23-24, the return is recorded filed only once in a year by 30th April 2024. Next, this composition dealer will have to pay the taxes on quarterly basis by using a form called as form GST CMP 08 by 18th of next month following the quarter. Then non-resident taxable person, return of non-resident taxable person. Non-resident taxable person has to file a return called a GSTR 5, and the due date of filing this return is by 20th of next month or within 7 days from the from the date of expiry of his registration. Then GSTR 6 is required to be filed by an input service distributor. Input service distributor has to file a return called as GSTR 6, and the due date is by 13th of next month. Then if you are a TDS person, you will have to file a return called as GSTR 7 by 10th of next month. And if you are a TCS person, e-commerce operator is required to collect the taxes. TCS person, you will have to file a return called as GSTR 8 by 10th of next month. Then apart from all this monthly returns which you have, there is also a return called as annual return, which is required to be submitted by normal registered persons. When he has to file this by 31st December of next financial year. Annual return is required to be filed by due date is 31st December of next financial year. Composition dealer also has to file an annual return, separate annual return. Apart from GSTR 4, he has to file a separate annual return by 31st December of next financial year. And for e-commerce operator, they have to file annual return. Due date of annual return is same for everyone, but the form name is changed. And a reconciliation statement under GSTR 9C will also be submitted. It is no more required to be certified by chartered accountant or cost accountant. Now a final return is required to be filed. What is this final return, sir? If your registration is cancelled, because your registration is cancelled, after cancellation of your registration, you have to file a return called as final return. This is my final liability, etc. Within 3 months from the date of cancellation, or from the date of cancellation of registration, or from the date of cancellation order, whichever is later. And if you are an UIN holder, then you will have to file a return called as GSTR 1. Now there is one more type of return called as first return. What is this first return, sir? Oh sir, tell me no sir. What is this first return? First return means it is a return which is required to be filed from the date you are liable for taking registration for whatever supply is made by you, from the date when you are liable for registration till the date of grant of registration. Many people, what happens is, I am liable for registration today, but the registration, I apply for registration, then the registration will be granted after 20 days. So whatever supply is made from today till the 20 days, till the date of grant of registration, for this supply I will have to file a return called as within 30 days from the date of grant of registration, I have to file a return called as GSTR. I will have to file a return called as first return. Then I have given this late fee information over here. Late fee for GSTR 1 and GSTR 3B we have already seen. Late fee for GSTR 4 is rupees 20 per day. If it is nil return, rupees 20 per day, subject to a maximum of 500. And if it has some information, rupees 50 per day, subject to maximum of 2000. Then late fee for delay in filing of annual return. If there is a delay in filing of your annual return, late fee will be if the turnover is less than 5 crore rupees, rupees 20 per day, subject to a maximum of 500. And if the turnover is more than 5 crores up to 20 crores, rupees 50 per day, subject to a maximum of 2000. And if your turnover is more than 20 crores, then rupees 200 per day, subject to a maximum of 0.5% of turnover of that particular registered person. So this is all about your returns. One last topic which is left over in your GST or indirect taxes GST part is your payment of taxes. Very easy topic, again, payment of tax. This payment of tax should always be read with your input tax credit chapter. Now, the output tax liability which a person has, that output tax liability can be paid by him either by utilization of input tax credit or by cash. So a person can pay the output tax liability either by cash or by utilization of input tax credit. Now there are totally 3 ledgers. There are totally how many ledgers, sir? 3 ledgers under this chapter. One is electronic cash ledger, electronic liability ledger, and electronic credit ledger, electronic cash ledger, credit ledger, and liability register. Now one by one we'll see what is this ledger. Electronic cash ledger. It is a ledger which is maintained in a form called as form GST PMT 05. This electronic cash ledger gives the details of all the cash deposited by you and how this cash is utilized. Every deposit in tax, interest, penalty. Every deposit in tax, interest, penalty, fees, or any other sum by net banking, IMPS, RTGS, NEFT, debit card, credit card, UPI, etc. That is online, because deposit can be done only online. Such amount, whatever deposit you are making under these heads will go and sit in this electronic cash ledger. This amount can be used for making the payment of interest, penalty, late fees, etc. Now, how do I deposit the money, sir? By using a challan called as payment challan, which is GST CMP PMT 6, very important challan number, GST PMT 06. It is used for depositing the money in electronic cash ledger. Now this challan will have minor heads, major heads, etc. That explanation I have given, which is not that more relevant for exam point of view. But yeah, one point is important, that you make a deposit in one head. So this is challan. There is some minor heads and major heads, etc. You can deposit the money. You can deposit the money in CGST tax column. You can deposit the money in CGST tax column, interest column, penalty column, IGST tax column, interest column, penalty column, etc. Now these columns are common for everyone. So these are called as minor heads, and these are separate columns, CGST, SGST, IGST. So these are called as major heads. Now amount deposited in one major head cannot be used for paying other major heads. Similarly, amount deposited in one minor head cannot be used for making the payment of another minor head. So you cannot use, meaning if you deposited the money in tax and if you have to pay penalty, you cannot use the tax money for paying penalty. You will have to transfer the money from tax to penalty to use it. And to transfer this money, we use a form called as form GST PMT 09. Very important form. See, intra-head utilization of amount from one minor head to another minor head is not possible. Meaning intrastate utilization or intra-head utilization from one head to another head is not possible. However, you can transfer the amounts from one head to another head by a form called as GST PMT 09. Then electronic cash electronic cash ledger. How do I deposit the money in electronic cash ledger? Normally the deposit which you should make is online. It is normally online only. You will have to deposit the money online only. However, you can make physical deposits over the counter, but up to how much, sir? Maximum 10,000 rupees you can deposit offline. But you will have to take permission, etc. for that. However, even if you are depositing the money offline, the challan is required to be generated by you online only. Now, transfer of amount from electronic ledger of one registered person to electronic credit ledger of another registered person is also possible through GST CMP 09. Meaning, if there are two registered person under same PAN, if there are two registered person under same PAN, then if there are two registered person under same PAN, then in such cases, if there are two people registered under same PAN, one person has more credit, another person has less credit, you can transfer the credit from the person having more credit to the other person by using this form called as GST PMT 09. Any excess balance in electronic cash ledger, you can always claim it as refund. Then we have electronic credit ledger. Electronic credit ledger is maintained in a form called as form GST PMT 02. And this will give information about all your input tax credit which is taken by you. All the input tax credit available by a registered person in his GSTR 3B will be credited to this ledger. This credit can be utilized for making the payment of taxes. Now, how do I utilize? What is the manner of utilization of input tax credits? IGST should first be utilized for paying IGST, then utilized for CGST or SGST in any proportion. Then CGST first utilize it for CGST, then utilize for IGST. Similarly, SGST first utilize for SGST, then utilize for IGST. Please note, you cannot take CGST or SGST unless until this IGST is becoming zero, meaning you cannot utilize the credit of CGST and SGST unless until you make IGST credit zero. IGST can be utilized for CGST and SGST in any order. First, fully utilize IGST before utilizing CGST and SGST. SGST can be utilized for IGST only when CGST is not available for paying IGST, and SGST can be replaced by the word UTGST also. It can be SGST or UTGST, both are same. Or any excess amount which is there in electronic credit ledger can be claimed as refund. You can take that back from government. Then we have, lastly, we have electronic liability register. Whatever liability a registered person will have, whatever type of liability a registered person will have, will go under this ledger called as electronic liability register. Registered person can have following liabilities. He can have a liability of tax or other dues. Tax dues means CGST, SGST, IGST. You have to pay the tax amount. Other dues means interest, penalty, late fee, etc. So the tax dues can be paid either to utilization of input tax rate or through cash. Whatever tax due is there, whatever tax amount you have to pay to government, you can pay by using your input tax rate or by your electronic cash ledger, or that is cash. But interest, penalty, late fee, that is other dues, should compulsorily paid in cash only. Now the following are the liabilities which should be paid in cash only compulsorily. Which are the liabilities? Other dues such as interest, penalty, late fee, tax payable under section 10, which is by a composition dealer, TDS under 51, TCS under 52, and payment of taxes under reverse charge. Whatever RCM liabilities you have, these are the amounts which you should compulsorily pay in cash only. Then, so there is some example which I have given. Then what is the order of discharging liability? Sir, I have some liability. I have amount in my electronic cash ledger. How do I discharge the liability? Which should I give first preference? So self-assessed tax and other dues related to the previous tax period you should pay first. Meaning, under GST law, if you don't file the return for the last month, you cannot file the return for this month. So if you have any tax liability, self-assessed tax or other due liabilities of the previous tax period, pay that first. Then pay self-assessed tax and other dues of the current tax period. Then pay for the current month. Then if even after that, if there is any liability you have, then any other amount payable under this act or rules made there under, including the liability under 73 and 74. So first pay the tax and other dues of previous tax periods, then tax and other dues of current tax period, and all the other types of liability which you have under GST law. Electronic liability register of a person will be debited, meaning what are the different types of liability a person can have? The liability, the amount, the liability can be because of the tax, interest, penalty which you have to pay as per the return filed by you, or the liability can be because of the tax, interest, penalty which is determined by the proper officer, or any amount of tax or interest as per section 50, and interest which may accrue from time to time. So this is the liabilities which a person can have. Very important is this last point, which is interest point. Section 50 talks about interest liability under GST law. Interest for delay in payment of tax. If you don't pay the taxes to the government within the time limit, the due date of filing return is 20th. You file the return on 25th. You will file the return on 28th. In such cases, there is a delay. So for this delay in filing of return, you will have to pay the interest. How much is the interest rate, sir? 18% from per annum. What is the from which date interest will be calculated? The date following the due date of payment till the date of actual payment. So 20th is the due date. So from 21st I will calculate till 28th, till the date of payment. I will have to calculate the interest and pay the taxes. Now interest will be paid only on the net amount payable in cash. Meaning, say my tax on sales is 100 rupees. My input tax credit is 80 rupees. So difference is how much, sir? 20 rupees. So 20 rupees I am paying in cash. Only on this amount interest will be calculated. Interest will not be calculated on your entire sale value. Interest will not be calculated on your output tax entirely. You take your output tax, subtract from that input tax credit. Whatever difference is left over, interest should be paid on the net tax liability payable in cash. Next, sir, if I take excess input tax credit, do I have to pay interest, sir? Yes. If you take interest on undue or excess claim of input tax credit, interest is applicable at 8% from the date of taking the credit till the date of reversal of such credit. Now, see this is a fantastic point which they have, clarification which they have given. Anyways, this interest point is done. Interest rate is 18%, 18% only. From which date calculation, that is important. Now, this one point is very, very important over here. And clarification is given by the institute. Delay in payment of tax. If there is a delay in payment of tax, that delay can be because of two reasons. One, the delay is due to late filing of returns. I am not filing the returns within the due date. If there is a delay for payment of taxes, the delay, I have not paid the taxes in time. That the reason for not paying the taxes in time can be two. The delay is due to late filing of returns, or the delay is due to not considering the amount in the return. I have filed the return within the due date, but I have not taken that amount only. One, I have not filed the return within the due date. I was supposed to file the return on 20th, but I filed the return on 25th. So there is a delay. So this delay is because of late filing of return. Then the second type of delay is because of not considering the amount in the return. Meaning, I filed my return on 20th only. I filed it within the due date only, but the sales which I was supposed to take 10 lakh rupees, I have taken only 8 lakh rupees. So I have not considered 2 lakh rupees. So these are the two types of delay in payment of taxes. Now, delay is due to late filing of return. In such cases, interest shall be calculated only on net tax liability payable in cash. If there is a delay because of late filing of return, then only whatever tax you have to pay in cash, only that net tax liability payable in cash, on that you will have to calculate interest. But if the delay is because you have not considered the amount, if the delay is because of not considering the amount, the delay is due to not considering the amount in the return, then the tax is required to be paid, or the tax is paid because of any notice is given to you. Because of these two cases, the delay is there. Then interest will be payable on the full tax liability, whether it is paid in cash or through input tax field. Meaning 10 lakh sales I made, I showed only 8 lakh rupees, 2 lakh rupees on this whatever tax is there. Say 18% is the GST, so 36,000 is the tax. On this 36,000 rupees, I should pay fully. I should pay interest on the full amount. I should pay interest. So if the delay is due to late filing of returns, pay interest only on the net liability. If the late filing of returns, if the delay is because you have not considered the amount only, then pay on the full liability. So I have given some examples over here. Fantastic example. You can just go through it. So this completes our discussion on GST. This completes our discussion on fantastic topic called as GST, Goods and Services Tax. Last topic for our discussion is what, sir? The last topic for our discussion is customs law. See, weightage. What is the weightage, sir? Out of 50 marks, 5 marks will be, out of 50 marks, 5 marks will be your concepts, 35 marks will be GST, meaning basically GST is for 40 marks, and 10 marks is your customs law. Now the 10 marks customs law we are going to discuss now. Customs law valuation is very important topic, valuation. First chapter mostly they will ask you MCQ based questions only, or some one theory question they can ask if they feel like asking. But yeah, one MCQ will be there for sure. So customs law, see, in just 2 pages, the entire customs law is completed. So once we discuss this, this marathon classes of indirect taxes is done. Customs law. Article 246 of our constitution. Article 246 of our constitution has an entry called as entry number 83. This entry number 83 is in 7th schedule, and which list, sir? It is in union list. Okay, so entry 83 of union list of 7th schedule of article 246 gives the power to central government to levy customs duty. It gives the power to whom, sir? Central government to levy the customs duty. So Customs Act, we have an act under customs duty called as Customs Act 1962. This act extends to whole of India, including the state of Jammu and Kashmir. Now, what are the different meanings? They are in the first chapter. Basically, they have given definitions, etc. Important definition: adjudicating authority. Who is adjudicating authority? Adjudicating authority means an authority who's competent to pass any order or decision under this act, but shall not include CBIC, Commissioner of Customs Appeals, and CBIC means Board of Indirect Taxes, Commissioner of Customs Appeals, and CESTAT, that is Customs Appellate Tribunal. Then what do you mean by assessment? Adjudicating authority definition important. What do you mean by assessment? Assessment means determination of tax liability, determination of dutiability of any goods, and amount of duty, taxes payable under this act, and also includes assessment is basically assessment means computation of tax liability, determination of tax liability, and it will include provisional assessment, self-assessment, reassessment, or any other type of assessment where the duty assessed is nil. Coastal goods means what, sir? If the goods are going from one place in India to another place in India through sea route, then it is called as coastal goods. Coastal goods means goods transported in a vessel from one port in India to another port in India, except the imported goods. Conveyance means what, sir? Conveyance means vessel, vehicle, aircraft. Customs area means the area of customs stations, including the area where the imported and exported goods are ordinarily kept before its clearance. Dutiable goods means those goods on which custom duty is applicable. Foreign going vessel, again an important definition. Please note, adjudicating authority important, assessment important, foreign going vessel important. Foreign going vessel means what, sir? Foreign going vessel means foreign going vessel. Foreign going vessel means a vessel which is going outside. Foreign going vessel means a vessel or an aircraft which is going from a port or airport in India to a port or airport outside India, and it includes any foreign naval vessels doing naval exercises, any vessel engaged in fishing activity outside the territorial waters, and any vessel going to a place outside India for any purpose. Then again, next important definition is goods. What do you mean by goods, sir? Goods is an inclusive definition. So whatever you generally understand by goods is goods. Goods includes vessel, vehicle, aircraft, stores, baggage, currency and negotiable instrument, and any other kind of mobile property. Please note over here, currencies are also included in goods, but under GST law, currency was not included. What do you mean by imported goods? Imported goods means those goods which are brought into India from a place outside India, but which has not been cleared for home consumption, the delivery of which you have not yet taken, and it shall not include the goods which has been cleared for home consumption. India includes the territorial waters of India, meaning India includes the area up to 12 nautical miles from the baseline. From this baseline up to 12 nautical miles, whatever area is there, no, that sea route, that sea, Arabian Sea, Bay of Bengal, etc. So this is also treated as India. Transit goods means the goods which are reaching their destination in the same vessel. For example, there is a ship which is coming. There is a ship which is coming from Africa to India. It carries A, B, C, and D. So the ship comes to India, and the same ship goes to Australia. Now they have unloaded C and D in India. A and B is going to Australia in the same ship. This A and B are called as transship goods. Now assuming C and D goods were unloaded into India, in this goods numbers D is then transported from India to China. This D is called as transship goods. Transit means in same vessel goods are going to the final destination. Transship means the vessel is changing, the goods are shifted to another ship, and then it is going to the final destination. Transit goods, they are the goods which reach their destination port in the same vessel. These goods are mentioned in as transit goods in Import General Manifest. There is a document which is required to be submitted by the person in charge of the conveyance. Tranship goods means these goods reach their destination port in a vessel other than its original vessel. So it will reach in some different vessel. Stores means, what do you mean by stores? Sir, definition of goods said, goods will include stores. What do you mean by stores, sir? Stores means the goods which are the goods for use in vessel, vehicle, aircraft, includes fuel and space pass and any other equipment, whether or not of immediate fitting. Whatever goods you are using in the vessel, vehicle, aircraft, for vessel and vehicle, aircraft, or used in vessel, vehicle, aircraft. Person in charge means what, sir? Person in charge means the person who is in charge of that conveyance. So master of a vessel, pilot of a aircraft, guard or conductor of a train, driver of a vehicle, etc., etc. They are all called as person in charge. Then what is the charging section of custom law telling? Section 12 is the charging section of customs law. Section 12, that is the charging section of customs law, says the duties of customs shall be levied at the rate specified in Customs Tariff Act. So Custom Tariff Act will give you the rate of customs duty on goods imported into India or exported from India. So if you are importing any goods to India or exporting any goods from India, you will have to pay custom duty at the rate specified in Customs Tariff Act 1975. Now, dutiability in special circumstances. What will happen to your custom duty in special circumstances? There are some special circumstances in which you may not have to pay taxes, or your tax liability will be reduced, etc. Dutiability, this is all from your first chapter only, theoretical topic. Basically, first chapter is completely theory. Goods imported into India after exportation therefrom. You have exported goods, then re-import it into India. Import duty shall be restricted to the amount of incentive availed. So in that case, you will have to pay custom duty. How much custom duty? Whatever benefit you had taken at the time of exportation. Imported goods have been originally exported to overseas for repairs and repairs. Now I have imported some goods. These goods were actually exported by me for the purpose of repairs. This is not actual import of goods. I have sent some goods for the purpose of repairs and I am getting it back. No custom duty is required to be paid at the time of re-import, provided re-import is happening within 3 years. Exported goods may come back for repairs and re-export. Say for example, I exported the goods are coming back to India for the purpose of repairs, and after repairs I am sending it back to there. No custom duty is required to be paid at the time of re-import and also at the time of export, provided it happens within 3 years. Then these 3 points are very important. Now there is something called as pilferage, there is something called as derelict, jetsam, flotsam, wrig, and there is something called as abatement of duty. Pilferage means petty theft. Pilferage means what, sir? Petty theft. So if the goods are stolen in small quantities, pilferage, it is called as pilferage. No custom duty you will have to pay on those pilferage is found before goods are cleared for from customs. Meaning before the customs officer is verifying the goods, if the goods are stolen in small quantities, you don't have to pay tax on that stolen goods. No custom duty is payable on if pilferage is found before goods are cleared from customs. If the duty is already paid, the importer can claim refund. Proof of pilferage is not necessary. Pilferage should be occurred after unloading of the goods but before verification of the proper officer. Then we have derelict, jetsam, flotsam, brick, etc. Derelict means what, sir? Derelict means vessels or goods which are abandoned in the seas without hope of recovery. Then jetsam means where the goods are cast into the sea to reduce the weight of the ship so that it can not so as to prevent it from sinking. Flotsam means the goods which continue to float after they are thrown in the sea. And brick means the cargo or the vessel or any other property which is cast ashore by tides after ship wrecks. Meaning what, sir? Basically what they are telling, there are these 4 different categories: derelict, jetsam, flotsam and brick. Whether you actually get it to bring them to India or they automatically come to India, it does not matter. They will be treated on par with imported goods. They will be treated as imported goods and custom duty will be paid on this. For example, what is derelict, sir? Now there is a ship which is destroyed and it is abandoned. There is no hopes of recovering that ship. If you find some parts of that ship or some goods available in that ship, etc., you went for a fishing, etc., you get it, you will have to pay this tax. Or what is jetsam, sir? Jetsam means where goods are cast into the sea to reduce the weight of ship. Now my ship is see, normally when there are high tides, the weight of the ship should be less. When the weight of the ship is too high, there are the chances that the ship may what do we call that? The ship may sunk. Now to reduce the weight of the ship, they may throw outside. They may throw some goods outside. Now you're standing down and you're catching those goods and you're bringing to India. That will be treated as imported goods. You'll have to pay custom duty. Then flotsam. Flotsam means that thrown goods, they are automatically floating and coming to seashore. You are standing, you are in the Goa beach, you are enjoying over there. And suddenly some goods you find, you are taking those goods. Officer will come to you and ask you to pay the custom duty. Then wreck means what, sir? Sometimes what may happen, the ship may by itself come to India. The ship may by itself, say that ship was completely destroyed and the destroyed ship is coming automatically to the India region, etc. In that case also it will be treated on par with imported goods and you will have to pay custom duty. Abatement of duty. You don't have to pay custom duty proportionately. Some amount of custom duty you will not have to pay for damaged goods or deteriorated goods. If the goods are damaged, whatever imported goods are damaged, then your abatement will be given, rebate will be given. You don't have to pay any custom duty. Abatement, not rebate, abatement. Abatement is available on goods damaged or deteriorated at any time before or during unloading of the goods or after unloading of the goods but before examination of the proper officer. How much is the abatement, sir? Check the value of damage. How much is the damage caused by you? Divided by value before damage. What is the damage caused by you? Divided by the value of the goods before damage into duty of the goods before damage. Now remission means what, sir? Remission means completely waiving off. Remission of duty on lost or destructed goods. Goods are lost by you, completely it is lost. The burden of proof of loss is with the importer. I will have to prove that the goods are lost. Loss must be due to fire, earthquake, natural calamities. Loss should be found before clearance of the goods. If there is any loss, you don't have to pay custom duty at all. No custom duty, no duty in case of relinquishment of title. You don't have to pay custom duty if you relinquish your title. If you say that this goods, though you are imported by you, you tell I don't want these goods. The owner of imported goods at any time before its clearance for home consumption or order for permitting the goods should be deposited in the warehouse, relinquish his title in the goods and thereupon will not be liable to pay any custom duty. Now relinquishment, sir, why will I say that sir? I have imported something, but I have imported some goods and I will only tell I don't want these goods. Why will I do that? Maybe the goods are not as per your specification. Maybe the goods are damaged or deteriorated, so you don't want to take the delivery. And maybe there is a breach of contract by the supplier. Now, next topic for our discussion is what, sir? Types of duties. Now, basically, Custom Tariff Act is there. Custom Tariff Act 1975 gives the rate of customs duty. What is the custom duty rate which is applicable? Now, if you see first schedule of Custom Tariff Act, that will give you the rate for import duties, and second schedule of Custom Tariff Act will give you the rate of export duties. For export of goods, what is the custom duty rate applicable? For import of goods, what is the custom duty applicable? Now the rates are not relevant for you, though it is given over here. The rates are not relevant for you in examination. If there is a practical question asked, they will definitely give you the rate. What is important is custom duty in case of import. In case of import, how to do the calculation of custom duty basically. Now you first have to find the basic custom duty. Sir, on what value will I find basic custom duty? Basic custom duty is found on assessable value. You will have to find the assessable value. We'll see this. What is assessable value? This is the assessable value. Now on this assessable value, basic custom duty is how much? Basic custom duty is assessable value into rate of basic custom duty. On this, compulsorily, whenever there is a basic custom duty applicable, compulsorily what will follow, sir? Social welfare surcharge will follow. Like we have health and education cess in our income tax law. Whenever there is a tax, compulsorily health and education cess will health and education cess will come. Similarly, under customs law, whenever you have a basic custom duty, compulsorily what will come, sir? Social welfare surcharge. So basic custom duty, assessable value into rate of basic custom duty. Social welfare surcharge, flat 10% of basic custom duty amount. Basic custom duty into 10% will be social welfare surcharge. Then we have protective duty again, which is levied on assessable value into protective duty rate. Then safeguarding duty on assessable value and protective duty rate. Then anti-dumping duty, assessable value into anti-dumping duty rate. Then IGST. IGST will be levied on landed value. This is important. Now please note, you find assessable value. On that you will find basic custom duties, social welfare surcharge, then all the other type of duties, protective duty, safeguarding duty, etc. You total this. This is called as landed value. On this you will have to pay IGST. On this amount you will have to pay IGST. IGST is not paid on the assessable value. It is not paid on the base value. IGST will be on assessable value, which is the base value, plus taxes under customs law, and the total of that, on that you will have to pay IGST and GST compensation cess. So IGST is on landed value into IGST rate, and GST compensation cess is also on landed value into GST compensation rate. What is landed value, sir? Assessable value plus custom duty, which is basic custom duty, social welfare such as protective duty, safeguarding duty, anti-dumping duty, combined together, this is called as landed value. On this, custom duty will be levied, and road and infrastructure cess will be levied at the rate of 8 per liter for petrol and diesels, etc. And export duty, the export duty rates are given in schedule number 2. You don't have to remember any of this rate. No social welfare surcharge will be levied on exported goods. If you are exporting any goods, no social welfare surcharge. Other points with respect to other important points, no IGST will be levied. IGST is a tax under GST. No IGST will be levied if the imported goods, on the imported goods, if like articles are exempted under GST law. Meaning, and in India, say similar, whatever product I have imported, say for example, I have imported a water bottle. Now the product which is imported by you, if same kind of product, is it available in India? Yes, sir. There are many water bottle companies who are selling water bottles in India. If there is no tax on this water bottle, then you don't have to pay tax at the time of import of this water bottle. So no IGST will be levied on imported goods if like articles are exempted in India under GST. Then ITC on IGST and CGST can be claimed. ITC, input tax credit on IGST, whatever you pay, and GST compensation cess, you can claim it as input tax credit. No custom duty shall be levied on imported goods if the goods are imported on temporary basis under any lease. And another very important question is with respect to this. Very, very important question. Every second, third attempt, they will ask a theory question on this point. Now, when is safeguarding duty not levied, sir? When is safeguarding duty not levied? Now, safeguarding duty is levied to protect a particular industry from getting bad impact due to huge import of any goods from some countries. Safeguarding duty under section 8B of Customs Tariff Act 1975 is not imposed on imported goods of following type of articles. Which type of article? Those articles which are coming from developing countries. So if you are importing any goods from developing country, as long as the share of the import of that goods, as long as the share of importation of that goods from that developing country is not more than 3% of the total import. Say for example, I'm importing bag from different places throughout the world, and I am also importing from a developing country. So from developing country, individually from that country, it should not be more than 3%. Sir, what if I am importing from more than one developing countries? articles originating from developing country so long as the share of the imports of that article from that country does not exceed 3% of the total import of that article into India. Okay, first point. Then what if it is coming from more than one developing country, sir? Then articles originating from more than one developing country so long as the aggregate import of that article from all the developing countries from a single developing countries is less than 3%, and from all the developing countries taken together is less than 9%. So if you are importing from more than one developing countries, same kind of articles you are importing, check what is the total import of that article. Now that total import you have taken, now from individual developing countries it should not be more than 3%, and collectively from all the developing countries it should not be more than 9%. And no safeguarding duty is required to be paid if the goods are imported by 100% EOU or free trade zone or SEZ units. Now, last point is with respect to valuations under customs law. For valuations, you should be knowing what is the exchange rate you should take. Okay, last and most important, last but not the least, just like this is last but most important topic under customs law, valuations under customs law. Sir, what is the exchange rate which I should take? See, normally whatever goods you are importing into India, they will always have some foreign currency, dollars, euros, pounds, or yens, etc. Now, to convert this into Indian rupees, what is the exchange rate I should take? You should take the exchange rate notified by, given by CBIC. In the question, they may give you exchange rate given by RBI. I don't care. Exchange rate agreed between the supplier and recipient. I don't care. What exchange rate I should take for computation of value, sir? Always you should take, sir, CBIC rate. Rate notified by CBIC should be taken for computation. Now, valuation under customs law. Exchange rate for valuation under customs law of imported goods and exported goods. If any goods are imported by into India, what is the exchange rate which you should take? You can either take the delivery of the goods or you can deposit the goods in warehouse. So goods can be cleared for home consumption. If goods are cleared for home consumption, exchange rate should be taken as on the date of submission of bill of entry. Now the importer will have to submit a document called as bill of entry for home consumption. He will have to submit a document called as bill of entry for home consumption. On the date when he is submitting this document, what is the exchange rate? That exchange rate you should take. Now, what if I am clearing for home consumption, sir? Then exchange rate as on the date of into bond bill of entry. Now, whenever you are depositing the goods in a warehouse, there will be two bill of entry. One is called as into bond, one is called as ex bond. But you don't have to worry about warehousing because this is applicable in your final level. But still, it is given in the material, but they will not ask you a question. Okay, so into bond bill of entry means the bill of entry for depositing the goods in the warehouse, and the ex bond bill of entry means bill of entry for removing the goods from warehouse. So in case of warehousing, you should take what, sir? Exchange rate. Which exchange rate, sir? As on date of depositing the goods to warehouse. For export goods, sir, you should take exchange rate as on shipping bill or bill of export date. Exchange rate as on the date of shipping bill. The date of filing, you will have to file a document called a shipping bill or bill of export. As on that date, whatever exchange rate is there. Sir, custom duty rate as on which date I should take? Sir, exchange rate I understood. For import, it is date of bill of entry. For export, it is bill of export. That date's exchange rate I should take. Sir, what about custom duty rate? Now, for imported goods, if it is cleared for home consumption, you take the exchange duty rate as on the date of submission of bill of entry or as on the date of grant of entry inwards. Entry inwards or bill of entry, whichever is later. Who is later in this? Who is not? Whichever is earlier or who is late? What you have submitted later, whether bill of entry is later or entry inwards is later. Whoever is later, compare both of them. Whichever is later, as on that date, you should submit what, sir? Bill of that custom duty rate should be taken by you. Then it is cleared for warehousing. If these goods are cleared for warehousing, you have deposited in the warehouse. At the time of withdrawing from warehouse, whatever custom duty rate is there, you should take that. Date of grant of export, bill of entry, that exchange rate should be taken. In case of export goods, sir, the officer will give a document called as let export order. So whatever is the custom duty rate as on the date of grant of let export order. So duty rate as on the date of grant of let export order should be taken. What is important for you, most important is this: in case of imported goods for home consumption, what is the duty rate and exchange rate? That is very important. Now, this format is a standard format, fantastic format. You can just go through this format. You'll understand how to do valuation. Now, valuation under customs law, computation of assessable value or CIF value for customs valuation of imported goods. Now, what is this assessable value, sir? You said the tax is recorded period on assessable value. What is this assessable value? First, take the value of the goods at the ex-factory price, at ex-factory price, meaning at the price of that exporting country, whatever factory price is there, ex-factory price, value of material, add freight and insurance for shipment from factory of that exporter country to the port of exporter country, then add and handling charges, loading charges, unloading charges of this product. This will give you a value called as FOB value. This is called as what, sir? FOB value, free on board value. Basically what they are telling. Say for example, I have imported the goods from Africa to India. Okay. Now, Africa, there will be some factory where goods are manufactured. What is the cost of these goods in that factory? Then goods will be transported from this factory to the port. So what is the transportation charges incurred during this time from factory to port of that country? Then from this once it reaches the port, it will be handled over here. Handling charges will be paid. Loading, unloading will happen. Unloading from the truck and then loading it to ship. So add that handling charges also. You combine all of them. Now this total is called as FOB value. Meaning what, sir? These goods are freely boarded on board. Free on board. These goods are now freely boarded on the board of this particular ship. Now after this, you may incur transportation charges from this country to India. You may incur insurance charges from that country to India. You may also pay some commission to agents, etc. All the other charges. So first you have to take free on board. What is free on board? Value of the material at the factory, ex-factory price, then freight and insurance from the factory to the port of that exporting country, then handling loading charges at the port of that exporting country. Total this you will get what, sir? You will get your FOB value or free on board value. Then to that add Rule 10.1 additions. Sir, what are these Rule 10.1 additions? Rule 10.1 additions, if it is not included, you please add this. You please add this if they have not added. What are these Rule 10.1 additions, sir? Please note, Rule 10.1 additions means whatever expenses you have incurred for importing these goods, excluding freight and insurance, because freight and insurance are covered separately. These expenses should be incurred at any time before importation. Do not add post importation expenses. Before importation, any expenses is there, please add. Post importation, after importation, any expenses is there, don't add. What are these expenses? Please add this only if it is not added. What are these expenses? Any type of commission you are paying or any type of brokerage you are paying, except, very important, except buying commission. Buying commission should never be considered. Also called as purchase commission. Buying commission or purchase commission should never be added while computing the assessable value. Then, whatever different types of packing cost is there, please add it, except durable and returnable packing. Whatever type of primary packing, secondary packing, all the type of packing cost you add. But if they give the packing is durable and returnable, then please don't add, because you are supposed to return that packing. Then designing charges, development charges, engineering charges should be added if the designing, development work, engineering work is undertaken outside India. If it is happening in India, don't take. Then royalties and fees which is payable, you should add. Then value of subsequent resale. After selling the product in India, are you paying some amount to that exporter? Yes, then add. Value of subsequent resale if it is payable to foreign supplier. And value of material supplied free of cost by the importer. Have you supplied anything to that supplier free of cost? Then add that also. This total together, FOB plus total of this will give you a value called as FOB for customs. Very, very important value. This is called as what, sir? FOB for customs. To this you will add actual cost of freight. You will add cost of insurance. You will add what, sir? Cost of freight, cost of insurance, ship demurrage charges, lighterage charges and barge charges. And the total of this will be assessable value, also called as CIF value, which is cost, insurance, flight. Please note, FOB for customs add three things. Freight charges, mostly it will be two things only, freight and insurance. But sometimes they may give you ship demurrage, lighterage charges, that also you should add after finding the FOB value for customs. Now, many times what will happen in examination and what will happen in MCQs, they'll ask a question, sir, what if the freight charges are not given? What if the actual freight charges is not given? If it is not ascertainable, see, first we should take actual only, whether it is freight or insurance, you should take actual only. If actual is not available, if it is not ascertainable, then take 20% of this amount, 20% of FOB for customs as freight charges. And if insurance charges also, you should take on actual basis. But if it is not available or not ascertainable, then take 1.125% of FOB value for customs. 1.125% of this amount as your insurance charges. Freight charges will be 20% of FOB this value, and insurance will be 1.125% of this value. See, normally you should take actual. Normally, if the goods are coming by ship or by aeroplane, what freight charges you will take, sir? You will take actual freight charges. You will take actual insurance charges. But actual freight charges is not available. 20% of FOB value for customs. Actual insurance charges is not available. 1.125% of FOB value for customs. Now, for flight, if the goods are imported by air, maximum, see, normally you should take actual, correct? Normally you should take what, sir? Actual. But if the goods are imported by flight, maximum freight charges can be 20% of FOB value for customs. Say, for example, FOB value for customs is 10,000. Okay. And they have given actual freight charges is equal to 2,500. Now, in case, because it is imported by flight, maximum how much can it be, sir? 20% of FOB. 20% of this is 2,000 rupees. Maximum it can be 2,000 rupees. Sir, what if it is by vessel, sir? If it is not by flight, then take the actual only. But in case of if the goods are imported by air, maximum 20% of FOB. And sir, what about what is the how do I find the value for exported goods, sir? For exported goods, it is FOB value as computed above, which is nothing but this value. For exported goods, on this amount only directly apply custom duty rate. This completes our discussion on custom duty. This completes our discussion on what, sir? Custom duty. I hope you have enjoyed. And this also completes our discussion on this fantastic marathon, which is marathon of indirect taxes. I hope you have enjoyed this particular lectures. Whatever discussion we have made in this classroom, I hope you have enjoyed all this discussion. I wish you all the very best for your examination. Please study well. Any question you have, you can always send me a message. You can always send me a message, or you can ask in the comments below. You can send me a message. Please note, I don't accept any calls on this number. Only message. You can send me a photo, voice note, etc. Whatever it is, I will reply to your doubts. Normally, I will take around 48 hours maximum. I'll answer it in 48 hours. Okay. I hope you have enjoyed watching this. Let us meet very soon in our next video, which will be of direct taxes marathon. Till then, tata, bye bye, take care, enjoy, study well, study hard.